Washington from those meetings there in response to questions about what Europe should do if they see Russian jets in the airspace. All of that could have an impact on defence stocks. Chips in focus on the back of those Micron numbers the guy was talking about, and Volvo Car, that company in focus as a result of their plan to try and offset some of the tariff impact by ramping up production in the US, Guy.
Okay, here we go. Wednesday morning session. Let's take a look at what we've got coming through here in Europe. Keep an eye on the defence names. I think the tech space is going to be interesting. Keep an eye on that, certainly out of Asia into Europe. FTSE 100, not a firm focus of all of this. You may see names like BAE Systems on the move today. This as we talk of shooting down Russian jets in NATO airspace. That's alarming. Will we see that alarm being transferred into some of these names this morning in the European defence arena, which has done so well of late? So the FTSE 100 now just giving up that early green. The IBEX is out, absolutely flat as a pancake as well. I keep saying that these days, but it does seem as the session develops, we do get a little bit more traction. CAC's not doing anything in a hurry. I feel that the index level story is not the story this morning. We've talked about this all morning. We are starting to see some of the defence names move. Lizzie, what are you seeing on the sector story?
Well, we've got about 3/4 of sectors in positive territory this morning. Excuse me. It's now changed. It's just 3/4 in negative territory this morning. So autos at the bottom of the basket, down 0.7%. You've got consumer products and services not far behind. Top of the basket, though, we have telecoms, and also just behind that, utilities, food, beverages and tobacco as well. But of course, as you say, we've got this big focus on defence this morning. We're waiting for Rheinmetall to open, but Saab, Leonardo, both up over 2%. Saab actually up more than 3% now. BAE Systems, you did mention, up 1.6%, and Hensoldt enjoying these gains, up 2.5%, Anna, at the start of the session.
Of course, this is part of the industrial goods and services basket, so you see the upside now, Saab up by more than 3%. The upside is in there. It's sort of being offset by the other parts of that wider basket, and so that whole sector trades pretty flat. But it is defence names that are moving us a little bit higher. On the back of that, the commentary from President Trump was that an endorsement that NATO would have the US's blessing to go ahead and act against Russian aircraft in NATO skies. That seems to be the way that the market, at least at the margin, is interpreting it. But broadly speaking, we are more sectors in negative territory than in positive, which is interesting because we look ahead to US futures, which are ticking higher.
Absolutely. And what is it going to be that drives the US a little bit later on? Mixed messages from Powell yesterday. I'm not sure that the macro picture is the narrative. Micron's numbers, though. Micron is up massively over the last 30 days, and to hold that through the numbers after such a big move, I thought was absolutely amazing yesterday. The fact that they blew past expectations, were able to hold those gains. Bar overnight as well has been super strong, so the tech trade feels like it's still on this morning.
Well, let's get an expert view on the US equity picture. Laurie Calvasina, head of US equity strategy over at RBC Capital Markets, joins us around the desk now. Good morning to you, Laurie.
Good morning. Thanks for having me.
So on this debate that we keep having around the desk morning after morning, what is it that's driving the US stock rally? Is it AI, to Guy's point? Is it the Fed? And if the Fed doesn't cut as much as expected, does it stop?
Well, I think that's a great question. And, you know, if I go back to May, right, June, I was hearing Fed cuts are coming, Fed cuts are coming. So as we've kind of gotten to the cut, finally, you know, frankly, it has been a little bit of a surprise to me. We've been as strong as we have after that meeting. But I do think a lot of that is already baked into the price. And when I talk to my rate strategist, one of the things he says is, look, you know, we've kind of adjusted the timing on when those cuts are coming, but we've been saying 3% for terminal. A lot of other rate strategists have been saying 3% for terminal. So kind of what really changed in terms terms of overall street forecasts. Have you just put in so many at this point? Are you going to kind of dial that down, and you're sitting at these kind of peak-like valuations? Feels like the market is due for a breather in here. I've been saying that for a while, and it hasn't happened. So to sort of see these geopolitical headlines, AI, one day we get a favorable headline, another day we get a headline say, this is all fluff and not really impacting the bottom lines. And it does seem to me that AI thread is what's kind of guiding some of the price action when we have some of those weaker days. So maybe that's it, and we've all just been focused on the other stuff we shouldn't be paying attention to.
I mean, you're on the road a lot. What's the mood when you're talking to investors? Are they nervous? Are they thinking, get in on these dips if and when they come?
So I'll tell you, the last couple of weeks, I've been at a number of group events, and some of those have been kind of high net worth retail, and some of those have been hedge fund, and it's been kind of everything in between. What I'll tell you is that the conversations in a lot of those, we're all talking about the things we're worried about. I would say kind of the retail side of things have seemed, and this is high net worth retail, not necessarily sort of your kind of day trading retail. They seemed a little bit more cautious, but when I sort of think about like the institutions and the hedge funds, the question is, what can stop this? I think people are having a hard time identifying the specific downside catalyst when this market has just kind of moved through everything that should take it down. And one of my colleagues, we've done a bunch of these meetings together, our derivative strategist, Amy Wu Silverman, she likes to start these things out by saying, if you think the market's going to be up between now and year end, raise your hand. And, almost every hand goes up in the room, and then you still talk about all the things you're worried about.
Yeah. I feel like we've been in that phase for a while, though.
Yeah.
And it's interesting. I'd be interested to get what Amy's view is on kind of what do you do in terms of hedging around that. So maybe you can give us a view on that too. But you've got stocks like Micron up massive. Yeah. We've got to the phase where these things are going straight up.
Yeah.
Like it's not like this is a sort of gradual increment. These things over the Micron's up. This is Micron.
Yeah.
It's up 30% in the last 30. These are sensational numbers. Is it getting euphoric? Is this? Am I getting my Greenspan kind of lexicon out again in terms of kind of how to describe this market? How would you describe this market when you see moves like that?
Well, I'm not going to tell you. I wasn't like too upset yesterday when I heard Chairman Powell said stocks are highly overvalued, or whatever the exact quote was. I don't want to misquote him, but that's something we've been seeing in the data. That if you look at say the Nasdaq 100 equal weighted or cap weighted, or S&P top 10 or S&P cap weighted, all the kind of workhorse indexes or slices you can find, we're just bumping up against these valuation highs, and the PEs aren't able to make new highs, even though the stocks are. So it tells me we're very earnings dependent in here. Look, if I go back to this last reporting season and we were sort of reading through all the transcripts, the AI story sounded fine if you were listening to the companies who were actually involved in the build. There was no hesitancy. There was no pullback. People are still building these things out. We can debate how impactful they are to productivity and earnings, but the builds are still happening. When you look at the fundamental stories for the rest of the market, you can use words like messy, squishy, they're muddling through, it's fine, it's not that bad, but it's nothing that's going to really generate a lot of excitement. And so the exciting part of the fundamental narrative is still that AI trade, and the valuations are limiting it somewhat, but then the earnings come and catch you up and push you up again on price.
Powell didn't quite go as far as irrational exuberance, but it's kind of maybe he's inching in that direction. When you talk to European investors, I can look at the numbers on my screen and I factor in a currency story. The S&P, if you're a dollar investor, great, up 13% so far this year. Nice. If you're a European investor in euros investing in the United States, we're down. You're down by 0.5% at the moment. Do you get a different... What is your advice to European investors?
So I think it's, it is interesting when I talk to people who are outside of the U.S. or globally focused versus people who are just kind of running their U.S. portfolios and sitting in the U.S., you do hear very different things, right? So if you're talking to sort of like your large cap portfolio manager who's maybe, I'm just making up a city, right, but sitting in Chicago or Minneapolis or somewhere like that, they're just focused on picking stocks, and there's a lot of noise. And so they do have to sort of debate this AI trade and how much you stay invested, but they're just looking at individual names. Is the economy going to be healthy or not? And they're kind of putting all the other stuff aside. When you talk to European investors, when you talk to Canadian investors who really know the U.S. quite well, stock by stock, but also think very big picture and macro, that's when you're debating more things about asset flows and geographical allocation and relative valuation. And, the reality is it's kind of a tug of war between the two. So I do think that international investor mindset is a headwind for the U.S. and maybe limits gains. But at the end of the day, you've still got all these stock pickers in the U.S. and the 401k money is coming in, and a lot of this is programmatic flows, and they're putting money to work. And so when they see dislocations and dips, They're thinking about upgrading their portfolio. But it is a very different conversation outside the U.S.
Okay. And thinking about CapEx, we've nodded at this a little bit, Laurie, thinking about AI and the amount of money being spent on that particular theme right now. What do CapEx trends tell us at the moment? What interesting detail? I've been wondering if the CapEx that's spent on AI is crowding out all kinds of other CapEx. I mean, what do you see there?
So we actually, in our weekly, we put our weekly out normally on Mondays, and in this edition, we updated some charts on CapEx that we've been running. Now that we've got like all the stats in final for 2Q, we can really see the real data. And so we look at a sleeve of the S&P, top 10, the S&P 500 as a whole, and then the S&P X, the top 10. And if you look at S&P 500 CapEx, the growth rates are actually getting close to past highs. I'm not going to sit here and say it's definitely peaked, but you could be worried about that. If you look at the S&P X, the top 10, you saw a little bit of growth in 2Q, saw a little bit in 1Q, so you're on the mend, you're headed in the right direction, but you're way below those peaks, and you're way below the S&P 500 as a whole. So I do think, those kind of engines of AI, the workhorses, they're doing a ton of CapEx, right, because of what their customers are demanding.
Yes.
When you're looking outside of it, it's been rather weak. Now, in the States, again, I go back to my May and June conversations as the one big, beautiful bill was being anticipated. I heard from one stock picker after another, especially those who focus on industrials, CapEx is coming, CapEx is coming. It was almost as prevalent as the Fed conversation. And it's about bonus depreciation, R&D expensing, and just various provisions in that bill. Companies aren't really talking about it all that much. So, the good news is ISM new orders has perked up a tiny bit, little bit in positive territory. You're seeing CapEx headed in the right direction, even outside the AI trade. But companies are not, nearly as excited as the U.S.-based investors on all this CapEx that's supposed to be coming.
Right. So then, from what you said about where the CapEx is happening and where it isn't, does that mean we limit our expectations for how far through the broadening out of this trend we are?
So I'm threading a kind of a specific needle here, but what I've said is I think it's a show me story, right? I've seen enough to say we have to keep an open mind, we have to be optimistic, but, is the market expectation on this outstripping, what I'm sort of seeing at the company level? I think it is. So I do think investors maybe need to dial down their expectations just a little bit. A lot of the good news, if it's coming, I do think is priced in. And we just have to see what companies are going to end up doing. In the one big, beautiful bill conversations, we saw a lot of, we need to think about this. We have to come back. And if you go back to 2018, one thing we noticed about overall CapEx growth was that it peaked in early 2018. So you saw a fierce ramp in 2017 in anticipation of that tax bill. There were other things going on as well in that one. But then you sort of had all this uncertainty from tariffs come in and sort of dampen the enthusiasm. I think companies are managing through better this time, so we might not need to be that pessimistic. But I do think this is a show me story.
What's Amy saying about hedging then? Got the fix at 16. What's she saying?
I think that the issue that keeps coming up is in the past, like when you've had these hedges, they just haven't worked, right? And so I think there's been, sort of a reticence, right, to kind of put on too much. I don't want to say too much for her, but I will say, we're sort of looking at things, maybe from slightly different lenses right now, right? Because there have been so many people in the market, who are concerned, right, that we're hitting these peak valuations, and sentiment was kind of lousy at the end of August. If you looked at the AAII survey, it kind of sunk like a stone. So she's always really valuable to me when she talks about the pain trade. And so is the pain trade, sort of perhaps higher because you have had a lot of pessimism that's come back in. I'm more in the camp of, my target for the end of the year is still 63.50. I'm looking for 7,100 middle of next year, kind of second half of next year, but I do think we have, some stuff to work through. So I'd say she and I are on slightly different sides, of the same coin right now, where she's maybe a little bit more worried about, continued appreciation, and I'm a little bit more worried about short-term digestion.
Oh, that's interesting. That's an interesting little development.
Yeah.
Nice to see you.
Good to see you,
Come back and see us anytime that you're in town. Be great to see you. Laurie Calvasina, Head of US Equity Strategy, joining us from RBC Capital Markets. Call 6 looks like this. Let's look at some of the defence names. Probably got Rheinmetall on here. It is up, as you can see, circa 2% this morning. ASML is also on the front foot as well, so the tech trade is on weakness in luxury. The pharma trade is also giving back some ground, but the story this morning is about defence. Let's get some more detail on that story with Chloe Melling.
Good morning, guys. Yeah, let's start with defense. That is having a really good morning this morning after Trump said that NATO nations should be shooting down Russian jets that violate crossover into their airspace, and also said that with the help of the European Union, Ukraine should be able to win back all of its territory in its original form. So we can see some positive movements for Rheinmetall, BAE, Leonardo, Thales. We could only fit 4 on the board, but there's also some positive movements for Dassault Aviation, for Saab, for example, MTU Area, which provides engines as well to that defense sector. So it's a really positive morning for that industry. Moving on to the chip sector, where we see as well some positive movements as well, including in ASML and BSME, a little bit less so in Siltronic, and that is after Micron Technology, a US maker of computer memory chips, provided a very upbeat outlook, and that is thanks to really strong AI demand. ASML is one of the key suppliers to Micron, and therefore it is having a little bit of that read across boost there, with shares up 0.7% and BSME 0.6% as well. Moving on to Bouygues, which is a French telecoms company. It was raised to an equal weight rating at Morgan Stanley, and that is driving the shares up 1.5% this morning. And finally, let's end on the chemicals sector, and we have Lanxess and Evonik, which are 2 chemicals companies that have been cut to a hold at Deutsche Bank, and that is driving the shares down this morning for those 2.
Chloe, thank you. Chloe Melly from our equities team, of course. Coming up, we'll turn to crypto. We'll have a conversation on that. We will also talk about defense companies. Some of these defense names, as Chloe was just pointing out, really doing well. Saab in particular up by more than 5% this morning on the back of what is being interpreted as more opportunity for defense names, perhaps to play a role in NATO and its defense of European skies. So we'll continue to watch these developments. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Welcome back. You're watching the opening trade. The opening trade is now behind us. We're 18 minutes into the equity market session. Defence stocks are very much on the front foot. That is what is the big driver of European equity markets this morning. As you can see, some fairly big performances being put in. Saab's up really quite strongly. But you've also got Hensoldt up really strongly as well. This as we hear from the US President, Donald Trump, saying that NATO members should shoot down any Russian aircraft that violate their airspace. Remember, we've already had drones shot down. Our manned aircraft next. The president struck a more sympathetic tone as well on Ukraine's chances of winning the war. This after meeting with Volodymyr Zelensky at the United Nations General Assembly. For more, we're joined on all of this by Jerry Doyle, our global defense editor, who is joining us out of Berlin. What are these latest comments, do you think, by Trump on A, the possibility of shooting down Russian aircraft, and B, on the fact that actually you could see a complete victory for the Ukrainians in this conflict? What do they mean, do you think, for European defense names?
Well, they could mean any number of things. Obviously, if Ukraine is expected to push back and retake all of their territory, that's a tremendous undertaking that's going to require a lot of material, a lot of manpower, a lot of ammunition, all of these things which would largely flow from European companies. And then on the air side, shooting down Russian jets, you know, it's hard to say what kind of a reaction there might be to that, what kind of follow-on there might be. Obviously, Turkey in 2015 shot down Russian jets without any reprisals at all, so that might not spark any kind of wider conflict, but you can definitely see how things like air defense systems and air-to-air missiles might also, you know, become into stronger demand if that sort of a scenario materialized.
Yes, and Jerry, when we look at the names that are doing well this morning, that are trading higher this morning, some of them in the defence space up by more than 4%, does that tell us something about what Ukraine might need most urgently and who's going to provide it?
It can say some things. You know, companies like Saab do provide these sort of high-tech air defense solutions and air-to-air solutions. Obviously, fighter jet. Rheinmetall is deep into the artillery space and armor, both of which would be in high demand if a conflict in Ukraine sort of expanded or engendered more European involvement.
Jerry, we've got outperformance in particular for Saab. You mentioned it there. Is there any other reason why that could be happening? We've also got comments from Mark Carney this morning. Could that be factoring in?
Sure. Looking at Saab as a fighter jet solution for Canada, obviously that could help them with their Gripen jet. And also, there's been a little talk in the last few days about the troubled FCAS consortium to build a sixth-generation fighter jet, sort of a German, French, and a Spanish endeavor at the moment. But if France goes its own way, if the so sort of insist on terms that aren't really acceptable to the rest of the consortium, maybe other companies, other countries can get involved. Saab, obviously, a very well-regarded name in the aircraft space. So there's been some conversation on that in the last couple of days, and that might be helping their shares as well.
Okay, Jerry, thank you so much. Jerry Doyle, Bloomberg's global defence editor. We thank you for that analysis. We are looking at industrial goods and services, actually kind of in the middle of the basket right now, down 0.2% still. DAX shares down 0.3%. But as we say, these defence names really outperforming this morning. Let's turn now to crypto. Tether is said to be in talks with investors to raise as much as $20 billion. Bloomberg has learned that the crypto giant, who is the issuer of the world's largest stablecoin, is seeking the funds for a roughly 3% stake through a private placement. Bloomberg's senior editor for crypto, Ryan Weeks, joins us now for more. Good morning, Ryan. Just talk us through the details on this fundraising deal.
Good morning. Thanks for having me. I'd like to just quickly apologise for the state of my forehead. I had a procedure yesterday, which certainly made getting this story out interesting. The details, yeah, so Tether, as you say, the largest stablecoin issuer in the world, trying to raise $20 billion, up to $20 billion, at a valuation of $500 billion or more. Still very much, the deal is still very much under discussion. Investors have been given access to a data room in the past couple of weeks. They're looking to sell a 3% stake through a private placement And our sources have suggested that there'll be no secondary share selling as part of the deal. And a final point is that Cantor Fitzgerald, the investment bank with whom Tether has very close ties, they're the lead advisor on the deal.
In terms of how we get to the maths, walk us through how we get to the valuations that we're talking about here.
Yeah, so it's certainly a very eye-catching number. Whether or not they achieve it remains to be seen. I think what people on Tether's side will be trying to present to prospective investors on the deal is probably a comparison between them and their closest rival, Circle, which issues USDC. USDC is the second largest stablecoin. It has a market value of about 70 billion compared with Tether's 170 billion. That's one metric they'll be looking at. Another is profitability. So Tether isn't subject to sort of full audits, but it publishes regular disclosures. And the most recent of those showed that it made $5 billion in the latest quarter. In 2024, I believe it made $13 billion. If you compare that to Circle's performance in the same period, and Circle is now a public company, I believe Circle made something like $155 million or something. So, if you just look at a multiple there, it's something like 80 times as much profit that Tether made. And their CEO very recently tweeted, we have a 99% profit margin, which, ruffled some feathers in the crypto space because it's not necessarily for everyone what crypto is about, but you get there a sense of just how profitable an operation it is. It's very lean as well, only a couple of hundred people.
Right, and if this valuation, were confirmed, obviously it puts it in some very elevated circles when it comes to private companies. Incredible valuation then that could be achieved. So how did this, briefly, Ryan, how did this crypto firm manage to secure such a prominent spot in the stablecoin world?
Yeah, so it was one of the earliest stablecoins, initially used very much as a conduit for traders to get in and out of crypto ecosystems, trading tokens. It's become over the years more and more used as a sort of hedge against inflation and for payments, which is how it was perhaps envisaged in the first place. It's definitely been used in numerous examples in illicit transactions and to skirt sanctions as well. What's interesting is, for that reason, it hasn't always had a warm reception in the US, the business. It's clashed with regulators there. But under Trump's administration, Tether's been getting much more of a foothold in the US. So it's recently announced the launch of a US-compliant stablecoin, and it hired a former White House crypto advisor, Bo Hines, to lead that effort. So yeah, that's what's its sort of trajectory over the years. It's definitely being more embraced in the US now.
Ryan, thank you very much. Bloomberg Senior Editor for Crypto in Asia, Ryan Weeks. We thank you for the update on Tether. Good day for Tether, good day for Saudi stocks as well.
Yeah, stocks rising 5% in Saudi on the news that you could see these foreign ownership rules eased. So at the moment, you have rules that cap foreign ownership of listed companies in Saudi at 49%. They could be raising that limit. It would be one of the most dramatic moves yet in this push to revive the equity market. Interesting, you've got the bank stocks climbing a record 9% off the back of this. Some of them up 10% off the back of this. And JP Morgan's analyst, Pankaj Gupta, writing, if they raise the limits from 49% to 100%, it would trigger more than $10 billion of potential inflows into the Saudi equity market. So this is significant.
Yeah, and some of these would be active investment choices and some of them just the passive flows.
Yeah, exactly. Well, so those major moves happening over on the Tadawul. But coming up on this programme, we're going to check in on the tech-driven market rally and the role private markets have in funding the AI boom with Don Rizzo, portfolio manager over at T. Rowe Price. That conversation next. This is Bloomberg.
looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade. We're 30 minutes into today's session, and as you can see, it is red across the screen. Even though you've had Donald Trump talking more tough words when it comes to Russia, even though we've seen outperformance for some of the big defence names, we're still seeing the DAX down 0.4%. It's the same story across Europe. We're catching up to yesterday's US session when Chair Powell didn't give any fuel to that fire of hopes of Fed cuts, still sitting on the fence about what is coming on the rate path ahead. And so we continue to feel the pessimism here in Europe. Guy, what's under the hood?
He was a little concerned, though, about stock valuations, but we'll come on and have that conversation in just a moment. Let's talk about where we are in terms of the internals of European markets this morning. 164 up, 416 down. That tells you everything you need to know. There are more sellers than buyers. Stocks are a little softer this morning. Volume's actually all right this morning, which, again, is quite interesting. We started the week quite slowly on the volume front. We're picking up the pace a little bit. There are 52-week highs that are worth talking about. Let's show you what is going on. Saab, we've already mentioned it, up. The defence names are on the front foot this morning. Legrand is in the AI trade at the build-out phase. The Repsol story, we've got Repsol up at a 52-week high, up by 0.5%. But the defence names are where really the action is once again. Evonik is one of the 52-week lows. I think that's a downgrade this morning. Givaudan, fragrances and flavours and all that good stuff. Also at a low, which I think is interesting, down by 0.6%. And Alcon in the eyewear space as well, down by around 1.5%. So a little bit of distribution in the market this morning, ups and downs. We haven't had that many 52-week lows recently. They're beginning to pick up a little bit now in the European space, Anna.
Yeah, let's get an update on our top stories this morning, and we start with some geopolitics. Donald Trump says NATO countries should shoot down Russian jets if they violate their airspace. And in a change of tone, the US president says Ukraine can win back all territory occupied by Russia. Before meeting President Zelensky, Trump renewed his call for European nations to further halt imports of Russian oil and gas. Super typhoon Regasa has made landfall in Hong Kong and is set to cross China's southern coast today. Regasa is the worst cyclone worldwide this year, and authorities in Taiwan say it killed 14 people on Tuesday as it struck the island. The Central Emergency Operations Center says another 34 people were injured, with 124 reported missing. And the crypto giant Tether is said to be in talks with investors to raise as much as $20 billion. Sources say the firm is seeking the funds for a roughly 3% stake through a private placement. That could value the issuer of the world's largest stablecoin at around $500 billion. Lizzie.
Well, those are our headlines this morning. I want to remind everyone of our conversation that we had yesterday. The tech-led equities rally and the race to build our AI data center infrastructure is going to need backing from private markets to meet demand. Just take a listen to what Marathon Asset Management's CEO and chair, Bruce Richards, had to say on that.
In the United States, we think the expenditure in the data center area is around $3 trillion need in the next 4 years. Yep. Half of that is equity, and about half of that will come from, lending and leases and the debt markets.
Yep. Bruce, super positive on the AI trade. It's going to be profitable one way or the other. The build-out over the next few years is going to be absolutely massive. A lot of that money is going to be debt-financed. A lot of that is going to come from private credit. For more on where we go next and the rally that we are seeing, we're joined in the studio by Dom Rizzo, portfolio manager at T. Rowe Price, specializes in this space, tech space. Good morning.
Thanks for having
me.
me.
You. Look, we're getting into some interesting territory now. Some of these tech names are starting to really accelerate to the upside. When I see days of Oracle going up like 30% on a session, when I've got big names moving up 20, 30, 40% over the last month, and we saw that in the chip space yesterday. Just going to the top of the NASDAQ, you look at Micron's up 41% in the last 30 days. Where are we in the kind of the blowing up of this tech bubble?
Yeah. Well, first off, thanks for having me, guys.
Nice to see you.
Look, I've been saying for a while, AI has the potential to be the biggest productivity enhancer for the global economy since electricity.
Right.
And productivity-enhancing technologies come with speculative bubbles, right? Go study history. We're right here in London, the railroad mania of 1840. Yep. Productivity-enhancing technology came with speculative bubbles. When we look forward, electricity added 1% a year to global GDP growth for 32 years straight. There's only 3 ways to grow an economy: capital, labor, and productivity. Yep. Capital's probably flat to down. Labor's probably down. All growth's going to come from productivity, which means a lot of the future growth in the world is going to come from AI. Now, we're clearly entering that second phase of the bubble as we see more debt financing, as we see more vendor financing. But I think fundamentals are very strong, and I actually think valuations today remain relatively reasonable.
Normally, though, to your point, you go through a kind of speculative phase, then you come down, and then you start to see maybe the effects of the technology starting to really manifest themselves in the wider economy. Is that how you think this is going to evolve as well? Are we going to see failures? Are we going to see investor money being destroyed here? Kind of, how do you see this working? Is it just going to be a straight line, or are there going to be some bumps along the way?
Well, of course there's going to be bumps along the way, right?
How big bumps?
They could be very big bumps, but every situation is different, right? So let's take a look at the internet versus AI.
Yeah.
Right? So how long did it take Internet Explorer to hit 100 million users?
Can't remember.
5 years. But yeah. 5 years.
Took me a while.
So it took OpenAI 2 months. Right? We sell nearly 1 billion smartphones a year. There's only 8 billion people on the planet. The proliferation of tech is so much faster today than at any other point in history.
People pay for it, though? How many people pay for OpenAI at the moment?
It's actually, so the number of people who pay is quite small, but I actually think the way that OpenAI is going to end up being the fastest company ever to $100 billion of revenue doesn't necessarily come through the consumer subscription business. It may come through the consumer advertising business.
Right.
So, OpenAI knows everything about me. It knows my kids' names. It knows my blood pressure. It knows that I'm the portfolio manager for the global technology.
How's the blood pressure right now?
Right now it's pretty good. But let's see what happens with the stock.
On the other side of that bubble, we'll find out.
Yeah, exactly.
But what about power? Is there enough power to power all of these data centers? Is that the ultimate bottleneck to all of this?
So over the medium to long term, power is clearly the bottleneck. The one thing I would say about power is, in some ways, it's the ultimate commodity. You can, we'll build more power. That's what we do. We're very good at it. So people who are saying power is the next part of the AI trade, I'm actually a little skeptical of that. I remain in the camp that the best way to invest in the AI trade is through the AI semis, as we go from a $45 billion chip market in 2023 to a $500 billion AI chip market in 2028 to a $1 trillion AI chip market in 2030.
I was interested as well, you mentioned hardware.
Yeah.
You've got this news this morning that Alibaba is going to pair up with NVIDIA physical AI software collaboration to start. Where do you see this going when AI is integrated? What's the kind of iPhone moment when it gets to AI?
Well, so I think there's kind of three phases of AI. So the first is co-pilots, right? And so what is a co-pilot? Humans are in the loop. You're helping the co-pilot get to the answer. The second is agentic AI, when you can go tell the AI to go do a task on your behalf and you don't have to be in the loop to make it work. The third is physical AI, right? Autonomous robots, driving, and humanoids. I think we're a little bit away from that physical AI really impacting the global economy. That's probably a 28, 29, 30 impact. I mean, I do use full self-driving every day in America, and it is incredible. But in terms of actually moving the productivity statistics of the global economy, I still think we have a little ways to go on physical AI. On Alibaba, we were just in China 3 months ago. And a couple of great insights we had from that trip. So first was that their core e-commerce business was going to accelerate. They had a really strong positioning in quick service delivery with their May, and they were taking material share from Meituan. And then second, and probably most importantly for the stock, is that of all the different cloud vendors, of all the different players in China, Alibaba remains the best positioned to help enterprises and corporates in China deliver AI. And why is that? So first, they have the biggest data center footprint in China itself. But second, they have great open source AI with their Qwen models. And then third, we're going to see what's going to happen with these chip tariffs and trade war conversations between the U.S. and China. But I think ultimately, the most natural outcome is that NVIDIA and AMD will be able to sell in China, and I think Alibaba will probably be the largest procurer of those chips over time.
Okay, yes, and the extent to which that relationship is allowed to flourish will be interesting. Tell us a lot about the way these countries will deal with each other. So you mentioned these different stages of AI. Then, Dominic, you were talking about co-pilots, and then you get agentic, and then you get robots. What are you watching to tell you what is really delivering productivity benefits for business? Because at the moment we're in that push out, that rollout of all of that capital expenditure. We're hopeful. We cross our fingers. We hope it delivers some productivity gains. What tells you that it really is working for the businesses that are spending the money on it?
Well, I'm seeing it day to day in my day-to-day workflow, right? So we use ChatGPT Enterprise in our organization. If I get questions coming in externally, I'll run them through my own Rizzo on Tech GPT that I've trained on my media appearances and on my internal notes. And we have notes going all the way back to the 90s on many of our companies. So that's a really exciting thing. But I think we're going to see it across finance, legal, HR. Every single white-collar workflow is going to be enhanced productivity by AI. I mean, the thing that I'm looking the most at, and what's the biggest risk to the overall AI trade, it comes down to one thing. Do the scaling laws continue? Right? And so what are the scaling laws? For every 10x amount of compute you throw at the problem, the AI gets 2x smarter. And so why was GPT 3.5 through ChatGPT such a hit? It was really the first AI algorithm that passed the Turing test. It really felt like you were talking to a person. Remember that first time you talked to ChatGPT?
I know others don't think we've passed the Turing test yet.
Well, it had roughly an IQ of 100, right? Depending, 100, 110, whatever. If you throw 10x the amount of compute at the problem and you can double that IQ, then we're starting to talk artificial general intelligence, AGI, right? An AI that's smarter than the smartest humans. And I think we're on that path, and I think that's why these companies are investing so heavily, like the OpenAI deal that we saw with NVIDIA.
And you think that companies will be able to charge for the stuff? Eventually, businesses are going to be the ones who'll pay for it.
I think right now, maybe the biggest consumer surplus in the market in the world, right? If we think about consumer surplus, how much are you charging relative to how much value that you're delivering? It may be ChatGPT.
Let's come back to the power question. I was talking to Richard Windsor about this, who comes on the show fairly often. His line is it's basically one big reactor, nuclear reactor, for every gigawatt that we build. That's a lot of nuclear reactors that we're talking about at the moment. This throttling factor of electrons, when do you start to see that manifesting itself? Because day by day at the moment, I'm hearing we're going to build this, and OpenAI has been out doing it again overnight. We're going to build even more. It's going to be in the States this time. I don't see the States building 5, 6, 10 new nuclear reactors anytime soon. I think they've got 50 in total right now. The number's going to have to go up an awful lot. Trump doesn't like green. We're going to have to go down the fossil fuel route if we're not going. Where did the electrons come from?
How are we going to do this? So a couple things. So number one, we're very lucky in the U.S. We actually have a lot of brownfield capacity. So you can turn around, you can repurpose some of the old coal plants with natural gas, or eventually small modular reactors, SMRs. But I think that's a while ago.
Does this happen?
Oh, I think we're starting to see it already. So look at what XAI has done, right? They've repurposed old factories, right, that had direct natural gas lines. I think we're gonna have plenty of electrons. It's gonna take time to build it out, but the key is that these companies are able to put the power factories right next to the data centers, and they don't have to go through the electric utilities in the U.S. right now. And if we look at those numbers coming out of OpenAI, they're staggering, right? 10 gigawatts. Let's just put some numbers around that. This NVIDIA deal that we saw, 10 gigawatts. Jensen in the past has said that each gigawatt is roughly $45 billion to $55 billion of total spend. So let's say that's $500 billion. And for NVIDIA, it's probably an addressable market of $35 billion of gigawatts. So per gigawatt, so that's $350 billion addressable market. If this is truly incremental, like the company has been saying, that's a $200 billion incremental revenue opportunity for the company. That probably comes at a 50% incremental net margin. That's $100 billion at incremental net income. And then you get equity in OpenAI on top, which is the most valuable private startup in the world, rumored to be $500 billion valuation last time. So I look at it and I say, look, that deal looks pretty good to me. I think we're going to have the power. Let's see what ends up happening, but I think fundamentals remain very strong.
Others would say that that's circular, that it's bubble-like behavior, that they're just propping up the market.
If you go back, the circular reference in the Excel data, right, in the Excel model, and look at the internet bubble, that definitely started happening in '97. So again, our job is to navigate speculative bubbles responsibly for our clients. We do that through our framework, linchpin technologies, innovating in secular growth markets with improved fundamentals at reasonable valuations. And we're trying to capture the upside and blunt the downside.
So you think we're in 97?
I don't want to put a date on it, but I feel pretty good about the current setup.
All right. His heart rate's okay.
Yeah, heart rate's good.
Blood pressure's looking pretty good.
Well, we have the order.
The self-driving car, though, does your blood pressure go up and down with that?
My wife says it's a better driver than me. So.
Dom.
No comment. No, we've never seen you drive, Dom.
Dom Rizzo, portfolio manager at T. Rowe Price. My heart rate goes up at the open. Don't know about you. But coming up on the programme, Estonia's Prime Minister says that Russian incursions must stop. We get his comments about NATO next. This is Bloomberg.
Villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor enrich technology progress, the change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade. Now, Estonia's Prime Minister says NATO will be ready to respond if Russian forces repeat a violation into the Baltic nations' airspace. Speaking with Bloomberg's Oliver Crook, Kristen Michal added that incursions are dangerous and must stop.
NATO is a collective organization, and all our allies, not in Estonia or in the case of Estonia, are always backing each other. And this was very visible in Nordic Technical Council. It has been visible in direct contacts and press releases coming from different sides. So NATO's members are backing each other up, not only with words, but also with the capabilities, as already mentioned, that different capabilities come from our allies.
And following on to sort of the war in Ukraine, which is obviously the source of much of the issues that you're currently dealing with in your airspace, you said that the aim of the Russians is to draw attention and assistance away from Ukraine by forcing NATO to focus more on their own territories. How do you prevent that from happening and keeping the focus on Ukraine?
It's quite simple. The first thing is to reveal Russia's intent, because the Russia's intent is quite obvious that all the NATO's members should be concerned with their own borders and territories, not thinking about Ukraine. And the answer is quite simple. Stronger sanctions on Russia's shadow fleet, on energy, on banking, and also assistance to Ukraine. So these will be also part of response, asymmetrical response to Russia's steps.
And the EU says that they are hoping to ban the delivery of Russian LNG into the European Union by the end of next year. Is that too long? Is that too far away? Should they be banning that earlier? And should there be a more active conversation within Europe of banning Russian oil and pipeline gas that is still permitted to go into the European Union?
Quite frankly, to my taste, the sooner the better, because Estonian response has always been that the less fresh cash goes to Russia to wage the war against Ukraine, and also to have this kind of operations or stepping on the borders of NATO, the sooner it happens, the better. So our position is the sooner it happens, the better.
Kristen Michal, the Estonian Prime Minister, speaking there. Now, the UN General Assembly continues today with Ukraine's President Zelensky expected to deliver his address just a day after meeting with Donald Trump. The US President said that Kyiv could take its land back from Russia and that NATO should shoot down Russian planes that violate their airspace. Let's get to Ollie Crook now, our Europe correspondent, who, of course, brought us that interview there. Ollie, we've had loads out of New York already on the war in Ukraine. What are you watching out for today?
Yeah, Lizzie, there's so much to unpack about really the last 24 hours. And I have to say, as somebody who is sometimes a bit skeptical of these meetings and really getting any sort of concrete outcomes, maybe not as skeptical as Donald Trump is himself of the United Nations, the last 24 hours have been absolutely loaded with activity, namely around this issue of Ukraine, where Donald Trump is basically sending a very strong signal, you know, the sort of literal details of which you may be able to doubt. Many of the European leaders will say, hey, listen, this is his opinion today. It may shift tomorrow, but the point is that he is sending a a very strong signal, A, to the Ukrainians, and B, to the Russians, that at this point he's tried going the sort of nice route with Vladimir Putin. It does not seem to be yielding the progress that he would like to see, and as a consequence, he's now going to go a lot harder. I think what I am now looking forward are the concrete details of where he's going to take that conversation. To what degree will he be acting more collectively with the sort of European allies as well? He has put a lot of things on the table over the last couple of weeks that have forced the Europeans to do things much more seriously, like banning the LNG that is still going from Russia into Europe a year earlier. That basically would not have happened were it not for the sort of pressure that was put on from Donald Trump. And I think another side of this that we don't think that much about, but I think is absolutely key, when you think about 7 months ago, the two men were sitting there in the same sort of chairs, same configuration, that horrible meeting in the Oval Office, the degree that that impacted Ukrainian morale for the people fighting, for the people within the country, to now have the United States speaking very, very vocally, very, very supportively, is going to be also just a massive support for the Ukrainians, and puts a lot of pressure for the Europeans to put the money up in order to get that equipment, buy that hardware from the United States, which the United States is now saying it is going to sell to Europe. Again, this was in doubt all a few months ago, so this is an absolute key shift in the discussion around Ukraine. I think it would have a very material impact on what this war looks like over the next few months.
And whether or not some of that technology is going to be used within Russia, I think is another key question that is increasingly being asked as well. I see this morning. Bloomberg's Europe correspondent, Ollie Crook, joining us out of Brussels this morning. What else are we going to be watching out for this morning? The EFO number will be dropping in around 7 minutes' time out of Germany. We'll get a taste of what investors are feeling about what the German situation looks like, what industry is looking like in Germany, and how industry feels. Are we going to see some fiscal impulse beginning to creep into those numbers? Home sales out of the United States a little bit later on. We'll watch out for that one as well. We've also got Mary Daly out of San Francisco speaking a little bit later on today. What is Valerie Teitel watching? Plenty of Fed speak. It does continue. We've had lots already. Anything you're watching out for today?
So much Fed speak. I mean, my goodness, there was a lot in the last few days. I think the main takeaway from Powell's speech and everything that we've heard is that Powell is really positioning himself as neither a hawk or a dove at the moment, really in between these two camps, which is giving him a lot of flexibility to react to incoming data or any changes in the narrative. Yesterday, he repeated a lot of the same lines he used in the press conference, really nothing new. There was no guidance on an October cut, but I don't think the market really expected him to say anything. We haven't really gotten any new data to change the dial from when he spoke last Wednesday. But, you know, he's really solidly putting himself in the middle, because on one side, you have the more hawkish members like Beth Hammack a few days ago saying she's laser focused on inflation and that she sees risks of the economy overheating if they cut too quickly. On the dovish side, Michelle Bowman, the main dissenter at the decision 2 meetings ago, calling for a series of cuts and the fact that it could have to go faster if the labor market continues to deteriorate. And she thinks that there is a serious risk of the Fed falling behind the curve. So Powell using neither of those strong languages, still staying down the middle. So what are we watching for today then, Valerie? Is it more Fed speak or the iPhone number that we were just referencing? It's interesting, actually. It's been the expectation number has been really rising through 2025, and you wonder how much of that is about the domestic spending story and how much of that is about the possibility of exporting more, or sort of trying to turn that relationship around with the United States with a trade deal. Look, I don't want to keep bringing up AI because I know you guys have talked a lot about it in the last 2 hours, but honestly, even for Fed policy, I think the continued narrative out of AI is starting to mean something. And it doesn't get as much reference from monetary policy types as you might expect it to. There has been some debate on what AI has done to the neutral rate, the fact that maybe it's drawing investment away into less labor-intensive areas of the economy. But essentially, if there is going to be an argument for why perhaps the Fed is just going to cut once and then be done with it, it would be that this reacceleration of AI spending is really causing them to rethink on whether the U.S. economy is slowing down. Yes, the labor market is going through a lot of flux, but it's going through a lot of flux for reasons like immigration and demographics switching. You know, if this AI boom really is the counter to that labor market slowing, you could see perhaps the Fed not cutting those remaining 2 reductions they had on the dot plot. All right, we keep an eye on that. Bloomberg's Valerie Teitel, thank you so much for your analysis. That's it for the opening trade. The pulse is up next, the EFO number as well. This is Bloomberg.
Used to be one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
President Trump says Ukraine could reclaim all territory lost in its war with Russia, adding that NATO should shoot down Russian aircraft violating their airspace. Fed Chair Jay Powell reiterates there is no risk-free path for the central bank, while Governor Michelle Bowman says the Fed is in danger of falling behind the curve and must act decisively. Plus, Alibaba extends gains after announcing plans to ramp up AI spending as the company confirms a collaboration with NVIDIA. Let's get to the markets then. Certainly Alibaba, a catalyst in the Asian session. We'll see how the ADRs perform as well, of course. Looking to invest more than $50 billion in AI infrastructure. The CEO of Alibaba saying he sees around $4 trillion spent on building out their infrastructure in the next 5 years. US futures then, after a little bit of weakness yesterday, S&P 500 closed down around 0.5%. But again, in the context of the record highs we've seen, futures today pointing to a slightly brighter picture, up 0.2%, despite the fact that Fed Chair Jay Powell did not nod to an October cut. Talked about that risk on both sides when it comes to labour and inflation. I wanted to zero on the defence story here in Europe. European defence stocks are rallying in the session. It seems on the back of comments from President Trump around how NATO should respond to Russia. Currently, that defence stock basket put together by UBS up 2.6%, so we watch those stocks. The euro at 117, we're seeing dollar strength, so the single currency is under pressure in the session today, down 0.3%. And gold closing in on fresh record highs. The gains this year to date, around 40% for the yellow metal, bolstered by maybe some of the geopolitical concerns out there, up 0.3% and closing in on 3,780 per troy ounce. Let's check in on the European map to see how the breakdown is folding. Of course, you do have some weakness across the broader benchmark stock 600 here in Europe. The CAC over in France down 0.2%, modest downside then in France. The DAX over in Germany also off about 0.1%. Slightly heavier selling here in the UK with the FTSE 100 down 0.3%. The banks are under pressure in Europe, but again, defence is gaining. Some breaking heads right now in terms of the macro picture in Germany with the IFO survey coming through. Germany's September IFO Business Confidence Index coming in at 87.7. That is below the estimates of 89.4. So the confidence index coming in below the estimates. In terms of the expectations index, also coming in below the estimates for September, 89.7. The expectations index from IFO, the estimates had been for 92. We know the expectations have been relatively robust, It's been a bit of a turnaround, it seems, on that. We'll put the questions, of course, to Clemens Fuß, the IFO Institute president, in the next half an hour on those findings, what it tells us about the health and the challenges around Europe's largest economy. Let's get more analysis. Let's get to the conversations, of course. The Pulse starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. US President Donald Trump says NATO should shoot down Russian aircraft violating their airspace. He also struck a more sympathetic tone on Ukraine's chances of winning the war. In a social media post, Trump said he believed that Ukraine was positioned not only to fight back against Russia, but to reclaim all the territory taken by Russia. He voiced his support when he met President Macron at the UN General Assembly.
Most of you have seen the recent statement I put out a little while ago, and I'm glad you got it, but I feel that way. I really do feel that way. Let them get their land back. Yep. So we'll see how it all works out.
Well, let's bring in our Europe correspondent, Oliver Crook, then, for the latest. So certainly a change in rhetoric from President Trump, Ollie, now talking about Ukraine winning this conflict.
Not just winning it, Tom, reclaiming all of the territory that it has lost is something that basically the Trump administration from the very beginning, maybe not explicitly, but certainly in private conversations, saying was a fanciful sort of dream and that people needed to be much more realistic in their approach to dealing with this war. And even as recently as a few weeks ago when he met with Vladimir Putin in Alaska, really they were talking about territorial swaps and all these sorts of things. This is 180 degrees from, maybe not what we had a few weeks ago, but certainly what we had 7 months ago when you had these two presidents sitting in the identical configuration in the Oval Office, that catastrophic meeting between Zelensky and Trump, and now Trump talking very openly, basically, about the prospect of regaining all the territory. And again, later in the post, Tom, saying that maybe they could go even a little bit further, i.e., I guess implying that they could take some Russian territory. Now, when you get into that kind of conversation from these posts, you do have to ask yourself, is this really what Trump's position is? Is this a bit of hyperbole? Is this a bit of the art of the deal to, A, send a signal to the Ukrainians that the United States has their back, has their support, but also a signal to President Putin after having tried the sort of honey approach that something much sort of harder is coming. So regardless really of where this sort of this ends up in terms of these sort of concrete terms, at least what you have over the last 24 hours is a very, very positive signal. And Tom, I don't think we can sort of underplay how important that is to the morale of a nation that has been at war for over 3 years, and to the people in the front lines to hear the President of the United States, the main backer militarily of the Ukrainians since the beginning of this conflict, is back on their side.
Okay, so a morale boost, arguably, for the people of Ukraine. We'll see, of course, to what extent President Trump sustains this new position in terms of Ukraine's prospects versus Russia. And all of this, of course, coming at a pretty tense time for NATO members, given the incursions by Russia into their airspace. What have we been hearing from those members in terms of how they plan to respond to any future incursions?
Yeah, Tom, they're really interesting here because you have sort of different perspectives from a lot of different people that we've heard. We heard from Donald Tusk, the Prime Minister of Poland, who was saying that basically anything that comes into our space, we will shoot down. We heard the similar messages from the Polish Foreign Minister. Again, Donald Trump was asked about this yesterday. What should the Europeans do if Russian aircraft are in their airspace? And he said that basically they should shoot them down. However, there are people that have taken a slightly more cautious tone, namely, for example, the Prime Minister of Estonia, with whom I spoke yesterday. Have a listen to what he had to say about a further incursion within their airspace and what their reaction would be to that.
NATO has protocols for that, and NATO has exact knowledge when something will happen. So we will follow the NATO's plans. And yes, we have the capabilities here because, to be honest, Russia's fighter jets were followed by Finns, and after that Italians coming from Estonia's side to push them out from our territory and air. But we have protocols and measures in place.
And I think as excited as everybody got about this idea about, where the red lines are and really wanting to represent those to Russia, the people that are actually on the front lines, like the Estonians, a nation of less than 2 million people who would really face the kind of direct brunt of this, take a much more sort of calculated approach to this. I should also say, just as a final point, the German defense minister came out saying something very different as well, saying that slapdash demands to shoot something out of the sky or do some great show of strength help less than anything else right now, and that basically this would play into the Russian calculation of trying to sort of create anxiety and to create escalation and then act like they are the aggrieved party. So really calling caution there from the Germans, who are, sort of increasingly the sort of main military power within Europe, particularly with the spending that they're going to do over the next couple of years.
Okay, Bloomberg's Oliver Crook, thank you for that update in the context, of course, on that important story that we continue to monitor for you, Ollie, with the latest. Meanwhile, on macro policy, Federal Reserve policymakers giving mixed signals on the path ahead, clouding the outlook for interest rates. That was underlined by Chair Jerome Powell, who warned that risks remain for both the labour market and inflation.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate.
Okay, let's bring in Bloomberg's Valerie Teitel right now. Val, how uncertain is the path ahead for the Fed?
Well, at least for Jerome Powell's mind, he is still flagging both sides of the risk to their dual mandate, standing quite out against other Fed speakers we've had this week. We've heard from the doves and the hawk. Powell is really focusing on putting himself right in the middle. It was just a few days ago we heard from the hawk, Beth Hammack, talking about the risks of the U.S. economy overheating if they cut too quickly. And then on the dovish side, we also heard from Michelle Bowman yesterday. She even said that there is a serious risk of the Fed falling behind the curve and is warning on any further labor market weakness that the Fed needs to amp up the pace of its rate reductions. Powell really talking about both sides of those risks, not really harping on either one, said a lot of the same kind of messaging he did just a week ago at the FOMC press conference. He did seem to jolt the equity market, though, to the downside when he was asked about equity market valuations. He did respond that equities do look highly valued on several metrics. So it did seem to dent the equity market just slightly yesterday, though, but it was just undoing Monday's rally. We are still trading basically flat on the week when it comes to S&P futures. But regardless of where the equity market is going this week, there is one asset that is continuing to see a breakout, and that is gold. We've had 3 straight days, Tom, of record highs for the yellow metal, or coming very close to making it a 4th. Is this geopolitics? Is this worries about the Russia situation? Or perhaps is it real money investors out there thinking they're underinvested on the yellow metal?
Yeah, this is a daily story, it seems. Bloomberg's Valerie Teitel. We'll see if it notches another record high, as you say. With a check there on the markets, the response, of course, to what we've been hearing from some of these Fed speakers, including Chair Jay Powell, and a further move higher for the yellow metal. I want to get back to one of the key corporate stories of the day, the catalytic effect coming through from Alibaba and the CEO and the company announcing plans to invest more than their previous target of $50 billion on infrastructure and the training of their new large language models. Also reports of a partnership with NVIDIA, which is intriguing. You can see the shares pre-market jumping more than 9% and really catalyzing the view amongst the optimists that there is further to go in this AI theme. So continue to watch Alibaba on the back of that. Let's get back to the markets more broadly right now and bring in Johanna Kirkland, CIO for Schroders, with a view on gold, interestingly, and we'll get to that, Johanna. But broadly across these equity markets, you've recently you've been constructive all year. You've turned more constructive in recent days. So you've upgraded your view on equities to positive. What underpins that, given concerns from some around valuations?
So generally, we've been positive on equities all year because our view is the sort of populist policies lead to higher nominal growth. This emphasis on fiscal policy that we've seen out of the United States is very positive for nominal growth. So it's a simple view, but it has been working. The reason why we reiterated that stance most recently is because I guess when we look at the Fed debate, we've erred more on the sort of things a bit too hot side of the equation. So we view the fact that they cut rates most recently as being, quite dovish relative to the reality of the labour market, which is still quite tight. So ultimately, we have a very reflationary policy mix now in the States, loose fiscal policy, and now falling rates. Ultimately, that's very positive for equities. That's what drove it.
I understand the short to medium term thesis on that front, but do those policies come back to bite in 2026?
Absolutely, they do come back to bite because ultimately we are concerned about inflationary pressure rising again in 2026. And certainly if they cut rates too aggressively, we would view that as a policy mistake. So yes, I think that this might come back to haunt us in 2026. And that's why, on the other hand, we've also been bullish gold all year, because we see it as a very good counterweight to our positive view on equities.
So you don't think the run-up in gold, up 40% year to date, that's not looking too stretched for you? Is there a target in mind? How are you thinking about how the gold story evolves from here? You're suggesting that the window has not closed to those who don't yet have exposure to the yellow metal.
It's obviously harder if you haven't owned it so far. We've generally been positive for the last couple of years because we think in this environment, the ultimate constraint on all this sort of fiscal spending, including defence spending in Europe, the ultimate constraint ultimately is the bond market saying enough. And so gold is a good hedge against that risk. It also does well when real yields are falling. I think that's what's propelled it most recently. I think it's still a good position to hold.
How do you tie your view on gold, or at least how do you tie your view on the Fed to the dollar, and whether or not, what would you need to see a turn in the dollar, given the weakness that we've seen for the greenback?
Well, we need to see a stronger dollar, you mean?
So a stronger dollar, yes.
Yeah. We would need to see the Fed moving more hawkish. I think the flows generally we are seeing a number of institutional investors reviewing their US exposure, not because they're abandoning the US, but just because they're recognizing that maybe after many years of investing in the US, the exposure to the dollar might be too high in their portfolio as a starting point. So portfolio flows are going against the dollar, as far as I can see. The one counterweight to that is rate differentials. Again, we think the US economy is in fine shape. We see a low risk of recession. If the Fed doesn't end up cutting, as some people expect, rate differentials will be on the side of the dollar. So for me, it would be a return to that US exceptionalism where they continue to deliver better growth than expected. And that is a possibility.
Okay, so continues to be a clear link between the rate environment and the dollar at this point. Of course, there is a view in Washington that President Trump will remold the Fed, maybe more in his image, and so the new Fed chair will be consequential in that. When it comes to the Treasury story, the yield story, is there part of the Treasury curve, that you'd be comfortable sitting in right now? How are you comfortable in terms of how well priced or not the Treasuries are at this point?
At the moment, we're negative on bonds because, again, we have this view that the Fed shouldn't get too dovish here. So, the front end has started to price quite significant rate cuts in the United States, and we would be above the curve at the front.
Yeah.
And then the longer end is still somewhat challenged by the fact that people are concerned long term about the sustainability of government debt and the independence of the Fed. So a term premium is required in the bond market. So right now, we're underweight duration.
What's your regional bias? US versus Europe versus EM?
On the equity side, we've been favouring the US. That's been a core view. Again, the US the reason why US exceptionalism is there is partly because of the tech story, but also because they're able to spend more fiscally than any other country in the world. We let them get away with it. On that basis, the US economy does well. So we're positive on the US, also positive on emerging markets. They benefit from a weaker dollar. And so generally, we've been positive on emerging equities.
How much, you didn't mention AI in that view on the US. Do you have conviction in terms of how much further the AI momentum can run? I mean, it's now a significant component, or at least not an insignificant part of the growth story in the US, arguably, given how much has been committed to infrastructure spend.
Hard to time that one.
Yeah.
I think that, there are elements which are starting to feel a bit frothy on that story. But for now, I think the US remains dominant from a technology standpoint, and that's why it's a market that's hard to ignore.
Okay, the US, a market that is hard to ignore. Johanna Kirkland, thank you very much indeed. Always appreciate your insights on these markets. CIO at Schroders. Coming up, we'll discuss the outlook for IPOs after a recent flurry of activity. As the window now opened on these capital markets, is there more to come? Size and shape of these deals. That is next. This is Bloomberg.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
We think that the risk on inflation are very balanced. And we are in a good place. I mean, we are right on target. We will be close to target for the next 2 years. Inflation expectations are well anchored, so we are in a good place in terms of inflation. Again, the risks are balanced.
Okay, that was European Central Bank board member Piero Cipollone speaking, of course, to Bloomberg. Now, there has been a flurry of recent listings in Europe, a sign that tariff-induced caution that had disrupted deals has passed. Online marketplace firm SMG is Europe's largest IPO to trade so far this year. Alarm firm Verisure and Swedish financial services group Nova Bank are both set to debut in the coming weeks, and they'll be key, of course, to decoding the health of Europe's IPO market. Of course, we also had Klarna listing in the US. Let's bring in Gareth McCartney then, Global Co-Head of Equity Capital Markets at UBS. Gareth, thank you for joining us on the IPO story that has finally become interesting. How would you characterise this level of activity? Put it in its kind of historical context. I mean, particularly compared to the last couple of years. Are we back to kind of the normal when it comes to IPOs?
Look, I think we're on the path to normal. The IPO market traditionally is very cyclical. We had a super peak in 2021, and then unusually we had pretty much 2 to 3 years of the market being effectively closed. 2024 was really the definitive reopening of the IPO market, particularly here in Europe with some larger issuers. And I would say now we're running roughly up 50% year on year in terms of volumes. But importantly, if you take the 5-year average, we're still 30-40% below that. So I think we're on the path to normalization. And my expectation is the remainder of this year and 2026 will be a normal functioning IPO market.
Okay, a normal functioning IPO market towards the end of this year and into 2026. But given what you said about the fact that essentially the IPO markets were closed for 3 years, does that suggest the pipeline activity is going to pick up? That there have been all these companies waiting on the sidelines, ready to list, and that the pipeline is going to look more robust in the years ahead?
Yeah, absolutely. I think, look, we brought forward a lot of the pipeline in 2021. Right. I think that explains some of the anemic activity we saw in 22 and 23. If we look at it today, what's encouraging to me is, A, this is a global phenomenon. We've got Asia, US, and Europe all open concurrently. There's some quite good themes underlying it for secondary market investors to participate in. I think whether you look at fintech, whether you look at AI, whether you look at software, and then I think here in Europe, the infrastructure and the defense spending with the fiscal growth we're seeing. So there are multiple themes for investors to play. This is not just a one single theme event. And ultimately, you're looking at the US for growth, and I think Europe and Asia for more traditional companies.
Are the IPOs that we've seen so far year to date very idiosyncratic, or they're common on similar traits amongst those listings?
I think we're building some common traits. I think business services is always a nice market where the private equity groups tend to have some pretty good assets that come to market. SMG is a very good example of that in terms of growth in the classified space. I think there's a cluster of fintech opportunities globally, which will continue to be interesting. Klarna was a very good example of that. So I think what we are seeing, though, is still an investor base that is in selective mood. They want larger assets where there's bigger liquidity in the aftermarket, which helps de-risk a little bit. And secondly, they really want to see very strong equity story supported by growth.
How would you characterize the liquidity environment right now?
Yeah, liquidity environment's never been better. I think I keep a very close eye on M2 money supply in the US. We're running up another 5% this year. You only need to look at the Fed potentially to cut rates further. And certainly when we talk anecdotally to investors, they have significant amount of capital to deploy, and they're really struggling to keep up with equity markets, which are again up double digits this year. So the IPO market, and I think ECM issuance in general, is a great way for them to deploy that capital. So this is not a supply side of cash story. This is much more about a supply side of good, interesting companies coming to market.
Does that suggest there's some resilience if we get a place, we're at record highs approximately for global stocks? Some are getting a little concerned about how far things have run.
Yeah.
If we were to get a correction, does that derail the activity we're seeing, or is there some resilience to that?
Look, I think there's resilience for a few reasons. Number one, every IPO comes down to its explicit equity story. Number two, the cash call we require from the market for IPOs is not significant in the broader picture. And three, if you look at preconditions for issuance, you want the VIX generally to be quite low and sustainably low, because IPOs are quite a long-term project from a strategic decision-making perspective, and you've got good multiples that you're comparing the companies to. So we've had a 50-60% move up in the US over the last 24 months or so. I think there's quite a good cushion for residual valuation, and really therefore it comes down to us bringing good stories to the market that are liquid, have a good equity story, and an investor base that's got cash to deploy to it. But critically, this is not 2021 that we're in right now. This is still a selective market.
Someone seems to have lit the fire under Stockholm for IPOs.
Yes.
It seems to be booming on that front, or at least doing very well. Why? What is Stockholm getting right? What is the attractive value of Stockholm at this point?
Stockholm's always been attractive, I think, because there's a deep pool of high-quality, long-only domestic money. So I think with retail there, it's helpful, but I think you've got a domestic investor base, whether it's the pension funds or some of the traditional actively managed long-only funds, that therefore can really form an attractive shareholder register for potential companies to come. And I think the last point is the governance has always been very strong in Stockholm, so international investors want to invest in high-quality companies in the region, knowing they're investing alongside a strong domestic investor base.
Okay, we'll see if UK regulators are looking at Stockholm as a potential case study. They're trying to get more pension money into the equity story here, into the capital markets of the UK. Klarna, though, obviously famously a Swedish fintech, very successful, listing, of course, choosing New York to list, not Stockholm. Do you still see more European companies, particularly within the tech space, choosing New York over Europe in the near to medium term?
Look, there's no doubt there's a halo effect around growth stocks going to the US. There's many reasons for that, I think, in terms of the depth of capital base, perhaps the comparables. There are more stocks that are listed there, so it's easier from an investor perspective to pin a valuation relative to an existing listed company. That said, we have had very good examples in the UK and Europe of excellent stories, whether it's Adyen or Avast, for example, where investors have been very happy to support those companies in Europe to list. They've supported them in the aftermarket, and they've delivered compelling valuations. So for me, it's not a relative valuation story. It's not a relative lack of investor base or understanding in Europe. I think it's just you've had a cluster effect where growth has done well in the US. It's the right home for it. And therefore, I think as we go forward, it will come down to specific strategic reasons for where that company wishes to list. Yeah. But fundamentally, Europe works for good stories, and the US works for good stories. It comes down to individual
Really interesting nuance. Gareth McCartney with those insights, of course, Global Co-Head of Equity Capital Markets at UBS. Thank you. Plenty more coming up. We're going to bring you the president of the EFIO Institute on the back of the latest survey. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning, welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. President Trump says Ukraine could reclaim all territory lost in its war with Russia, adding that NATO should shoot down Russian aircraft violating their airspace. Fed Chair Jay Powell reiterates there is no risk-free path for the central bank, while Governor Michelle Bowman says the Fed is in danger of falling behind the curve and must act decisively. Plus, Alibaba soars after announcing plans to ramp up AI spending as the company confirms a collaboration with NVIDIA. Now, German business confidence unexpectedly dropped for the first time since April. It highlights, of course, the fragility of Chancellor Friedrich Merz's plan to restore growth in Europe's biggest economy. Joining me now is Clemens Fuest, president of the IFO Institute. Clemens, always a pleasure to speak to you on the back of this survey and the updates. What do you point to when it comes to this unexpected slowdown in the business sentiment of Germany?
Good morning, Tom. Yes, it's an unexpected setback, and what we see is that mood in the service sector has worsened, and that's really a surprise because the service sector was the one sector that was relatively stable in recent years. And now we see a setback here. We see it in transport and logistics, for instance. Of course, that's closely related to manufacturing, and in the manufacturing sector, the weakness continues. So in recent months, there was some optimism coming up because companies expected the government to spend more, and they expected the new government to reform the economy. And now companies realize a lot of the borrowed money is actually going to consumption to plug holes in the budget, and there are few plans for credible reforms. And that explains the decline in the index.
Okay, so there's a lot to unpack there, but this is a resetting, arguably, of expectations amongst the business community then, given what they thought was coming down the pipe in terms of those spending pledges on infrastructure and defence. That is still part of the plan of the Chancellor and this government. So I guess my question is this a short-term dip, Clemens, before that fiscal stimulus comes through, or is this something more profound, more structural?
Well, one would hope it's just a dip, but I'm afraid it could be structural. The trouble is we see that the government, yes, increases investment in the new fund, in the new debt finance fund, but cuts investment in its core budget. So it's really using the funds to plug holes in the budget. It's using them for government consumption. It's exactly a development where experts had warned. IFO has also warned. I mean, this is something that shouldn't happen. Of course, money is fungible, So the trouble is, if that happens, the infrastructure investment will just not be forthcoming. The money will be spent on consumption, and people are worried about that. We also see that the government doesn't really come up with plans to address the most pressing structural issues. For instance, pension reform. We all know that due to demographic change, there will be increasing spending on pensions, and that will drive up the taxes if there is no reform. But this reform is just not forthcoming, and it seems that companies are now realizing this and are worried about the consequences.
Okay, so the lack of reform is an issue as well. Across the different sectors that you look at, Clemens, I mean, clearly there has been pressure on chemicals, on the auto sector, construction to some extent as well. Are those still the pain point industries and sectors? What are you seeing in terms of the nuance between different parts of the German economy that stand out to you?
In the data today, it's really a weakness across the board, and what's joining the weakness now is the services sector. That used to be a more stable sector, but we see that services are weakening as well. What we also see in the data is an uptick in uncertainty perceived by companies, and as we all know, if companies think the world becomes more uncertain, they tend to invest less. In manufacturing, we have seen the weakness in incoming orders for some time, and that's related to the weakness in exports. Usually, after a downturn, the German economy recovers, driven by industry, driven by exports, and that's not happening this time, and that's worrying.
Clemens, where are we in terms of the ability for German enterprise, German industry to adjust to the tariff regime imposed by the Trump administration? We have the deal, of course, between Brussels and Washington. Where are we on adjusting to those higher tariffs?
Companies are adjusting. We see some weakness in export to the United States, so there will be fewer exports. The trouble is that for a permanent adjustment that would create a basis maybe for new investment, for improvements, companies need certainty, and they don't really trust the deal between the US and Europe. They still think maybe the US government will change the tariffs again. So there is a lack of reliability, and that makes things difficult. At the same time, German companies, the traditionally strong sectors, machinery, cars, these sectors are losing competitiveness relative to other nations, in particular China, and that is felt across the board in exports, not just in the US market, but globally.
The ECB has managed to get rates down to 2%. Inflation has certainly been tame, certainly when you look at the UK versus Europe. Does the rate environment prove a catalyst? Are there industries that are starting to see the benefits, at least, of lower rates?
There certainly are. This is certainly a positive factor, and perhaps even the prospect of further rate cuts if the economy continues to slow, and tariffs could be a factor for that. We think there would be room for more rate cuts. Of course, Germany is at the lower end of the European economy, so growth is a bit stronger in other countries, and the ECB does monetary policy for the Eurozone as a whole, so it's not quite clear whether this monetary policy is really tailored to the German situation, something we need to live with. But still, I would say the interest rates are maybe not the key concern. Debt levels of German companies are relatively low still, of most German companies at least, so lower rates would be welcome, probably more for the construction sector than for manufacturing, but it's not, I would say it's not the most important factor.
Clemens Fuest, President of the Info Institute, thank you very much for your time with the German business outlook declining for the first time since April. So we touched on the auto sector of Germany. Now let's switch focus to the UK and that sector here. Jaguar Land Rover is trying to clear a backlog of payments owed to suppliers. It's due to a crisis caused by a cyber attack that's brought the car maker's factories to a standstill. Joining me now is Bloomberg's UK business editor, Jamie Nimmo, who focuses on autos in granular detail, and, of course, the JLL saga. So the impact of the cyber attack, and now it's having secondary and tertiary effects as well, Jamie. How significant is this?
Yeah, quite significant. I mean, the auto sector in Britain is very reliant on JLR. It's the biggest car maker by some distance, and what we're seeing now is it's lasting for more than 3 weeks into next week, so that's at least 4 weeks. That's having this knock-on effect on suppliers that are completely reliant on JLR, especially small ones, which make anything from, could be a seats, could be exhaust systems, could be anything. We're talking hundreds of suppliers. And that is having, well, it will ultimately have a knock-on effect on the other car makers that rely on those suppliers. So it's quite significant.
So there is that broader impact across the sector, given the size and scale of JLR within the UK auto industry. Is there any indication as to when they can restore production? I mean, as you say, 3 weeks is pretty remarkable in terms of the length of time this has gone on, and then all the impacts as a result of this. When do they manage to get back on the right footing and solve this issue?
Yeah, so last week they hoped to be up and running today. Right. That hasn't happened. Yesterday they extended that by another week. Now, there are reports that say it could last into November and then potentially not completely up and running again until maybe even New Year. Now, Jaguar Land Rover is pushing back on this, saying that we will be up and running. But you know, these sort of things take time. And we saw with the Marks and Spencer attack earlier this year, it took them months to get up and running and to get full produce in the stores, in their retail stores regularly. So it really could have a sort of longer term impact. And that's, you know, big blow for Jaguar Land Rover, but big blow for all those suppliers who are going to be reliant on that business.
Okay, Jamie, fantastic update. Thank you very much indeed. We'll see if they can turn things around quicker than the new year. Jamie Nimmo, Bloomberg's UK business editor, thank you. Switching focus now to what's happening in the Middle East, particularly with a lens on the equity markets there, because stocks in Saudi Arabia are soaring on a Bloomberg report that the kingdom may soon allow foreigners to own majority stakes in local companies. Right now, there is a cap of 49% for listed firms. Bloomberg's Saudi Arabia bureau chief, Christine Burke, joins us now from Riyadh. Christine, what more do we know about this? This could be pretty seismic.
Yeah, it could be seismic, and we're definitely seeing the market reaction today indicate just how big this could be. Already, Saudi Arabia's market capitalization today has jumped by more than $120 billion. So we had an exclusive opportunity to sit down with the CMA, and what the CMA told us is that they are currently reviewing the rules of majority foreign ownership of Saudi stocks. As you mentioned, they currently stand at about 49%, but they're looking to remove that so foreigners could come in and be majority owners. Now, we do not know how high the Saudis could eventually go, but we are told that they expect some kind of decision to come into effect before the end of the year. So this is pretty significant. It is one in a series of moves the Saudis have taken recently to try to draw more foreign investor capital into the market, but the most dramatic and significant one yet, because this would be the first time ever that foreigners would be able to have majority ownership in a local Saudi firm.
What is the broader significance then of this change and what it signals about the reforms of this Saudi government?
Well, I mean, I think it keeps with the theme of the fact that Saudi Arabia keeps continually saying it is open to the world, and that's exactly what we're seeing when it comes to many things in the kingdom, but with the capital market specifically. Why this is such a significant deal is that the MSCI weighting of Saudi would go up if they remove this foreign ownership limit. So that stands to bring in billions in dollars worth of inflows to the Saudi market just by default and the changing of the calculations. JP Morgan today has said it expects $10.6 billion of inflows. EFG Hermes, another firm that is saying it expects $10 billion. And it is expected that we will see Saudi banks be the biggest beneficiaries of this. On top of the actual effect to the market directly, I think there's a psychological hurdle that you remove here. I mean, if foreign investors previously looked at the Saudi market and knew they couldn't have majority ownership, then perhaps that, created some hesitation to get involved. Already a number of investors have been saying to me this morning that this could pave the way for more cross listings, for more M&A, and just for more investors to look at getting more deeply into this market that's opening up to the world.
Okay, there we go. Significant changes afoot, potentially, as the Saudis look to some of those ownership changes. Saudi Arabia Bureau Chief with the details, Christine Burke, thank you very much indeed for that update. Also making the news this Wednesday, Super Typhoon Regasa is set to cross China's southern coast later today after battering Hong Kong with torrential rain and 195-kilometre-per-hour winds. It has already left a trail of destruction. At least 14 people have died in Taiwan. More than 100 are missing, and at least six people have died in the Philippines. Alibaba's shares surged to their highest in nearly 4 years after revealing plans to ramp up AI spending. Chief Executive Officer Eddie Wu says Alibaba needs to keep up with the $4 trillion worldwide AI spending he sees over the next 5 years. Alibaba is also integrating NVIDIA's suite of AI tools into its cloud software platform. Meantime, Cathie Wood's funds reopened positions in Alibaba for the first time in 4 years on optimism over the Chinese firm's push in artificial intelligence. And Micron, the largest US maker of memory chips, has given an upbeat forecast saying AI has boosted demand, but the company warns that spending will go up as it tries to keep up. Micron says it expects the supply to remain tight into next year. Demand for data center equipment is stretching the ability of companies to keep up with orders. And Tether is said to be in talks with investors to raise as much as $20 billion. Sources say the El Salvador-based crypto firm is seeking the funds for a roughly 3% stake through a private placement. That could value the issuer of the world's largest stablecoin at around $500 billion, ranking it among the world's most valuable private companies. And US late-night host Jimmy Kimmel became notably emotional as he returned with his show to TV. Disney suspended Kimmel's show last week following controversial remarks the comedian made about the assassination of Republican activist Charlie Kirk. At the start of his ABC show, the comedian thanked both political supporters and opponents who had backed his freedom to share his views on air before offering this conciliatory message.
And the truth is, I don't think what I have to say is going to make much of a difference. If you like me, you like me. If you don't, you don't. I have no illusions about changing anyone's mind. But I do want to make something clear because it's important to me as a human, and that is, you understand that it was never my intention to make light of the murder of a young man.
Well, Kimmel went on to call the push to take his show off air un-American. In a social media post, President Trump floated the prospect of unspecified future legal challenges against the decision to bring back the show, calling him an arm of the Democratic Party. Coming up, AI-enabled software that is powering a new vision for defense drones. A significant deal. We will bring you the details next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My advice always as a Finn is to stay calm in these kinds of situations and build up a deterrent which gives a disincentive for Russia to continue. But when they continue, stay calm and deal with it.
The President of Finland, Alexander Stubb, on these interventions, of course, by Russian aircraft into the airspace of NATO members. Let's check in on defence stocks right now, because they are getting a lift on the back of some of the commentary out of the United Nations, particularly President Trump and his suggestion that NATO members could consider shooting down Russian jets if they intervene again in NATO member airspace. And of course, NATO members trying to align the response should that happen again. So some of those defence stocks that have performed very well year to date, up again in the session today. Rheinmetall, gains of 2.2%. Leonardo, of course, over in Italy, gains of more than 3% right now. Thales and BAE Systems, all part of that mix as well. Let's continue on the defence story. And what a salient moment to talk about this, given the concerns, the anxiety around those interventions by Russia into NATO member airspace, because a startup that provides software for military drones has raised $130 million to expand its operations abroad. Auterion Software gives uncrewed aircraft better navigation and targeting capabilities, which makes drones cheaper and more effective with its autopilot and tools for swarming. Alex Ferrara, partner at Bessemer Venture Partners, who led the financing round, joins me now. Alex, thank you for joining us in the studio.
Thank you.
On the back of this deal, and again, at a time, of course, where we're all trying to think about how NATO should respond to the interventions, and clearly drone technology is going to be part of that, if not now, then into the future. What does Auterion do? Why did you back this company in particular? So many different drone makers out there and defence tech startups right now. Why Auterion? What do they do that differentiates them?
Sure, you're absolutely right. So it's a very crowded space. There are a tremendous number of drone companies as we started to look at the market. But Auterion is really providing the operating system. They're sort of the Microsoft or the Android operating system for the drone industry. Lorenz Meyer, the CEO, invented Mavlink and a set of open source products that are the core flight control systems for a lot of drones. I think they power something like 95% of the drones out there. So we were excited about it because we like to invest in software, and this software is the operating system and to some extent the app store that enables the entire, we hope will enable the entire industry.
Where are they in terms of acceptance? To what extent are defense companies and governments looking at this solution right now? What is the momentum they're seeing?
Well, at the most basic layer, the lowest common denominator, this flight control software, they power, again, like 95% of the drones out there. As you move up the stack to more advanced capabilities like terminal guidance, which is used for guidance in GPS denied or GNSS denied environments, they also provide a large number of drones with their technology. They've partnered with a host of the primes, including Rheinmetall and Lockheed and some others, and they're now being used with, I think, something on the order of tens of thousands of drones in Ukraine on the battlefront, both for reconnaissance and surveillance, as well as for other sorts of missions.
And to be clear, those tens of thousands of drones in Ukraine and elsewhere, the software allows different hardware, different drones made by different companies.
That's right.
And it allows interoperability between all those different drones.
That's exactly right. So as long as their software is being used across a heterogeneous fleet of drones, they can synchronize. And a more recent version that they've released now allows drone swarms. So you can have an operator control tens or hundreds of drones simultaneously in a swarm mission.
How are the primes, so how are the main defence contractors viewing Auterion? You talk about Rheinmetall, the partnership there. So are they more of a partner or more of a threat?
More of a partner. So we are not looking to disrupt any of the primes in any way. We are a partner to the primes. Our technology is software, it's AI based, and it's really meant to enable capabilities that were previously impossible, such as this kind of drone swarming capability that the primes, from what I understand, don't currently have for the types of small, low-cost drones that Auterion is powering today. But over time, I think the hope is that they're going to both partner with the primes and enable and fill that gap that the primes haven't, today, at least put resources behind themselves.
They have a contract with the Pentagon. They have a contract with Taiwan.
That's right.
Other contracts in the pipeline with national governments?
Yep, absolutely. They've got. That's one of the things that got us very excited about the business and caused us to make this preemptive offer to invest. They have a really exciting pipeline of opportunities in addition to on the order of 100 million of revenue that they're generating.
What's the most likely exit outcome for a company like this? I mean, they get bought by a Rheinmetall. They list, private equity comes in. I mean, realistically, we haven't seen any major exits within defence tech recently.
That's right. It's so early, right? I mean, even at 100 million of revenue scale, we consider this a Series B investment. Yeah. We look to invest in these companies for a decade or more. Some of our companies have taken 15 or more years before they've gone public. Our company StubHub went public just last week is a good example of that. So it was around for 20 years. So we take a very long-term view. We're not thinking about the exit today. However, I will say, when you look at some of the public markets, we think they're becoming increasingly receptive to these kinds of companies. We think there's going to be a whole host of newer primes that emerge that are software and AI based. And even if you look at the existing primes, Rheinmetall, you mentioned, at the beginning of this, their stock price is up something on the order of 25 times in the last 3.5 years. We look at that and say, wow, that's a venture return. We'd love to be, have investments like that. And so our hope is that whether it's an M&A outcome or an IPO outcome or even a secondary at some future point, much like we see with later stage companies, there are many paths.
And you talked about the fact that Auterion wants to be the Apple, the Microsoft of the drone world. On the drone makers themselves, interesting, the CEO of Rheinmetall recently came out and said he sees a bit of a bubble. Mm-hmm. Does that align with what you're saying? There's so many companies producing these drones, whether it's a Helsing or a Anduril or many others, Quantum Systems. Is it looking a bit bubbly in terms of the makers of these drones?
It is. It's really always difficult to tell when you're, maybe we're in the bubble, maybe we're not. However, I think what we have seen is that the nature of warfare has changed. I think the Ukraine war has really demonstrated that. Not only the use of AI, the use of these kinds of low-cost drone capabilities, but the economic equation has changed as well. When you've got these low-cost drones that are able to take out high-value targets, whether that's a tank, whether that's a radar installation on a battleship, that really changes the game. And so we see that as disruptive and an opportunity. And I think that's one of the reasons why there's so much competition and interest in this market. So
what is your understanding of where our adversaries are on this front? I'm thinking of the supply chain advantages that China has when it comes to producing drones and the engineering talent they have on the software front. To what extent do we have a moat at all when it comes to China's capabilities?
Right. Well, that's actually a big part of one of our broader investment theses, which includes defense tech, space tech, and building out the advanced industrial manufacturing base. Because I do think across Europe and the Western world, we have, in many areas, lagged behind China. And I don't think it's an unassailable challenge. I think we're, working to catch up. But there's no question that when it comes to the production of some of these drone capabilities, robotics, and so forth, China is fairly far ahead, at this point. Now, our hope is that technologies like Auterion will enable each of the individual countries to build out their own individual defense industrial bases. So we can let 1,000 flowers bloom. There'll be, production in each of these locations powered by the intelligence that Auterion is providing.
When you think about how this whole technology evolves into the future, and we're thinking about drone swarms, we're talking about different national defense capabilities. I mean, clearly the need is there. Do you ever get a little bit concerned around how this technology is upon us?
Absolutely. It's something I think we need to think about. First, I'd point out that the substantial majority of the usage for this technology historically, from what we've gathered, has really been more ISR. It's intelligence, surveillance, reconnaissance. It's really used to gather information about troop buildups at a border or other activities of interest. And certainly these technologies are used for kinetic missions, as they call them. But our sense is also that this is to some extent deterrence. Okay. Like over time, both sides having these capabilities will be a positive.
Alex, really appreciate you coming in on the back of that deal. Alex Ferrara, partner at Bessemer Venture Partners. The EU's Foreign Affairs representative will be speaking to Bloomberg Tech, 4 p.m. London time. Up next is Bloomberg Brief. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So We were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. AI adrenaline. Alibaba gets a boost after announcing a collaboration with NVIDIA and ramping up its AI budget. Demand still strong. Micron gives an upbeat forecast thanks to strong appetite in AI equipment. And a tone shift. President Trump shows optimism about Ukraine's war prospects while saying NATO should shoot down Russian jets that violate NATO countries' airspace. Let's take a look at markets, though, because we did take a breather yesterday. The Mag 7, in fact, down 1.5%. This after the market didn't get any extra sugar high from Jerome Powell. Not that we were really expecting one, but he certainly didn't pave the way for any more rate cuts, any more than he did after the FOMC meeting. Also, though, this idea started percolating that NVIDIA and its suppliers and clients, that there was this virtual/vicious cycle going on between these companies paying one another to do business with one another, if you like. Now, that said, Micron may set the tone today, because then Micron came out after the close last night and gave a very upbeat forecast on demand. So we do see futures rising once again. Bear in mind, the S&P 500 is already 3% above the average analyst estimate for the end of the year, and this has only happened 3 times. So we'll see if it holds, but we have been breaching those records, that's for sure. Russell 2000 has been a little bit more volatile, but again, futures pointing to a higher session today. Let's take a look at yields. We're down a couple of basis points across the curve. As you can see, the 2-year yield at 356. That 30-year yield is all the way down now to 471, and we're at 410 on the 10-year. And I also want to point to oil as well, because this tone shift from President Trump may have an impact on oil markets. We're already seeing responses from the likes of Iran. Right now, though, oil down a little bit. Brent is still above $67 a barrel. All right, let's get to some individual stock movers now. Over to London and Valerie Titel. Valerie.
Good morning, Bonnie. Let's start with Alibaba. The CEO out claiming they will be boosting their AI infrastructure spending to over $50 billion. Shares of Alibaba absolutely flying on the back of this news, up near 9% so far in pre-market trade. But the CEO saying he estimates that AI infrastructure spending is going to reach $4 trillion in the next 5 years, and they do not want to fall behind on the AI race. We also heard separately that they have confirmed they will be using NVIDIA software in some of its robotics and a tie-up with the 2 large tech firms. And also separately that Cathie Woods, the famed tech investor, had bought a stake in Alibaba just last Monday. So a lot of positivity around Alibaba. The shares are up around 40% this month alone, and adding to that in pre-market. Next, let's move on to Micron. This one, as you mentioned, out with earnings, gave some strong guidance and also beat when it came to revenue. The stock is up 1.5% in pre-market trade. trade. There was a very high bar going into this earnings release because Micron has rallied 45% in the month of September alone. The high bandwidth memory chips that Micron creates are critical to producing these AI models. So they beat that high bar and then some. Micron in the green. Lastly, let's move on to Lithium Americas. There are reports that the Trump administration is looking to convert a Department of Energy loan into a 10% equity stake in the company, very similar to what they did with Intel with their CHIPS Act funding. We're seeing shares of Lithium America up 66% in pre-market trade. Bonnie?
Valerie, thank you so much. Valerie Titel there in London. And in just moments, we'll hear from Max Kettner of HSBC on the potential for a continued rally in risk assets. Later this hour, JP Morgan's Sitara Sundar on her call for a shift in portfolio strategy. So Max Kettner of HSBC seeing more room to run for this equity rally as stocks hover near all-time highs. He writes, the broad-based asset price inflation is continuing on full throttle, and we think there's more to come. Max joins me now, Chief Multi-Asset Strategist at HSBC. Max, if you weren't already in the hotspots in this market, what would be the reason to get in now? What will the catalyst be for it to power even higher?
Yeah, good morning, Vonnie. Thanks for having me. Look, I guess in terms of the data, actually, what we are seeing, and particularly in the last 2.5 months, is not only that the data and the activity data broadly in the US, except for the labor market, is quite okay. It's actually quite fine. It's not only that, but it's actually in large parts even accelerating and re-accelerating. So we're starting to see things, particularly on the consumption side, credit card data, weekly retail sales, all of those things have actually been picking up since the end of June. So clearly we are seeing not only data being fine and not pointing towards recession, but we're even seeing a re-acceleration. And I would also point out that a lot of bottom-up data, think earnings revisions particularly of cyclicals, think what companies tell us themselves. So when we look at the net number of companies either upgrading or downgrading their own forward guidance, that has shot higher, particularly since the beginning of the second quarter reporting season. And all of that actually only happens typically only at an early stage of the cycle, once we typically come out of a recession. Now, of course, that is not at all the case at the moment, but we are seeing particularly some of the bottom-up data looking like it's early cycle, some of the top-down data not only being fine, but looking like re-acceleration. And that, of course, is actually something where we say, you know what, it's not just about AI. AI is not just the one game in town.
Yes.
It's also other things. We are seeing that growth data more broadly are also picking up.
So you are looking for outperformance in cyclicals, so maybe banks, travel and leisure, and so on, in the US and Europe, or specifically Europe, specifically US?
So I think it's a bit more nuanced. I would say it's particularly in the US where we do like the financials, the banks, where we do like the industrials, right? So a bit of a broadening out into the cyclicals. I'd be a bit more skeptical about small caps. So, you know, small caps with that really, really high degree of floating rate debt, that I think is a little bit more complicated because, of course, as soon as yields get sort of a hunch of, okay, growth is actually doing a little bit better, perhaps our terminal rate expectations and even our very front-end rate expectations are a touch too dovish, that of course would immediately then be, at least from a relative perspective, a headwind for small caps. Whereas I think it's within cyclicals really in the US. But I think, you know, there are other pockets as well. I think when we look, for example, at the financials in the Eurozone with continued curve steepening and bonds, that is still good for the banks. You know, when you look at Japan also at the banks, that also still good, as perhaps also the Bank of Japan really has to hike in October.
Yeah, definitely on the path to normalization. Max, any of the recent headlines like the H-1B headlines, for example, or the potential for a Trump Xi meeting, do any of those change your base case depending on their outcome?
No, so we basically stopped caring about the politics really since the announcement of the US-China pause in May. I think investors overall, when we look at the broad risk-on, risk-off picture, if we look at the, you know, is our risk assets going to outperform? Is it more a high-yield equity, EM rates picture over sovereigns? You know, is it a broader risk-on environment? That question is really no longer determined and should no longer be determined by the daily ins and outs of politics, in my view. Because what we really should be doing instead is looking at the data, look at expectations, look at consensus expectations for Q3. That is being upgraded for the US, but it's barely above 1% for GDP. And for Q4, it's still only 1% GDP growth. When you look at Q3 earnings expectations, strip out tech from that, and actually consensus is saying there's going to be a sequential decline in earnings. That's what we're ultimately buying. We're buying the numbers, right? We really should be going back to what are the numbers telling us, what's the trend in the numbers, what are the expectations, have the expectations gone up so much that it constrains the activity surprise potential, and that is absolutely not the case. That really is much more important than the politics.
Max, you're still underweight US Treasuries, gilts and JGBs. How is that expressing itself in your typical portfolio or your typical arrangement?
Yeah, look, I think for treasuries and for gilts, it really is continued weakness on the very long end, particularly in gilts. I think for JGBs, it is probably a bit more nuanced for JGBs. It's probably more on the front end. It's really something where we say, you know what, growth actually is kind of fine. Underlying inflation is a bit worrisome in Japan. So perhaps really they have to get going with rate hikes in October already. That is nowhere near fully priced. And that of course, is more front end / belly kind of underweight position in Japan, whereas of course in gilts, in treasuries, it is the continued worry about fiscal, about debt sustainability. And in the US, it's the worries about Fed independence that are not going to go away that soon. There's also the worries perhaps that in the next 1, 2, 3 months, goods inflation does spill over, higher goods inflation does spill over into other categories. Nothing too worrisome that it really will spill over into risk asset valuations yet, because the level of yields is so much lower compared to where it was 2, 3 months ago. But, particularly the very long end, if we do get any sort of signs, any sort of warning signs around maybe there is more stagflationary tendencies coming in, that isn't really priced in, particularly in the ultra long end of treasuries after the recent rally.
So there could be more to go. Max, thank you so much. Always a pleasure. Max Kettner there of HSBC. Now on to other top stories trending on the terminal this morning. Super Typhoon Ragasa moves away from Hong Kong. It's set to cross China's southern coast later today and is expected to bring heavy rains to nearly a dozen provinces. Ragasa is the most powerful cyclone worldwide this year. To raise as much as $20 billion. The deal could value the company at around $500 billion, propelling it into the highest ranks of the world's most valuable private companies. In league with OpenAI and SpaceX, sources say talks are in early stages. Apollo Global Management is rolling out 3 new private capital funds for wealthy individual investors in Europe. According to Apollo, the new funds will allow clients to invest for as little as €10,000. The launch of the funds is part of a broader trend of private capital managers looking to tap into Europe's wealthy individual investors. Coming up, President Trump strikes a new tone on Ukraine and Russia. That's next. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The only question now is how many more lives will be needlessly lost on both sides. China and India are the primary funders of the ongoing war by continuing to purchase Russian oil. But inexcusably, even NATO countries have not cut off much Russian energy and Russian energy products.
President Trump ramping up pressure on Russia, saying NATO nations should shoot down Russian jets that violate their airspace. That's after the president took to Truth Social to say Ukraine is in a position to win back territory from Moscow. He elaborated on those remarks.
Most of you have seen the recent statement I put out a little while ago, and I'm glad you got it. But I feel that way. I really do feel that way. Let them get their land back. Yep. So we'll see how it all works out.
For more, Bloomberg's chief European correspondent Oliver Crook joins us now. Ollie, how significant a change is President Trump's new tone on Ukraine?
I think the big question will be, it depends how durable his shift in tone will be. I think that is what many of the European leaders here will be wondering. That is what the Ukrainians will be wondering. But let's just think, Vani. I mean, almost 7 months to the day, you had the two presidents sitting in exactly the same configuration back in the Oval Office, that disastrous meeting between Zelensky and Trump, after which really the fate of Ukraine and its war effort was really thrown into question. And after that, all the tweets and all the sort of truth socials about Zelensky being a dictator. And of course, Zelensky has put a great deal of effort into trying to fix this relationship. And of course, Donald Trump has also put a great deal of effort of trying to bring Vladimir Putin to the negotiating table. But now, 7 months later, Donald Trump is not talking about land swaps between Ukraine and Russia. He's talking about the Ukrainians fully regaining all of their territory. And later in that truth post, he said, actually, maybe they could go even further. Maybe they could take, basically, I guess, implying Russian territory. Now, when he says something like that, I doubt it's really meant to be sort of literal. You know, I think that a lot of this will probably be chalked up to kind of the art of the deal, showing great support for Ukraine, trying to bring Putin to the table because he tried the sort of sweet method, going a little bit harder. But I think from the Ukrainian perspective, this is exactly the wish list that they wanted, to say nothing of the fact that because of Donald Trump, now the EU is banning Russian LNG a year earlier than they would have. So this is really a good week as far as Ukraine policy is concerned, as far as Zelensky is concerned. Now we'll have to see sort of how much more action the Trump administration is willing to take to try to bring Russia to the table. But at least, and I have to say, just speaking to Ukrainians after that meeting back in February, the degree of their morale being crushed by that, now to have basically the feeling that Trump and the United States is back on their side has got to be hugely beneficial to their sort of state of mind and their ability to fight this war.
Yeah, and he also amped up pressure on Russia after being asked about aircraft and drones and so on entering NATO countries' airspace in recent weeks. There's that as well, and also more today at the UN. What are we anticipating today?
Yeah, well, I mean, it was really interesting to go back to those comments from Trump yesterday. He was asked by a reporter, basically, should these European nations be shooting down Russian jets that go into their airspace? And he answered very quickly and very simply, yes, I think they should. You know, that's something that basically very few European nations themselves have said. There have been a lot more cautious tones. We did hear from Donald Tusk, the Prime Minister of Poland, saying that basically if we get more air infractions, we will shoot these planes out of the sky. The Estonians, however, who triggered this last meeting of NATO after last Friday, when those Russian jets, 3 of them, 3 MiG-31s, combat ready and armed, went through their airspace for 100 kilometers. They're taking a much more measured approach. Have a listen to what the Estonian Prime Minister said to me yesterday about what happens the next time there's an infraction in their airspace.
NATO has protocols for that, and NATO has exact knowledge when something will happen. So we will follow the NATO's plans. And yes, we have the capabilities here because, to be honest, Russia's fighter jets were followed by Finns, and after that, Italians coming from Estonia's side to push them out from our territory and air. But we have protocols and measures in place.
So the Estonian Prime Minister there saying that, we have the capabilities, we have the abilities, but we're not automatically going to shoot these down because, of course, provoking that. This is a country of fewer than 2 million people is a very, very big decision. We've also heard from the German defense minister who says that, all these talks about shows of force and kind of slapdash discussions about shooting stuff out of the sky is not actually that helpful, and that will play into the Russians' hand. So really a divided opinion on how to sort of stand on that in NATO, just that the response should be robust. What robust means is not fully defined.
All right, Ollie, thank you so much. That is Oliver Crook there for us. Coming up, Jimmy Kimmel returns to TV. That's in your front page news next.
belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. One stock we're keeping an eye on this morning, Alibaba. Shares boosting AI sentiment across markets after they surged to their highest in nearly 4 years. They've been on a tear anyway. But they announced a collaboration now with NVIDIA and a hike in their AI budget. Let's bring in Peter Elstrom for more. Peter, I'm confused. I thought that there were bans on NVIDIA in China, both directions, that China had told companies not to use NVIDIA and NVIDIA wasn't allowed to send all but, obsolete, in Trump's words, chips to China. So how is this partnership going ahead?
Yeah, just taking a step back, what's going on today is that Alibaba is having its developers conference where it's laying out these very ambitious plans to invest in AI. The CEO, Eddie Wu, is talking about how they want to put even more money than they have so far into the market. It's quite unusual because you have companies like DeepSeek, AI startups within China that kind of began very aggressively in this market. And Alibaba, which is really better known as an e-commerce company, has come on very strong. They're talking about spending $53 billion over the next 3 years. Now they want to expand and go even beyond that level, according to Eddie Wu and his comments. What you're referring to is this collaboration with NVIDIA. You're exactly right. NVIDIA had been banned from selling its most advanced chips from China. They haven't been able to sell their most advanced chips for a while. There was also this dispute over the H20 chip in particular. Now Beijing doesn't want customers to use those chips. This is a different thing. What's going on is that Alibaba has decided to use its software platform for things like robotics and driverless cars. So they are teaming up in that area, but this is separate from the actual chips business itself. Alibaba is developing its own chips, and domestic players like Huawei are trying to develop chips too. So Alibaba needs those AI chips to be able to develop their services going forward, but so far they're not using the NVIDIA chips on that front.
Okay. Peter, really curious as to your thoughts on Micron, way estimates and a forecast after the close yesterday. Does the sentiment, continue, or sort of are we at peak Micron now like we've seen with other companies?
Yeah, it was a strong result. Micron is making progress in HBM chips. These are the memory chips that are paired with AI accelerators like NVIDIA's in particular. SK Hynix, the Korean company, is really the leader in that area. But Micron's been coming on strong. They gave a quite forceful forecast. They said that revenue for the next quarter is likely to be about $12.5 billion instead of the $11.9 billion that analysts had anticipated in the past. So they're making progress in that area. They still have some ways to go to catch up to SK Hynix, but they are making progress.
Does it have pricing power?
Well, I think right now in the HBM slice of the market, both SK Hynix and Micron have quite a bit of pricing power. They've been able to charge quite high prices. They're, again, pairing up with NVIDIA to be able to sell these to companies like OpenAI and Microsoft, which are building up these big data centers. So they're making some progress on that front.
Peter, thank you so much as always for joining. That is Peter Elstrom there. Time now for your front page news across all major newspapers. Jimmy Kimmel's return to late night TV. It was the first time Kimmel has spoken publicly since ABC pulled the show off the air September 17th. He addressed his controversial remarks last week over the shooting of conservative activist Charlie Kirk.
And the truth is, I don't think what I have to say is going to make much of a difference. If you like me, you like me. If you don't, you don't. I have no illusions about changing anyone's mind. But I do want to make something clear because it's important to me as a human, and that is, you understand that it was never my intention to make light of the murder of a young man.
Well, coming up, a call for a portfolio strategy shift. We'll catch up with Siddhara Sundar of JP Morgan next. Are pointed higher after a day of a breather yesterday, particularly for the Mag 7. They were down 1.5% as a group, but we do have futures pointed higher. The 2-10 spread at 54 basis points now, with yields a little lower across the curve. The 2-year yield at 3.56, 10-year yield at 4.10, and as you can see, the dollar index is climbing just a little bit today, up 0.3%. This is Bloomberg.
you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. AI adrenaline. Alibaba gets a boost after announcing a collaboration with NVIDIA and ramping up its AI budget. Demand still strong. Micron gives an upbeat forecast thanks to strong appetite in AI equipment. And a tone shift. President Trump shows optimism about Ukraine's war prospects while saying NATO countries should shoot down Russian jets that violate NATO's countries' airspace. Let's take a look at those markets because we're right back to 2 days ago with futures pointing higher. This after a breather yesterday. Now, overall, the indices weren't down by that much yesterday, but we did see the Mag 7 down 1.5%. Now, the S&P 500 was just down some tenths of a percent. Same for the NASDAQ 100 and the Russell 2000, which at one point yesterday was up 1%. But the S&P did end the session down about 0.3%. We do, though, have Micron results impacting the sentiment today as well. Micron beat estimates. Also, its forecast was much more optimistic than expectations were looking for. And don't forget, we've been within 2.5% of a record high on the S&P since June. Every single day, we're just off the record high once again. So definitely sentiment is elevated. The 2-year yield down a little bit today. In fact, across the curve, we're seeing lower yields pretty much with the 10-year at 4.10 and the 30-year at 4.72. That 2-10 spread is a little wider today, about 55 basis points. And we're keeping an eye on oil too, just a little higher. Brent crude now up 28 cents at 67.90 a barrel on this tone shift, which is a little bit harder on Russia from the President of the United States. So let's get to some stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with Alibaba. As you mentioned, they raised their AI infrastructure spending target to over $50 billion. The CEO is saying they do not want to fall behind in this AI infrastructure build-out race. Alibaba liking that news, up over 9% in pre-market. There's also some other positive news. They did agree that they are teaming up with NVIDIA when it comes to using their software and their physical AI, their robots. Also some news that the famed tech investor Cathie Woods took a stake in the company for the first time in 4 years on Monday. Let's move over to earnings. Micron out with a beat on revenue and a quite decent guidance for the path forward. Micron up 1.6%. The bar was very high for this stock in the earnings release, given it has rallied 45% in the month of September alone. Lastly, let's move over to the lithium miner. Lithium America is absolutely flying in pre-market, up 67%. The Trump administration is said to be seeking to convert a $2 billion Department of Energy loan into a 10% equity stake in the company, a very similar structure to what they did with Intel. Funny?
Certainly boosting that stock. Valerie, thank you so much. Valerie Titel there. Sitara Sundar of JP Morgan suggesting a move away from the 60-40 portfolio approach, writing, with inflation volatility rising, the risk of a persistent positive stock-bond correlation grows. This is calling for a shift in portfolio strategy. I'm pleased to say she joins us now. She's head of alternative investment strategy at JP Morgan. So let's just dive into that a little further. What would you want to add or take away from your portfolio if 60-40 isn't going to cut it these days?
Yeah, it's the number one question that we've been grappling with so far this year, is this idea that we're in a shifting macroeconomic environment that what we've experienced post-GFC to pre-2022. So what does that mean? Higher inflation volatility, rates are coming down, but rates are likely going to be elevated in this cycle than what we saw during that period of time. All of that at a time of pretty moderate, at potential type of economic growth. We'll see what the impact of AI is on productivity and ultimately economic growth, but that's the environment that we're in right now. Higher inflation, higher rates, moderate economic growth. So what does that mean? From our perspective, it means that the 40 part of your portfolio, that core fixed income part of your portfolio, still works very well for defending against any kind of economic downturn. But there is a risk now that is quite present on inflation volatility and inflation moving to the upside. So what does that mean from a portfolio perspective? Quite simply, it's adding real assets to the portfolio. Infrastructure, to a certain extent, real estate as well, which has multiple secular drivers that we can talk about as well. But it's ensuring that you have that real asset exposure that has those embedded inflation escalators that are embedded within these contracts and embedded within these returns that can help diversify against that risk.
All right, well, let's just listen to what Fed Chair Jay Powell did have to say about inflation yesterday. In fact, it was something he said last week at the FOMC as well.
So it's not the big factor. It's not, a big inflationary thing, but it is something that is driving up inflation a bit. And the question is, are companies then, are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. So we've been watching this since the beginning. Half our mandate is inflation. And I would say that the pass-through to consumers has been later and less than we expected. Almost all the forecasts are for there to be a one-time pass-through, which will go through the end of this year, well into next year.
Later and less, and a one-time pass-through. So, it sounds like we're maybe a little bit protected from inflation and that the Fed does have their eagle eye on it. So, is there really a need for all of these real assets that you're talking about?
So it's a great question. I would say two things. One, even if the base case scenario, even our base case scenario is that inflation is likely going to end up coming down, and we're also seeing even in our own analysis the same thing, that a third of the tariffs are being borne by the consumers and the rest are being borne by the businesses because their margins are accretive enough that they're able to eat some of that tariff cost. But the thing that I'll say is this. There's two different things when we talk about real assets, and especially within infrastructure, so I'll focus on that. One is the idea that it can add inflation-protected income to your portfolio. But two, let's think about what has been in vogue so far this year, and it's this idea of artificial intelligence and an artificial intelligence CapEx boom that we've seen quite meaningfully. When we think about where we are in the AI cycle, the digital infrastructure side, the chips and the semiconductors is a really big part of that. But the other massive part of that is power. And who is at the forefront of power? It's these infrastructure players within this space, especially now that power is 60% of the global infrastructure ecosystem.
So as an individual investor, how do you get access to this? Because a lot of these companies are private, and also do you take that allocation away from your bond portfolio section or your equities portfolio?
It's a great question. Primarily when we're thinking about real assets and infrastructure specifically, that is played through funds within the private space. You can get some exposure to that in the public space through utilities, which is a sector that we're really constructive on at this point in time, given the AI-related CapEx growth and the power that is needed to fuel the AI growth that we expect to see over the next decade. But two, where to fund it from, it's the number one question. And we would actually fund it from the fixed income part of the allocation, but particularly the longer duration fixed income part of the allocation. Because what we're also seeing so far this year is the idea that the longer end of the curve, post 10 years and out, there's been a significant amount of volatility. We would prefer the core fixed income part of your portfolio be more in that belly of the curve, and you take that longer duration positioning and you put that into infrastructure.
How much does all of this thesis depend on a beneficial or a benign policy environment? And if there is a shift in administration at some point in the next few years, does that change, your outlook?
I actually think that this is one of the few places in the environment and in the market that is agnostic to policy shifts. And what do I mean by that? When we think about the next cycle, the regions and the countries that are likely going to end up dominating, the companies that are going to end up dominating, are those that are embedding AI into their business processes. It is the generational technological shift of our lifetimes. So because of that, regardless of the administration and policies, we believe that this CapEx that's going to come, and then therefore the investment and the bottlenecks and the returns that are likely going to be generated within this space are cycle agnostic and policy agnostic.
We're about to head into another earnings season. Well, we have a couple of weeks to get ready. Will corporates show that, their margins are getting squeezed even further next quarter, or will we see a little more impact on the consumer? What's your outlook for that quarter?
It's going to end. The dispersion that we've already seen so far this year is likely going to continue to pick up. Because what are we expecting for the second half of this year and really into next year? We're likely going to see, as you mentioned, the pain of tariffs start to come through in fruition. What we're going to see, what we think we're going to see, is a continued dispersion between those companies that are profitable versus not, and large cap companies that have more diversified supply chains versus small cap companies that don't have as much of a diversified supply chain and are likely going to bear the brunt of the cost on this front.
As if small caps haven't had a hard enough time as it is.
But I will say, when we think about the small cap universe, it's not for naught, because where we're seeing the opportunity actually within the small cap businesses, I would say within the equity market, is actually less on the public side and more on the private side. There's still growth to be had. It's just that when we're thinking about the next 10 years, that type of growth and that type of innovation usually requires strategic capital and majority ownership and operational changes. And we would prefer to take that incremental risk in private markets than in public.
Sitara, fascinating. Thank you so much for joining us in studio today. That is Sitara Sundar of JP Morgan. Now to other top stories trending on the terminal this morning. Super Typhoon Ragasa moves away from Hong Kong. It's set to cross China's southern coast later today and is expected to bring heavy rains to nearly a dozen provinces. Ragasa is the most powerful cyclone worldwide this year. Crypto giant Tether is in talks with investors to raise as much as $20 billion. The deal could value the company at around $500 billion, propelling it into the highest ranks of the world's most valuable private companies, in league with OpenAI and SpaceX. Sources say talks are in early stages. And the latest on the talent race, UBS raising payouts for its U.S. wealth advisors. The changes follow reports of departures by UBS-affiliated wealth advisors in the U.S. The bank declined to comment. Coming up, President Trump ramps up pressure on Russia as world leaders gather at the United Nations. That's next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Emmanuel has actually helped me with a couple of the wars. We've settled 7 wars. The biggest disappointment, but I think that'll happen eventually, is the Ukraine and Russia situation. But we've settled. I thought that was going to be the easiest one because of my relationship with Putin, but unfortunately that relationship didn't mean anything.
President Trump striking a different tone on Russian President Vladimir Putin after his speech at the United Nations. Trump also suggesting to reporters on the sidelines of the General Assembly that any NATO member could shoot down Russian aircraft violating its airspace. For more, I'm joined by David Gura, host of the Bloomberg Big Take podcast. So, David, this is obviously a shift in tone. Was it premeditated? How significant could it be?
We'll be forgiven for maybe having a hard time figuring out what the president's position is on Russia. It has evolved so much in a matter of months and certainly over the last few years. But that reaction to these recent Russian incursions, certainly the drones that were flying over Poland and the fighter jet over Estonia, was striking, I think, because European leaders in particular have been trying to get a sense of where the president stands on all of this. And we've seen the president now meet with President Zelensky several times now and seemingly warm to him, become more compelled by the story that Ukraine has been telling about their position in this war and what they need. I think it does raise questions about what U.S. support is going to be going forward. Yes, certainly should NATO shoot down any jets that are making incursions into European airspace. Notably, we heard Marco Rubio, the Secretary of State, yesterday kind of play that down, didn't think that would be the case. But what do security guarantees look like going forward here? What is the U.S. prepared to do? Those are still largely unanswered questions. And yes, so it was provocative. We heard the president say that. Yes, I do. But that was a very minimal answer, a very concise answer. There's a lot that still I think we need to figure out.
Absolutely, and it's not like it's a green light for, from NATO for countries to do that, right? It's just the U.S. president giving his opinion. He gave a lot of opinions, in fact, during his address. What were your takeaways from the address itself?
I thought about it a lot in contrast with what happened in 2017 when he first spoke to the UN. He was a new leader on the world stage, was decidedly America first in his ethos, but I think didn't have a sense of sort of where the world would take him between then and now. And so much of what he telegraphed and desired to do has come to pass. So he struck me as much more comfortable in that setting, despite the fact that the teleprompter didn't work and he had this mishap on the escalator. He seemed comfortable talking to those leaders, laying out a lot of what he sees as accomplishments here in the first few months of his second term. And I think the crucible in which this is happening is so important. He's been very critical of the UN over the course of both of his terms. But now the UN is a very tricky position. It has relied on the U.S. for about 20% of its budget every year. The U.S. owes about $3 billion in this year alone. So I think the UN is grappling with what its role looks like going forward here if the U.S. is both less engaged with its activities day in and day out, as we've seen, the U.S. pulling out of the World Health Organization, for instance, but also failing to meet those financial commitments that have been so integral to the UN going forward. I think the president recognized that. He didn't say outright that the U.S. was withdrawing from the UN, but I think certainly recognizes the UN depends on the U.S. a great deal, and he has a lot of power to sort of sway what it looks like going forward.
It was interesting. There was a lot of laughter in the crowd at some of his jokes, you know. But I want to move to the domestic situation because we did have a special election in Arizona, the 7th District. The Democrats won. How significant is this, and how does it change the math in Congress?
This is Adelita Grijalva, whose father passed away a few months ago. He was the representative of that district for many years. She's a progressive. She worked in local government there. And so what we're seeing here is that majority of the Republicans have had in the House narrow even more, and there's a way to kind of tie this to the United Nations. The president's picked to be the U.S. ambassador to the UN, Elise Stefanik. He withdrew that nomination because he was worried about Republicans not having a big enough majority in the House. By her winning this seat yesterday, it kind of makes it more clear that Republicans are going to have a harder time trying to keep their caucus together to prevent some legislation from coming forward here. Then you have a progressive candidate. What does that portend about sort of how Democrats will fare going forward here? There are 2 more special elections coming up here, one in Houston. Sylvester Turner, who was the mayor of Houston, congressman there, passed away a few months ago. There'll be a special election there, and then one in Tennessee as well. So we're kind of getting the contours of sort of what the Democratic Party's position or candidates are going to look like going forward here, but also, again, that majority in a kind of tenuous position as we approach the end of the year.
All right, David, I'm sure we'll be listening to a lot more about this on your podcast, and I would urge everybody to listen in. That is David Gora. Catch David on the UN, President Trump, and more on the Bloomberg Big Take Daily. That's available anywhere you get your podcasts. Turning to tech, shares of Alibaba extending gains pre-market after surging to its highest in nearly 4 years. That's as the company announces a collaboration with NVIDIA on so-called physical AI. Bloomberg's Tom McKenzie joins now. Physical AI, Tom, I mean, are we literally talking robots here?
We are essentially using and talking about robotics, and that's certainly what Alibaba is focusing in on when it comes to this partnership with NVIDIA that they have now confirmed. This is focused on the cloud part of Alibaba's business, which has been a significant revenue driver, but it was really a forward-looking, future-looking prospect as they look to integrate some of NVIDIA's software into that cloud proposition and try to connect up some of these hardware devices, notably robotics. But you also had, of course, the CEO of Alibaba talking about their investments on AI infrastructure and data centers, and of course it aligns with all that spending that we've been hearing about in recent days. And just for many, certainly the bulls will confirm that that demand picture remains, and certainly the capex and the spend on infrastructure and data centers is very far from over. The CEO of Alibaba saying they are going to be spending more than their original $50 billion in terms of plans around data centers and infrastructure on AI. They're going to outstrip that number, and it actually projects, the CEO of Alibaba, potentially $4 trillion of money being spent on data centers and infrastructure globally over the next 5 years, and Alibaba clearly positioning itself to be a big part of that story.
I have to check, but I think that's actually bigger than the entire market cap of NVIDIA the last I looked, which is fascinating. But it is interesting, right? Because there was this awkwardness between NVIDIA specifically and, you know, the US company and China. So is this changing the relationship between the two?
Well, it's a reminder, isn't it, that NVIDIA is not just the maker of GPUs, it's not just the maker of the AI accelerators, but of course it has that very sophisticated and deep software stack as well. And it's the software part of the business, or the unit at least, and the product that they are now partnering with Alibaba on. We'll see if there's any response, of course, from the US or China on that front. It is intriguing, to your point, because we've had, of course, Chinese authorities trying to pressure companies like Alibaba and Tencent from not using NVIDIA's chips. But this is not the chips, this is the software, so maybe they are comfortable with that for now. And it's a reminder as well that Alibaba is very much at the forefront, at the cutting edge when it comes to China's AI innovation, with a rapid turnaround and update of their own models.
You know, yesterday, Tom, the narrative was the circularity, this sort of, I'll give you money if you then give me some of that money back. But then we had a Micron forecast and earnings beat, obviously, but the forecast showing AI demand still extraordinarily strong, and it looks to be powering the market once again today.
Yeah, it's another catalyst, isn't it, for the broader market and the picture in terms of that AI theme and the fact that there is no signs that this is ending the arms race in terms of the build-out of data centers. Clearly, it is benefiting Micron. The high bandwidth memory, or HBM memory, that sits alongside those NVIDIA and AMD GPUs. You cannot have those AI accelerators without high bandwidth memory. And clearly, Micron is well positioned and expects to be well positioned into the future. It was that look ahead. As you say, the next quarter, for them, it's the first quarter, fiscal first quarter 2026, and they are projecting revenue of $12.5 billion, well above the estimates. They're also expecting profits in terms of per share, $3.75, again above the estimates. And in the most recent quarter they reported, sales actually jumped almost 50%. So again, it is a company that appears to be neck and neck, arguably, with SK Hynix over in South Korea, ahead, arguably, of Samsung that's been paying a bit of catch-up on high bandwidth memory. Micron saying that they are going to have to spend maybe more than $14 billion. They spent about $14 billion in the last fiscal year. They may have to spend more to catch up because there is that squeeze in terms of capacity. Meeting that demand could be a challenge.
Tom, thank you so much. That is Bloomberg Tech Europe anchor Tom McKenzie. Coming up, more Fed Speak on deck. We'll get you set up for your trading day next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead today. First up, new home sales data. That comes at 10 a.m. Eastern. Then the Treasury will auction $70 billion worth of 5-year notes. That's at 1 p.m. Plus, more Fed speak. San Francisco Fed President Mary Daly set to deliver remarks at 4 p.m. And starting at 9:15 a.m. Eastern, tune into panels from the Bloomberg Philanthropies Global Forum right here in New York City. Let's have a quick at some movers now in the early going. Alibaba, there was that double announcement, of course, a collaboration with NVIDIA and its hike in its AI budget, up almost 10% now. Of course, Kathy Wood also buying Alibaba, among others. Micron Technologies up 1.5%, gave an upbeat forecast for the current quarter. AI equipment demand. And Lithium Americas up 65% after the Reuters report that the Trump administration is seeking an equity stake of as much as 10%. Surveillance is next.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The key driver of this bull market has been AI and tech.
We're becoming still very dependent on a smaller handful of stocks.
As investors, what we need to do is separate out what is the medium-term trend from the short-term cyclical trading trend.
Next year, we do see earnings improving 10%.
We have Q3 earnings coming up. We don't have a beat and a raise. I think you will see a pullback in the market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday, finding some stability. Equity futures inching higher after pulling back from all-time highs. As Fed Chair Jay Powell is suggesting stock markets are highly valued, Alibaba surging towards 4-year highs after revealing plans to ramp up AI spending. Those spending plans just keep on growing.
Look, there's a lot to unpack here with Alibaba and the Chinese presence and where exactly they'll invest. But in a broader landscape, we were talking yesterday about the fear of circular investing and whether this is potentially 1999 type behavior in big tech. The real issue is there still is fear of not investing enough not about wasting money. And Sam Altman, the CEO of OpenAI yesterday, was saying ultimately maybe people will get burned, but there still is the promise that truly will come through.
Evaluations are high, but the spending is real. Listen to these numbers from Baba this morning, anticipating overall investment in AI accelerating to some $4 trillion worldwide over the next 5 years.
And it's not just Alibaba. Last night we heard from OpenAI and what they're doing with Oracle in terms of Stargate and that expansion. Micron talking about a better forecast because of AI demand. What I find interesting is this morning, just in the past 40 minutes, Axios is reporting that a group of CEOs are getting together, and as of today, they're starting a huge ad campaign like the DocuSign CEO to push companies and governments to speed up their efforts to adopt AI. Well, in order to adopt AI, you have to have the infrastructure in place, you have to have the right individuals working these kinds of jobs. When is this going to be a ton of pushback and maybe some regulation coming out of Washington?
Just to put this into perspective, I keep going back to OpenAI, especially after our conversation with Gil Luria yesterday, talking about how maybe this is excessive. The $850 billion expansion that they have planned is equal to the output of 17 nuclear plants. It could power 13 million American homes. This expansion is fast and furious. Some people say it's appropriate. Other people say they're bottlenecks. Other people saying ultimately it cannot be done. But this is the scale of what we're talking about.
But talking about this circular market, one analyst had the best take yesterday. It's kind of like having your parents co-sign your first mortgage.
The stock keeps climbing. Alibaba up by 9% in the pre-market so far this morning. Equity futures up by about 1/10%. Coming up this hour, we'll catch up with Peter Chia of Academy, with stocks looking to bounce back. Harold Hendris of Citi, as global automakers face a tough test from China. And we'll catch up with Neil Dutta of Renmac as Powell confronts a very divided Federal Reserve. We begin this hour with stocks rising as Alibaba becomes the latest tech firm to ramp up AI spending. Peter Chia of Academy writing AI is only the second or third inning, maybe even the top of the first. The issue is whether valuations are in the eighth inning. Pete joins us now for more. Pete, good morning.
Yeah, good morning.
Hey, good to see you. Let's just talk about the spending plans. What's your reaction been to the news that's come from Oracle in the last week, from NVIDIA in the past few days, from Alibaba from this morning?
You know, it's all clear that spending is still going away. It's coming in. It reminds me a little bit, though, too, at some point, remember when you had to have a Chinese plan? And if you had a China plan, you announced your China plan, your stocks spiked 10%. So we're in that sort of moment where everyone who announces plans to spend is rewarded. And if you announce that you're going to spend $10 billion, your stock goes up $20 billion, why wouldn't you? So I haven't yet seen that change. I think at some point we're getting closer. People are starting to poke more holes in this. And separately from that, though, I am watching what Bob is doing separately, because when I look at everything that's going on in the world, trade, tariffs, etc., China has control over the rarest critical minerals. We have control over the AI chips and data. China's trying to work their way in. It's encouraging that they're using NVIDIA chips. But I think that's going to be a real battle line to be drawn.
Well, let's build on that. Do you think the U.S. is at a disadvantage?
I think the U.S. has a huge advantage right now in terms of chips. I think China has this big advantage in terms of the processing and refining of rare earths and critical minerals. We're taking some steps, whether it's investments in ticker symbol MP. There's new noise about more investments of those sorts, whether it's antimony, lithium. I'm sure there's going to be enriched nuclear, enriched uranium investments. Those are the things that we're doing to try and defeat that. But that's a multi-year product. And then at the same time, it felt like China was going to be very easy to work with in terms of dealing with NVIDIA. They seem to be setting a line in the sand where they're going to be, we want to use Huawei more and more. So that's what I'm watching most carefully.
There's a lot to unpack there. You mentioned that, yes, the Chinese government has been pushing their tech giants to invest in domestic companies and domestic chips, and yet what you just mentioned was Alibaba. Right. They're using NVIDIA supplies, right, and they actually have a new project with robotics that they're also really relying on NVIDIA for their supplies. So how feasible is what the Chinese government asking for?
That I don't know, and I think maybe part of it's just a negotiating ploy, because again, everyone's now figured out maximum leverage, so you say these things and then you walk into a room with President Trump and try and get what you can. Having said that, you know, China plays a long game, right? And they were nowhere in AI a few years ago. They are working their way towards that, whether it's a DeepSeek type technology, whether it's what the Huawei chips that are going on. So I would not completely dismiss them, right? They are starting this kind of steamroller effect. They're currently losing, but I think they plan to catch up, and we've got to be very cautious of that. I do think this is a big win for NVIDIA. I think it's awesome for us, but, you know, this is not given. I think if we take it for granted that it's going to keep occurring, that's the risk.
Going back to your initial point, the idea that we're in the eighth inning, even though we're just in the first or second inning when it comes to the actual production, eighth inning evaluation, at what point does it get too far ahead of its skis?
I think it's when you start seeing these announcements and the stocks don't pop, right? When someone announces a 20 billion spend and their stock goes down by 30, 40 billion, then you're like, okay, people are now tired of this. People have kind of sensed the valuation. I think
I'm laughing because we had that for a hot second, and then that reversed again, but carry on.
And, the other strategy that has worked so well is momentum, right? Momentum tends to work. These have been big drivers of momentum. If momentum starts turning around and you see the CTAs and people get forced out of trades, but we're nowhere close to that, right? Every dip gets bought right now. I'm not seeing what's changing that. The one thing that I found both encouraging and maybe worrisome for big tech is the Russell 2000's finally outperforming. I think, not by much. I think it's up 3% in the past 5 days. NASDAQ 100's up 1%. But that's where I'd like to see the shift, is to a broader expansion to more stocks performing well.
Peter, I'm glad you brought up the rare earths issue, because Representative Adam Smith was in Beijing yesterday saying, I don't think we resolve that. Is the U.S. potentially willing in these trade negotiations to give up other issues they care about because they are so desperate for these rare earths?
I think we might have to at this point. And again, I think we've got to be really careful. It's not the rare earths and critical minerals themselves, it's the processed and refined versions, right? We could go and buy rare earths, critical minerals on the open market. Where are we going to get the processed and refined versions? China controls about 90% of that. And so I think that is very true. And I always go back now to COVID, and I think it was the Whirlpool CEO said a washing machine that's 99% done is not done. And I think that's the problem with these rare earths and critical minerals. They may only be a small component of each product, but they are literally critical, no pun intended, and that's the issue. So we are going to have to give in until we build out our own industry.
What do you think it is that the Chinese desperately want that we're going to have to be willing to give in?
I think it's probably going to be chips for now. I think they, as much as they say they want their own business, they're going to try and get as many chips in the door they can while they want it. And I think they're also just buying time. They're playing this while they try and solidify their trading relationships with other countries, right? While we're trying to sell chips into the Middle East, I'm sure Huawei right now is trying to sell chips into the Middle East. So some of this may be just a delay game by China till they get... I think time is on China's side if you're China, because they watch the U.S. We're very distracted. We have so many things going on internally that they can just keep their machine moving, and if they can distract us, that's fine by them.
The White House is making a move. MP Materials being the blockbuster one of the last year or so. And then you've got the potential for an equity stake in Lithium Americas. That crossing the Bloomberg this morning. The team has been reporting on that. How are you thinking about the prospect of increased intervention, an increase between public-private partnership going forward from here?
Well, my starting point would be, I think I mentioned this weekend, it's you may or may not like what's going on, but you certainly have to trade it. So if you're investing in this market, whether we like this intervention, whether we like, this ability to play kingmaker, I'm not sure that's the right direction. Having said that, in the old days, right, the CHIPS Act, right, it just gave grants, but the grants were tied with policy strings. So I don't know, maybe we're better off investing. It's tricky, but I do think right now you're supposed to be scouring the universe for $5 to $10 billion companies or smaller that do things. So I've been involved myself directly in enriched uranium. I think there are other products like that. They're going to take off because this government needs to jumpstart it. And again, if you go back to what they did with MP, it was a relatively small investment. I think it's kind of the tip of the iceberg what we might be able to do out of a sovereign wealth fund. But they also helped provide, $1.1 billion of loan guarantees, right? And that, to me, that's how we spur this growth. So if we go down that path, that's how we have a chance. But it's still a 3 to 8 year process.
This is the challenge, Pete. If you are a child of Reagan or Thatcher, you've got to park your feelings about this and let it go. This administration wants to pick winners. Are you saying that when they pick winners, you want to go along for the ride?
I think so. I think, to me, in hindsight, it wasn't surprising at all. And I owned Intel. I think I talked about owning Intel. And not a shock that Trump would maybe ask NVIDIA to get involved because Trump wants Intel to do well. Like, Trump likes winners, right? That's all he's ever done. He's going to back winners. He's in a strong position to push these things. So whether you like it or not, I think you have to accept that this is the current administration's view. These things are going to get support. So you want to look for those. And you've seen so many stocks take off, but I think we're still early stages. And this is all without an official sovereign wealth fund, which I think something that is coming down the pipe for that before the year end.
This is something that David Rubenstein yesterday of Carlyle was talking about, that essentially that is the model that we seem to be following with the stakes that we're taking in a number of companies. And it seems like the United States is moving from fiscal dominance, the sort of the backbone of the U.S. economy, to something that looks more like a sovereign wealth fund, and exactly what that looks like still remains to be seen. I just wonder how that changes investing, whether that shifts some of the macro investing landscape and shifts it over into deep value, looking for these specific sectors, looking for exactly strategically what makes sense. It's a very different framework of investing.
Yeah, one of the things we're trying to do is look at AI and look for companies that have been most impacted by regulation and say, okay, if you've been heavily impacted by regulation, is that an area we can get deregulation? I think finance companies are doing very well, right? I think people are looking forward to what can be done on this. And then I would say this is global too. I know, the UK Prime Minister didn't completely agree with Trump, but I think this whole concept of production for security is global, and every country has to be thinking, what can you produce at a minimum level? It doesn't have to be fully. You need to make sure that you have energy. You need to make sure you have a chip industry, right? England wants to be a data center capital of the world, but they don't produce any energy and electricity. How are you going to do that?
Not exactly the traditional way of building a sovereign wealth fund, is it?
No.
This isn't typically how you go about doing things.
Well, not especially through a back door where people don't understand what the parameters are, or exactly what's going to go in, or exactly how big it's going to be, or exactly how the revenues are going to get distributed afterwards. Look, there's a lot of question marks around this. But fundamentally, from a philosophical perspective, it seems like maybe the limits of fiscal dominance have been reached, and people are asking for something else as a tool of national security. And the idea of taking stakes seems to be it, whether you agree with it or not. And I think that that's a really interesting change in the investing landscape.
They haven't outwardly stated they want to do this sovereign wealth fund, but it's obvious everything is about national security. MP Materials, when it comes to Lithium Americas, when it comes to Intel. This administration doesn't like grants. They don't like loans. They want outright equity in a company.
Big fan of wood.
Yeah, and I would just add that, we're looking at these companies that we need to jumpstart, and people are worried about if everything's just done via executive order, does it get overturned with some new administration? I think these stakes change that. It makes it harder to overturn some of the progress that gets made. So I think that might be kind of the secret sauce here is by investing, owning, giving the American people this, it lets people push forward on deregulation and assume it's going to stay longer than it might otherwise.
Pete, you're going to stick with us. Peter Chair of Academy. Equity futures this morning bouncing back by 1/10%. Let's get you an update on news worldwide with your Bloomberg brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. During a meeting with Ukrainian President Zelensky at the UN, President Donald Trump said NATO nations should shoot down Russian aircraft that violate their airspace. Separately, the president saying on Truth Social that he believes Ukraine can win back all of its territory from Russia. He also said Moscow is fighting aimlessly and even calling the country a paper tiger. Meanwhile, China says it will no longer claim developing country status in the World Trade Organization. It's a change long demanded by the U.S. because China is the world's second largest economy. The decision is seen as a significant gesture, particularly as China looks to negotiate a more lasting trade deal with the U.S. And as you all were discussing, OpenAI is expanding its data center push under its plan dubbed Stargate. It plans to invest about $400 billion to develop 5 new U.S. data center sites in partnership with Oracle and SoftBank. This marks its biggest push yet to fulfill an earlier pledge to spend $500 billion on AI infrastructure in the country. That's your Bloomberg Brief. John?
I'm just losing track of the numbers now. Yahara, thank you. More from Yahara in about 30 minutes' time. Up next, permission to defend.
Do you think that NATO countries should shoot down Russian aircraft if they enter their airspace?
Yes, I do. Team coverage up next with Bloomberg's Tyler Kendall and Ollie Crook, live from New York City this morning. Good morning.
is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Live from New York City, welcome to the program. Equities doing okay, up by 0.2% on the S&P 500. Under surveillance this morning, permission to defend.
Do you think that NATO countries should shoot down Russian aircraft if they enter their airspace?
Yes, I do.
Would you back up NATO allies?
Depends on the circumstance, but, we're very strong toward NATO. NATO's stepped up.
So here's the latest this morning. President Donald Trump encouraging NATO allies to shoot down Russian aircraft that breach their airspace. NATO pledging, quote, a robust response to Moscow's reckless actions. Our team coverage starts right now with Bloomberg's Tyler Kendall in New York, Ollie Crook in Brussels. Tyler, a very different tone from the president yesterday.
A very different tone, John, and really a main theme that we saw emerge was President Trump bolstering his support for Ukraine on multiple fronts while also urging our European allies to do more to pressure Russia. Now, you heard him there saying that he thinks that NATO allies should be able to shoot down Russian aircraft if they violate their airspace after a slew of recent incidents in the recent weeks, including in Poland, Romania, and Estonia. But then President Trump did go on to say that it's unsure what the circumstances would be and whether or not the U.S. would support NATO if it engaged Russian planes. Those comments didn't really seem to bother much of our NATO allies. I did have the chance to sit down with the Finnish President Alexander Stubb on the sidelines of the UN General Assembly yesterday. He said that he wasn't really concerned by that comment from President Trump. He believes that the president is firmly behind NATO, but that ultimately he urged caution against our allies engaging with Russia militarily, saying that there is a very strict protocol to follow. I can say, though, that there was this palpable sense of excitement from the Finnish president after President Trump posted on Truth Social what really felt like a stunning shift, a stunning development, saying that he now believes that Ukraine is poised to win back all territory concessions. This came after he met with the Ukrainian President Zelensky on the sidelines of the UN General Assembly. But really, John, after months of this administration repeatedly saying that Ukraine would have to give up territory in order to end the war.
Ollie Crook, it feels like we're entering a new phase. And the first country I thought of was Poland. How did Poland respond to those comments?
Yeah, so there are a couple of different sort of strains to follow. When you think about what Trump was saying in terms of encouraging European countries to sort of shoot down Russian jets if they enter the airspace, there are kind of really different divided ways in which Europe have interpreted that. As we've been reporting over the last couple of days, Poland has taken a very hard line. They said, listen, if you're in our airspace, we will shoot you down, no question about it. I caught up with the Estonian prime minister, who was really the source of this latest development, where you had those Russian jets, 3 combat-armed MiG-31s that were in Estonian airspace right by the capital for 100 kilometers. He took a much more measured approach. He said, basically, we have protocols in NATO. We were going to engage with those, but we're not going to say that there's a red line here or a red line there. And then we also heard from the Germans, the German Defense Ministry, who said that basically slapdash comments about taking planes out of the sky and all these sorts of things are actually really not that helpful. We need to be much more measured in our approach, and we need to basically not play Russia's game. Russia, they say, are just trying to instigate the Europeans to shoot something down potentially, and then basically have the Russians say that they are the victims of all this. But again, I think that for me and for the sort of reaction from the Europeans, though very positive to what Trump has said over the last 24 hours, there is a high dose of skepticism because, as we know, 7 months ago, almost to the day, Jonathan, you had the two presidents sitting in the exact same configuration in a very different kind of meeting. It shows you how far we've gone in that relationship between Zelensky and Trump, but it also tells you how rapidly things can change. So I think very welcome here in Europe, that said with a little bit of dose of skepticism as well.
Ollie, appreciate the update alongside Tyler. Tyler, great work yesterday. Thank you. With us around the table, Peter Chair of Academy Securities for a further few questions on this topic. Pete, let's continue this. Do you think Russia's going to test this new red line?
Yeah, I think that these have not been accidents. We recorded a podcast yesterday at Academy Securities. We talked about this. They are pushing it, right? And we have to figure out what's an appropriate response. How do we push back? What do we do about this? And it will be a NATO state. It won't be the U.S. attacking, but it's the U.S. command and control systems. You know, we're an integral part of any sort of defense and any action that takes place.
Well, what's the difference? Trump said yesterday, we will continue to supply weapons to NATO for NATO to do what they want with them. The United States is NATO.
You know, as an organization, that is true, but each country does have some degree of, sovereign. It's, reminds me a little bit, it's, we all put up with Iran having these proxies, right? And Hamas isn't really Iran. Well, it is. So I think you're going to get into a little bit of these games where maybe Poland will behave differently than in Estonia because Poland feels more threatened. Maybe Poland feels more, up to speed on the ability to do something. Maybe Estonia doesn't. But I think there is going to be a change where everyone's got to sit down and say, okay, this is a new thing for Russia. How do we respond? What do we do? Because the one thing you don't want to have is something that becomes, they're regularly incurring. They're regularly incurring. Oops, they went really all in this time and killed someone. So I think they are going to be red lines, and this is going to be aggressive, and it should be pushed back, or else Putin's going to keep doing it.
Is Putin testing the resolve of NATO or testing the response of the United States?
Probably a little bit of both, and I think his hope, though, along the whole time has been to somehow fracture NATO, and maybe this is how he does it. It's like, okay, which countries will support this? Maybe a Turkey, for example, won't be comfortable doing this. Maybe a Hungary won't be comfortable doing this. Maybe Finland really wants to do this, but could you create some sort of divide? I think, again, he will fail. I think he has misread how, his invasion of Ukraine coalesced NATO, and I think this will do that once again.
That said, we still haven't seen the sanctions that have been threatened. Yes, there are some stiff sanctions placed on Russia, but not the secondary sanctions that would curtail a lot of the revenue still coming into the country via oil sales.
My starting point is we just need to enforce the sanctions that are already in place, right? To me, there's two things. We've got a set of sanctions in place. Some are being defied by effectively, India, China. There's very little we can do about that. So we can address that with secondary. But first, if Europe's going to continue to buy, Russian oil, whether directly or via Kazakhstan or some other third party, they're not helping themselves. So I think step one is enforce the sanctions that we already have in place. Let's see what that does. And then maybe you can go to secondary sanctions. How do you tell India, we're going to put secondary sanctions on you? Meanwhile, half of Europe's buying energy on, it just doesn't make sense.
It also was sort of mind-boggling yesterday. President Trump was talking about how one way to counter Russia is to lower oil prices, to reduce the revenues. And you saw oil prices go lower on the heels of that. How feasible is that going forward, given how low prices are, given the fact that we could be facing a global economic reacceleration?
My working assumption this year has been it's going to be very difficult for oil to get much above 70. I think Trump has a handshake agreement with the Saudis that if oil goes higher, they can come and push it on the market. That's what they get in return. They get to buy NVIDIA chips. They get to jumpstart their data centers. So I think there's all these transactions going on behind the scenes. So I'm not too worried about oil prices going higher.
Why are German stocks up almost 20% this year? Why are European banks up almost 60% this year? The conversation we have about Europe is pretty dreadful still. And yet here we are talking about major gains.
I think a lot of this still comes down to, okay, will they actually spend to do the defense spending, which would be a new initiative. I think that helps. Will you start seeing deals in Europe?
Can I just ask you, help who? The ECB's forecasting 1% growth for next year. Who's it helping?
That I don't know. I think, though, to me, one of the big wild cards that we're looking at right now is, and I think Trump mentioned this 2 weeks ago, no one's paid attention to it, he kind of gave the nod to Europe to go after Russia's frozen FX reserves. And about 300 billion of that is in euros, sits in the European system. If Europe starts going after that as part of this maximum pressure on Putin, right? One, it allows them to buy the U.S. weapons. It keeps yields down because they don't have to actually issue debt when they get this. And I think that's the sort of thing that, if you're taking a multi-pronged approach, you threaten Putin with some war, which is one thing, then you really start taking away his money. That's another thing. I think that's the direction you go, and that leads to some growth. And I do think all the things I've been talking about, this whole, production for security, people are starting to realize Europe's going to have to do some of that themselves. right? You can't rely just on wind, just on solar. You need to go through this. So I think those are the opportunities, and banks are going to play a big role in that, as there's going to be hopefully M&A and transactions going.
Well, Pete, they're certainly having a big year, that's for sure. A monster year for 25. Peter Chair of Academy Securities, a monster rally for European banks and European equities.
There's been a lot of promise despite some of the slack expectations for growth. And a lot of this comes on what Pete's talking about, the idea of investment, the idea of the investment fund from Germany. But when you actually look at the data, there have been more positive surprises to the economic data coming out of Europe than negative ones. I don't know if that just tells you that the expectations are very low or that there is something going on that gives people a little bit more optimism.
I'm not sure that massive defense spending was the main pillar of the Draghi plan. I might be wrong, but I'm not sure it was.
You're not wrong, and you know that you're not wrong. The issue is, how do you get an entire region full of different countries to agree on deregulation and changing some of the culture around work and job creation?
Energy prices are too high, Germany, the UK. They're being consumed by Chinese automakers, seeing that in the UK, in various places across Europe. Europe is not in a good place. I know we're all excited about European bank stocks, but not in a good place. From New York City, this is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This headline just crossed in just moments ago. It comes from the EU to propose a tariff increase on oil imports from Russia. Something's building here. The president's been pushing for some action. The Europeans seem to be on board. We're heading in this direction.
Well, the president pushed for it once again, even yesterday at the UN, and Truth Social post saying, I'm willing to do more when it comes to sanctions, but everyone needs to be alongside me, all our allies. And he's not just talking about India anymore. He's talking about the European Union. They've been talking about this for a number of weeks and months, and it looks like finally they are starting to put this together. They will have this increase, because remember, they are still one of the top 5 buyers of Russian fossil fuels.
Crazy.
And this war is happening on their soil.
Check out the price move. We're up by about 0.9% on Brent so far this morning, up by almost 1% on WTI, $64 and $68 respectively. That's the situation in the commodity market. Let's turn to equities. Equity futures shaping up as follows on the S&P, on the Nasdaq, on the Russell, and the S&P pulling back from all-time highs in yesterday's session, firmer this morning by 1/10%. On the Nasdaq, up by 0.2. In the bond market, 2-year bond yields a little bit lower yesterday across the curve. Following 4 consecutive days of higher bond yields, we're back down to about 356 on 2s. On 10s, just about unchanged on the session at 410. No real sign of what Chairman Powell wants to do here, at least yesterday. But I have to say, over the last week, he has picked a side. And the side he has picked is the labour market, and it's not inflation. And you should follow what they do, not what they say. They're cutting interest rates, and they're going to continue cutting interest rates.
Yeah, he gave more noise around that yesterday with respect to potentially the immigration impact on the labor market, and it could be a false signal. At the same time, it seems like something has shifted for him. That comes along with Mickey Bowman saying we need to aggressively lean into saving the labor market, and this is an important moment to do that. That, I think, got a lot of people's attention.
We risk being behind the curve.
Exactly.
Yeah, Governor Bowman is no longer hawkish, let's put it that way.
I think that she's in the running, is what I think.
And now one of the biggest dumps on the committee by Governor Byron. 3 hours away from the cash open. Let's get you some single names. Some morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. Alibaba shares flying this morning. The ADRs trading 9 1/3% higher. Alibaba CEO saying that they are going to not just be incrementally increasing their AI spend, but it is a whole shift. Before they had said something like $50 billion over the next 3 years. He said it will be more, also touting their full stack service, everything from the data centers, the infrastructure, the software behind it. So that CapEx continues to be a good story for investors. Meanwhile, Micron, also an AI boost for them. Expectations were so high for this company to perform. Share prices have nearly doubled year to date, and they gave a forecast for this current quarter that exceeded expectations. So even though the move is only 0.6%, that is good for Micron considering just how big of a run-up it had been into this earnings season. Now, elsewhere, Lithium Americas, it's a Vancouver-based company with one of their large mine operations in Nevada. People familiar telling Bloomberg that the Trump administration is looking at converting a $2.3 billion loan from the Department of Energy into a 10% equity stake in the company. Again, it is that Nevada mine, which is set to become one of the biggest lithium producers in America. So the administration looking at coming in there. GM had owned a stake in that mine with Lithium Americas, and before this, they'd already been looking at renegotiating the terms of that loan, saying they couldn't meet the conditions. So that possible equity stake has shares up 54%, John.
What a move for that stock right there. Danny, thank you. Appreciate it. On our radar this morning, President Donald Trump saying NATO nations should shoot down Russian aircraft that violate their airspace. Trump adding on Truth Social he believes Ukraine can reclaim all of its territory, calling Russia a paper tiger. Elsewhere, OpenAI partnering with Oracle and SoftBank on a massive $400 billion investment to build 5 new data centers. The facilities located across Texas, New Mexico, Ohio, are part of OpenAI's Stargate infrastructure project. And finally, Alibaba shares are surging to a near 4-year high after the company said it would boost its AI spending beyond its original $50 billion plus target. The company's CEO predicting global AI investment will hit, wait for this number, $4 trillion in the next 5 years.
It just sort of underscores how people are scared of not investing enough, not that they're investing in a way that's going to throw away money, good money after bad. I will just say it's interesting that Alibaba is working with NVIDIA. So despite some of the feelings that maybe the Chinese government's going to push Chinese technology companies away from U.S. chip providers isn't exactly transpiring. But what this speaks to is this global wave of investment that is continuing despite some of the people here in New York City wringing their hands and saying, it's a bubble, and they're coming out and they're saying, look, this is the future. You can get on board or you can leave.
For China, my big question after this story using those NVIDIA chips is, what's the goal? Is it strategically you want to win in the AI space? You're going to use all technology at your disposal? Or do you really want to push for chip sovereignty and at the end of the day, make sure your national champions are the ones that are pushing into your own companies? And I think this is an interesting moment right now, and I wonder if it sticks. Are we just here for this moment right now, or China is going to force these companies to move inward?
Important takeaway. We often say this on the program. You can learn something from the news, the declaration, the data point, and you can learn something from how the market responds to it. I think it's far more interesting that the market is responding still positively to these additional spending plans, which is something Peter Cheer reflected on about 20 minutes ago.
Yeah, naysayers in New York aren't really doing anything for the share price, because ultimately, if you can promise $10 billion of spending and then you get $20 billion market valuation pop in your shares, well, you're doing something right. And he said that the real key that this had moved too far is if you don't get that kind of reaction in markets, and so far, we're nowhere near that.
Investors like it, so the promises keep coming. Investors like it, the promises keep coming, and we'll see how long they can keep this going. Let's stick with China. Global demand for Chinese exports is surging as the world's second largest economy is on track for a record $1.2 trillion trade surplus, despite the tariffs that came from the US earlier this year. Harold Hendricks, the European autos analyst at Citi, joins us now on what all of this could mean for the auto sector across the continent. Harold, good to see you, sir.
Good morning. Good morning.
Thanks for being here. Let's just talk about the EV strategy from the Europeans. So we had the news out of Porsche yesterday that they're tapping the brakes, so to speak, forgive the pun. You've got three options, really. Double down, muddle through, back away. What are the automakers picking? What are they choosing in Europe?
In reality, they don't really have a choice, right? You've got three completely different EV strategies across the world, right? The major markets, Europe, US, and China. You know, China is surging ahead, both technology-wise, subsidy-wise, and overall penetration of NEVs, right? Europe is muddling through with, frankly, very difficult regulations that are a significant competitive disadvantage for the European car companies, which are now potentially being renegotiated, right? We restarted negotiations on the 12th of September, so we'll see what comes out of that. And then the US, as ever, going completely the other way. So if you're a car company, you have virtually no EV penetration in the US, 53, 54% NEV penetration in China, and maybe 16, 17 in Europe. You have to basically cater to all people, so they have no choice. So what Porsche was doing was not so much cutting the EV model plan as basically prolonging the ICE model plan, right? The initial plans were just too aggressive, and they're just not achievable. The consumer demand just isn't there.
I do remember when people were talking about Detroit here in the United States and saying ultimately it's uninvestable based on some of the regulatory concerns, the competitive landscape. And I wonder, based on some of the Chinese EVs that are coming into Europe right now, also with some of the regulatory overhang, whether the European auto sector is investable right now.
Yeah, thank you. Asking. I often have this debate with investors, and I'm like, what other sectors do you do? I only have the one sector. Look, it's a good debate. Firstly, you know, and again, it goes to the chip discussion you were having, it's the AI stuff. Growth, right? You know, growth is becoming harder and harder and harder, and investors are looking for growth wherever they can find it. You know, and so you're bifurcating the market also, right? The market's become very, very narrow. And unfortunately, companies like autos and a lot of the older industries are not getting the capital that they need. They have a much higher cost of capital. And so that's, you know, speeding up the decline. The answer to the question is, look, there are names, you know, Ferrari's a great quality name. A lot of the tire companies have much, much better fundamentals. You know, there are some companies, I think Porsche with the brand name that they have potentially could, you know, get better fundamentals. But globally, you know, the Chinese have done what they've done in so many industries, right? The EV industry became a strategic growth asset for them. They have essentially built almost twice the capacity that they need for electric vehicles in China itself. The ICE market, the combustion engine car market in China has halved, but you still have the capacity from what we had before. So China just has this infinite capacity, which allows them to make super, super cheap cars to sell in other parts of the world.
And the place that's seeing a lot of them is European automakers, because ultimately that's where a lot of these Chinese autos are going. And I just wonder how much the European auto sector has to shrink to accommodate what really is coming onto its shores.
Yeah, so look, I mean, you have the Chinese strategy, right? And then you have Trump, right? And unfortunately, Europe is the weak spot, right? And so as soon as Trump put the tariffs on the US, where do you go? You go to Europe, right? And so we've seen that immediately. So it's not just the Chinese, but it's Hyundai, it's Toyota. Everybody who needs to sell cars globally has gone to Europe because they're short of their budgets in the US, right? And so you're seeing a huge extra supply. You're seeing really good quality EVs coming into Europe from China. And the reality is the European industry is getting squeezed. Just a quote that I make with investors just to highlight the seriousness of this. So Volkswagen has just embarked on the biggest restructuring they've done in 87 years. They've cut 40% of their German Volkswagen brand capacity. So you build a business for 100 years, and in a single decision, you cut 40% of that business in Germany. Audi, their second bigger brand, right? 25%. You know, these are huge, 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 huge numbers. And it's not just China. Post-COVID, the market didn't come back. The regulatory situation in Europe is terrible, such that it is too expensive to make smaller cars in Europe, right? So the European OEMs have pulled out, but it means that the European car market is now 1.5, 2 million units smaller than it was pre-COVID. So you have a smaller market, more competition, better quality competition, and potentially regulations that are totally unreachable for 2030, 35. It's a very hard situation.
Is this environment going to force the Commission to do an about-face?
I think it is inevitable. So I'm a good Dutchman, and so people always want me to be incredibly bullish about Europe. I tend to have been always the other way around. Currently, I'm a little bit more bullish about Europe today, simply because the situation is so bad that you know, people are losing elections, right? You know, unemployment's a significant problem. You've seen some of the reactions to some of the politics in Europe recently. You know, the European automotive industry in some countries is still representing 11, 12, 13% of total employment. They have no choice. They can't kill it, right? And that's why I'm going around the world highlighting the 40% cuts, the 25% cuts. Wake up, right? You can't restart an industry once you've closed it down, right? So I think they have to.
Does Europe then need to choose what Mexico is doing and put up the walls alongside the United States to Beijing?
Look, you know, I did an interesting debate regarding exactly that recently, and again, Europe has no choice, right? And this isn't about, you know, particularly subsidies or cheating or anything like that. It's about the fact that China just has a much, much better industrial policy with regard to all of these things. They've made better decisions 5, 10 years ago. They've created the conditions to have this industry. And we didn't, right? And lithium, we were going to talk about the lithium. You know, we don't even have the supply. We haven't secured our own supplies, right? 75% of global lithium supply refining is in China, right? We don't even have it. So if you don't have lithium, you can't make batteries. If you can't make batteries, you can't make EVs. Yeah, so this is about industrial policy, and basically to protect the European industry, I think you're right.
Do you foresee a future where China says we are no longer even going to sell batteries? It's buy the car or nothing, because they have complete control on the supply chain?
Yeah, really interesting question. It's actually their single most powerful weapon, you know, against the global car industry, right? The global car industry has become, at least on the EV side, very dependent on China. And at least so far, the Chinese have not restricted access to those supply chains. But yes, that is potentially part of it. And in fact, we've seen this with the rare earths as well, right? And this is why, to be honest, thinking about the article that you highlighted to me, you know, regarding lithium, to be honest, the Americans are reacting, and they finally understood that they need to secure their own supply. And whether you do that with government investment or any other way, frankly, I don't care. You know, you need to supply and to secure that supply for yourselves. And so I read this stuff and I look at the Americans, and at least they're doing something, right? I want this to be coming from the EU, and of course it's never going to. But you know, we need to think about our own futures, don't we?
I have to say, what a pleasure it's been just to sit here and listen to you for the last 10 minutes. Thank you for being here.
No problem.
The fact that the Europeans are killing what you say they shouldn't be killing is just absolutely shocking. It goes back to the conversation we had 15 minutes ago, which is about European banks and European stocks. Put the stock market to one side. Just forget all of that. Look at the state of the economy. The ECB is forecasting 1% growth for the Eurozone next year, even with all this fantastic stimulus that everyone's excited about coming out of Germany. And they are killing one of their own industries, and there's no sign they're going to stop anytime soon.
Yeah, what Harold just said there, that this is an industry that accounts for more than 10% of the jobs in the region, and it is squeezed on both sides, and there is no end in sight, and it is because of regulation, it is because of some other lack of investment earlier. It just raises a question, what is the plan going forward to really protect those jobs, given the fact that right now they're under direct assault?
Unfortunately conditioned by experience. Don't underestimate the Europeans' ability to stick with a bad idea for a long, long time.
Well,
because most people would sit here and say, this sounds terrible, surely things will change. We've been talking about this for years. Not months, years.
Not to be overly philosophical, but you could see this in some of the political fractures right now. And you could see this with a question of, are we reaching a boiling point in the politics around the world? And I think that that really has been the ultimate question. Yes, maybe that people don't want to make bad decisions, but right now there is serious unrest. And I think that that is coming back to the table.
I would appreciate this. Let's do it again soon, next time we're in New York.
Yeah, thank you very much.
Thank you, sir. Thank you very much. Harold Hendricks there of City. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. The typhoon that has lashed Hong Kong in recent days is moving up China's southern coast, where it's expected to hit the area with torrential rain. The storm has led to thousands of flights being canceled, along with school classes and train services suspended. The typhoon, equal in strength to a Category 2 hurricane, has killed at least 14 people in Taiwan. Meanwhile, here, Democrat Adelita Grijalva has won a special election in Arizona, further shrinking the Republican majority in the U.S. House, now leaving them with a 219 to 214 majority. The victory is significant as it gives Democrats the final signature needed on a petition to force a vote on a measure that would release unreleased government files on the late Jeffrey Epstein. And Jimmy Kimmel returned to air last night and addressed controversy over his remarks about Charlie Kirk's assassination.
The truth is, I don't think what I have to say is going to make much of a difference, but I do want to make something clear because it's important to me as a human, and that is, you understand that it was never my intention to make light of the murder of a young man.
It was the first time the TV host spoke publicly since ABC pulled his program off air for saying conservatives were trying to score political points from Kirk's murder. Just minutes before his show aired, President Trump floated the prospect of suing ABC over Kimmel's return. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next, no risk-free path.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside. A challenging situation. Two-sided risks mean that there is no risk-free path.
That conversation up next with Neil Dutta of Renmac, live from New York City this morning. Good morning. You're watching Bloomberg TV.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sart in Le Mans, and this is Bloomberg. Equities are bouncing back by 0.1% on the S&P, and the Nasdaq 100 up by 0.3. That's the market pricing so far this morning. Under surveillance this morning, there is no risk-free path.
The unemployment rate is low but has edged up. At the same time, inflation has risen recently and remains somewhat elevated. Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path.
So here's the latest this morning. Fed Chair Jay Powell reiterating the challenging path ahead as policymakers weigh further easing. Neil Dutta of Renmark is writing the following. Hard data for August has been mixed at best. Meanwhile, survey data for September has been soft. The evidence that conditions are sustainably turning a corner remains thin. Neil joins us now for more. Neil, welcome to the programme, buddy. It's good to hear from you as always. You keep pointing to what's happening with housing. And I want you to explain to us all why that's such a key indicator for you and why it should be for the Fed too.
Well, it just seems to me that, a lot of the strength in the economy is being driven, by things like consumer spending. That's what people have been pointing to, a lot of enthusiasm for retail sales. But it's important to remember that consumer spending has never actually turned down in front of an economic slump. I mean, there are some economic recessions, as an example, where consumption's actually expanding. So that sector is not really the one that gives you the tell. Now, residential investment, by contrast, does tend to turn in front of economic slowdowns, and it's been contracting, albeit very modestly over the last number of quarters. And as I mentioned, this isn't the first time we've seen residential investment slow down since COVID. Obviously, it happened in 2022 when the Fed was rapidly hiking interest rates. I mean, they basically broke housing without even hiking. They kind of used their words to send rates higher. It's different now because builders no longer have a backlog of homes to work through. So units under construction were very elevated in 2022, 2023. That's no longer the case. And the pipeline of future construction keeps dwindling, which is why construction employment is more at risk over the next several quarters. So that introduces additional downside to the labor market, which is, obviously something that matters a lot for the Fed. So, right now you have declines in construction employment. It's likely that construction employment continues to decline because things like housing permits are weak, things like new home sales that haven't been started are very low, and home prices continue to decline. So I think builders have kind of reached their pivot point on margins, and that's something that hasn't been getting a lot of attention, quite frankly, and I do think it's very important for the broader U.S. economy.
Neil, I wonder, just to sort of center the conversation, whether you agree with the Stephen Myron view of things, where maybe neutral is more around 2.5% rather than the 3 to 4% that the rest of the committee believes, and that the Fed should really cut steeply. Is that kind of the way you look at things right now?
No, I mean, I think look, if neutral interest rates in real terms were basically zero, which is, essentially where Governor Myron said they were, then the economy and the financial markets would have already collapsed. That doesn't mean that policy is not restrictive. So I do think directionally, he's sort of right.
I guess what I'm trying to get at, Neil, is what you're arguing is something that I think a lot of people would get around, would believe in, and I'm just wondering how different the corrective path is that you're laying out versus what the committee is poised to do on the Fed.
Well, I mean, the committee only has one rate cut in between now and the end of next year. I'm not sure that's going to cut it. I mean, look at what's happening with mortgage rates. I mean, mortgage rates are still elevated. And, while the Fed doesn't control mortgage rates directly, I mean, obviously, longer-term interest rates at some level are expectations of future short rates. And so if all you're really going to get out of the Fed is 2 more rate hikes, and then maybe, I mean, the likelihood is potential. I mean, there's a risk that they only go in October and nothing beyond that. They haven't really penciled in much for 2026. So, I think the fact that the Fed path isn't really anything beyond a sort of meeting-by-meeting approach, that's probably another sort of reason why mortgage rates are sort of still elevated here.
Neil, even though Jay Powell is talking about risks to both sides, Jonathan made a great point. Hasn't he already showed his bias? Hasn't he already decided he actually only cares about the labor market right now? That's his concern?
Well, yes. I mean, it depends what your time horizon is. I mean, I think he cares about the labor market for the next few months. If inflation starts accelerating, I mean, you can't rule out that they skip December. I mean, why would anyone do that? The committee's so evenly split. People are open, are allowed to change their minds. You still have, I mean, you had a bunch of hawks talking this week too, like Bostic and the St. Louis Fed president. So they're a little bit more circumspect about future rate cuts. And, Powell's job is to kind of forge some kind of consensus within that committee. And, if you get, as I say, if you get an upside surprise on core inflation between now and the end of the year, I wouldn't necessarily say that a risk management approach, as he's outlined it, would mean it could mean skipping the meeting altogether. I wouldn't necessarily say that the path is locked in.
Neil, good to hear from you. We'll catch up again soon. Let's get you in the studio. Neil Data there of Renmac. Chair Powell said this yesterday in the speech, in addition to what he said back in Jackson Hole. One-time increase in the price level will likely be spread out over several quarters and show up as somewhat higher inflation during that period. That's the Fed chair setting you up for hotter reads, not in months to come, over the next several quarters. So it's pretty clear, I don't know if he gets spooked by it, but it's pretty clear what his argument is right now going into these Fed meetings.
Yeah, he's going to look through it because he also said we do see meaningful weakness in the labor market. So how much does that really matter for Fed policy?
So far he's picked a side. He can change his mind, but at the moment he has certainly picked a side. Coming up next on the program, we'll catch up with Barbara Reinhardt of Voya Investment Management, Ed Mills of Raymond James, the Charles Schwab CEO, Rick Wurster, and Russell Brandback.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
NYK sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the purging fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Six months ago, it was all panic about who's the next Fed chair. That seems to have slowed down.
A super dovish chair would have some influence on the path of policy, but not just going to come in and get their way.
The Fed is cutting on risk management grounds into what may be the early stages of a cyclical re-acceleration.
In our view, Fed rate cuts are one factor of many.
If we see the labor market continue to deteriorate, that's something that will ultimately impact consumer spending.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures positive and bouncing back. We're higher by 0.1% on the S&P. On the NASDAQ, up by 0.3. In the bond market, 4 days of high yields. Met with a single session of lower yields in yesterday's session. This morning, just about unchanged. The 2-year, 356. The 10-year, 411. For the week ahead, it's shaping up as follows. Lots more Fed speak. And it concludes with some important data on Friday, going into the weekend with a look at PCE.
Yeah, the idea of personal income, personal spending, and then this key metric of inflation that the Fed does look at. Honestly, how much is the market caring about this, given the fact that the Fed has said we probably are going to get hotter than expected inflation reads, and we probably are going to look through it? At what point is the headline number going to be important? At what point are we going to be talking about appliances, bars and restaurants? I mean, seriously, how much are we going to go line by line? Is it going to matter if one type of industry is seeing price increases more than another?
It was my biggest takeaway from the Powell speech in Jackson Hole, Wyoming. You were there. It was my biggest takeaway from him yesterday, setting himself up to look through hotter inflation prints that he believes might be spread out over the next several quarters.
Right, and he said that again yesterday, reiterating it, a one-time increase does not mean all at once. He also went on to say, when talking about inflation, especially since you have this split Federal Reserve officials talking about those that are really concerned about the labor market and those that are concerned about a reacceleration of inflation, he says we can't leave that part of the goal unguarded. It almost feels like, well, you already are, because you've already decided last month, this month, that you actually have a bias and concern about a weakening labor market.
That's the Federal Reserve. Let's turn to some single names. Alibaba in the pre-market this morning, higher by close to 10%, announcing increased plans for AI spending, and this stock market just keeps rewarding those headlines.
There is this feeling that there is a transformative moment, that AI will be the new future and could be more transformative than even the railroad or the internet or some of these other areas. So people are saying it is more of a liability to not be ahead of the game, and that rhetoric is working in markets. What's the stopping point for that? I'm not sure. I keep going back to what Peter Scheer said. When the market doesn't respond with a bounce, that's when you know something is afoot. We did see that for a brief second with Meta, going back to their expansion, followed by their restraint and discipline. I just wonder if there's something that's actually going to gain traction.
So far, at least over the past few announcements, the market responding very positively. Oracle, NVIDIA, and this morning.
Sam Altman of OpenAI had this to say yesterday. I thought it was really interesting. People will get burned on overinvesting, and people also get burned on underinvesting and not having enough capacity. Smart people will get overexcited, and people will lose a lot of money. People will make a lot of money, but I am confident that long-term, the value of this technology is going to be gigantic to society, and that, I think, is what the market is coalescing around.
Alphabet, based on their comments in the last 12 months, committed to overinvesting. That's the latest on tech. I want to squeeze this single name in too. Lithium Americas, maybe a name you're not too familiar with. I can tell you this morning it's higher by 68% in the pre-market, and reports suggest this White House is getting closer to taking a stake.
And also Lithium Americas this morning talking about how they continue to work with the Department of Energy, where they originally had this loan approved during the Biden administration, and GM on these proposals. It sounds like the U.S. government, though, they don't like loans, they don't like grants. We've seen that before with already them taking stakes like they did with Intel, that 10% stake. They are going directly into these companies that they think there's a national security concern. And you can see that with the direction of travel, Lithium Americas being the latest.
This stock is flying. We'll spend some time on this a little bit later this hour. Coming up over the next next 60 minutes, we'll catch up with Barbara Reinhardt of Voya Investment Management with Wall Street tapping the brakes. Ed Mills of Raymond James as President Trump launches a blistering attack on the UN. And the Charles Schwab CEO, Rick Wurster, as Powell suggests stocks are highly valued. We begin this hour as the record stock rally hits some skepticism following some big AI investment plans. Barbara Reinhardt of Voya Investment Management remains optimistic, writing, "We remain overweight equities, have been all year. We remain overweight the US." Barbara joins us now for more. Barbara, good morning.
Good morning.
Let's start with that overweight. Let's start with why. What underpins that view?
Well, I think it's all been about earnings, right? So everything that you think about in terms of the equity market, yes, it's had a massive bounce off of the bottom, but more than 55% of it has been driven by earnings. Only 45% has been driven by multiples. As long as companies are delivering on their earnings, the equity market seems to be, poised to continue to go higher.
The earnings story for a handful of tech names has been absolutely phenomenal. The CapEx intention spending plans have been phenomenal as well. And as Lisa was talking about just moments ago, this market keeps rewarding those spending plans. Are we anywhere near the limit of investor tolerance?
Well, I think you have to put it in context. A lot of people are starting to think about, is this like the late 1990s bubble where we had spent a lot of money on overinvestment in fiber and, fiber was being lit and there was dark fiber still to go. But you have to remember, many of the tech companies that were just propelling the market forward on the NASDAQ in the late 1990s didn't have the earnings power, didn't have the free cash flow power that the companies today have. The AI investment, I think, is just starting to scratch the surface. We see it on our teams that we are using AI to help us with repetitive tasks, to help us with quarterly commentaries, to help us with earnings calls. So we're seeing it lift our business in terms of efficiency and in terms of productivities per workers. It may take a while for that to flow through the economic data. We may see the productivity boom 5 years from now on AI, but we do believe it is indeed coming.
Do you believe it enough to wager on the broadening out trend? The idea that the tech advancements are not going to be isolated to a handful of large companies, but that there is going to be this groundswell of support for the equal weight?
Lisa, that's a great point. And I think you have to look outside of the U.S. to talk about that. So this entire year, the emerging markets had been lagging behind the U.S. And even coming off of the April bottom, a lot of global markets had come off the bottom, but the U.S. was leading the way. Just in the past 5 to 6 weeks, you've seen this big trend that the emerging markets are starting to outperform the U.S. But if you look under the hood, it's really emerging market technology stocks are outpacing U.S. technology stocks. It doesn't mean that they're not all going up together, but emerging markets seem to be taking the lead. I think in order to believe in a broadening out of the market, you need to see the Fed continuing to ease, you need to get past this inflation spurt, but you also need to get past this low firing, low hiring phase that the U.S. is in. There is a little bit of nervousness underneath the surface in terms of how long this can continue to go. We think that once you get to the beginning of next year, you've got the fiscal stimulus boost from the big, beautiful bill. You'll have the depreciation write-down for companies. So you're going to have a much bigger fiscal stimulus push once you start to get to the first quarter of 2026.
This might be a difficult question to answer, and this was something I was thinking about yesterday. Is it feasible to see a broadening out in terms of which stocks are doing better and inflation coming down? And I ask this because yesterday in the PMI data, it showed that actually companies were having a harder time passing along the costs to their consumers. That means shrinking margins. That means less profitability. That means something for investors that's not very positive. So are these stories kind of in conflict?
Lisa, it's a great question, but I think you have to take a look not only at margins, but the level of margins. Margins are extremely high in the U.S. And yes, companies have not been passing on all the price increases from tariffs, but I would say there's always room for negotiation for those to continue to go lower, and that would be very well received by the markets. So I think you have to take these things in terms of context, in terms of its margins come down from 27% down to 25%. Is it really that big of a deal? But it's a great question.
Barbara, you said you see productivity with AI actually being an enhancement. At the same time, you say we're in this low hiring, low firing regime when it comes to labor market. Do you see companies not hiring because specifically AI?
No, I think it's more companies are not hiring because of a lot of uncertainty, right? You've had a lot of potential shocks to the economy over the course of this year. You had the tariff-induced downturn in April, which was really significant and very severe. I mean, you had very deeply oversold conditions within financial markets. There were a lot of calls that the world was coming to an end, big rally off of the bottom. But I think that this low hiring, low firing is just a matter of companies saying, we need to get through to the end of the year to get some more visibility on earnings. But companies are holding on to workers. If they're holding on to workers, it's because their sales are in good shape, their earnings are in good shape, their profit margins are in good shape. So as far as we see it, the low hiring is a lot of uncertainty regarding the tariffs, uncertainty regarding where the Fed finally settles. But in the end of it, we don't see that this is necessarily the beginning of a labor market unwind.
But don't we already have certainty for the most part? The tariff levels are set. We know the direction of travel. We know the direction of travel of the Fed. What is so uncertain about this environment right now?
I think that when you're thinking about the tariff levels, there's been a lot of negotiating on them. They were set at very high levels. Then they got renegotiated down. There's always room when there's negotiations. You've got to think that is there potential that they're going to go lower if the U.S. hits much of a soft patch. Let's just say this low hiring, low firing starts to go into either an inflationary surge, or if you get into this environment where you have maybe the low hiring and the firing starts to go up, I think that the Fed and I think the administration would likely respond to that. They have a midterm election coming up in 2026. The clock starts actually this November, and they want an economy that is briskly growing for the midterm elections.
I think it's already started, to be fair. I was looking at the PMIs yesterday. Inventory levels not great, new orders not great.
Yeah.
I was hoping things would pick up. Don't see many signs of it. The ability to pass through higher prices to consumers, but a pushback there too.
Yeah.
But consumer spending has been relatively strong,
It
right?
has been, but I'm just looking at the PMIs yesterday. I think there was a hope that in September things would pick up and reaccelerate. I just haven't seen that yet. I hope that it's backed up by the data points, just don't see it yet.
Well, I think the consumer has been acting like this. They kind of go through these spurts. They spend for back to school, then they kind of go into hibernation, then they spend for the holidays, right? So the consumer has been looking for a lot of deals for a long time. This has to, of course, think through this, this period of where you've got some uncertainty around inflation, and higher prices do scare consumers, right? They start to look for better bargains. They go for, off-label brands. But I would say once you start to go through for the holiday shopping, you may have a lull for October and November. But let's start looking at those kind of after Thanksgiving sales.
We'll do just that. Barbara, it's good to see you.
Nice to see
Thanks
you
for
too.
dropping by. Thank you. Barbara Reinhardt there at Voya Investment Management. Looking for that pickup, that reacceleration into 26.
Just saying, household, if you're listening, I'm not saving my money for some sort of big present in December. No, I'm kidding. But I do think this is really the key question. If you're looking for it, the reacceleration. Right now, it's not clear in the data, and that uncertainty is leading a lot of people to wonder which to weigh more heavily, the labor market or potentially what you're seeing with growth.
Barbara's right, though. Retail sales have been really quite robust.
Totally.
The last print was fantastic. I want to see more of that. And the reacceleration that this equity market is already priced for, we need to start seeing some real evidence of it into year end.
Yeah, you talk to a CEO of an airplane provider, an airline, and they are pretty optimistic. They're seeing it. They're saying people are looking to travel. And I will just say that if you want to book flights to a hotspot this winter during school break, good luck.
What did Scott Kirby say about that to you last week?
Well, that's normal. I mean, if you want to go to popular places, what do you expect? He didn't provide any
discount
particular
from United Airlines.
Well, that's okay.
Bramo's still flying Delta. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Shares of Alibaba and NVIDIA are seeing a boost in early trading, with Alibaba up nearly 10% after it announced it will integrate NVIDIA's AI development tools into its cloud software platform. That will give customers the blocks to build AI for the physical world, which of course spans everything from humanoid robots to self-driving cars. Meanwhile, hundreds of federal employees who lost their jobs in a cost-cutting blitz led by Elon Musk's Doge are now being asked to return to work. According to the Associated Press, employees of the General Services Administration who manage government workspaces have until the end of the week to accept or decline reinstatement. And Disney is hiking the price of its streaming service. The plan with ads will cost $12 a month, which is $2 more than before, and the ad-free version will cost $19. That's $3 more than before. Disney's not alone. Streaming services have been upping their prices to try and finally convert years of investment into returns. The new Disney pricing will take effect October 21st. That's your Bloomberg Brief. John?
Yahara, thank you. Let's give it a minute. It's an important story.
For John.
Hulu Premium, Live TV, Disney Plus, ESPN Select Plan. That's going to increase. I got this email last night to $99.99 a month. Okay? So I went back to my old emails because I've had this email a few times.
I've seen the screenshots.
So I went back to like 2018, 2019. This was the email I got from them back then. Your plan's going to increase from $39.99 to $44.99 on February 2019. So in 6 years, I know the plans changed slightly in terms of what they're offering you now, Disney Plus, etc. But in like 6 years, that thing has basically doubled and more.
Do you feel like your enjoyment has doubled? Do you feel like your happiness factor has doubled?
I feel like I'm just as locked in still.
Well, there you go.
I'm paying double.
Exactly. Well, their happiness factor is going up.
Oh, we were talking about the ability to pass on higher prices.
Evidently, it's effective.
Hello, Mr. Iger this morning. Okay, up next on the program, a presidential scolding.
The United Nations is funding an assault on Western countries. Both the immigration and their suicidal energy ideas will be the death of Western Europe. Your countries are going to hell.
A conversation up next with Ed Mills of Raymond James. Live from New York. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Stocks are positive, up by 0.2% on the S&P 500, up by a third on the Nasdaq, on the Russell, up by 0.1. Under surveillance this morning, a presidential scolding.
Not only is the UN not solving the problems it should, too often, it's actually creating new problems for us to solve. The best example is the #1 political issue of our time, the crisis of uncontrolled migration. The United Nations is funding an assault on Western countries. Both the immigration and their suicidal energy ideas will be the death of Western Europe if something is not done immediately. Your countries are going to hell.
So here's the latest this morning. President Donald Trump out with strong criticism of the UN, accusing the world body of creating new problems. Bloomberg's Tyler Kendall joins us now for more. Tyler, welcome back. You were over there at the UN General Assembly. Just how well received was that message?
Well, John, if you were looking in the room at the UN General Assembly, it was really met with silence from the other countries who were really just taking in President Trump's message, though I think it might be fair to say that some of these countries at least were expecting the onslaught of criticism criticism, though perhaps not to this extent. Take the Brazilian President Lula, for example, in his remarks right before President Trump. He issued a sharp rebuke of U.S. policies, prompting President Trump in his own speech to say that he intends to meet with Lula next week. Now, we knew going into this that President Trump was going to blast the United Nations as an institution, and our analysts at Bloomberg Economics do point out that since the early decades of the UN's founding, nearly all regions have actually shifted further away from the U.S. when it comes to UN General Assembly votes, and the data shows us that it's actually shifted closer to China. However, with that said, UN General Assembly votes are non-binding, and the U.S. still wields substantial influence when it comes to the institution. President Trump really tried to use this speech to tout his own economic policies. That's how he started talking about domestic manufacturing and his tariff deals, calling this the golden age of America, and then using that to try to draw what he would say are stark contrasts to other countries, really abandoning any calls for unity. John, I do think it's worth pointing out, though, that President Trump did meet immediately after face-to-face with the UN Secretary General, and he told reporters, President Trump did, that while he often disagrees with the UN, he still stands firmly behind it.
Tyler Kendall with the latest. Tyler, thank you, here in New York City, following developments over at the UN General Assembly. Could this all have been avoided if the escalator worked properly? Could we have avoided this?
Not just the
Killing
escalator.
The
How did the teleprompter not work? I mean, this is the President of the United States, and the escalator is literally working 2 feet before,
just as he steps on it.
As he steps on. So it is curious, and Caroline Levitt shared a screenshot from the Times of London that said, individual at the UN, we're talking about, well, maybe what we'll do is do something when the president comes, like shut off the escalator. Was that a joke, or is this for real?
Yeah, maybe if they hadn't done that, he would have come out and said, kumbaya, let's all just get behind the UN.
It's a joke, Bramo. It's just a joke.
This is the President of the United States. It's really embarrassing for the United Nations.
I have to agree with you, by the way.
It's embarrassing.
I totally agree with you. Joining us now to discuss not that, but everything else, Ed Mills of Raymond James. Ed, welcome to the program, sir. I want to pick up on one line from the president. There was a few, but I want to pick up on this one. The suicidal energy ideas that will be the death of Western Europe. Now, it might be easy for some people to dismiss that, but we had an auto analyst on about 60 minutes ago, paraphrasing here, who essentially said the suicidal energy ideas that are killing the auto industry. Now, Ed, does the president have a point?
Well, I think what I've seen from the president is a strong support of traditional hydrocarbons. We look at the reconciliation bill that passed a couple months ago that repealed a lot of the Inflation Reduction Act, the green energy provisions. So this is very on brand for him. When we go to Europe, he was very critical of the oil and natural gas that was coming from Russia into the EU. And when we look at these trade deals, he's looking to make sure that Europe buys our energy resources, have the globe buy our energy resources. In his mind, providing U.S. energy is equal to providing U.S. defense support. So I'm not terribly surprised by that. And I guess finally, I think he is also very concerned about the Chinese-German kind of car auto partnerships. And he does not want to have supply chains going from Europe into China and then losing the industrial capacity of Europe. Those are really important for our NATO allies and our alliance. We need to make sure that industrial capacity absolutely remains in Europe, John. And so I think this is kind of very consistent with what he's been saying for more than a decade.
Ed, also on brand, we hear the U.S. government is looking to take a stake at Lithium Americas. What do you make of this new round of state interventionism?
Well, I would look at the 232 tariffs, and I would always ask the question, all right, if we are at war with China, if we have another significant event where supply chains shut down, what are the things that we need? We do know that there was a huge concern about the lack of critical minerals, rare earth minerals, that China has a near monopoly or a monopoly on. And we need to produce that here in the United States, or we need sources that are not from China. And so I think this is just the beginning. We've had, kind of MP materials. We've had Apple invest in their own supply chain. We're going to have this investment. We're going to see more and more of this because we are getting some of the domestic use of these, or kind of availability for domestic production, but we don't have availability for military production of a lot of these rare earth and critical minerals. And that's a huge national security issue that is kind of bubbling below the surface here in DC, and is a huge priority that only kind of gets more attention as this develops, Anne-Marie.
Is the national security concern bigger than the concern that most conservatives for decades would say that this creates market dissertations?
Yeah, I mean, it's a very different world when we look at kind of the stake by the U.S. government in Intel, the kind of partnership with NVIDIA potentially providing for 15% kind of royalties. I've been kind of talking to clients at Raymond James, kind of this week, and this is a question and a theme that comes up. They're asked, all right, is it a good thing to kind of invest along with the government? Is this something that we have to look for more and more? There's an uncomfortability that I find with investors, but so far, because they are national security related and these are areas where probably the private market does not operate on its own, they're okay with it. They probably prefer to kind of have the subsidy rather than the co-investment because of the traditional kind of barrier between commerce and the government. But this is Trump's style, and so far, he's going to kind of continue to push for this. I don't see a lot of opposition, especially when the dollars come with it, Anne-Marie.
Ed, do you expect to understand the frameworks of some sort of sovereign wealth fund in the near term that could potentially guide some of your clients a little bit better?
Yeah, potentially. I mean, one of the questions comes is like, all right, so when we have the stake in Intel, when we make these investments in these companies, where does the money go? To have a sovereign wealth fund, you do need a legislative vehicle that officially creates that. When we've had different investments in companies previously, usually, look back to the global financial crisis where we made investments in the auto industry, obviously investments in the bank. When there are profits from that, that just goes into the Treasury General Fund. So it's hard to account, especially when you have a debt and deficit as high as we do, for the actual return on these things. So if we have a sovereign wealth fund, if we have a guiding principle, maybe we get a better understanding of what that is. But I'm still waiting on that legislation, Lisa, to occur. It just hasn't happened yet.
Ed, you're one of the best. A clinic as always. Thank you, sir. Ed Mills there of Raymond James. I know some of the policies are polarizing. That's politics. It's often the way. But I agree with Rick Reeder of BlackRock. This is probably the most interesting time for investors, like ever. And he said it based on his career, that it's the most interesting time for him ever in his career.
Do you think he's going to be the next Fed chair?
I've got no idea.
Are you going to be the next Fed chair?
If he becomes the next Fed chair, things get even more interesting for me.
Yeah, that's right. Okay. Oh, is that an endorsement? I think that was just an endorsement.
No, I don't
Rick,
think it was.
Come on and talk about it.
I don't think it was. We're not doing endorsements here. But if he gets it...
Then come on.
From New York City, this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the
latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Equity futures on the S&P positive here by 0.2% on the S&P 500. Pulling back in yesterday's session, break-in, snapping a 3-day winning streak on the S&P. No drama this morning, up by 0.3 on the Nasdaq 100. As we count you down to the opening bell, about 2 hours away. Let's get you some single names, some morning movers. Let's cross over to Danny for more. Hey, Danny.
Hey, John. It doesn't matter whether it's a U.S. AI company or a Chinese one. If you spend more on AI, you get rewarded. And that's the case with Alibaba. You're looking at the U.S. ADRs this morning, with the CEO saying that they will be spending more. The original target was for $50 billion over the next 3 years. The CEO says that they need to keep up with the trillions that are going to be being spent by this industry over the next few years. So those shares up 9.1%. Elsewhere, a little bit of sell-side action. Amazon getting an upgrade this morning. So those shares up by 1.4%, with the analyst there saying that their AWS is going to be looking better than expected, with a growth of 22% in 2026. The expectations had been for something that looks more like 18%. Their price target now implies a 27% upside on the current Amazon price. Still surging this morning is Lithium Americas, with the Trump administration reportedly looking at converting a $2.3 billion loan from the Department of Energy into a 10% equity stake. They're specifically looking at one of their mines in Nevada, to which the loan is also held, an interest is also held with GM. They were looking already at restructuring that loan, so you see GM shares also rising in sympathy with Lithium Americas, who, by the way, put out a statement just in the past hour, just confirming that they were indeed talking with the Trump administration. So those shares up just under 69%, John.
So basically, anyone in line for a loan approved by the Biden administration, is everyone just going through those names, seeing if they're listed, and just buying those stocks now? Has that been the last month?
That's actually very smart. I think you should make an ETF for that.
I'm sure someone already has.
I'm sure that someone has.
On our radar this morning, Fed Chair Jay Powell reiterating there is no risk-free path for rate cuts, saying labour market and inflation outlooks create a challenging situation. This after newly minted Fed Governor Stephen Myron called for aggressive rate cuts. Elsewhere, President Trump believes Ukraine can reclaim all of its territory from Russia following a meeting with the country's leader, Volodymyr Zelensky. Trump also saying NATO members should shoot down Russian aircraft that enter their airspace. And finally, let's get back to that story. Lithium Americas soaring on reports that the Trump administration is seeking up to a 10% stake in the company. The news coming as the White House negotiates loan terms for the company's lithium mine project in Nevada.
Look, this is something a lot of people have talked about, especially after U.S. auto manufacturing basically ground to a halt when the U.S.-China trade relationship soured to a really difficult degree. It is clear the U.S. is reliant on China for some of these precious minerals. And at that point, how do you become self-reliant? You can say whatever you want, but there seems to be some sort of backdoor sovereign wealth fund that is emerging from the United States. And one thing that a lot of people want to get their heads around is what are the contours of that sovereign wealth fund? How big is it? How far is it going to go? And how do people get ahead of it?
And this all has basically the U.S. administration talking about the fact that they care more about national security than they do about basically if they look like they're having state capitalism right now. And this intervention is because when you look at the companies they're going after, it goes back to the raw materials. And what we had the past few days is a group of lawmakers in Washington go to Beijing, and they ended with a press conference saying this is one issue that's not resolved. And it is the rare earths and raw materials that the entire world basically just depends on China. So for the United States, this administration doesn't like grants. They don't like the launch of the Biden administration. So they're like, we're going to do something different. We're taking 5 to 15% stakes in these companies that we think is so important to our domestic critical infrastructure.
I think we're all sympathetic with the aversion to central planning. I'll leave that there. When it comes to this particular problem, though, when we spoke to Citi about 60 minutes ago about what was happening with Europe, he was pointing to the US. At least on a number of issues, they're listening to where the consumer is right now, the kind of things that they're buying, and the automakers are responding accordingly, and the government is giving them space to respond. In addition to that, lithium, we need to secure some of that. They're doubling down and making sure that we have access to those things. All these things happening in America that would arguably help some of these automakers. And I know there's other issues with the tariffs that are hurting them. I know there's other issues with immigration that might be hurting them. But on a number of issues, it's helping them. You're not seeing it take place in Europe.
This is the reason why there was this question, is the European auto manufacturing sector viable right now for an investment? And the answer is unclear. I think that longer term, there is this feeling that the U.S. doesn't have the luxury, and nowhere has the luxury of just standing still. That inaction is a decision, and it isn't one that people want to be taking at a time where the global order is shifting. And I think that that is what's being recognized in the U.S. Too much controversy, but maybe is a question of how quickly can other places do something similar.
I'm sure they just love some cheaper steel now on top of everything else, but that's a different story for the U.S. automakers.
That's true.
Lithium Americas up in a pre-market by about 70%. Let's turn to the equity market. Chairman Powell weighing in on valuations.
Equity prices will move up and down, and we do monitor that, but we're not targeting any level of prices for particular financial assets. We don't have a view that we know what the right price of any particular financial asset is. By many measures, for example, equity prices are fairly highly valued.
What a run we've had for the equity market, 28 all-time highs on the S&P 500, and the rally just keeps on climbing. Rick Wurster, the president and CEO of Charles Schwab, joins us now to discuss. Welcome to the program, sir. It's good to see you.
Thanks, Jonathan. Nice to be here.
Welcome back, Rick. It's always good to see you. What a year it's been already for 25. Still got 3 or 4 months left. Can you frame for us how engaged your clients have been over the last year?
Our clients are very engaged. Our trading activity this year has generally been about 30% higher than last year. So clients are in the market, they're invested. I've been in about 15 of our retail branches in the last couple of weeks, and I was in Princeton, New Jersey yesterday, and I asked the client how they were feeling. And I think they synthesize what our investors are feeling really well. They said, I'm happy, but I'm nervous. And they're happy because markets are at all-time high. Their balances have never been higher, but they're looking at valuations and wondering, you know, am I going to be okay? So it's a great time because they're looking to us for advice. And they're coming in and they're talking to us and they're hearing from our experts. But it's, you know, overall they're happy because markets are up.
What do you think the dominant anxiety is at the moment? We've been trying to ask this question. Is it the anxiety to get out? Do you have to do some hand-holding? Or is it the fear of missing out? Are they looking to lean in a little bit more aggressively?
I think our clients are generally engaged and invested. So I think it's more, hey, I have more wealth now than I anticipated. Markets have done better than I thought. Do I need to be worried about valuations, and should I be getting out? I think, interestingly, as it relates to the bond market, we're seeing a lot more interest in bonds now because with rates coming down, investors are wondering, do I need to go out the curve? I've been living off my purchase money fund, but the yields on that are coming down. Do I need to go out the curve and lock in higher yields? So that's been a topic of hot debate among our clients as well.
The sort of elusive money on the sidelines that we talk about that's supposed to rush back into everything else, particularly the long end of the yield curve, is that actually happening?
Well, I think if you look at our clients, the percentage that they keep in either cash or purchase money funds has stayed relatively stable. Now, when the dollar amount has grown because their wealth has grown so significantly with the market increase in the last couple of years. So from a dollar standpoint, there is a lot of cash sitting on the sideline, but at the same time, it's roughly the same percentage that they've always kept because they want it for safety needs or they want it to, you know, they're purchasing a house, whatever it may be. So I don't see a big story around cash sitting on the sidelines at the moment.
Do you notice a really big difference in how your clients trade depending on their age, depending on their generation? For example, older individuals tend to go to mega caps, younger individuals just straight Bitcoin.
Well, we spend a lot of time talking with our younger investors, and we have 35 hours a week of live education and training to try to get investors to think about the difference between an equity and a coin, and to make sure they're making the right investment decision for them. You know, I do worry about younger investors. And, you know, crypto has been something that's done exceptionally well. But I want to make sure, we want to make sure that young investors also know about the power of equities over the long term. And that investing generally is something that you want to do for the long term. Certainly you can trade and take on positions, but you shouldn't expect quick hits all the time. And I think we want to make sure that young investors are aware of that.
But I really appreciate in this country the bias to invest, the bias to act, the bias to take a bet. In the UK, I saw some numbers recently about how much consumers were investing, but how much of it was just going to really, really low yield stuff, like cash funds, stuff like that. There isn't the same bias to invest in equities and risk that I've seen growing up in the UK that exists here. Where do you think that comes from in America, and how do we continue to nurture it?
Well, I think it's great, and not only has it been great, it's getting even better. If you look at millennials, they're 40% more likely to be invested by the age of 21 than Gen Zers. So it's happening with younger investors as well, and we're trying to engage them where they are. We go to YouTube, TikTok, Instagram, and we put out videos about the power of compounding, and we try to get them interested in investing, because if you start young and become an investor, hopefully you'll stick with it and you'll build wealth. It's the single best way to build wealth in our country is to be an investor. And young people today are embracing it far more than prior generations, which is outstanding to see.
It used to be that all those opportunities were in public markets, that you'd get that blockbuster IPO that you'd want to get exposure to. Now a lot of it's staying private. How are you thinking about offering opportunities in private markets for customers going forward from here? What kind of things are they looking to do?
Yeah, it's an interesting question. There's a lot more private companies than there used to be, and fewer public companies. And so I do think it makes sense to think about providing direct access to retail investors to private companies. And that's something that we're looking at and thinking about how we participate in. But some of these companies are huge. You look at the Stripes, OpenAI.
500 billion.
Yeah, they're billion-dollar companies. And so I do think retail investors ought to be able to invest in them. And at the same time, there's probably people sitting at that company that would love liquidity for their stock position. So I think there's a market to be made there.
How much do you think that it's isolated in companies versus real assets? And I say that at a time when we're talking about the reindustrialization of the United States and the idea that there could be actually some oomph behind it for the first time in a long time. I mean, how much is that part of what you're looking to give access to clients?
Real assets?
Yes.
Well, I think real assets have been a great way to invest in our country. And the main thing we focus on is differentiating between productive assets and speculative assets. And I think real assets are productive assets. And so it's a great way for a client to get invested.
Are you concerned about, you keep talking about the coin and you're concerned about it, and actually the productive versus unproductive. Do you think that that's actually a point of concern right now in markets, the amount of involvement in the crypto space?
Well, I think crypto could end up being very, very valuable. And there's a role for it to play, and there's a role for tokenization and the blockchain. What's important to us is that investors, particularly young investors, know what they're investing in and know why it makes sense for them to be invested in it, and understand the difference between, say, an equity and a bond, which have some positive expected return and they're a productive asset, and just understanding the difference between that and a more speculative asset like art or baseball cards or crypto, where you don't know what the future return is going to be. It's not that we don't judge people's investments, and we can see a world where crypto is very, very valuable, but we want clients to understand the difference between those investments.
Do you think next year you're going to have more opportunities for either hiring or strategic opportunities because you think policy is clearer now out of Washington?
You know, what's driving our hiring is the growth of our business. We're growing at a really strong rate. We're seeing a lot of engagement from clients. Increasingly, they want advice from us. They want our help in their financial life. And because of that, that's what's driving our growth. It's not about what's happening with policy.
Can I just finish on the potential for a partnership on private markets? I wanted to ask you that. Is that something you consider, a partnership with another firm to offer that kind of access?
I think we would love to see retail investors be able to participate in the growth of private companies in our country.
So would Apollo. I've heard the same thing from them. I'm trying to make a market now.
And we have KKR on, you know, firms like KKR on our platform.
Yeah.
And that our retail investors can invest in. And that's a great way to get access to private markets. They're experts. They started the market. They've been in it forever. That's a very thoughtful way for our investors to go be a part of private markets.
Seems like this is the direction of travel, at least for retail.
Well, and it seems like the regulatory landscape is opening up to pave the way for that. And the question is just what form that will take and whether private markets, the new public markets, whether there's any difference, like Apollo has said, maybe not. And this is sort of the new path ahead for a lot.
Are we mediating? Trying to broker a deal?
I think we beat you. That was a good try, by the way. Rick really effectively navigated that.
Rick, appreciate your time. It's always good
nice
to see you.
To see you all.
Thanks for dropping by. Thank you, sir. Rick Wurster, the Charles Schwab CEO. If you are just joining us, equity futures on the S&P positive here by 0.1%, with an update on stories elsewhere this morning with your Bloomberg brief. Here's Yohara for more. Hey, Yohara.
Hi, John. Micron shares have now turned lower in the pre-market, down 1.3%. That's despite the chipmaker topping revenue estimates for the current quarter due to high demand for its AI hardware. The outlook validates the idea that Micron has become a key beneficiary of AI spending due to its high bandwidth memory products. Micron said it expects supply of memory chips to remain tight into next year. But as I said, shares are lower. Meanwhile, the Bloomberg Philanthropies Global Forum takes place today alongside the United Nations General Assembly here in New York. The event, hosted by Michael Bloomberg, brings together top leaders, including the ones you can see behind me, from the public, private, and nonprofit sectors, to address the world's most urgent challenges and opportunities. You can tune in starting at 9:15 a.m. Eastern. And the Ryder Cup opening ceremony has been changed to today at 4 p.m. Eastern. It was originally scheduled for Thursday, but was moved up because of inclement weather in the forecast. United States captain Keegan Bradley and European captain Luke Donald will still announce the Friday morning foursomes pairings on Thursday. So we will have to wait. That's your Bloomberg brief. John?
Looking forward to that one, Yohara. Thank you. Up next, passing on tariff costs.
There's a lot of uncertainty about the direction of public policy, and so companies are holding off. That may be a way of passing on tariff costs. The pass-through to consumers has been later and less than we expected.
Up next, Russ Brownback of BlackRock, live from New York City this morning. Good morning. You're watching Bloomberg TV.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Equity futures on the S&P, positive here by 0.1% on the S&P 500. On the Nasdaq, up by 0.2. In the bond market, Treasury stabilised at the front end of the curve on a 2-year bond yield this morning, around 3.57, on 10s, around 4.11. Under surveillance this morning, passing on tariff costs.
There's a lot of uncertainty about the direction of public policy, and so companies are holding off. That may be a way of passing on tariff costs. It is something that is driving up inflation a bit. And the question is, are companies then, are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. The pass through to consumers has been later and less than we expected.
So here's the latest this morning. Fed Chair Jay Powell calling the current environment a challenging situation with risk to the labour market and inflation. Russ Brownback, the Deputy CEO of Global Fixed Income at BlackRock, joins us now for more. Russ, always good to catch up with you.
Morning.
Thanks for being here. How are you capturing the division at the Federal Reserve and thinking about how to apply that into ideas to invest in fixed income?
Yep, so we agree with where the markets are pricing forward Fed policy rather than the dots. We've talked about, in previous appearances here, we talked about the suboptimality of the policy setting today. And, you know, we look at an economy that's doing fine. You know, if you look through the noisy GDP measures, you look at gross domestic income, you look at private final demand, you know, it's humming right along at 2%. But beneath the surface, there's dispersion. Millions of low-income, low-wealth households suffering from floating rate debt, all the credit card debt, all the auto loan debt, student loan debt, and like small companies, which employ 40% of the people in the labor force today. That's where the floating rate debt is. And the housing market is really suffering. I mean, the turnover in the housing market approaching, you know, sort of GFC kinds of levels today. And so that policy setting today, while not, you know, denting the overall economy, is my analogy is it's like you can run your car at 70 miles an hour if you have 3/4 tire pressure, but your fuel efficiency is not optimal and your ride isn't as smooth as it could be. Why not pump the tires all the way up to full pressure and have a better ride?
So pumping up the tires is what? Cutting interest rates by another 50 basis points?
So listen, I think, you know, I think there's too many modern, contemporary influences today for anybody to have a real guess at what neutral is. But a 4 handle on the overnight rate when forward inflation markets are telling you inflation's headed to the low 2s is too onerous. And so I think ultimately, as the data unfolds, it will become clear that the Fed can deliver what's priced.
If you have a smoother ride, you can go a lot faster, and that is one concern. If you cut rates to smooth the ride, I'm really going far with this analogy. I think we can stop it here, but I just am wondering how much this actually makes you not want to invest in the long end of the yield curve.
So I don't think there's dissonance between the idea that the Fed can be easing at a time when the economy is fine. I don't believe we live in a secular disinflationary environment. We lived for a decade into the pandemic with too little inflation. The central bank was fighting inflation from beneath. I understand the scar tissue from what happened in the pandemic. When you pump $5 trillion into the bank accounts of the private sector at the time that the supply chain is shutting down, you get too much money chasing too few goods. That's inflation. You need to lead against that. They did, but they've wrung that out of the system today. If you look at core PCE on a trailing 3, 6, 12-month basis, 2.5 years, it looks like a black diamond ski slope coming straight down. That descent has slowed because tariffs are making goods prices tick up. But when you move goods prices up one time, that's not inflation. Inflation is a recurring phenomenon where goods get marked up, people pay more, then they ask for higher wages and so on. That's not what's happening today. You've got price stability, which is actually the Fed's mandate. You look at the volatility of inflation. One last statistic I'll give you. We measure the variability of the rate of change of a $100 basket of PCE consumption items. Over the last year, that's 37 cents. 2 years ago, that was $3. So the Fed has won the battle of price stability.
So aside from running for Fed chair yourself, I am wondering going forward whether this just means that you're going to invest wholesale in duration at this point, given the fact that right now there's a lot of concern in markets about a very different view than what you just put out there.
So it's a great question. The markets, though, have priced the view that I just laid out. And so
that's fully priced.
So we think that the yield curve is kind of in equilibrium here. As I've said before, the front end's anchored to Fed policy. The longer end sort of gravitates toward nominal GDP outcomes. So in the fixed income portfolios today, we don't see a big directional trade in rates. We've called it the golden age of income. It's about just harvesting the yields today that sit so far above inflation.
You sound like you're talking about a productivity boom next year. And I'm interested because we're going into a midterm election where most polls continuously show that Americans are concerned about inflation. Even if it's a one-time price adjustment, it is still going to be higher in terms of cost of goods? Or do you think corporate America is going to absorb as much as they can?
So I think sometimes, these surveys probably capture sentiment about high prices as distinct from inflation. We have inflation that's come all the way back down into the two. It would be in the mid twos if it weren't for tariff increases. So when people are talking about, trading down from hamburgers to hot dogs, it's in deference to high prices, not inflation. So I think that's conflicted in the surveys. Productivity, after a decade of a productivity bust, we're looking at 2% productivity today. Think about what that means. It means you can grow the economy at 2% real without adding 1 minute to the hours worked during the work week. And there's many prognosticators that suggest that's going to be inflecting higher still to 3 or 4%. I happen to be an optimist in that regard. So I think you can have your cake and eat it too.
Russ, I want to finish on this. Something that your colleague, our friend Rick Reeder, has said recently. Said it a few times. This is the most interesting time for investment that he's ever seen. I imagine you agree with that. What's so fascinating about this moment in time?
So worked with Rick for 33 years. We've seen all the ebb and flow of everything. About a decade ago, we stepped off the efficient frontier of unbridled globalization. You've got generations worth of norms in geopolitics, in trade, in fiscal policy, in monetary policy being shattered. So that creates moments and bouts of uncertainty, but that's what we live for in markets. When you get the dislocation and you can go in and tactically trade around that, that's nirvana for us.
Russ, it's good to see you. Thank you, sir. Russ Brown back there of BlackRock. I couldn't agree more. All these different things happening. Don't follow the VIX. That kind of buries the story. You've got all this volatility elsewhere to take advantage of.
There's sea changes in technology, sea changes in trade flows, sea changes in just demographics and how much people are aging and how they're investing. And I just am really stuck on the idea of trading down to hot dogs from hamburgers. That made me a little sad.
That is sad, isn't it?
I hope that that's not happening because I personally...
No, that's real.
But that is real. And so there's also that
real
issue and how you actually factor that in as well. Not to bring it to that, but I have to bring it to that.
Okay. Coming up on the program, Darryl Cronk of Wells Fargo, Greg Tuorto of Goldman Sachs, Nathan Sheets of Citi and Vichy, Philip Patura of Morgan Stanley. All of that in the third hour of Bloomberg Surveillance. Up next.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The key driver of this bull market has been AI and tech.
We're becoming still very dependent on a smaller handful of stocks.
As investors, what we need to do is separate out what is the medium-term trend from the short-term cyclical trading trend.
Next year, we do see earnings improving 10%.
We have Q3 earnings coming up. We don't have a beat and a raise. I think you will see a pullback in the market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. And your scores look like this. Equity futures on the S&P 500 just about positive by 0.2%, bouncing back from yesterday's losses. Some big AI spending plans we can talk about in just a moment. The Nasdaq up by 0.25%. In the bond market, light on data through to Friday. Looking for jobless claims tomorrow on Friday PCE. Yields down by a basis point at the front end, 357, up 2 at the long end, 412. The curve steepening somewhat. Going into that data this week, Thursday and Friday for claims and PCE. In between, tons more Fed speak. And look out for Costco earnings too, just to get a flavor of where companies are at right now and their ability to pass on higher costs.
Yeah, yesterday in the PMI data that we got out of the United States, there was a sense that maybe companies were having a harder time passing along those costs. So maybe this is actually a positive signal when it comes to just how much inflation can accelerate, albeit maybe less positive for margins. That said, the likes of Costco, the likes of Walmart, the likes of Home Depot, how much are the giants in the retail space consolidating market share with efficiencies of scale, with efficiencies of technology that put them in a different realm? And that actually is also what I'm listening for.
They should just announce some big AI spend. If Bloomberg Surveillance was a stock, I'd be announcing an extra $10 billion this morning. Alibaba up by 9% in the pre-market after announcing they're going to spend more on AI.
Yeah, maybe you could just say you're replacing me with an AI bot, and all of a sudden the shares would go.
That stock,
oh, that's so sweet. Look, yes, we have seen a huge. I'm going to move on because I was just so touched. That's so sweet of you. I am thinking that this is something that the market is endorsing, these spending plans for artificial intelligence, and that ultimately will be a self-fulfilling prophecy until it isn't. It's sort of the Dan Greenhouse school of thought that it can be a bubble, but you still want to keep buying until you don't, and then you don't want to be buying, and that's sort of what AI investment plans have looked like.
This circular trend on the way up, it feels great. It makes a lot of sense. But the way down, how big is that downside could it potentially be? But this number, and you mentioned it a few times, Jonathan, this morning, when you have the CEO of Alibaba talking about overall investment in AI, $4 trillion worldwide over the next 5 years. And Alibaba needs to keep up. And now you see just the absolute arms race between Beijing and Washington.
I think Pete Cheer of Academy was great earlier this morning. He talked about the difference between early innings and late innings. The spending plans are early innings. The valuations are late innings. That's the problem market participants have got right now.
Yeah, but not end inning, right? So at a certain point, you might bring it all forward and then look at the percolation of those investments into the rest of the sphere. This is a very difficult thing to really get your hands around on any level. The one quote that I keep thinking about is when Microsoft and Meta were saying that the risk is not investing enough, not investing, it's not necessarily investing too much. And that is clearly what we're seeing across the entire industry.
How many innings are there?
9.
How many are there? There's 9?
No, it
Okay.
depends.
It depends?
Extra innings.
Yeah, there could be extra
Be
innings,
more.
but overall,
Okay.
let's say
Don't worry.
9.
You really wanted to start this conversation?
Yeah, I just wanted to have
Well,
that
yeah, because
debate
the
right now.
Yankees are now in the playoffs.
You want to squeeze
so
that in?
I just had
And
to
the
say
Mets?
it.
What's happened to the Mets?
Mets are Metsin.
All right, this is good. Okay, coming up on the program, Lisa might be gone. Daryl Cronk of Wells Fargo on the latest AI spending plans. Greg Tuorto of Goldman Sachs Asset Management on the small cap breakout, and Nathan Sheets of Citi Global on a divided Federal Reserve. We begin this hour as Alibaba becomes the latest company to ramp up AI spending plans. Daryl Cronk of Wells Fargo writing, "We are closer to the beginning than the end of a new capex super cycle. The additional power and energy needs alone to fuel the AI revolution may be the largest constraint." Daryl joins us now for more. Daryl, good morning.
Good morning, John.
Are we going to keep on rewarding these companies making these big announcements?
I think in the near term, yes. I mean, I don't see any slowdown to that. I mean, quite frankly, I think the Alibaba CEO with his comment this morning might be light on the $4 trillion. I mean, there's a lot of estimates out there that it's actually $6 to $7 trillion. And in fact, if you take every dollar spent on just AI alone, it's estimated there's probably $3 to $4 needed to be spent on the infrastructure to support that AI, right? So if you don't want to own and pick the next winner in the race, right, who's going to win that ultimate AI race, you own the picks and shovels, right? You own the stuff that pulls into that, right? It's a safer play. It could be through the energy mix. It could be through data centers. It could be through utilities. Like, there's a number of ways to play that.
Well, there is a company that owns the shovels. It's NVIDIA. And now they're buying gold mines, or at least taking stakes in them. Isn't that confusing?
That is a little confusing, right? I mean, I don't know that that's where you need to be, but when you have that much free cash flow, you've got to do something with it, right? And so I think you're going to continue to see that trend. I think what people miss here is you talk about these big seismic trends, in history, industrial revolution, the development or birth of the internet, all this stuff. It's when founders and disruptors show up at the same time and they collide and they change the landscape, right? And I think that's a moment that we're in. So we can look at the stock market and say, look, the market has lived since April without more than a 2.7% S&P correction. The longest duration of that correction is 4 days. We're a little exhausted. We're a little tired if you look at the advanced decline line. Like, we could move sideways. But I think if you back out and see the secular trends that are at play, I think that's what's important here, right? It's the super capex cycle. It's the AI revolution. It's the onshoring manufacturing renaissance. It's deregulation, right? It's all these things happening simultaneously that I think are a powerful concoction.
I think what Pete Cheer was getting at is everyone's stepping back. Everyone's appreciating the awe of this moment and valuing it very highly without getting there yet. And even if we're in the early innings of the actual investment and the actual execution of this grand technology and technological disruption. So how do you sort of bridge that gap of valuation and everyone stepping back, appreciating the awe, and not necessarily seeing it get done?
Well, for us in portfolios, we're on the wrong side of the trade the last 30 days of being unfavorable small caps, right? Which have been, ever since the Fed's going to cut interest rates and this is going to go wild. It's ironic. I was looking last night. So last year, the Russell 2000, $67 of earnings, right? This year, it's on track for $72 of earnings, $5, so call it 7%. Next year, $102. That's a 42% increase in earnings by Bloomberg's own estimates of what the street has. No way. No way. I mean, you're not getting that out of small caps, next year. So I think to answer your question is, you can still play this trend in a number of ways. Picks and shovels is one. You can go up market in quality and stay with a large cap where they are generating that free cash flow, where they are truly generating the earnings. I'd be really careful about the dash for trash right now. I think that looks overextended to us. Places where everybody just decided, okay, this rally is going to live forever, and I'm going down the quality spectrum. That just doesn't make sense to us right now.
So, and what you're discussing is something people have been debating. Do you stay with the high flyers, or do you look elsewhere? And you're saying you can look elsewhere, but be careful, but also stick with the high flyers. Is that kind of what I'm hearing?
Yeah, I mean, we're overweight tech in the portfolios, but tech is not a vertical, right? Tech is a horizontal now, right? It's touching every, obviously, sector and industry that's out there. So I think you can have that. We love financials. Our best idea is financials right now because, I mean, obviously, as the yield curve steepened, that's great for NII. There was no early signs of delinquencies, defaults, right? The M&A and IPO world is picking up. I mean, IPOs are up 63% year to date. M&A is up another 35% year to date, year over year on run rate numbers. I mean, that's all great for those types of industries. Industrials are doing well, utilities are doing well. So everybody's talked about the equal weight S&P 500. I won't drain that, conversation again. But it is true, the breadth is expanding out, right, when you look at it. And I think you can own some really great companies at reasonable valuations here and not be afraid about chasing the uber high valuations all the time.
When you say sticks and shovels and you're looking at potentially the AI build out, are you looking at companies that have a loan or a grant from the U.S. government because you think this administration is going to take an outright stake?
You can, but I would still, that's where I would go back, Emery, to the fundamentals. I'm not sure those are the greatest fundamental companies. There's a reason that equity injection is coming, right, for the support and the, cornerstone of the industry. I would still look for companies that could do it on their own, right, and not necessarily need that type of support in the equation. It is odd that we're doing it through equity, right? I mean, history tells you there's examples where that's come through loans and debt and other ways of repayment. The true equity stake in those core industries, I think, is a little bit of a game changer.
Do you think this could distort the market, what the U.S. government is doing?
I think the only way it really distorts the market if there's an in and an out and an in and an out, and it's very episodic, right, in the way it's done. If it's a true, sustainable, long-term investment, probably not, other than the moment in time that it's announced. Right?
They are attempting to backstop the Argentine market right now, so I'm going to bring you some breaking news from the Treasury Secretary, Scott Bessent, just moments ago. The Treasury is currently in negotiations with Argentine officials for a $20 billion swap line with the central bank. We're working in close coordination with the government to prevent excessive volatility. The Treasury Secretary going on to say, in addition, the United States stands ready to purchase secondary or primary government debt, and we are working with the Argentine government to end the tax holiday for commodity producers converting foreign exchange. The most effective backstop, the best kind of backstop, is one you don't actually have to use. And we'll see what happens next with this one.
Yeah, especially given that this is almost a threat to what Scott Bessent, Treasury Secretary, calls the speculators, and that Argentina has all of the tools to defeat the speculators. Is this something that will get called upon, or is this the vote of confidence that Javier Milei needed, especially given some of the recent losses in recent elections?
Absolutely. We're going to, I think, know at the end of October whether or not this worked or not, at least politically, to backstop Milei and his government when it comes to really tough race in terms of the austerity measures he has put in place that are now starting to backfire a bit politically.
This, of course, is very different, but I always remember what Mario Draghi did in the Eurozone debt crisis when he first took over and came up with the unlimited bond buying plan, which eventually was known as OMT. I think it was outright monetary transactions or something like that. It was so effective that he never had to buy a single bond with it. It was a plan that was never activated, and it scared the speculators off. I imagine for the Treasury Secretary, he's coming up with a plan that you don't want to be on the other side of at the moment, and we'll see how effective it is for the weeks and months to come, because it's not just about getting through the next couple of days. It's providing some longer-term stability.
Yeah, and Argentina has an unusual amount of hair on it, considering the fact that it's defaulted on its sovereign debt 9 times.
You bring the bazooka, right? That's what
Do you think this is the bazooka this morning?
I think it is, because, again, to your point, you want to make a big step in there. And remember the old adage about financial markets stop panicking when central banks start panicking, right? So when you bring the bazooka, it usually means central banks are engaging, and that's when financial markets usually make that inflection point.
Darryl, it's good to see you. Thanks for dropping by. Thank you, sir. Darryl Cronk there of Wells Fargo. Let's give an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara with more. Hey, Yahara.
Hi, John. During a meeting with Ukrainian President Zelensky at the UN, President Donald Trump said NATO nations should shoot down Russian aircraft that violate their airspace. Separately, the president saying on Truth Social that he believes Ukraine can win back all of its territory from Russia. He also said Moscow is fighting aimlessly, calling the country a paper tiger. Meanwhile, President Trump has canceled a government funding meeting with Democratic lawmakers. It comes as a shutdown deadline is just 1 week away. Trump stated he wouldn't meet until Democrats become realistic with their demands, which currently include extending Affordable Care Act tax credits and rolling back some of the president's earlier policies included in his big, beautiful bill. And OpenAI is expanding its data center push under its plan dubbed Stargate. It plans to invest about $400 billion to develop 5 new U.S. data center sites in partnership with Oracle and SoftBank. This marks its biggest push yet to fulfill an earlier pledge to spend $500 billion on AI infrastructure in the country. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, the Morning Calls, plus Greg Swartzo of Goldman Sachs Asset Management on the small cap breakout. That conversation up next.
Is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Our trading activity this year has generally been about 30% higher than last year. So clients are in the market, they're invested. They're happy because markets are at all-time high. Their balances have never been higher, but they're looking at valuations and wondering, you know, am I going to be okay? I don't see a big story around cash sitting on the sidelines at the moment.
Charles Schwab CEO Rick Wurster joining us in the last hour or so. Investors have re-engaged in such a massive way post-April. Now we're looking for corporations to do the same going into 2026 and hopefully start to stimulate this economy. If you are just joining us, welcome to the program. Equity futures on the S&P 500 firmer here by 0.1%. On the NASDAQ up by 0.2%. For the small caps, the Russell up by 0.1%. Also, that's the price action. Let's get you some morning calls. First up, Bank of America raising its price target on Alibaba to $195 as it increases its investment in AI, seeing it as the world's leading full-stack AI services provider. Your second call from Wells Fargo upgrading Amazon to overweight, expecting greater conviction in the Amazon Web Services division. And finally, UBS upgrading General Motors to buy holding, an above consensus view for its North American margins. That stock is up by 2.4%. Let's stick with equities and turn to the Russell 2000, seeing all-time highs as the stock market rally broadens into small caps. That index has rallied more than 13% since the beginning of August. The moment we had that payrolls report for July, this stock market has taken off as it reprices what's going to happen with rates and ultimately what that means for small caps. Joining us now to discuss is Greg Swartzo of Goldman Sachs Asset Management. Greg, good morning, sir.
Thanks for having me.
It's good to see you. We've seen a few head fakes for small caps before. A lot of people are conditioned by that. How do you understand the difference between a head fake and a real deal, something more sustainable?
Yeah, I think the backdrop, especially the economic backdrop for small caps right now is probably the most transparent it's been in that 3 or 4 year time frame since we had last record high. The financial conditions index, which is really important for small caps, is quite easy. We know we have a couple more rate cuts in the offing, and if you look at some of the bottoms-up indicators for the economic activity, we're over 3% for GDP growth in the third quarter, which is well ahead of where the sell-side economic forecasts are. So those are really, really good, and I think that people have wanted to see it before they place their bets, and I think that's what you're seeing right now in the marketplace.
Well, some people are worried that this is a K-shaped economy. There are a lot of people who are very much feeling the inflation that has been percolating for the past 5-6 years. People are definitely having a harder time and feeling less confident about the labor market, and that small caps are disproportionately affected by these trends. What's to say that's ending in enough of a sort of groundswell to give support economically, fundamentally to these smaller companies?
Well, I think you have seen some of that, transposed into the market, especially on like the restaurants sector. It's not done well, especially in the last month or two. August and September have not been good for that space. You're seeing a little bit of a wobble in some of the retailers, especially at the low price area. So I do think there are some consumer-driven parts of the market that may not be in the best shape. However, some of the things that you see that are CapEx-driven, especially we heard from Micron last night that they're going to spend more money. They need to spend more money. That translates into a lot of, kind of opportunity for small-cap companies. There's a lot of companies out there that have that either direct or indirect benefit from their capital spending that we hope to take advantage of.
Do you think that the Russell 2000 as an index is the best representation of the story that you're telling? Or do you think that it's other indexes that have different cohorts of companies that might be smaller or mid-sized, but that the Russell 2000 has a number that have been left behind, kind of, and that haven't done as well for a long time, which is why they've remained in sort of the smaller bucket?
A lot of interesting thoughts came into my mind with that question. I do think that there are some construction issues with the Russell that have gone on over the course of the last few years that have brought in some things into it that that are not representative of what we're talking about. I do think that in terms of just talking my own book, which I know I am, the active manager in the small cap space has a significantly larger menu to choose from to kind of weave inside and out of those things. Like think about the biotech space. The biotech space in 2021 compared to today, you have to be so much more selective, but you can find some really good opportunities. If you just bought biotech or biotech in the Russell 2000, you're taking a lot of chances there, and I do think that's the difference. As the Russell 2000 has tried to cast a broad net to do these things, it's kind of caught some things it probably didn't want to catch.
Where else do you see opportunities outside of biotech as one?
Yeah, biotech's one. I mentioned semi-cap equipment, as an area, especially after what Micron talked about. I think medtech is starting to reemerge. I've talked about it for a while, but I do think that outside of some of the areas in medtech, you haven't seen a lot of life in healthcare. Healthcare has been tough. I mean, I think the SP 500 healthcare got to its lowest level in decades, and I do think medtech is starting to see some recognition for the growth that it has, which is well above kind of the last 3 or 4 years, kind of moving towards mid-teens, like that area a lot. Asset managers, I mean, just in terms of, kind of what's gone on in equities, many asset managers are equity heavy, and then finally capital markets banks, we like, Piper Sandler a lot, in terms of its exposure to not just sort of what's happening in the equity capital markets, but also in the debt capital markets with their muni business.
How much M&A do you see in small caps?
It's starting to really pick up. I think it's happening in much smaller companies right now. I think it's because the private equity guys are so flush with cash and they're wanting to put things together. So you're starting to see a lot of $2 billion, $3 billion deals, more PE than strategic. The strategics will start to come, we think, as we get closer to the end of the year. I think that they've been waiting for this all clear along with us. Price plays a difference, and I think that you're starting to see price pick up off the bottoms, and that's when strategics start to kind of dig in, because they're like, yeah, I'm not going to get those bottom prices that I had hoped for, so I'm going to have to pay what the market's dictating.
Greg, you're super dialed in, focused on the fundamentals, and I respect you for that. I think a lot of people treat small caps differently, though. They treat small caps like they treat EM. It's like in and out and not for long. And I just wonder if it's the characteristics of the investments that drop in and out of the asset class, if I can call it that leads to these moments where we get these head fakes, these moments of outperformance that don't last long. Is the money typically faster that gets into small caps? What is it about those investors that play in that area of the equity market?
It's a great point, and I think that, you know, I've done this for almost 30 years, and it's, so if you think about the last 3 years prior to the, you know, kind of the prior 27 years of my career, it wasn't like that as much. I do think that there's been more transition both in and out of the small cap asset class, like you discussed, which has kind of caused some of that tourist action that we've seen. But I do think that you have a really good chance for both beta and alpha in small caps right now, which you may not have in some of the larger caps. People are very worried that the larger caps are expensive, and small caps are, you know, 25 to 40% cheaper with better earnings revisions characteristics right now. So they could be even cheaper if our 26 numbers are right.
And a million times smaller. I don't know by definition, but the very fact that the Russell's 3 trillion, and so is a single name on the S&P 500, isn't that dictating the style of investor that gets involved in your world?
It is. In some instances, you've seen a significantly larger, as the CEO of Charles Schwab said, you know, kind of proportion of retail investors in this move, you know, recently. But I do think it's not always consistent over cycles. I think they do find other places to go, especially when there's thematic opportunities in other areas. I do think that just some of the themes, whether they be artificial intelligence, nuclear power, quantum computing, have all been in the Russell. So it's really kind of, you know, it's coalesced in there, and it's made it harder for active managers, but I do think it's more opportunistic going forward because there's some other things that are happening right now that we're getting excited about.
How many rate cuts do you need to stay excited about small caps in the next, say, 12 months?
I think you probably need 2 to 3 at least, you know, which I think is, you know, kind of in the priced in camp. If you got 4, you know, I think which should bring you down to, you know, a nice healthy 3, right? I think that would be something that, combined with, say, a 2+ GDP, is sort of a, if I can use the term from earlier in my career, Goldilocksian type scenario, right? You know, I think that's what we'd all hope for. You don't always get what you hope for, right? But I think that as directionally we're going in the right place with rate cuts, and the economy seems really, really stable.
It was nice to talk to you about small caps without talking too much about interest rates and the Federal Reserve, which is typically all it's about. Greg, it's good to see you.
Thanks for having me.
being here. Appreciate it. Greg Twarter of Goldman Sachs Asset Management, a clinic there on what's happening beneath the surface in small caps.
Yeah, at a time when a lot of people do think it's just an interest rate bet, I just am struck by how much energy has been put to some of the large caps, how wide open capital markets have been to them, at the same time that a lot of small caps are still looking to extend maturities and deal with their balance sheets, and that's one reason why it has been so tied to rates.
Lower interest rates helps a lot. We've seen a massive move since early August off the back of the repricing of the Federal Reserve. Coming up, we'll catch up with Nathan Sheets of Citi on a divided Federal Reserve. Chairman Powell trying to unite the impossible over on the FOMC. We'll get into the details of the Fed speak so far this week. In the equity market, on the S&P 500, futures positive by about 0.2%. And in the bond market, bond yields just a little bit higher at the front end, 357 and up by 2 on 10s to 413. From New York City, you're watching Bloomberg TV.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The opening about 60 minutes away. Stocks are positive across the board, up by 0.15 on the S&P 500. On the Nasdaq 100, higher by 0.2. Let's get some single names, some morning movers. With more, here's Danny. Hey, Danny.
Hey, John. Acadia Health to the downside this morning, down 11%. It's been jumping around, that despite the fact that Engine Capital, the FT reporting, taking a stake in the behavioral health company. Initially, shares were higher. They have turned around the point of this stake taking, according to the FT, in a letter that they've reviewed, as they want to change some of their activities. They want them to review their portfolio, hold back on some of their capital-intensive projects, and rework this board. A little bit of sell-side action also moving things this morning. Adobe shares, those are also falling this morning, down 1.2%. Morgan Stanley downgrading the company to a hold, saying that some of its decelerating sales are a warning flag when it comes to their Gen AI, the promise of it and the ability for that to really generate a return. Those are the concerns for Morgan Stanley, so shares are down 1.2%. Elsewhere, we are looking at PayPal moving higher by 1.1%. This morning, Blue Owl affirming that they are taking a $7 billion chunk of their buy now, pay later assets. PayPal will continue to run the client-facing versions or the client-facing activities for those buy now, pay later loans, but it allows them to move more capital light, and it's a trend we've been seeing. Klarna and Affirm also have been selling some of their loans to non-bank entities. Blue Owl just up by 0.7% off the back of that. John.
Danny, thank you. Looking forward to the program. Open interest 30 minutes away with Danny and Matt. Look out for that a little bit later. Counting you down to the opening bell. Let's turn to the Federal Reserve. Fed Chair Jay Powell reiterating the challenging path ahead as policymakers weigh further easing. Bloomberg's Mike McKee joins us now for more. Good morning, Mike.
Good morning, John. I think there are 3 points that people on Wall Street may not be getting completely. So let's go through those. When you look at the dot plot, you see that the Fed, when you compare it to the last time, the Fed has definitely moved down. But also look at, if you're looking at the white dots, look at the dispersion for 2026 and how much that has widened out if you compress some of those smaller, the individual dots in the previous forecast. What the Fed is telling you there, and what Powell was trying to say yesterday, is we don't know whether we're going to be able to cut rates and by how much next year, because the economy is evolving in ways that we can't predict. So it's not that they're saying we're not going to do this. They're not saying we're going to do just one cut in 2026. They're saying that right now it looks like we know we could do that probably, but let's wait until we get all the data. Second thing is what the dispute between Stephen Myron and the rest of the board is all about is the neutral rate. What is R star? He's not out of bounds completely. If you look at the range of estimates from the September SEP, it was between 2.6% and 3.9%. He says he's in the mid 2% area, so give him credit. Could be 2.5, 2.6. He's at the bottom end, but he's not out of bounds completely. But the real issue is that, as Jay Powell has said many times, we cannot identify with certainty what the neutral rate is, and therefore he makes the case you should not make policy based on the neutral rate, whereas Stephen Myron says You should. That's what the dispute about at this point. And finally, one thing that hasn't gotten as much publicity that I thought it would yesterday when Jay Powell said, by many measures, equity prices are fairly highly valued. Is that an observation or is that a warning? We've seen that from Fed officials sometimes in the past. When rates, when levels get pretty high, they don't like to talk about the stock market, but in this case, he did. And then Alibaba today said, hold my beer in terms of pushing markets higher.
Well, precisely.
So we'll see.
Mike, thank you, sir. Appreciate it. Some rare insight, comments from the chair on valuations, and some people might just snap back and say, yeah, thank you. You're a big part of that.
Well, and it's only going to continue, right? I mean, to that exact point, I'm sorry, I am distracted by this Oracle deal. I have to just mention it. Oracle is selling $15 billion of bonds, including a 40-year tranche. And they're looking for capital at 6.4%. That's the cost of it. For 40 years, for a company that is engaging in tech, why can they do this? Well, a lot of this is because spreads are so tight. Why are spreads so tight? Because the economy and the market is being underpinned by the Federal Reserve. So it raises this question of, are we getting over our skis or does it even matter? Because buy, and that's what everybody seems to be doing.
It's a K-shaped debt market. Not everyone has that kind of access in fixed income, let's put it that way. Let's turn to Nathan Sheets, Chief Global Economist at Citi, writing the following. US firms appear to be absorbing 60 to 70% of tariff costs today. However, we doubt that this will prove sustainable as a longer-term strategy. Nathan joins us now for more. Nathan, good morning.
Good morning.
Good to see you, sir. Which way do you think it breaks if it's not a long-term strategy?
Well, I think that the firms have been able to absorb as large a share of the tariffs as they have, largely because they front-loaded inventories and they're drawing down those inventories. But I think over time, they're going to have to pass it through to consumers. And I think we're going to see it in the CPI. To the extent that that doesn't happen, then firms' margins are going to be compressed and they're going to be thinking about how do I cut costs? And then that's bad news for the labor market.
So the question again, which way does it break?
Which way
Is this an
does it
inflation
break?
story? Are they passing it on? Or a labor story?
Well,
are they cutting cuts?
The Fed has cast its vote on that one. This is a tough period. The economy is absorbing a stagflationary shock. The Fed's got to choose between its mandates. And Jay Powell's telling us, well, it's painful, it's complex, it's difficult. But on balance, they're signaling greater concern about the labor market.
The market agrees with them. The market agrees this is the prudent route to take because essentially people are not pricing in a real reacceleration of inflation. Do you think that's correct?
I was very concerned about how the long end of the curve was going to respond to signals of Fed cuts. And as you say, the long end of the curve has responded very well. As the Fed has shifted more in the direction of an easier monetary policy. And of course, the equity market is thrilled about an easier Fed. So at least so far, it very much seems that the markets are with the Fed. And they also, at least the preponderance of investors, are more worried about the labor market. One other angle on this that's helpful is that in the Fed's view, and I'm persuaded they're right, they see the stance of policy as still being restrictive. And so what they're doing is not providing outright stimulus, but they're just reducing the constraints on the economy as associated with monetary policy.
As an economist who's tasked with trying to put together all of these disparate trends and themes, how do you understand the moment we're in? Is it disinflationary? Is it reinflationary? I mean, I've heard an argument on all sides, and every time anyone makes an argument, I'm like, yes, you're right. And they're always the opposite sides.
Well, for the United States, I think it's stagflationary. And that's the reality of these tariffs. They're putting upward pressure on prices. They're putting downward pressure on real incomes and spending in the economy. And the Fed's trying to react to that. Now, for the rest of the world, the tariffs have a different implication. For the rest of the world, they are an adverse demand shock, reducing demand for exports, putting downward pressure on wages and prices. So I would say disinflationary for the rest of the world, stagflationary for the United States.
But in your global economic outlook, you talk about how consumers and companies were actually able to absorb it pretty well. Do you think that story is going to change?
So far, absolutely. Particularly here in the United States, we've seen resilience. Now, part of that I do think is a transitionary phase, and specifically, what's happened is the tariffs have come on gradually, and as we've seen the tariffs coming on, we say, well, prices are going to be higher tomorrow. What do you do if you think prices are going to be higher tomorrow? You buy more today. And so the economy has been supported through the first 6-8 months of the year through a front-loading cycle. That's now gradually abating. And when you get to the other side, all that stuff that we bought during the first half to get ahead of the tariffs, we won't be buying during the second half of the year. And that's where the payback comes in. We'll see the higher prices. And I think at that point, we are likely to see, I don't think we're going to see recession. I don't think we're going to see a collapse in economic activity. But a further slowing in the pace of growth is our expectation.
If inflation, though, is a concern pushed down the road then in 2026, what does that mean when we have a new Fed chair that is going to be very different than how Jay Powell views the world?
We are learning about how tariffs affect economies in real time. And for me, one of the big surprises has been that the pass-through of the tariffs into inflation has just been a lot slower than what I'd expected. The corollary to that is, yeah, we'll probably still be talking about tariff pass-through into inflation during the first part of next year. And it may be an issue even in the spring when we get a new Fed chair. Now, there's a lot of issues surrounding where a Fed chair appointed by President Trump may ultimately go. But managing the fallout of the tariffs is likely to be one important issue that they're struggling with.
When do you begin to ignore Chairman Powell?
I think he's got his hands on the steering wheel.
For how much longer?
I'm gonna argue until he leaves the Fed's building. I think he's still going to be the one who is largely going to be dictating the direction of policy as long as he's chairman of the Fed. And I think part of that is he's got credibility with the other members of the committee. And I think that gives him influence and the capacity to shape policy.
Can he shape markets?
He
can at the moment, of course.
Yes.
But once we get closer to May, the reason I add this, as you know, the policy is not the interest rate, it's what happens in the market. Yeah. That we all understand that. And at some point later this year, there's going to be someone else who gets to say, you know what, I'm next. Yeah. And his views, or hers, who knows, might carry more weight than Chairman Powell's.
Yeah. To the extent that policy is influencing the economy today and over the near term, and as you say, the horizon where his policy will be relevant is shortening and will continue to shorten as we approach May. Then we're left to speculate on what a next Fed chair may do. But I think in terms of setting the table and determining where rates are, I think Powell's in control until May.
Nathan, it's good to see you. As always, thank you, sir. Nathan Sheets there of Citi Global. Chairman Powell doing his best to unite a very, very divided Federal Reserve at the moment. Let's give you an update on stories elsewhere with your Bloomberg brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. Treasury Secretary Scott Bessent says the U.S. is discussing a $20 billion swap line with Argentina and is ready to buy the country's dollar bonds. The move is a vote of confidence from President Trump for leader Javier Milei after the two met yesterday here in New York. Argentine dollar bonds trimmed losses on the announcement. Meanwhile, we are seeing shares of Oracle down 1.7% after the company announced plans to raise $15 billion in investment-grade bond sales. People familiar with the matter say the software maker is selling debt in as many as 7 parts, including a rare 40-year bond. The deal comes as Oracle begins to fulfill massive cloud infrastructure deals with the likes of OpenAI and Meta, which are boosting expenses. And robot umpires are coming to the major leagues. MLB's competition committee approved the use of the automated ball strike system for the 2026 season. Human umpires will still call balls and strikes, but the robot will be introduced in the form of a challenge system in which the human umpire makes each call, which can then be appealed to the computer. That's your Bloomberg Brief. John?
It's about time. Honestly, don't you think?
100%. Absolutely agree. I mean,
Some
honestly,
people might say it's going to remove the beauty of things, like the history, the heritage.
Like getting mad at
Aren't
the ump?
fans just super, super frustrated with this at the moment?
I mean, honestly, at a certain point, as an ump, wouldn't you rather outsource it to a robot rather than get blamed and have people use your face as a meme?
And also, there's nothing really subjective about this. Like, this is not doing well in European football at the moment, but there really isn't anything subjective about this. Like, there's a box, and the ball needs to be inside it, and that's it. It's
that simple? Is the coach going to start screaming at the robot? Can you imagine the coach coming out, gets thrown out by the robot?
I just don't want sterile games. Like, were we going to outsource everything to robots and then just have
this
players?
is one thing you can outsource quite easily. I think, anyway, for all my baseball knowledge. Up next, setting you up for the day ahead, we'll catch up with Vishy Tripatura of Morgan Stanley following Oracle's $15 billion investment-grade debt deal with a 40-year piece. We'll get into that in just a moment. Live from New York City, this is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Interestingly, as it relates to the bond market, we're seeing a lot more interest in bonds now because with rates coming down, investors are wondering, do I need to go out the curve? I've been living off my purchase money fund, but the yields on that are coming down. That's been a topic of hot debate among our clients.
Going to keep Kathy Jones busy. That was Rick Wurster, the president and CEO of Charles Schwab. As we count you down to the opening bell, here's the trading diary. A few things to look for. 4 p.m. Eastern time. Some Fed speak. Not much today, but it builds later this week. You'll hear from the Fed President Mary Daly later on. On Thursday, another round of jobless claims. Look out for that. Results from Costco too, and a host of Fed speak. This time from Goolsbee, Bowman, Williams. Friday, PC data, UMich consumer sentiment to round out the week going into the weekend. Got a few more days to go. Let's turn to the Federal Reserve. Vishy Tirupattur, the chief fixed income strategist at Morgan Stanley, writing, we think the market pricing of Fed policy will move well below the September 24 low. They should skew towards a more dovish path. Vishy joins us now for more. Vishy, good morning.
Good morning.
Got a big credit offering to talk about with you in just a moment. I want to start with your view on the Federal Reserve because credit spreads are already super, super tight. Are you suggesting this market's not aggressive enough on rate pricing?
I think the path, I think the terminal pricing, we think you're suggesting is not aggressive enough. That's basically we are saying that we'll end up in a terminal pricing that will come down more than what we are basically suggesting. My colleague Matt Hornback and team are calling for the terminal pricing to come down by about 50 basis points further down.
So that's much more even more accommodative than where we are from a rates perspective at a time where credit markets are wide open. John was referring to the credit offering Oracle selling $15 billion of bonds this morning, including 40-year debt, which is rather rare, especially given the fact that this is a technology company that's touting things that haven't fully been developed yet. What does that say to you about just how accommodative this credit market already is?
The credit market is accommodating. The way I look at it is, you know, from a fundamental basis or technical basis, but perhaps the best way I would capture it is accommodative. Spreads are tight. Undoubtedly, spreads are tight. They're tight since 1998, tight. But the spreads are tight, but yields are right, is the line I would like to go with. Because if you look at you're still able to get to somewhere in the 5-6% yield. At that level of yield, there is actually pretty substantial demand, particularly from insurance companies selling sort of fixed annuity type of products. So that yield demand is insatiable. As long as the curve is steep, you know, the steepness of the curve stays, I think we'll expect to continue to see that technical demand coming through, and we think that we are in a good place.
I'm going to push you on the spot. Be a little more specific. This 40-year tranche is being sold at about a yield that Oracle would be paying for the privilege of borrowing for 40 years of almost 6.5%. That might be decent for some of these insurance companies. Is it a good buy, given that we don't know the technology, that we don't know the rates picture, we don't know inflation? How can you measure out 10 years? How can you measure out 5 years, let alone 40?
I'm not going to cop out. I'm not copying out, but I won't talk about a particular issue. I don't know what our involvement is, and I don't know if you've written it yet or not on this. So I will pass on specifically commenting on this particular bond deal. But overall, all I want to say is that as long as we have, you know, if you look at the fundamentals, we have not seen any substantial deterioration in leverage. We've not seen substantial deterioration in coverage. Cash to debt ratios have somewhat come down. But overall, we think that the credit fundamentals are in a pretty decent shape. So we have not seen, you know, since post-COVID, we have not seen excesses in credit that we would, you know, the credit market is prone to doing excesses. Really haven't seen a lot of that. Also, issuance, total issuance volumes, you know, net issuance is effectively flat. We're not seeing this abundance of issuance, not seeing an abundance of debt-driven M&A, LBO type of activity. That will sound caution, you know, that raise caution from the investor perspective. We're not seeing any of that. So this month, we might end up with something like 160 or 170 billion of issuance, and which basically sits the average September from post-COVID to now, we are just sitting right there. So we're not seeing that exuberance. And where I would be watching is if we start seeing a lot of debt-driven M&A, a lot more LBOs, and you saw equity contribution come down, debt contribution go up. That's something we are watching really closely. We're not seeing any of that yet.
Vishy, I think about this in really simple terms. When you say the credit spreads are tight, but the yield is right, the way I see things is when credit spreads are tight, the greater percentage of the yield comes from the risk-free asset. So why wouldn't I just own that instead of assuming the additional credit risk when I don't feel like I'm really being rewarded for it? How do you sort of confront that question from clients at the moment?
Absolutely. We get that question a lot. So the kind of products that are driving the liabilities that these assets are supporting simply are looking for yields in the 5 to 7% type of levels. So below that, if you're an insurance company, you're not competitive. You can't offer a competitive rate just purely relying on the treasuries. You can't get that number. So you need to get to that a competitive rate that you need a spread product, whether it's corporate credit, securitized credit, et cetera. You need that spread product.
Isn't that a different question, though? That's like saying that these institutional investors right now are being forced into the product because they've got no choice. But as an individual investor, I've got a choice, haven't I?
What people are responding is buying these annuities, which is basically are effectively giving you that like above, keep up with inflation, meaningfully above money market rates, and annuity products are very popular. Now their annuity product sales have quadrupled from the pace of post-GFC to COVID levels. We have in the last few years, we have seen it quadrupled. And that's basically saying we want something better than a money market, something safe, something that could be relied on, and to defease that liability, you need a product that has a spread product in the, as I said, 5-6% yielding product, and that's precisely what credit is offering. And I mean credit in a broad sense, not just corporate credit.
What I'm struck by is there hasn't been a lot of issuance at the long end of the yield curve, and I'm talking about corporate and a whole vast number of credit issuance. If there is demand, Wall Street will create it. You said that you're worried about debt-driven M&A, debt-driven transactions. Isn't this market begging for that, given the demand and the lack of supply that really can feed that demand?
So what I should state it this way. I think we'll be watching how much of debt-driven demand, how much of debt-driven M&A, how much of debt-driven LBO happens, and what are the multiples things are being done at. So at the moment, what we are seeing so far doesn't rankle us so far. So if we start seeing things like that, then we'll be more worried. At the moment, we are not. I am more worried about a bull flatter yield curve. A bull flattening is going to be much more of a challenge for this yield-driven environment. And that would be much more challenging.
We had that at the start of September. Is there a reason why that's just a blip? Doesn't continue?
We need significantly more bull flattening than we saw. So we need, basically, if we saw, yields come down to the levels that we saw before 2020, in the post-GFC, pre-COVID levels, where we really didn't see that. It was a flatter curve, and that really was not the driver of that it's become today. So I would be much more concerned about a significant bull flattening, more so than what we saw last year.
Vishy, always a clinic. It's good to hear from you, sir. Appreciate it. Thanks for breaking it down in simple terms. Vishy Tirupattur there of Morgan Stanley on fixed income and the latest developments in the credit market.
Yeah, not concerned. Even though we are seeing a lot of issuance, it's not enough issuance to really meet the demand. The idea of a 40-year tranche from Oracle, which a lot of people are raising questions for, but
I have the same questions that you do. 40-year tech, is it a 40-year bet? How many people are buying that and holding it for 40 years?
Well, maybe some of these tech companies, maybe some of these insurance companies, if they're getting 6.5% yield on it, do they even care what's underlying it as long as they keep getting paid?
Coming up tomorrow, bigger debate on this one with Matt Miskin of John Hancock Investments, Scott Cronin of Citi, Brent Schutte of Northwestern Mutual Life Insurance, and Neela Richardson of ADP. From New York City this morning, good morning. For our audience worldwide, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
30 minutes until the start of trading, and we are rallying again. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
It looks like an unstoppable rally. The S&P 500 has gone 107 sessions without a drop of 2% or more. That's the longest stretch we've seen since July of last year.
And adding to that, AI optimism boosting stocks this morning, with Alibaba pledging more spending and Micron delivering a solid outlook.
Plus, fintech looks to private credit. PayPal teams up with Blue Owl for a $7 billion buy now, pay later deal.
Well, Matt, it doesn't matter whether it's a U.S. stock or a Chinese stock. If you're spending more on AI, you are rallying. And Alibaba is rallying this morning, up 8.6%, helping the tech sector after revealing plans to ramp up its AI spending past an original $50 billion plus target over the next 3 years. The company also plans to launch its first data center in Brazil, France, and the Netherlands. Matt, all of that happening in the coming year.
All right, that's really spurring some optimism this morning. The Trump administration is seeking an equity stake in Lithium Americas as it renegotiates terms of a $2.3 billion Energy Department loan. Lithium says it offered a 5 to 10% stake via no-cost warrants, and you can see the shares of this. Honestly, it's a very small cap stock, but absolutely soaring, up almost 70% this morning.
Yeah, that is a huge move. Let's get back to that Alibaba move, though, because the news that it's set to hike its AI capex is sending shares of other Chinese tech giants higher this morning. Let's discuss with Bloomberg Tech co-host Caroline Hyde. Caroline, what exactly is Alibaba playing? And is this just like the ultimate FOMO thing? Everybody else is spending, so we have to spend more.
People feel that this is a vindication that they're actually managing to see ROAI. Basically, they say that we've got the confidence to be upping our spending up to more than $53 billion worth. And because we see a trajectory where we make money. We make money on the cloud, the fact that we're offering that to our clients, and they do that worldwide. And as you say, they're building out data centers worldwide. But also, they're trying to be all things to all people. Remember, this is another example of the way that Amazon is working, where you offer the compute, but you also offer underlying large language models as well. So we've got them building their own. Qwen 3 Max has really come out and impressed people with its capabilities. China is hot on the heels of all things United States. They're building building large language models, they're offering the cloud, but also notably they're building their own hardware. And I think this is what's been so interesting in our conversations. How will they reduce their reliance on NVIDIA? They're saying they're buying some of the software packages from NVIDIA more broadly, and they are looking to do that for physical AI, for use within robotics. But they're trying to disentangle their dependence on NVIDIA's actual chips. They say they're going to be providing their own. They've got a key customer. Chinese state media has said already one of their telecoms giants is going to be buying up their hardware, their their overall chips. But what's interesting is we don't know how they're going to make them, who's actually manufacturing them for them.
So that's one piece of the AI puzzle. Another piece...
The other 50 billion, you know.
I just want to talk about, for a moment, the most boring piece. I started my career covering Micron and the commoditized memory chips, then known as DRAM. Now I know we've added a high bandwidth to the front of that name. But how has this company doubled in market cap this year?
Because its margins are more than 50% and it's blowing people out the water. And what's interesting is Vital Knowledge and some of the analysts out there are saying, it is the boring bit, Matt. It is your old school
this
coverage.
This is the picks and shovels.
Yeah, it's PCs and servers that are also seeing the demand for memory, not just the incredibly sexy accelerator AI part of the business, which is the high bandwidth memory. This is a company, the only US maker of memory. So no wonder they're managing to tear up in terms of market share, and they want to hold about 20% of the high bandwidth memory going forward worldwide. So really they're talking up a big game, particularly in the energy efficiency of their chips as well, and the power that they can provide.
And all of this money and all of this spend just emphasized by Oracle with earlier this hour, a bond sale looking for $15 billion, a 40-year bond, which is pretty rare and a long time period for an environment which who knows what things will look like in 40 years. And the spreads are pretty tight on this
Only
thing.
165 basis points over treasuries, and then they've got a 20-year, they've got a 10-year, they've got a 30-year. This is a company that, at the moment, Bloomberg Intelligence already putting out a react saying this company might have $100 billion in leverage, in debt, going forward. But it has to. We are seeing companies having to get more and more creative about the way in which they raise financing. Look, yesterday, after the bell, we heard from Sam Altman saying, we've got Stargate, 5 new locations. They're across Texas and Middle America and Ohio. What's interesting is he said the financing for these data centers, we've not quite worked out yet. And interestingly, that's where perhaps NVIDIA comes in, because the $100 billion commitment in OpenAI equity, well, the reporting from Shireen Ghaffari is saying that's going to make OpenAI's ability to raise debt easier. They've got a backing from an equity perspective, and now they can get more creative in financing. But look, we're kind of making up this road as we go along. This is the debt market, though, really wanting to get the exposure that the equity market's been getting to this AI trade.
By the way, real circular economy
totally.
going on here amongst these sort of incestuous giant AI companies.
I buy your equity, you buy my GPUs, that's the way it works.
Exactly. Oracle, by the way, is another company that's almost doubled in market cap so far year to date. Up 88%, it's worth $892 billion.
By the way, one argument, though, of the circularness of it that I saw out there was otherwise someone like an NVIDIA would just be doing stock buybacks or dividends, and maybe it's better that they reinvest it into some of its
their own customers.
Yeah, exactly.
Yeah.
Maybe that's a better use of capital.
All right, Caroline Hyde, we're going to be watching Bloomberg Tech to see how you and Ed Ludlow cover these amazing moves. The Trump administration, speaking of amazing moves, looking to take a stake in yet another company. Reports say the U.S. is seeking a 10% position in Lithium Americas. The administration says it's going to help speed up the development of local supply chains in critical minerals. Joining us with more is Michael Ball, macro strategist for Bloomberg Live Markets. And Michael, this isn't the first purchase they've made in this supply chain, right? They have MP Materials. And are we really looking to mine and refine these rare earth minerals here in the U.S.?
Yes, we have to. I mean, again, China has 75% of lithium refining capacity. They were smart, as they were with rare earths during Trump 1.0, seeing where things were going. And they prepared for this moment where they knew there'd be a further conflict with the U.S. on the broader relationship, not just trade, but how we're going to sort of think about the multipolar world developing from this unipolar world.
Can I just ask, I understand the strategic reasons for doing this, but from the industry experts with whom I've spoken, it's too dirty and it's too dangerous to actually do the entire chain here in the U.S. I mean, people are seriously injured and die on an almost daily basis doing this job in China.
Right. And in a normal world, yes, but because of the priorities of national security, some of that will probably be looked differently upon, meaning that they'll change the regulations and the actual, we're not there yet. This is going to be a 5-year. They're hoping to get this done by 2030 to actually have refining capacity at a level where you can get 600,000, 700,000 batteries for EVs. But look, it's going to be a slow up and down process. We'll see what the next administration does, as it won't always be Trump. And this is a multi-decade kind of plan for both rare earths and for the refining of lithium. And oh, by the way, there's many other areas, as we've talked about, where we're going to have to get back to copper. That's going to come back around, as it's a key point. And ultimately, we're going to have to onshore a lot of this ourselves at the cost of the environmental degradation it will cause.
And what they're essentially trying to do, because Lithium Americas had a loan from the Department of Energy trying to convert that. It's something, a playbook we've seen the Trump administration do. Today it's lithium, it's been rare earths in the past, it's been nuclear energy. If you had seen this coming, you would have made some serious money. Right. Is there sort of a speculative frenzy, maybe frenzy is too far of a word, but in this equity market to say, here are the companies that the U.S. Department of Energy or the Defense Department, Department of War, whatever it's called now, has loaned to. Maybe we should anticipate more of this to come.
100%. I myself was looking at all these DOE loans and thinking about how to convert and which one were very strategic things. So everyone on Wall Street's doing this. I think the morning show was joking that there's going to be an ETF for this pretty shortly. I agree 100% with this. This is early innings, and this is a longer-term plan that is signed on by actually both sides of the aisle, because the Democrats also realize this, and under Biden, we were doing this. We're just structuring it differently. Now, with tax cuts and with our deficits growing, we now need to have better revenue streams, a more diversified revenue stream, and this is what Trump's thinking about. He's trying to look at untraditional ways of money with tariffs and now with ownership and equity, and also with what we saw with NVIDIA, where they have to pay some sort of royalty to, sell to China.
Yeah, we've talked about the potential for the Trump administration starting some kind of diversified sovereign wealth fund. It looks like that's really taking shape. Michael, I want to ask you about something different that we were just talking about with Caroline Hyde, and that is kind of the circularity of the AI landscape in terms of revenue generation, and the Bain report yesterday that there's going to be an $800 billion shortfall in revenue. What do you make of NVIDIA investing $100 billion in OpenAI, which then uses that money to buy GPUs from NVIDIA?
Yeah, it does act like kind of a bubble, right? It's almost like a Ponzi scheme in some ways when we step back. And obviously, we don't know yet where the AI productivity is going to end up falling as we go from training to inference and how we actually apply this to day-to-day life. And as I've said before in this show, we haven't seen that show up in the hard data. Now, we all have our own stories of how AI has improved our ability to do our jobs. The actual productivity of this country itself is yet to really materially reflect that. So is this worth it?
Or the return on investment.
Right. Is this worth it? How long? Are we talking about 10 years? Are we talking about 30 years? It's interesting Oracle does a longer-term bond. I think they have the right idea, because ultimately there will be a pullback. There will be a question of, wait a minute.
But it's crazy people are willing to buy this thing, just given everything you're talking about.
I know, and I agree. I think, again, we're in a frenzy state now, and we didn't, last week, we talked about private credit. Private credit is itching to get into data warehouses and the data centers, and also looking to be AI exposed as well. So we're not seeing this off the screen. This is happening, and we're not really seeing it as clearly. So this is across the board.
Also, we'd never call it a Ponzi scheme.
No,
and I would never
we have to be clear. You said almost like a Ponzi scheme, but it's not, obviously, and we're not saying that.
Michael, thank you so much for joining us. Michael Ball, and you can see all of his fantastic work at MLive Go on your terminal, a market strategist for the Bloomberg Markets Live team. Now, elsewhere, PayPal is selling $7 billion worth of buy now, pay later loans to Blue Owl over the next 2 years. It follows similar loan sales by rivals Affirm and Klarna as fintech leans on private credit to fund consumer lending. Let's get more with Bloomberg consumer finance reporter Paige Smith. And Paige, it speaks to the huge amount of appetite from these private credit players. What does it mean for PayPal? Is this a huge relief on their balance sheet to get this off the books?
Most definitely. You quite literally took the words out of my mouth.
Sorry,
please, no. There's an enormous appetite for these sorts of loans on the private credit side of things. And, as you also just said, PayPal is not the first fintech to be doing this. We've seen this with their rivals Klarna and Affirm, but Blue Owl has also been a pretty big player in this space. They have had deals with Pagaya Technologies, which is another fintech player. And yeah, I think that there's an enormous appetite, and we're likely to see more of these, I would say.
Well, and PayPal, I mean, this isn't what the company was set up for. The buy now, pay later thing leaves it with loans on its balance sheet, leaves it with assets on its balance sheet. And that's not the point of the company. They want to be asset light. So this is a way for them to get rid of those assets, and then they can use that cash and return it to shareholders the way that they did the last time they had a deal like this with KKR, right?
Exactly, and it's a similar playbook that other fintechs have deployed, where yes, it keeps their balance sheet very light, and the tie-up with KKR, I believe that was back in 2023, allowed them to, allowed some share buybacks to occur. And it's, again, a lot of other fintechs are doing sort of the same thing. There's quite an appetite to, I mean, there's also an enormous appetite on the consumer side of things, right, to originate more of these loans. And as the loans are originated, they need to go somewhere. And it seems like a heck of a lot of them are going to be going to Blue Owl at the moment.
All right, Paige, thanks so much. Paige Smith covers consumer finance for us, and obviously PayPal is a part of that, especially now with this new BNPL scheme. A check on what's going on in the markets right now. We have futures up across the board, 67.24 on S&P futures, so a gain of almost 0.2%, a little bit more than that on NASDAQ futures, and the small caps bringing up the rear there.
And Matt, just want a quick check on Marvell Technology 2. Shares are up just under 4% this morning, authorizing to buy back $5 billion worth of shares. Their past program was $2 billion, so that is a significant boost to that. Shares are down 32% year to date, so a deal on their end to buy back those shares.
All right, coming up, Jimmy Kimmel Live makes a comeback. The host returns to late night and makes an impassioned defense of free speech. That's next. And the Bloomberg Philanthropies Global Forum is set to kick off this hour here in New York City. The forum brings together leaders from public, private, and nonprofit sectors to address the world's most urgent challenges and opportunities. Because we have the UNGA here, because it's Climate Week in New York, we'll hear from Alphabet's CIO Ruth Porat and the UK Deputy Prime Minister David Lammy. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Getting out of high interest to look at what's making headlines around the world. NATO allies are split on how to handle repeated Russian airspace violations. Germany is urging caution, of course, warning against what it calls Putin's escalation trap. But President Trump says NATO should be ready to shoot down Russian aircraft echoing Poland and the Baltic states. The rift comes after Russian jets entered Estonian airspace and drones breached Poland's and Romania's. With divisions widening, NATO's ability to present a united front is under pressure. Treasury Secretary Scott Bessent says the U.S. is negotiating a $20 billion swap line with Argentina and may buy its bonds. It's a show of support for President Milei after his meeting with President Trump on the sidelines of the UN General Assembly. On Fox News earlier today, Bessent also took aim at Fed Chair Jerome Powell, saying rates are too restrictive and should be cut by at least a full percentage point before the end of the year. Jimmy Kimmel returned to his late-night show last night after being pulled off the air on September 17th following a backlash over comments related to Charlie Kirk's assassination. He addressed the controversy that temporarily sidelined his show and set off a national debate over free speech.
I've had the opportunity to meet and spend time with comedians and talk show hosts from countries like Russia, countries in the Middle East, who tell me they would get thrown in prison for making fun of those in power, and worse than being thrown in prison. They know how lucky we are here. Our freedom to speak is what they admire most about this country.
Major broadcasters Sinclair and Nexstar say they won't air Kimmel for now. And President Trump blamed the United Nations for what he called a bad escalator and a bad teleprompter during his General Assembly visit. The escalator carrying him and the First Lady jolted to a stop, forcing them to climb the steps. UN officials say a U.S. videographer likely triggered a safety switch, but the White House is probing possible tampering. White House Press Secretary Caroline Leavitt addressed the controversy yesterday on Fox.
It doesn't look like a coincidence to me, and I know that we have people, including the United States Secret Service, who are looking into this to try to get to the bottom of it. And if we find that these were UN staffers who were purposefully trying to trip up, literally trip up, the President and the First Lady of the United States, well, there better be accountability for those people, and I will personally see to it.
The mishaps added fuel to Trump's sharp criticism of the U.S.
Although I'm sure he doesn't.
Sorry, the UN, of the UN.
Of the UN.
Of course.
Which is in the U.S. I'm sure he doesn't have his own escalator guy, but you got to imagine, given all the speeches Trump gives, he's got to have his own teleprompter team. But he did blame the UN for that. He's got to have his own teleprompter guy.
Well, I mean, you've got to give him a little bit of credit, because when you're about to give a big speech in front of a group full of pretty important people, it would be, I think, nerve-wracking to have the teleprompter fail.
He was happy. So, he said he could speak from the heart.
I understand. I understand a little bit of lashing out there. He obviously did a fantastic job of speaking from the heart. To me, it's more interesting that Caroline Leavitt is going to personally investigate UN personnel and see to it herself that if anyone did this on purpose, that those people face the consequences.
That poor camera operator who apparently, allegedly, accidentally hit a button and stopped it. Okay, coming up on the show, Morgan Stanley Investment Management's Andrew Slimman says the stock market is overbought. It doesn't expect to pull back anytime soon. We get his view coming up next.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The S&P 500 has scored 25 record closes on a 3-month rolling basis. It's a testament to strong momentum in stock market performance, but also maybe a warning sign that the winning streak is becoming stretched. Bloomberg found that a pullback once the market reaches the milestone of 25 records is often followed by further gains, though. Let's bring in Andrew Slimman, Senior Portfolio Manager at Morgan Stanley Investment Management. Andrew, this is something that you've talked about, that yes, things are looking stretched, but that doesn't necessarily mean that it's going to reverse. So what do you do at this point? Do you just continue to ride the market to continue new highs?
Well, it depends. I guess it depends whether you're talking about new cash or existing cash. The existing cash, I certainly wouldn't be pulling out of the market as we go into the fourth quarter. I think one of the problems for the people that have been on the sidelines is we're just not getting that pullback. And I think a lot of people come on your show and say things like, oh, I expect a 3 to 5% pullback. Well, if everyone's expecting 3 to 5% pullback, you know you ain't going to get that. And I suspect either you're going to have deeper pullback or no pullback, market continues higher. And I think we didn't get one this summer, and the market is typically a lot more vulnerable in the summer than it is in the fourth quarter. So look, I agree. The market's stretched. It's getting a little frothy. I just don't see, as we go into the year end, with enough investors, retail and professional, that are behind the ball, looking for opportunities. I just don't see the market pulling back.
How is everybody not fully invested at this point, Andrew? I seem to remember some regional Fed saying U.S. households, for example, are more overweight stocks than they've ever been, in the history of the universe since the Big Bang. So who has more money to deploy?
Well, first of all, they're overweight, Matt, because the market's gone up more than the money market. Doesn't mean on an absolute basis that investors still have a lot in the money market. I did a call with a financial advisor who had a client on last week saying, gosh darn it, I'm not getting my 5% risk-free anymore. We got to do something with the money. So as the Fed cuts rates, money markets are not going to be as attractive, and people will start to look for a home for that money. It's not all equities. It's going to go into other higher returning risk assets, but it's going to come out of the money market. So I just don't buy that argument, because I hear over and over, and I see the flows. As the Fed is cutting rates, money is coming into the market because the alternative short term. Back, Matt, in 2023, I think we had this conversation. I said, the market's down 25%. You got to get invested. In the number one pushback I got.
Hey, Andrew, we'll see if more of that investment comes. You're going to stick with us, but we have to get to break so we can get to the market open. That's Andrew Slimman. As we head to another update after yesterday's decline, after back-to-back-to-back all-time records, the future's up 0.2%. Your opening bell coming up in just about 3 minutes' time.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the budgeting fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Moments away from the start of trading on this Wednesday morning. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are slightly higher, 0.2 up on S&P futures and NASDAQ futures. Russell 2000 futures, little change. Down at the New York Stock Exchange, you've got, I believe that's Her Eminence Karen Keller Sutter ringing the opening bell. Of course, president of the Swiss Confederation there, because it's UNGA. You're going to have a lot of dignitaries over, and I hope she's wearing a Rolex, but didn't have to pay a 39% tariff to buy it. The Security National Financial Corporation ringing the opening bell. They do a lot of insurance work, and that's why their shares are down like 25% year to date. It's been a rough year for this team, but they're up over the last 5 years, so still not losing money over the longer term.
Well, Matt, with opening bell, I've got my eye on Alibaba because it is helping to lift the entirety of the tech sector today. You're looking at the ADRs trading around a 4-year high, up 8%. They revealed plans to ramp up their AI spending past an original $50 billion plus target over the next 3 years. They say they need to keep up because spending is going to exceed $4 trillion in total. They also plan to launch their first data centers in Brazil, France, and the Netherlands in the coming year, Matt.
And the Trump administration is seeking an equity stake in Lithium Americas as it renegotiates the terms of a $2.3 billion energy department loan. By the way, that loan by itself is like 3 times the size of Lithium America's market cap yesterday before this massive rise. You can see 69% gain in the shares after Lithium said it offered a 5 to 10% stake via no-cost warrants. And Alphabet CIO Ruth Porat is speaking with our own Francine Lacroix at the Bloomberg Philanthropies Global Forum. Let's listen in.
Analysis and where you're going. Ruth, the more we use AI, of course, the more energy it needs. How do you look at energy demand and infrastructure needs?
I like the way you frame that because the upside from AI is profound and we can only access it if we actually have the energy to power it. So it's important to keep those as two sides of the same equation. And clearly in the US and in other places, US, we've underinvested in the grid for quite some time. And so we need to catch up. I think what's important is there are both short-term and long-term solutions that are right in front of us. Probably one of the most important, but it's longer term, is continuing to make advancements in things like nuclear energy, advanced energy solutions. And this is clearly a priority for the administration. We very much agree with it. We think it's imperative that nuclear energy is a part of the energy mix. At Google, as an example, we're the first corporate purchaser for an SMR offtake from Kairos. We've invested in fusion, but this is critical. And when you look at what China's doing, they've been investing in nuclear for quite some time. They have about 30 gigawatts of nuclear in construction, another 200 gigawatts in development. The United States needs to avail itself of that, and I'm pleased the administration is very focused on how to fast track it. Near term, there's some really important solutions, and I think what is important, again, if we execute against these things that are right in front of us, we can increase capacity rapidly. We need it now. This is not a 2030 need, it's a now need. We can do it and enhance affordability across the country, which is clearly imperative, generate jobs and decarbonize the grid. And the two best examples are, number one, when you look across the United States, we have underinvested in transmission lines. The reality is there's about 2,500 gigawatts of capacity in development that is waiting to get on the grid, a staggering number, but we need the transmission lines to get it on the grid. To date, it takes about 7 years in the US to build these transition lines. With fast-tracking permitting and other work with states, you can cut that time in half, and some would say even more than that, which is a meaningful unlock. What's potent about that is that it also creates jobs, a meaningful number of jobs, and importantly, the vast majority of that is clean energy. So by getting it on the grid, you're decarbonizing the grid. The second area that I think is really exciting is actually modernizing the grid. There's another 100 gigawatts in the United States that the Department of Energy has estimated could be unlocked if the grid is modernized, applying what's called grid enhancing technologies, something like conductors online so that you can get more capacity through. And again, that creates jobs. It unlocks assets that are here that are being underutilized because they have not been modernized. So I think that, again, there are a number of different solutions at Google. We're working on a whole host of others to improve energy efficiency in chips and in models, delivery, across the board. We can, if resolute, and we take each one of the available assets here and execute against them, we can unlock the energy.
Ruth, is that part of the whole package in this AI race? So Google spent the last, quickly actually caught up with OpenAI in the last 2 years. How are US companies doing compared to China, for example? And is the energy complex part of that race?
So energy unequivocally is important. I think the US is ahead in models and in chips and continues to be. I think what's very important is China, as we saw with DeepSeek, is a very active innovator and working, assiduously on AI and the application of AI. So I think there are three critical elements really for the US and the West. Number one is you need to have the energy infrastructure to deliver the upside. And China is focused there. It's not just nuclear, it's also in solar. They're building out whatever they can to have that long-term infrastructure needed to deliver the upside from AI. We have tremendous resources in this country. If we avail ourselves of all of them, we can win in this regard. The second is the application. So the upside only comes with each one of us actually unlocking the upside from this, as I've already talked about. Anecdotally, we're hearing China is actually very focused on the application of AI across industry. It's imperative we each do that. It puts us in a better, each company, each country in a better competitive position. And then I think very importantly, it is about embracing working closely with our allies. And so one of the things I'm very proud of is the work we're doing around the globe. Every head of state with whom I meet says, we want to be a part of the digital transformation. We see not just the economic upside, but we can address healthcare requirements. My oncologist, I loved a line he said to me. He said, the only way to democratize healthcare is with AI, because then you actually have a partner to anyone around the world who can deliver this. We're doing amazing work, I think, for example, in Africa on maternal care. There are so many areas where it is available to us now. So they're saying we must be a part of this. That requires, as we look at it at Google, engaging to unlock products and services, which means investing in technical infrastructure, and very importantly, skilling people so that they have the capabilities to actually evolve as the jobs evolve. I view that as a critical triangle, the services, the infrastructure, and the training. And I'm intrigued wherever I go how often I'm asked for, first, help me with the training. We just actually announced, which will be talked about, here this week a very, I think, exciting effort across Africa where we're building out subsea cables to ensure connectivity, resilience, and security across the continent, and really with 4 hubs, as well as incremental AI digital skilling. And this is really important because a third of the globe still isn't connected. And if you're not connected, you're not going to get the upside from what this offers.
Ruth, we're almost out of time, but actually an important question on responsible AI deployment. What does that look like to you? What are some of the questions that the leaders here need to ask?
All right, that's our own Francine Lacroix speaking with Ruth Porat. Of course, she is the Chief Investment Officer at Alphabet. They are at the Bloomberg Philanthropies Global Forum here in New York, and everyone is hanging on every word coming out of the C-suites from these hyperscalers. So if you want to continue listening to Francine and Ruth, you can type LIVE GO on your terminal, live GO on the terminal to get more of this Ruth Porat conversation. I want to get back to Andrew Sliman right now, Senior Portfolio Manager at Morgan Stanley Investment Management. And Andrew, you know, while we're on the subject of AI, on the one hand, it looks like it still has phenomenal pace to grow, a lot of these businesses, and not massive PEs. If you look at NVIDIA, for example, trading at only forward earnings. On the other hand, there has been a lot of criticism about what looks like a circular economy that's developing, where they're all kind of just passing the same money around inside the Stargate environment. What do you think about that criticism?
Well, I think vendor financing is, it raised the flag, but it's not necessarily evil. I think the bigger issue, Matt, is the market right now is focused on revenue growth, right? But this reminds me of the early stages of the internet rollout, where we rewarded the carriers who were going to carry all this information. But what happened ultimately is they had to raise a lot of money to finance that, and the market moved from revenue growth to return on invested capital, return. And that's when the market pivoted away from the carriers. So I think that's the danger right now, is who is generating the true returns that's not debt financed. As an investor, I think that's the danger, because I think the same thing will happen eventually, is the market will reward those who are truly generating a return versus the debt financing that's fueling revenue growth. That's where I feel like we're in right now, that stage.
Speaking of huge amounts of debt financing, Andrew, I mean, I gotta believe on your mind is the Oracle bond sale, looking to raise $15 billion. Part of that is a 40-year sale, which is incredibly rare and maybe really tricky for a company where who knows what things will look like in 40 years. But the spread is incredibly tight. The yield is something like 6%. What does it tell you that this type of company is able to go to market and raise debt that looks so favorable to them?
Yeah, I'm not a bond expert. The credit spreads are tight right now, so there's a lot of liquidity in the bond market, which goes back to our original conversation. Was as rates, short-term rates, come down, money needs to find a new home. It's going to go into the equity market, but it's also going to go into the bond market, and so bond managers are going to see inflows just like equity products, and I think that they need to invest. So, spreads are tight right now. It doesn't surprise me.
All right, Andrew, great to get your commentary. Really appreciate it. Andrew Sliman there of Morgan Stanley Investment Management. He manages the global concentrated as well as the U.S. core and global core mutual funds over at Morgan Stanley. Coming up, Alibaba's CEO sees CapEx topping $4 trillion with a T, $4 trillion by 2030. That's twice what Bain said yesterday about AI revenue. We'll discuss with Bloomberg Intelligence's Mandeep Singh. This is Bloomberg Open Interest.
when we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let's get you some top calls, some of the analyst action that we're watching this morning. First up, UBS upgrades GM to a buy. It hikes its price target to nearly 45% to a street high of $81. They see GM's margins rebounding in North America, those shares up more than 2% this morning. Next up, Amazon, that gets an upgrade to a buy at Wells Fargo with greater conviction in the company's Amazon Web Services division. The analysts there see AWS achieving 22% revenue growth next year, those shares up about 0.75%. Finally, Case GI Securities raises Micron to a buy after its strong quarter. Citi says that it expects strong AI demand to continue, but those shares down 2% after nearly doubling so far this year, Matt.
Wow, that is interesting because they were up after the bell, after those earnings came out, after Micron said that revenue was going to grow double digits sequentially and margins were well over 50%. So looked like all good news. On top of Micron earnings, we also have China's Alibaba news today. They announced a boost to their spending on data centers around the world. Let's discuss the AI trade with Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. I think that Alibaba said more than $50 billion. That was the target, and now they're going to overshoot that. We continue to get these kind of numbers. Are they real? Are these numbers real?
I mean, they're real because it all started with Oracle giving that guide of backlog, and underpinning that was their deal with OpenAI, that $300 billion deal. And now, Jensen and NVIDIA investing $100 billion in OpenAI. And they talked about adding up to 10 gigawatts of AI data center capacity.
Which is how much? Put that into perspective. How much is 10 gigawatts?
So based on our framework, it's about $300 billion that's going to take to add 10 gigawatts, roughly.
But what would that power? Would that power Columbus, Ohio?
It will. And look, at the end of the day, what we know right now is AI compute is somewhere close to 4 to 5 gigawatts. So we are talking about really a substantial expansion when it comes to the AI compute requirements. And so from that perspective, that $3 to $4 trillion number that everyone keeps bringing up does make sense. Now, whether it's going to happen in a straight line, it's never happened before. So I think there'll still be doubts around the buildup. But clearly, you know, the financing is showing up and companies are committing to that sort of a build out, and they feel the demand is there.
Well, the Alibaba rally just underscores that it doesn't matter whether it's an American AI company or a Chinese AI company. If you announce you're going to spend more, you're going to get rewarded. And it's kind of crazy because it's essentially saying we're going to kill our free cash flow at the behest of spending more. When does that end? When do investors say, we're not going to keep rewarding you for these billions and hundreds of billions that you're spending?
So look at it this year, there's about a $250 billion investment in building AI compute. The revenue is close to like 30 to 35 billion if you add up OpenAI, Anthropic, and all the cloud providers, Microsoft and Google, how much revenue they're generating specifically from AI. So there is that gap. But the hope is with the rollout of AI agents, the inferencing market is going to be the bigger market, and inferencing translates directly into revenue. Whereas you had to spend upfront on training because that's your intelligence layer. You had to develop the intelligence first. Now you're deploying it. So the revenue should accelerate for all the cloud providers. And that's the hope. I think if that doesn't translate, that's where you're going to see a hyperscaler say, oh, we are pulling back on our CapEx plans because we're just not seeing that kind of ROI.
By the way, I asked ChatGPT about 10 gigawatts. That would power roughly 8 million homes, about 8.3 million homes, and ChatGPT says that would power New York City in peak summer. Maybe would need a little bit more because all the ACs are running. But
there's something incredibly meta about you using literally that exact power to ask ChatGPT about the power of it.
I'm getting a note from a viewer. And by the way, viewers can always shoot me an IB. Like, I'm listening here. So, you know, MT Miller at Bloomberg.net. A buddy of mine saying, is AI the next .com bust? Seems like a Ponzi scheme. And this is a question that we've been hearing more and more over the last couple of days.
I mean, look, a lot of this compute is fungible. Last night, Micron called out, you know, traditional server market is getting a boost because of the rollout of AI agents. Now, who would have expected that? Everyone thought it's getting substituted, traditional servers by AI servers. That's not the case. You're getting that boost to traditional servers. So to my mind, if we need to, you know, do more of our work digitally and these assistants are helpful in terms of doing the work, right now we are not cost optimizing for compute. That's not the case. There's so much gains just by running the infrastructure efficiently. So if the ROI is there in terms of productivity benefits, then I think the compute is fungible enough that it'll be used somewhat. That's what happened with the fiber build out. You started using it for YouTube consumption. Nobody saw that use case initially, but eventually it was all video consumption.
All right, Mandeep, thank you so much for joining us. Mandeep Singh of Bloomberg Intelligence. Coming up, Lithium America soars after the Trump administration looks to buy a 10% stake. That's next.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The U.S. is seeking an equity stake in Lithium Americas as it negotiates a $2.3 billion loan originally from the Department of Energy. Bloomberg's Simon Casey covers commodities and joins us now. Simon, what is the government's intention here? Because it's my understanding that this loan was something Lithium Americas was already trying to renegotiate. Is this a lifeline for the company?
Well, first of all, it badly needs this loan. This is almost $2.5 billion. Without this loan, it's very unclear if this project can proceed. So they desperately need that money. Crucial context, lithium market is going through a bit of a decline at the moment. It's oversupplied, prices are at rock bottom. So there are heightened risks involved. And the government's position, as far as we understand, is we need to see some guarantees here, and they're using leverage to maybe get a stake. In return, Lithium Americas is going to be finally able to access this loan.
But why only, I don't understand why only a 5 to 10% stake. So yesterday when this news first broke, I was on the close with Romain Bostic and we looked up the market cap and it was far less than $800 million. Right. If they want a $2.3 billion loan, I feel like the U.S. could just buy the company.
Yeah, but why would they want to do that?
Because it's worth nothing.
It's a mining development company, so it has no cash flow.
Right.
There are hundreds.
But this
of
is a
companies.
national security thing, right? We need to have these kind of minerals, otherwise China can continue to hold us hostage.
If this mine is built, if it operates, if it eventually makes a profit and does so for years to come, this company could potentially be worth billions, if not tens of billions of dollars. So to answer your question, a 10% of a company worth tens of billions of dollars that's still publicly traded. Also, General Motors is a joint venture partner in the actual project. So, yeah, I think it's in line with what we've seen the government do. Of course, they took a stake in Intel. They've taken a stake in MP Materials, which is this REM earth materials company in the US, the only producer of rare earths in the US. Remember as well, the US government took a golden share in US Steel at the last moment to get that Nippon Steel merger completed. So maybe there's more to come here, but there seems to be a clear strategy of taking these minority stakes in strategically important companies in multiple industries.
You could wrap them all up and create a sovereign wealth fund. Simon, great having you on the program. Thanks for joining us. Simon Casey, they are talking to us about the administration potentially buying or acquiring a 5 to 10% stake in Lithium Americas. The shares now up 93%. Coming up in the next hour, we'll bring you a special conversation with the Deputy Prime Minister of the United Kingdom, David Lammy, live from the Bloomberg Philanthropies Global Forum. We're also going to hear from Ban Ryan's Shanna Sissel and One NYC's chair on the mayoral race. This is Bloomberg.
Let's suppose you hire people in this business and they start losing money.
How long before you say, you know, this isn't for you?
When we bring people on, we're looking for a previous record of success. So we don't train people, particularly on the investing side, right out of college. They would have come with already experience. Then there's also the why are they wrong or why are they right? Are they right for the right reasons or are they wrong for the wrong reasons? And then there's also collegiality. How do you work in a team? But I would say that within a 2 to 3 year period, we, usually you get a sense whether, if someone's talented.
Do you ever hire English majors or history majors, or you only hire STEM majors?
I encourage my boys to go to liberal arts and to be in, whether it was poli-sci, economics, and be fluent in other areas. So I think having a broad perspective can be very helpful.
If somebody is very good at what they do you say to them, you're very good, but go to business school, or you say, don't go to business school because you're very good at what you do?
So I didn't go to business school, and I think that the markets are a great business school. So it's we don't encourage people to go to business school. We encourage them to take the CFA. That's a good way to get more technical trading. If it was something that they feel they wouldn't be complete without going to business school, there have been people who've done nicely with us who've wanted to go, but that's been more the exception.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Wednesday morning from the Bloomberg. We're at the Plaza Hotel right now. We're live from the Bloomberg Global Forum, taking place alongside the United Nations General Assembly in New York. This event brings together heads of states and business leaders to address the world's most urgent challenges and opportunities. Tom Keene and I have been here since 7 a.m. We're going to be here for the next couple hours. Scarlett Fu and Paul Sweeney with the Bloomberg Intelligence Program. We're going to have a lot of excellent guests coming here from the Plaza Hotel in Midtown Manhattan. We're going to kick it off with Tyler Kendall, Bloomberg Washington correspondent. Get the latest UN news, President Trump's speech, as well as some UK comments as well. We're also going to bring UK Deputy PM David Lamb. He's going to be with John Micklethwaite. We're going to tap into that as well. Ben Way, head of Macquarie Asset Management. He's going to join us here live on some of these markets here. And Jason Wright, Managing Director and Head of Investments at Ariel Project Level on Private Equity Outlook. Getting a little tough out there. Talk about the sports investment outlook as well. So we get a lot of smart people coming in live here. Scarlett Fu and I, we are live here again at the Plaza Hotel. Let's kick everything off right here and get a Bloomberg Business Flash with, I don't know, John Tucker, Lisa Mateo. I'm not sure. We'll see.
Yes, you guessed right. My Lisa Mateo impersonation is not up to snuff. We're data dependent, guys, so let's start there. New home sales. This is an eye popper. Month over month, up 20.5%. Economists surveyed by Bloomberg were actually looking for a decrease of 0.3%. Right now, the major averages kind of mixed. The Dow up 42 points. The S&P 500 3 points lower. The NASDAQ 100 is down 10 points right now. This is kind of setting the theme for today's trading. Alibaba, those shares surging to the highest in nearly 4 years. They have revealed plans to ramp up their artificial intelligence spending. Oracle is seeking to borrow $15 billion from the investment-grade bond market. This is going to include selling a rare 40-year bond. Oracle does need the money. They're projected to spend hundreds of billions, with a B, dollars to rent and power data centers. Meantime, Andy Gotti at PNC Bank remains bullish of equities.
I looked at the itinerary, the agenda, and we're going to be here, but I'm missing out on a lot of good stuff.
Yeah, there's a lot of good speakers here talking about some of the global issues here, this is the time and place to do it, the week with the United Nations in session this week.
Although, yesterday's speech by President Trump definitely sets the tone, at least from the U.S. side. There's kind of the U.S. and then there's the rest of the world, it feels like.
And we had some guests here this morning talking about whether it's climate change and some of the initiatives and investments that need to continue to be made there, or whether it's just geopolitics in general. And I think that kind of what Tom and I took away from our guests was the rest of the world's moving forward. And if you want to come along, great. If not, fine.
Right.
And that's kind of
And they'll figure out their own alliances. They'll figure out their own way forward. But very much the U.S. is taking this position of this is where we stand. And, this is a 180-degree turn from what it was 3 years ago, last year at this time. And we're moving forward.
Yeah, we just had Admiral Mullen on, the former Joint Chiefs of Staff, and he said again that the military, the morale is great, and they're moving forward, and they're ready, mission capable, and the folks, the men and women on the ground are they're doing their jobs every single day. So that is a good thing, despite what may be happening at the higher echelons of the Pentagon and so on. So that's kind of what you want to hear. So and looking at the markets here today, not a lot of movement here. I'm going to call it pretty quiet right here. We've got a little bit of green on the screen. The S&P's up 1 point, the Dow's up 59 points.
Minimal moves, really.
Minimal moves, yeah, exactly. So
there's a lot of questions about valuations. Earnings season is going to kick up soon again, middle of next month, maybe a week or two in, and lots of questions about whether the results will justify the gains that we've seen. We know that the second quarter earnings season was very robust.
Very good.
And took a lot of people by surprise, especially since companies are determined to move forward even with all the uncertainty that the tariffs have created.
Yeah, and what we saw from a lot of companies is that they were, by and large, taking some of any cost increases that they had resulting from the tariffs, which are probably still in the early days there in the second quarter. They were trying to take them in the margin as opposed to passing them along to customers. We'll see how that plays out in the third quarter results. But again, double-digit earnings gains in first and second quarter. The expectations, I think, are a little bit of slowing, but still pretty solid earnings growth this year. And that's, as you were mentioning, that's kind of what this market needs, because this market's not stopping for anybody right here.
No, it isn't. In fact, it was interesting. I was in the makeup room this morning, and one of the economists that we talk to regularly, very well-known economist, stopped by, and I said hi to him, and he said, "Oh, the stock market." And I know he's not someone who looks at the stock market on a daily basis. He keeps track of it, of course, but that was his first thought. Like, it stops for nothing, and it's. Maybe there's a contrast here between what we're seeing globally with the global economy with what the stock market is pricing in.
Yeah, and I guess another tailwind for the stock market is the Federal Reserve, and we've got that one rate cut, and the expectations, if you look at the WIRP function on the Bloomberg terminal, is for maybe a couple more rate cuts this year, and maybe even some more going into next year.
Well, that's a market's perception, right? And then you have the Fed's perception, and of course, personnel is policy, and the Trump administration is doing what it can to change the personnel of the Federal Reserve Board to get the policy that it wants. Right now, the central bank is a little bit more hawkish or less dovish than the market is.
Right, exactly. So we'll see how that plays out. But again, if you're kind of bullish on this market, the courage to be in the market, as Tom Keene likes to say, you're banking on some continued solid earnings performance from corporate America, and you're betting on a continued decline in interest rates there. So we got a little audio problems, which we're
okay.
having.
This is what happens when you're in the field.
Yeah,
you know?
exactly right. And
we did get some data, which I want to just point to. We had new home sales at the top of the hour, and I think John Tucker mentioned this, but it's worth mentioning again.
Let's do it. That
new home sales rose 20.5% in the month of August.
Wow.
The expectation from economists was for a drop of 0.3%, which is pretty remarkable.
That is.
In terms of the actual numbers, 800,000 new home sales when analysts were looking for 650,000.
I wonder why that it moves so dramatically one month to the next.
Yeah, I mean, new home sales is not the biggest part of the housing market, right? The biggest part of the housing market is existing home sales, homes that are already constructed, and people are just buying it basically on the secondary market. New home sales is new construction, is totally different.
Yeah, and what you're hearing in the existing home market is there's just not a lot of activity. It's tough to be a real estate agent these days, I think, because there's just not a lot of activity. People are sitting in a home in a 3, 4, even a 4.5%, 5% mortgage. What's the incentive to kind of move and take on a mortgage that's going to be north of 6%, maybe closer to 7%? That kind of takes a lot of the fun out of it, I think. So
I talked to some brokers in San Diego when I was there last week, and they were saying that buyers have become a lot more particular. They've become a lot more demanding because if they're going to pay these kinds of prices, and of course affordability remains an issue, and the mortgage costs are still pretty high, then they want everything that they're looking for. They're not going to compromise. And so, whereas before, when it was a hot market and there was a sense that prices could still go up, they're willing to compromise. Very few people are willing to compromise right now.
Yeah, and it's interesting that home affordability issue is just crucial. And I remember Drew Redding, who covers the housing market for Bloomberg Intelligence, he's out with this little nugget every time we talk to him that housing prices are up 50%, 50, since 2019. And that is just extraordinary. Combine that with higher interest rates and the whole affordability, particularly for younger people, first-time buyers, it's got to be just brutal.
Yeah, I think young people have given up on the idea of owning a home.
Yep, all right.
And they've got to move on.
They got to move on. Renting, I guess, is the new thing here. All right, let's get the latest coming out of this United Nations, coming out of Washington, D.C. We do that with Tyler Kendall, Bloomberg Washington correspondent, joins us here. Tyler, what's kind of we've got 24 hours of kind of look behind us now at the speech President Trump gave at the United Nations. What's the feeling from some of the sources you're talking to about how that speech was received by that audience?
Yeah, hey, Paul. So there's a few different threads that we could pull on here. I was there yesterday at the UN General Assembly during President Trump's speech, and the room was rather quiet, though I think it's fair for us to say that at least some of these leaders were probably expecting the onslaught of criticism, since it was widely expected that President Trump would take aim at the UN as an institution, though perhaps not as far as he ended up going. But I really think that the real news that came out of yesterday were some of those stunning developments when it came to President Trump bolstering his support on Ukraine. And that really seems to be where everybody's focus has turned to, including his post yesterday, marking what really feels like a big shift in tone from President Trump, now saying that he does believe that Ukraine will be able to retake all of its territory. Just for context here, Bloomberg News had reported last month that Washington and Moscow were currently working on a deal that would cement the battle lines where they were. So this is really considered to be a shift, since we have repeatedly heard from U.S. officials time and time again that Ukraine would have to make some sort of land concessions when it comes to ending the war. Now, I can say that as this news was actually breaking, President Trump was posting on Truth Social, I was sitting down with the president of Finland, Alexander Stubb. I actually had to hand him my phone so that he could read President Trump's post in real time. And he said that he wasn't surprised by the president's comments. It was pretty good. I had to hand it to him. And his initial reaction, he wasn't surprised. He said that behind the scenes, this has been the feeling from President Trump. But it was interesting to me, the immediate point that he highlighted was how President Trump said that this couldn't be done without our European allies. And that's one of my big takeaways from covering the president yesterday. He bolstered his support for Ukraine, but he also ramped up the pressure on Europe to ramp up their pressure on Russia.
Tyler, I know the president had his big speech yesterday, and he also met with a couple of different people on the sidelines of the UN General Assembly meeting. Is he still in town? And if he's not, what are his surrogates doing? What are their priorities today on day 2 of the UN General Assembly?
Yeah, so President Trump is back in Washington. He's going to host a dinner at the Rose Garden Club tonight. We have heard, at least from one of his senior administration officials. That's the Treasury Secretary Scott Bessent. We know that President Trump yesterday had met with the Argentinian President Milei, and then we got this news today that the U.S. is now discussing a $20 billion swap line with Argentina ahead of the midterm elections there.
Tyler.
All right.
That's great. Tyler, thank you so much for your reporting there. Tyler Kendall, Bloomberg Washington correspondent. Let's go right now back to the Plaza Hotel, right where we are right now. We have UK Deputy Prime Minister David Lammy speaking with Bloomberg's executive editor, John Micklethwaite. Let's go to that right now.
Whenever I'm asked that question, I always think the best place to start is the consequences if it's not possible. I think that there are some people who believe that the best outcome is to have no state for the Palestinian people, and to have a sort of permanent situation where there is no possibility of statehood for them. And I would say, particularly representing the United Kingdom and thinking back 108 years of the Balfour Declaration, and being very committed to a Jewish state, and that sort of self-affirmation for the Jewish people, that part of the reasoning at the time was also that there would be statehood for Palestine. And so you have to give the young people of Gaza and the West Bank hope. There are also some people who believe that there should be just one state. Well, maybe if there's just one state, then you have also got to explain how everyone is equal in that state. So the only solution is two states. I think that, of course, there's a lot of focus, understandably, on Gaza, but we should remember on the West Bank that there is huge expansion, huge settler violence. This E1 development runs a coach and horses between north-south. West Bank shoves Bedouins from their land.
Do you see that as a deliberate attempt to stop a Palestinian state?
Well, it first reared its head in sort of 2014-15, and William Hague, who was Foreign Secretary at the time, stood against it. And in a sense, the UK government, alongside our European and other Western allies, continue to say that this is not acceptable. So it's for that reason that I think we arrived in a place where, alongside 147 other countries, the time has come to recognize a Palestinian state. I think all of us recognize that this is not going to happen tomorrow, but it is to say that hope is important and that Palestinian statehood is a just cause.
Obviously an area of some disagreement with the administration, but I'm just going to ask you about Donald Trump's speech yesterday. I mean, it strikes me, he has not, you had him across to Windsor, you invited him to Windsor, you wined him, you dined him, the king was there, and then he's come out describing London Mayor Sadiq Khan as terrible, that we're running Sharia law in London, that the energy policies are suicidal. Is that what you normally expect from a guest when they come to stay?
Well, to be fair, I think we had a really...
I'm being very fair.
I think we had a really successful state visit. The truth is, the Prime Minister, Keir Starmer, and I and the team put a lot of effort into our relationship with the new administration. We were in Trump Tower back in September of 2024, before Donald Trump won the next election, and Keir Starmer had sent me to the US a few months earlier to try and form a judgment as to who might win the US election. And I took the view that the Republicans were indeed on course to win, and that turned out to be right. Look, just to step back a bit, the special relationship is hugely important between the United States and the UK and our Five Eyes allies. We have the biggest intelligence capability in the world, and it keeps a lot of us safe. Our military partnership is key as well. And then what you saw come out of the state visit is a tech partnership, £250 billion worth of investment, And particularly, I think, in AI. Yesterday, I was in New York, first quantum computer, OQS. Hugely important that we are partnering with our fantastic universities, our fantastic innovation, our fantastic enterprise, owning that future, given some of the capability exists in other parts of the world where they would have a different approach, I suspect. So for all of those reasons, the UK and the United States, the special relationship, I think, is in very, very good health. Now, look, of course, there are going to be areas where we disagree. Harold Wilson disagreed with Nixon, I think, on the Vietnam War. But actually, when you step back, and I looked at the speech yesterday, America First was very prominent, of course, but it's not America only. I think also attitudes to migration, of course, were very dominant. But the truth is, in every Western democracy across the Western world, there are two issues that will govern both the elections we've had since 2008 and will govern future elections. They are cost of living and migration. And whether you are a progressive party like my own or a more conservative party, as is the case here in the United States, you have to have answers to those two questions, or I'm afraid your electorate aren't going to vote for you.
Do you think those are questions at the moment the right is answering better? And the other one many people would throw in there as well as climate change. You know, yesterday Trump called it, I think, a complete fraud or something like that. Is that these all seem to be areas where parties on the right, you look at reform in Britain, people are picking up, they're getting traction in a way that more centrist parties like your own are finding it harder.
Again, let's step back. So this is a story that has been playing since 2008. It's still current, and my sense is it's still got some time to run, because working people in Western democracies feel deeply unsettled. And it means that electorates are very volatile. They are swinging violently back and forth. That theme has continued. To your question, do the right sort of dominate that? I don't think so. Let me tell you why. Let's go back to Australia. They had a voice referendum on Indigenous rights, did not go well. The Labour in Australia started to sink back. They're about 10 points behind in the polls. They went on to win. Let's go to Norway. Recently, again, they got into the doldrums. I think they were at 1.29% behind in the polls. They just went on to win. Canada, again, progressives, everyone wrote them off, finished. Trudeau, forget it. Again, the Canadians went on to win. So, no, I think that you can, in the pragmatic centre ground of progressive politics, if you are seen to be sort of delivering on behalf of your electorate, get to a point during the election where people settle and give you another term. But as I say, what you'll find in the interim, when you ask the electorate how they're going to vote, you'll find a lot of people saying, I don't know. And that don't know continues until they settle. Progressives can win in that environment. We obviously did it very well in the last election in the UK. Politics feels tricky in the UK, but where it will be in 3 or 4 years' time could be very different.
Just on that last one on that, just incredible looking at it from the outside that Reform, a party with 4 people, this is Nigel Farage's party, is the one which seems to be setting quite a lot of the political weather in terms of talking about immigration and things like that.
Yeah, that's, I think, primarily about the collapse of the old Conservative Party. And commentators here in the United States will have views on what has happened to the Republican Party.
But it's different, isn't it? Because in the Republican Party, you've had an insurgency that has taken over the Republican Party. In Britain, you have a different party.
I don't think it's so different, John. I think there will be colleagues here from parts of the world where they have proportional representation, coalition governments, many parties reflected in forming a government. And then there are countries like ours, the United States, where you've had 2 parties that are dominant And there are, the Labour Party is a broad coalition, and therefore there are manifestations of how those parties, whether you've got dominant parties, express themselves at different times, and there's definitely tensions and pressures. We certainly see that on the right of the political spectrum, and it exists on the left of the political spectrum. You might recall that the British Labour Party had an experiment a few years ago led by Jeremy Corbyn that didn't quite work.
What about when you look at the world as a whole? Again, just before you've newly become Deputy Prime Minister, before that you were Foreign Secretary. You look at the world as a whole, what do you see? A lot of people are worried by the state of the world, including Donald Trump, who basically said it's chaos out there.
Well, I see tremendous pressures that begin with the global crash of 2008, the challenges posed by globalization, the real pressure on politics in Western democracies, driven by working people who are not happy at cost of living crisis, particularly. I also see, sadly, a kind of renewed imperialism in the world where big countries think they can take over small countries. In Europe, of course, that is focused on Putin and his Russian imperialism and the war in Ukraine, and all the pressures that brings on the global community in terms of prices particularly, and pressures as a consequence of that. But actually, even in the Americas, you've got Venezuela saying that they quite like half of Guyana. Surprise, surprise, Guyana's just discovered oil. So that's the dangers when big countries think that they can take over small countries. And then, of course, you've also got this technological revolution going on that is a little bit like the massive advances that were being made at the turn of the last century that led to a very turbulent 30, 35, 40 years of the 20th century. We're in a similar time, and that's where the partnership between the UK and the US, the investment that we saw as a consequence of the state visit, the tech partnership particularly, the race for clean energy, and I realize that that is contested by some, but the UK has made a commitment to clean energy, and we stand by that commitment to clean energy, and I hope most of the audience agree with us on that. All of those things lead to tensions, and my judgment is, I've now been in public life for 25 years. I always say I started out in politics looking more like Denzel Washington, and I've ended up looking more like Forrest Whitaker. But anyway, I've been around a while, and my prediction is that those themes will remain dominant over the next decade or so.
It's quite an interesting thing. You've gone back a couple of times. 2008, the financial crisis. You see that as more important than, say, 2016, which would be the year you have Brexit and you have the first Trump presidency. Do you see those? Do you see Trump and Brexit stemming from what happened in 2008?
Well, yes. I guess I do see that the strife of working people comes out of that period. You see a lot of global economies go into serious amounts of debt after that period. And of course, I haven't mentioned the pandemic, which also doubles down on that debt in economies and puts a lot of public services under particular strain. I wrote a book a few years ago now called Tribalism. It was really about the new tribalism that we're seeing emerging in politics, and I think that those themes are still with us. But I've always been, as you know, John, I've always been, despite being very happy to be a progressive politician, I've always been a politician who wants to work across the aisle, finds bipartisan opportunities. And I took a little bit of stick this summer for taking my friend
going fishing with J.D. Vance,
Vice President Vance, fishing without a fishing license,
without
getting
into
some trouble. But actually, you you can forge common ground despite standing up for your values and being clear where you stand in the ground, and I've always sought to do that.
Do you think that if you talk to anyone in America at the moment, they would say that moderate middle of politics has gone? You know, there used to be a time where you regularly see Republicans and Democrats sharing cabs from places and things, and do you think that is still marginally better in London and Westminster and the European capital?
No, I'm very sadly that I lament the fact that middle ground, the center ground, the ability, and it's so important for stability in the world that countries like the United States, like the UK, can work cross-party. And why do I think this is important? Well, look, I've been Foreign Secretary, or indeed Shadow Foreign Secretary. I've been in foreign policy for 4 years, and now as Deputy PM, backed with a domestic portfolio, but obviously picking up the international as well. And what I see is that there are parts of the world in the middle ground, let's take the Gulf, where Gulf countries and economies are able to set a strategic path. It's 10, 15, 20 years. The same individuals are in politics. They can set a course. I see more autocratic countries, obviously China, Russia, Iran, North Korea being able to do something very similar. And I worry that Western democracies, unable to find common ground, feel a little bit more like they are bouncing around in terms of strategic vision. And it's only by seeking to find that common territory that you're able to do that. Now, globally, this is why the partnership that the UK and the US have, particularly on intelligence, military, tech and innovation, gives us a strategic view. But I do insist on trying to find the common ground and trying to disagree agreeably, and always remembering that, yes, democratic politics is contested and you can disagree, but please let us preserve the cornerstones of democracy up against autocrats and dictators, where people do not enjoy the freedoms that we enjoy coming together in a room like this.
David Lammy, Deputy Prime Minister of Great Britain, thank you very much. I look forward to reading about you sharing a cab with Nigel Farage.
Bloomberg Global Forum taking place alongside the UN General Assembly here in New York. That was the UK Deputy Prime Minister David Lammy speaking with Bloomberg Editor-in-Chief John Micklethwaite. Let's go now to John Tucker in our New York studio with the latest on the markets. John.
All right, Scarlett, thanks. And this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Major stock averages, they have turned higher to little change. S&P 500 dead flat, 66.57. The Dow's up 45 points right now. The NASDAQ 100 down right now just 4 points. We are holding near records, and the averages, again, mixed a little change. 6 of the 11 major industry groups in the S&P 500 are actually higher right now, and energy is in the lead. This is crude oil pushing over 1% higher. Communication services, that's right now the biggest drag. Alibaba shares, these are the ADRs actually, surging right now. They're up over 7%. They're going to spend more on AI infrastructure, just as investors turn more positive on its push into the technology. The company also announcing a software partnership with NVIDIA. And Micron Technology, the largest maker of computer memory chips, delivering an upbeat forecast for the current quarter, helped by demand for artificial intelligence equipment. Micron shares right now are actually lower, down 1.9%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney. We are live from the Bloomberg Global Forum. We're at the Plaza Hotel. This is taking place alongside the United Nations General Assembly here in New York. So we all made it here despite all the street closures and rerouting. We're all here.
And security.
And security.
Hardcore security.
Yep, hardcore security. I slid right in here early this morning. Let's get back to these markets, as John's just reporting. Not a lot happening out there, but we want to check in with Ben Way. He's head of Macquarie Asset Management, joining us on site here. Ben, thanks so much for joining us here. Wild ride in 2025 for these markets. We had that jolt, that volatility in the beginning of the year. Markets took a big step back, but they've come roaring back since then. How are you guys positioned for the end of 25 going into 26?
Yeah, we feel we're positioned well. I think, for us, we're investors through cycles. So, we know the markets go up, we know the markets go down. The vast majority of what we do are in the private markets, and they're in long-dated assets, things like infrastructure, agriculture, energy transition. And so, look, the opportunity sets are still massive. And I think the public markets are a reflection of that, right? We've had a lot of events over the last 5 years. We've had a lot of crises. We've sort of got used to volatility, but I think people know where the world's going. It's digitizing. It's looking for more sources of energy. People talking more about supply chain security, sovereignty security, and that's creating up big opportunity sets that will stand the test of time. And I think a lot of the companies that are leading the markets are companies that are reflective of those thematics. And so they're the sorts of things we do. And so we think actually investment opportunities are picking up. The M&A markets are picking up. And I think generally people are very cautiously optimistic about sort of the next 6 to 12 months.
Cautiously optimistic, but then you look at the public markets and it's like optimism times 20 because you've got record highs, certainly here in the U.S. Yeah. What kind of correlation is there between the public market cycle and the private markets where you mostly hold your money?
Yeah. So there's not a huge correlation, to be honest, other than those public markets that are doing, those public market companies that are doing particularly well are normally reflective of big thematics where private markets is investing, and often, one way to exit that opportunity over time is into those public markets. So I think just as the best companies that, perhaps have got the most exuberance are reflective of sort of those global thematics, that's where private market investors are seeking to invest. And that will be in areas that are some way related to AI, some related to tech, some way related to supply chain security or national security.
One of the great, amazing growth stories in global Wall Street, I think really since the last 15, 20 years, has been private credit. How do you guys think about private credit? How are you positioned for private credit? What's your view?
So we think private credit has a long way to go. When you think about it, what it is as a percentage of the overall lending market, the fact that we've had regulations which around the world, not just here in the US, but around the world, which has had some banks step back from lending, and the fact that there's just all these great investment thematics that need both equity and debt, we think there's a long way to go for private credit in pretty much all the major investing markets around the world. So I think we're at the beginning of this journey. Private credit obviously gets affected by things like interest rates and interest rate cuts. It also gets affected by the deployment of capital and whether there is a lot of assets being deployed where you've got new businesses to finance or refinancing of businesses. So it won't be a linear journey for private credit, but the opportunity set, I think, still remains very significant, particularly when you think of the overall lending market and how small a percentage it is today.
Yeah, when it comes to private credit, there's a ton of demand, but not a whole lot of supply. And the worry is that there may be some kind of bubble forming, or we're getting a little bit bubblicious. What would make you worried about private credit? Are there certain sectors that are perhaps more vulnerable than others?
I think, if you look at something like real estate, I think that's where some of the concern has been around, where you're coming up to a series of refinancings, and we need to take a really hard look at the valuation of those properties and, some facilities that, will put in place, are they reflective of the value of that business today? So I think if you start to see that happening beyond just episodically, then people will start to get concerned. Personally, I think, private credit, the private credit managers out there like ourselves have often been doing this for a long period of time, going back 20 years. Most private credit, asset managers who have significant assets have very good track records. They've made a lot of underwrites with very few zeros. So I think you've got, pretty seasoned people who really understand that market. And them being able to have access to more capital now because investors want that exposure, I think is a good thing because you've got smart people with a good track record and you've got a big opportunity set, out there. And so that makes sense.
About the energy transition, took a little bit of a blow yesterday from the president's speech in front of the United Nations. Talk to us about kind of the environment you see out there for financing the energy transition on the global scale.
So I think the best way to think about it is this. 3 years ago, the world invested about $1 trillion in energy transition, and this year it'll be about $2 trillion. So the investment in this sector around the world continues, and it continues to be very strong. Energy transition or decarbonisation is more than just offshore wind. I think we'll all acknowledge that offshore wind has some headwinds at the moment, so to speak. But there is a myriad of other sectors and portfolio companies out there that are doing really important things around the world where, again, the investment opportunity remains very significant. If you think about sort of businesses like Desiree and Calibrant, who are two of our portfolio companies, they're investing heavily in battery and storage technology. They're providing solutions to a lot of the big tech companies. Where you've got grid challenges, where you've got access to energy challenges, battery storage is a really important and scale opportunity, and that's starting to be rolled out with corporate partners through corporate PPAs, not just here in the Americas, but right around the world. So, when we look at the energy transition, we just see, first of all, a huge need for more energy around the world, and solar is the cheapest unit of investable and deployable energy today. So there's obviously a lot of markets that need just more energy. They want to diversify their energy mix, and they want to do it at a low cost. And in a lot of countries, they want that to be a green solution. So you've got that. And then you've got all these other new technologies, whether it's supporting EV networks, whether it's different sorts of aviation, low carbon fuels, or things like the storage and capture, which are just enormous.
So not to make it all about the U.S., but to bring it back to the U.S., does the U.S. checking out of the whole energy transition narrative create more opportunities or more obstacles for Macquarie?
So I think, first of all, there are immense opportunities right across the U.S. This is the biggest energy transition market in the world, and I think we need to remember that. Second of all, governments from time to time change their policies or viewpoints, and we're respectful of that. So we'll operate within that policy framework and within that agenda. But it's pretty clear that corporations right across the US are looking for, advanced technologies that help their businesses run better, do it in a less carbon-intensive way, or come up with energy storage solutions. And so given the scale of this market, that just remains a huge opportunity here.
All right, Ben, thank you so much for joining us today here at the Bloomberg Global Forum. Ben Way is head of Macquarie Asset Management, and we are here at the Plaza attending the Bloomberg Global Forum. Let's go back to Bloomberg Studios here in New York with John Tucker for the latest on markets. John?
All right, guys, mixed little change, holding near records with the major stock averages right now. It looks like Alibaba is setting the tone. It's spending more on artificial intelligence, boosting their AI budget past $50 billion. And as a result, shares, the ADRs of Alibaba right now, 10% higher. Let's continue with that theme and switch to Micron Technologies. The shares right now, they're actually down, but Micron did deliver an upbeat forecast for the current quarter, helped by demand for artificial intelligence equipment. And then you had that eye-opener of an economic report today, the data we got on new home sales in the U.S. unexpectedly surging in August at the fastest pace since early 2022. Sales of new single-family homes increasing 20.5% to 800,000. That's at an annualized pace. It looks like price cuts and sales incentives may have motivated buyers there. Meantime, Rick Wurster, he's the president and CEO of Charles Schwab. He says investors are concerned that stock valuations are too high.
I asked the client how they were feeling, and I think they synthesized what our investors are feeling really well. They said, I'm happy, but I'm nervous. And they're happy because markets are at all-time high. Their balances have never been higher, but they're looking at valuations and wondering, am I going to be okay?
All right, right now, the S&P 500 down just a point, 66.55 in the index. The Dow Jones Industrial Average is up 47 points right now. And the NASDAQ 100, 23 points lower. That is down just about 0.8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that as well. Scarlett Fu and Paul Sweeney, we are live here at the Bloomberg Global Forum. We're taking place alongside the United Nations General Assembly in New York. We're at the Plaza Hotel, finally reopened. I spent a ton of time here in the Plaza Hotel over the years, and they did huge renovations. Got it reopened here for all the residences and stuff like that. So they converted it from a hotel into a residence.
It's got an old-timey vibe to it.
Awesome. Yeah, it's just classic New York hotel. Let's talk a little private equity here. We can do that with Jason Wright. He's a managing partner and head of investments at Ariel Project Level. Jason, I know at Ariel you focus on a couple of areas, infrastructure and sports. We'll get to both of those. Infrastructure. Talk to us about where you're seeing opportunities here. Is it U.S.-centric? Is it global? Are there certain industries that you guys find attractive? Where are you spending your time these days?
Well, first, thank you for having me. We're excited about this generational inflection point in women's sports, where the commercialization, the reach on social media, and the bow wave of youth sports has created a really viable asset class for women's sports, and infrastructure is a major component of it. You need world-class stadiums, and now world-class stadiums are being built in this live, work, play, retail environment that is boosting revenues for teams, is creating economic opportunity for areas, it's creating jobs. And so we are interested in investing in that in a way that gets a differentiated return profile for our investors outside of the normal returns they see for teams and leagues, but also does something really good for communities and really important for women's sports and its impact on girls and women globally, because you are seeing it become an economic engine for regions, which puts more intention and focus on the women and girls.
So when it comes to infrastructure for women's sports, are we talking about stadiums or arenas specifically for women's teams, or are the women still, they get the leftover slots when the men's team are away playing on some other field?
I'm glad you asked. It's actually really important for women to have substantial amount of the programming in stadiums for the franchises to have healthy P&Ls. We are one of the owners of the Denver Summit FC, the new NWSL team that will start playing next year in 2026. We are building a state-of-the-art dedicated women's facility in the Santa Fe Yards neighborhood of Denver, and we just announced our practice facility, a state-of-the-art facility in Centennial, Colorado. We think that's going to make us more competitive on the pitch over the long haul.
And the women's team is not the second tenant here.
No, it is us. We are the leads, and our sponsorship deal is probably more valuable than the men's teams because we are in a spot where women's sports really is commanding commercial attention. But it's good for the business. It's good for the performance on the pitch. We think we will be more competitive because of it, and we can build a real community around it, which is why Denver and the state of Colorado have gotten behind this project in a very real way.
What's driving, do you think, I'm not called a sudden growth, but it's certainly a resurgent growth in the health and of women's sports? For me, Caitlin Clark was a kind of a seminal moment for basketball.
Yes. How
do you guys think about it?
I think we need to give Caitlin Clark her flowers on this, as my kids would say. She catalyzed a commercial moment, but we have had catalytic talent in the past. Serena Williams, Mia Hamm, Alex Morgan. You could list these folks off. Why is it different this time? One, men's sports has commercialized and professionalized over the last 30 years. When I took over the Commanders, I was the president of the Commanders for the last 5 years until January. We had to do a real turnaround and professionalization of that business. That's happened in men's sports over the last 30 years, and women's sports gets to draft off of that. Second, women's sports benefits from a new fan that is social media engaged and digitally savvy, and female athletes have twice the reach on social media that male athletes have.
Really? Wow.
They're more trusted. They're more polished in front of media. You got it. She got it right away.
As a mother of boys, I'm just chuckling along.
They can talk about more topics than others, and consumers and fans give them the right to do that. And then the third one is really important and underpins our thesis because we are investing in youth sports as well. We're now 20 years into real investment in girls' sports. Over 43% of high school athletes are girls now. That's the closest it's been to parity. That means families have been spending thousands of dollars a year for the last 20 years to get to this point. It's no longer a logical leap to spend a lot of money on women's sports tickets now or merchandise because we're accustomed to this just being sports, and we have a whole generation of kids that consider it just sports.
We're nodding along because we both have spent many dollars on this. Exactly. So I'm curious about whether the women's soccer movement here professionally is how it compares to that in Europe, because obviously soccer is Europe's sport, and here we know that it's a big deal for the youth leagues, and then certainly in college, and then when you get to the professional leagues, it becomes kind of something else. How does the U.S. Women's Soccer League professionally compare with Europe, with overseas?
Great question. We like both. First and foremost. Now, we are in the NWSL, and that's because it's a more mature commercial environment. The business is stronger, the infrastructure is better, and the women have a better experience there. Now, the brands and the tradition still exist in Europe. We plan to be invested in both over time, and I think those leagues will find a great way to be symbiotic to each other over time. But right now, the NWSL is a step ahead, and you see that in the valuations.
Valuations of sporting franchises historically have been driven by media rights. What's the media rights landscape for women's sports broadly defined? It's
Growing rapidly. The reason we like women's sports is much like Ariel Investments has looked at the markets traditionally and looked for under-researched, overlooked assets, especially in small and mid-cap stocks. We think women's sports is the small cap of sports. And that's where we see media rights and valuations today. They are growing rapidly, but it's on a smaller base. So the NWSL contract that's currently in place is 40x the previous one. It will leap again because viewership numbers are going very well. It won't leap 40, but it'll grow massively again. So we're on that high growth on small base, but they are going to massively grow really soon. The WNBA viewership is about 15% of all NBA viewership, but it's only 2 or 3% of the media rights contract. So there's going to be massive growth coming.
Jason, very quickly here, how do you make sure you don't grow too fast? You look at the WNBA, and in the past, they've overexpanded and had too many teams and had to retrench.
We're in a different moment.
Why?
As I said, those three factors I said before, the professionalization of the industry, the reach of women on social media, and the digitally savvy consumer and youth sports. Technology. It is a different space now than it was 20 years ago. And I was a WNBA season ticket holder in the 90s, so I know the first round of it. But it is a different moment now. This is sustainable, and we think if we invest in the full ecosystem, get great returns for our investors, and make sure the whole industry gets professionalized, this is a 30-year run and not just 10.
Jason, thanks so much for joining us. Really appreciate it. Jason Wright, he's a managing partner and head of investments for Ariel Project Level, talking about the private equity outlook, particularly as it relates to sports and women's sports. Again, one of those areas of growth that's just been extraordinary to watch. It's been, I don't know, it seems like for me 20, 30 years in the making, and we're starting to really see some movement there. Green on the screen, but nothing really happening. I'm not going to oversell here. We've got the S&P up 3 points, the Dow up 60, and the NASDAQ up 11. We're live from the Bloomberg Global Forum at the Plaza Hotel in Midtown Manhattan. This is Bloomberg.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we are live from the Bloomberg Global Forum here at the Plaza Hotel in Midtown Manhattan. This, of course, is taking place alongside the UN General Assembly here in New York. This event brings together heads of state and business leaders, so we've got a couple of them on today's program of Bloomberg Intelligence. But right now, we want to go back to our interactive broker studio and bring in one of our very own experts. And he is, of course, the expert on Micron. And we want to talk about Micron because the stock is lower today despite a beat and raise quarter. We do have with us Jake Silverman of Bloomberg Intelligence. He's a semiconductor analyst. And Jake, I wonder how much of this disappointing price action today is tied to the fact that the stock has had a blistering run in 2025, more than doubling in value.
Yeah, no, I think it has a lot to do with just very high expectations coming into the quarter. Stock being up 95% year to date going into the report last night just had a lot to do with it. But overall, look, I mean, the fundamentals of the business remain very strong. I think the commentary on the call last night from management was very positive. And so I think we're going to continue to see an upcycle in memory, at least for the near term.
So what is the call here? What's the street looking for this name? Again, the stock's just, as you mentioned, ripped this year, up 94% year to date. What's the call here?
Yeah, no, I mean, I think investors are really looking at high bandwidth memory. They're looking at AI. They're looking at data center related revenue. In the last fiscal year, data center related revenue was 56% of sales. So as demand continues for that, we also have to keep in mind that there's traditional products as well that are an important part of the business. That includes smartphones and PCs. Investors really want to see continued pricing strength. And as demand continues to grow for high bandwidth memory, which is very important for AI, and as capacity for that shifts over to high bandwidth memory, it can further constrains the supply because it has lower yields, it has larger die sizes. So there's only so much capacity in the industry, and it's shifting over in favor of AI, and that's just constraining supply for traditional products, which, given the supply and demand, the importance of supply and demand balance in the industry, it would suggest that as long as demand for AI continues to grow, we'll see further pricing increases.
So that's a lot of conditions. I mean, you talk about memory chips, which Micron is the biggest U.S. maker of. We know that this business is kind of famous or infamous, really, for lurching between booms and busts, and that results in these price swings to compensate for the previous, plethora of chips or dearth of chips. How does the AI revolution change this dynamic?
Yeah, no, and as I said before, really, I want to put emphasis on the fact that high bandwidth memory demand constrains supply for other products, specifically with DRAM. But DRAM now accounts for about 80% of sales for the company. So it's vastly more important than what we're seeing in NAND. But the other 20% of sales in NAND, we're also seeing strength for enterprise solid-state drives, which are also important for AI. So, yeah, look, I mean, I think historically we've seen up cycles tend to last somewhere between 7 to 10 quarters. But we're now extending beyond that. I mean, we're looking at, based on the guidance last night, at least 12 quarters, and then based on the potential for further increases in pricing, it could extend all the way through the next fiscal year at a minimum. So yeah, I mean, really, it's just kind of an almost unprecedented situation, or at least not something that we've seen in a very long time, and it really just comes from structural tailwinds from AI, both on demand, which is improving pricing via different products like high bandwidth memory, but also just because, like I said before, it's just constraining overall supply. And that's not just unique to Micron. That's true for both SK Hynix and Samsung as well. And the three of them account for the vast majority of DRAM demand in the industry, and then in NAND as well.
Yeah, Drake, that's kind of where I wanted to go. The competitive landscape here, it feels like there's, again, you mentioned kind of three names there. Is that really kind of what's driving are those three companies driving this business?
Yeah. So SK Hynix has really had the lead in high bandwidth memory. Micron has become sort of a very fast follower, and now there's reports that Samsung will be supplying into NVIDIA's Blackwell Ultra platform, which might pave the way into Rubin for them as well. So, I mean, I think this three-company dynamic that we'd seen for a very long time, obviously we've had some Chinese competitors come on, but this three-company dynamic that we saw in traditional DRAM seems to be now shaping up again for high-bandwidth memory. So I think those past, dynamics that we've seen are going to be the dynamics going forward again.
All right, Jake, really appreciate your joining us. Jake Silverman, our Bloomberg Intelligence semiconductor analyst here on Micron. And of course, the stock is down today, even after a beat and raise quarter. The forecast, however positive it was, failing to satisfy investors who had gotten used to big beats.
Yeah, and it's just another winner in that whole AI play across the
Key
board.
beneficiary.
It's not just NVIDIA, folks. There's lots of other ways to play as well. So we'll stay on top of that one. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. And again, looking at Micron, again, that stock up 94% year to date. So heck of a run. But looking at the markets here, Scarlett, not a whole lot happening at all. S&P, I'm going to call it unched because I know Lisa Bronwitz hates that term, so I'd like to use it. The Dow's up 40 points. Exactly, just in case she's listening. And NASDAQ's down 9 points. So not a lot happening there. Yields ticking up just a couple of basis points. The 10-year Treasury's up 4.13%, and the 2-year 3.59%. And looking at WTI crude oil, it's up another $1 here, about 1.67%, just above $64 per barrel. So we're going to have more coming up from the Bloomberg Global Forum taking place alongside the United Nations in New York City.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
This is the second hour of Bloomberg Intelligence. We're live from the Bloomberg Global Forum taking place alongside the UN General Assembly here in Midtown Manhattan. Of course, this event brings together heads of state, business leaders as they address the world's most urgent challenges and opportunities. And of course, we will be discussing all of that in this next hour. Coming up, we've got Drew Redding of Bloomberg Intelligence. He's a U.S. home building analyst on the latest new home sales, which basically beat expectations. So a big number on that front. David Guro, who's the host of the Big Take podcast, will be joining us as well for the latest geopolitical headlines taking place out of the United Nations. And then we've got John Johnson. He is the CEO of one of Denmark's largest and most influential pension funds, PKA. He'll be talking a little bit about what he sees in terms of opportunities and PKA's role in climate finance. And then finally, we're going to end things with Jean-Paul Servois. He's the IOSCO chair on that organization's role in fostering global market stability and geopolitical and economic fragmentation. A lot there to discuss. But first, we're going to head over back to our interactive broker studio at Bloomberg headquarters and bring in John Tucker for our Business Flash. John.
Hi, Scarlett and Paul. Thanks very much. And this Bloomberg Business Flash being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Major stock averages kind of bouncing between little gains and losses. In the S&P 500, you have 6 of the 11 major industry groups. They are higher. We're being led by energy as oil moves up to 1.5% higher right now. That's WTI. Among the most active Intel shares, they're up 5% right now. And the artificial intelligence theme, that continues to power markets. You have ADRs of Alibaba. They are up close to 10%. Nora's going to be along in just a few minutes with a deeper dive into that. Meantime, Cameron Dawson at New Edge Wealth says, you know what? Stocks may still push higher.
You continue to focus on one thing. It's forward earnings. But we continue to see new highs in 12-month forward earnings estimates. And as long as that continues to happen, we think this bull market can continue.
And right now, the S&P 500 down 1.9 points, 66.55 in the index. The Dow Jones Industrial Average up 32 points, and the NASDAQ 100 is down 28 points. That is a decline right now of 0.1%. Also wanted to bring you this story. Measles infections in the U.S. have reached over 1,500 as outbreaks continue to spread and routine childhood vaccinations fall. This is from the Centers for Disease Control and Prevention today, reporting infections now in 41 states. And we check the markets and other news for you right here on Bloomberg Radio 24 hours a day. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much for that, John Tucker. Let's go back to our studio in Midtown Manhattan and check in for some market movers now with our very own Nora Melinda. Nora, what do you have for us?
Well, Paul and Scarlett, there is lots to keep an eye on in the market. Let's look at shares of Oracle. That's ticker ORCL. Of course, we know this is a stock that's really been in focus quite a bit in recent weeks. It nearly doubled in value in this year alone. What we're looking at today is the news that it's looking to raise $15 billion from the U.S. investment grade bond market today. Essentially, it's wanting to ramp up its spending to meet the needs that we're really seeing as it relates to the AI boom, the optimism there. It's selling its debt in as many as 7 parts, and this would actually include a rare 40-year bond. So lots that Wall Street is looking at right now. Shares are down about as much as 3.5% in trading today. But I mean, of course, we know that this has just been such a topical name. Stock up about 83% year to date. But let's move over into Alibaba here. That's ticker BABA. We're seeing shares soaring, and this is after it hiked its AI budget past $50 billion. So AI is clearly the story here, Scarlett and Paul. Lots of AI optimism here. And so we are seeing the stock up for its highest intraday level since October of 2021. Really ripping here, stock up as much as 10%. The CEO is saying that he anticipates overall investment in AI accelerating to some $4 trillion worldwide over the next 5 years. And so it seems as though Alibaba is going to need to keep up with that trajectory here. And so lots of optimism that we're seeing in the market. Stock is up about 113% year to date. But I did want to end things off with Adobe. That's ticker ADBE here. We're seeing shares slipping down as much as 3.6% in trading today, but pairing a little bit now, down about 3% right now. This is after Morgan Stanley cut the stock to equal weight from overweight. Essentially, they're talking about decelerating digital media annual recurring revenue. As you think about recurring revenue, of course, this is really important for any company, but with Adobe in particular, they're really thinking about the outsized concern on Adobe's ability to prove that generative AI net expansive is to its total opportunity here. So we're seeing shares of the company down about 21% so far this year. But of course, this downgrade from Morgan Stanley is what's pressuring the stock today, Paul and Scarlett.
All right, Norma Linda, thank you so much. We appreciate that. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We had some eco data today. New housing starts came in way higher than expected.
The fastest pace since early 22. Unexpected surge there.
Yeah, absolutely. Let's see what's going on out there in the new housing market. Drew Redding, Bloomberg Intelligence U.S. home building analyst, joins us. He's down there in Princeton, joining us via that Zoom thing. Drew, what's going on in the new housing market?
Yeah, some pretty eye-popping numbers today from the census. Scarlett mentioned the fastest pace since early 2022. I think you need to take these numbers with a grain of salt. The report said that sales were up 20% from last month, plus or minus 22%. So maybe they were down, maybe they were up a whole lot more. This is
sounds like one of my estimates.
This is a historically volatile data set, and it does contrast with some of the recent data that we've had. Our friends over at Zonda, who track about 85% of the new home market, said sales were up low single digits in the month, still lower from last year. And if we look at applications to purchase new homes, they were actually down 6% sequentially, which is more of a leading indicator. And on top of that, we heard from last week from the second largest home builder in the market, Lennar, who said that they're having to take their foot off the gas pedal in terms of volume because the market's just not supporting it. They're still having to incentivize buyers. So, we do agree that lower rates will certainly help demand, but do we think the market snapped back as strong as this report suggests? Probably not.
Okay, so maybe the numbers will need to be revised, and there's a trend here with numbers being needing to be revised. But the no home sales numbers overall reflect contract signings, which usually take place at least a month before the transaction is complete. So it may capture a little bit of the turn in the housing market. Could this be the beginning of, I don't want to say an upswing, but at least stabilization?
So I think, first of all, the pullback in rates during the month of August was about 10 basis points. We didn't really see that dramatic shift lower until really in September when rates got into the low 6% range. What's interesting is that since the Fed cut, rates are actually up 25 basis points to about 6.4%, which is kind of similar to what we saw the last time they cut rates, is the Fed cut and mortgage rates increased. Like I said, I do think that lower rates are certainly going to help that marginal home buyer. But at the same time, when we talk about housing, rates certainly get all of the attention because of the affordability constraints we're under. But I think you need to also focus on the labor market. We've had some pretty large job revisions recently. We actually showed net loss in June. And if you look at some of the survey data, consumers out there have a growing concern about unemployment rates over the next 12 months. And for those that do lose a job, the expectation that they're going to be able to find a new one within the next couple of months is not very strong. So one of the things that we've heard repeatedly from the builders is this lack of confidence, which is holding buyers back. So on the margin, rates certainly help affordability. They don't solve the problem. So we think it helps buyers on the margin. But again, I don't think, broadly speaking, this returns us back to a more normalized level of transactions.
All right, fantastic stuff. Drew Redding, Bloomberg Intelligence, U.S. home building analyst on these new home sales numbers. Take them with a big grain of salt here because they might have to be revised later on. We are, of course, live from the Bloomberg Global Forum here in the Plaza Hotel in Midtown Manhattan, taking place alongside the United Nations General Assembly meeting, which is taking place all week. Actually, it takes place for a long time, but the focus is really this week. And here with us on set is David Gura. He is a correspondent for Bloomberg and host of the Big Take podcast. And David, you've been covering the UN, you've been covering UNGA for a while now, and this meeting that's taking place this week really comes at an interesting time for the United Nations because the biggest contributor to the organization, the United States, it's not paying its bills.
That's right. So the U.S. has historically contributed about 20% of the UN's budget, and it's in arrears now. It hasn't paid $3 billion, which is a tremendous amount of money. So the Secretary General, who has a little over a year left in his tenure running the UN, is beginning to grapple with what would be some pretty severe cuts to the organization. So he's looking at general budget cuts, layoffs of around 20% of UN staff, moving people in places around the world to other locations to try to save money. And then peacekeeping is another component of that. And when we sat down and talked last week, he allowed that they're having very hard conversations about what that peacekeeping force is going to look like in the future if the U.S. doesn't pay those bills or if it agitates even further to pay less in future years. So you're right, it's at a crossroads. It's a real inflection point for this institution that's been around for 80 years. This was supposed to be a celebratory occasion. You're right, it lasts many weeks, but this is when all the world leaders are here. And instead, there's this really large shadow being cast over it, and that's what made the speech yesterday by President Trump something that was so closely watched and listened to for indications of just sort of what his commitment to the organization is going to be like going forward and what that financial commitment is going to be like as well.
Well, that speech yesterday, David, certainly was one for the books, depending upon however you think about that issue. Have we heard any feedback from any other members of the United Nations about that speech and maybe what it does mean for the United States role?
I think that a number of countries reacted to its length and what the president said. I think that it's kind of a variation on a theme that we've heard from the president, certainly during the first term, about his outlook on the world. And there were a couple of elements there that were really kind of direct criticisms of work that the UN does and kind of prides itself on doing. So I think of migration policy in particular. And the president wasn't just critical of the fact that there has been this kind of influx of immigration to the U.S. and other Western nations. He really took the UN to task and faulted the UN for encouraging the kind of mass migration that we've seen. The other is climate, and this has been something that kind of the established liberal order has really touted as an important issue for all nations. The president really tried to dismantle that argument yesterday, rejected the science behind climate change, and I think that was something that, aside from the rhetoric, really astonished the audience in that hall yesterday, how directly he took that on and how much he called into question the work that these nations have done on climate and the investments they've made in it as well.
Calling into question the UN and its role and its responsibility was a big theme of yesterday's speech. I mean, he basically called the institution irrelevant and said they spent a lot of time talking but not a lot of time doing things. Is there any other critic out there that's saying that in a similar way as the U.S.?
I think that there's a general sense of frustration among many nations that when you look at the Security Council in particular, so that's kind of at the heart of the UN, this body of nations that has a lot of power, yes, but also has this very powerful veto-proof veto that they can use to kind of stall things in that body. There's frustration at what that's meant for how glacially things have gone there. So you look at the major conflicts around the world, Ukraine, certainly what's happening in Gaza. You have Russia on that body. You have the U.S. These are nations that are able to kind of wield that. China as well, and it really slows things down. So you saw him leaning into something that I think has been a kind of salient and longstanding criticism that's been levied at the UN. That being, there's a lot of talk, there's no action. The president said that explicitly yesterday. He made light of the fact the escalator didn't work when he was on it. Made light of the fact that teleprompter didn't work, but also just said, the primary tool that the UN has at its disposal is to send letters or use forceful language.
Although, Paul, there was an investigation apparently, or they're looking into the escalator and why it wasn't working for the president.
Yeah, and there was some speculation among the president's supporters that maybe this was an inside job to make him look bad, but the UN, through its spokesperson, said, in fact, the president had somebody on his team who was filming the president as he went up the escalator and perhaps triggered some safety mechanism by doing that, which caused it to stall.
Okay. We spoke to some of the folks here today at this conference, whether they're approaching it from the perspective of geopolitics or from climate change. And the message that we're getting is, the world's moving forward and on some of these issues, climate change, just for example. And if the U.S. wants to be a part of it, great. If not, that's fine as well. They will figure it out. Is that kind of what you're hearing as well?
This is a fascinating theme. So earlier in the week, I heard Mark Carney, the Prime Minister of Canada, speak at the Council on Foreign Relations, and that was very much his message. First of all, he said he liked the way things were. Canada benefited from the old international order. But in light of the fact that the U.S. is not playing the role that it once was, Canada and other nations have to move on. They have to look for other alliances, political alliances, economic alliances, trade alliances. So you see Canada doing that. You see other nations doing that as well. And he said something that I found really fascinating, which was this isn't a transition moment. It's a really kind of shocking moment when things have moved on, but they see it as a break. So they're not waiting around for the U.S. to do more. And on the issue of climate in particular, he brought up China and said if you look at sort of the leadership of China, there are scientists in that administration. There are folks who do believe in climate change and see it as a very important business opportunity. I think now nations like Canada are taking another look at China in a way that they weren't before, as a way that they can invest and do more when it comes to climate especially.
Before we let you go, I got to ask you about Argentina, because the president met with Milei yesterday, and Secretary Scott Bessent, Treasury Secretary Scott Bessent, is making headlines as well about what kind of role the U.S. might play in propping up the Argentinian economy.
This has been a fascinating story over the course of the week. So Scott Bessent on Monday tweeted a series of posts on X saying that the U.S. had all options on the table to help support Argentina's economy at a time when it's really floundering, having a lot of market issues as well. So today, suggesting there could be this swap line that's opened up, that the U.S. would be in position to buy dollar-denominated debt. I think it begs the question, why is the U.S. doing this now? Milei is having a lot of political problems at this moment. But you kind of look at the history that Scott Bessent in the private sector had doing investments in Argentina. There's an affinity for Argentina. There's experience with Argentina as well, and you see that kind of at a larger scale with President Trump and President Milei as well. So I think that it's something that bears watching going forward here. But of course, you know the history well. I think the IMF has bailed out Argentina 23 times in the last many days. We've lost count. So from that perspective, it's strange to see the administration having sort of an eagerness to do this, recognizing the fact that time and time again, Argentina has not been good about paying back that debt.
And just down in that part of the world, Brazil, President Trump did, I guess, on the sidelines, touch base with Mr. Lula yesterday from Brazil.
He mentioned that in the speech, that after a very fiery speech by Mr. Lula, one which he took President Trump to task, they spoke for about, I think, 39 seconds, the president said, but they've agreed to meet next week. And I think that you bring this up, and it's a really important point. Scott Bessent stressed the importance of that relationship between the U.S. and Argentina. You look at the relationship between the U.S. and Brazil, it's much larger. The trade relationship is much larger still. So you would think that this administration want to do more to kind of keep that alive and foster it.
That was the first face-to-face meeting between Lula and Trump as well. They'd never actually talked in person before.
Yeah, and there it was in the UN.
And two big trading partners from the same hemisphere. So
Yeah.
interesting, very good. People get together here in New York during the United Nations Week, if nothing else. David Gurr, thank you so much. We appreciate that. David Gurr, he's a correspondent for Bloomberg and host of the Big Take podcast, which is a great podcast. Highly recommend that. So Scarlett and I, we are live from the Bloomberg Global Forum here in the Plaza Hotel. A lot of memories for me here at the Plaza Hotel. Lots of big conferences.
Wasn't there some fictional character who used to wander around this hotel?
Well, Eloise.
Yes.
Yes. So there you go. So and we still see some paintings of her around.
Yeah,
So
I'll
it's
have to go look for that.
Still very present. So we got some red and green on the screen here. Not much happening. We'll be right back. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. And we're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the major stock averages lower to little change. They've kind of been bouncing between gains and losses. S&P 500, 3 points lower, 66.53 on the index. And the Dow Jones Industrial Average right now is down 24 points, The NASDAQ 100 22 points lower, down about 0.1%. Among the standouts, Alibaba shares. These are the ADRs surging to their highest in almost 4 years. They've revealed plans to ramp up their AI spending past an original $50 billion target. Oracle looking to borrow $15 billion from the bond market. The software maker ramping up its spending to meet the needs of the AI boom. The tech giant has nearly doubled in value this year. Oracle is trying to fulfill the massive cloud infrastructure deals with some of its customers like OpenAI and Meta platforms. Now here's one that really pops out on the screen. This is Unicure shares. The ticker symbol here, QURE, surging. Right now they're up close to 200%. This is the gene therapy developer that said a trial of its experimental treatment for patients with Huntington's disease has met its primary endpoint. Well, we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that is your Bloomberg Business Flash. Now back to Scarlett and Paul.
All right, thank you so much, John Tucker, at our Interactive Broker Studio at Bloomberg headquarters in New York. And of course, Paul and I are live at the Bloomberg Global Forum, taking place alongside the United Nations General Assembly here in New York. We will bring in our guests in just a moment. But Paul, I wanted to point your attention to what's been going on in Hong Kong.
I know. Wow.
Super Typhoon Regasa descending on the city, all the bankers and traders, because now the markets are open even in the event of a big storm, had to hunker down at home and trade from home, kind of reminiscent of COVID, or book hotels near the office and set up a whole trading hub there. It was a bit of a mess. The market did rise, though. The Hang Seng Index gained about 1.4% on the day.
Very good. I mean, I guess we've all gotten somewhat used to this from the pandemic, and that was one of those businesses. I said, there's no way people are going to be able to trade from home and conduct capital markets activity flawlessly.
Right.
It was amazing.
For months.
Months. And extremely profitably, too.
Yeah.
Remember the money the banks were making back then? It's just extraordinary how technology is allowed.
Which is why the Hong Kong exchanges say, we don't need to close the market down when there's a typhoon. We can continue doing everything the way that we did it through the
very cool
pandemic.
People adapt, I guess that's kind of what we learned. And we're pretty
Technology enables us to adapt.
Yes, exactly right. All right, we are live from the Bloomberg Global Forum here at the Plaza Hotel in New York City. It's taking place alongside the United Nations General Assembly. Scarlett Fu and Paul Sweeney with you. We got a lot of really interesting guests throughout the morning talking about what this United Nations means and the global geopolitics of it and how it affects investment decisions, investment opportunities. Our next guest is certainly one of those folks. John Johnson, Chief Executive Officer of PKA. PKA is one of Denmark's leading pension fund managers, $66 billion in assets under management. John, thanks so much for joining us here. I know you guys have a focus on climate change and investing in businesses that will be impacted by climate change. What did you make of President Trump's speech yesterday in front of the United Nations General Assembly, where he basically called climate change a hoax? What does that mean to people like you who are deeply involved in investing in some of these issues?
So from my point of view, my world is a lot more simple because I have a fiduciary responsibility for my members. And my members believe that the climate change is on.
Okay.
And we have to deal with that. That makes my world easy. I have to find a way to balance, returns, and of course also dealing with the climate change.
The EU climate commissioner basically called the Trump administration's actions or lack of action on climate as checking out. What are you seeing in the private sector? That may be the case when it comes to the U.S. government's involvement and their backing of projects like this, but what do you see in the private sector?
In the private sector, I see it's so much on still. We invest a lot here also in the U.S. The projects are different now from big projects to more community-scale projects. So, I mean, it's good business to put up a solar farm somewhere, attach battery storage to it. It's still a good business. So we see that in Texas, California, and so on. So I think we have to distinguish between what's happening on a federal level and what's happening in the different states.
Where are the best opportunities that you're seeing these days in renewable energy or the energy transition broadly defined?
I think it's the more mature elements. So it will be solar, onshore wind, and so on. Is the things that's still on. And then, of course, being a Dane and a part of the Europe, we will see a lot of big projects in Europe, I think, also offshore wind farms and so on. And we will definitely be an investor and player in that.
I mean, there's such a clear contrast between how the Scandinavians, how the Europeans regard climate and climate finance, climate investing versus what the U.S. is doing right now. From where you sit, does that create more opportunities for you?
I think I must agree that the world is more complex now. Geopolitics are very different. Multilateral, unity and sticking together is so different. So you have to adopt in a way that you have to find your way through what to do in the U.S., in Europe, and in other places of the world.
So it's more work.
It's more work. It's more work. So we partner up with partners that will help us, do investments in the U.S. or in Europe. And they are very different partners, and they do very different stuff.
ESG, environmental, social governance.
What's that, Paul?
Yes, it is. It was a very big investment topic over the last 10, 15 years. In fact, Bloomberg Intelligence has hired many analysts to cover the ESG aspect of global investing. It has really fallen out of favor here in the States. Talk to us about the rest of the world and how the rest of the world, from an investment perspective, looks at ESG.
I think that if I look to Europe, it's definitely still on. So it's a big part of what we do. So we evaluate on, environmental, social, governance, everything, all the investments we do. And we try to find our way through also to engage with those companies that need to transition a little bit. And eventually we can actually also divest them if we don't think they do it correctly. So ESG is very much on in Europe, and I think that will continue. But we have more than half of our investments are in the U.S. due to the market size, right? So we are.
So what are you finding from the company's perspective? We know how the president in this administration feels. How do the companies feel? How do the boardrooms feel? What are you seeing?
I think we must admit that right now ESG has gone down a little bit. But if you look to European companies or European presence, they are still on because it's something that is important to the European Commission and it is important to the local governments in Europe. But definitely it's changing a little bit.
The criticism against ESG is that there's no standard for it, that people can kind of make up their own rules and make up their own benchmarks. And now that the U.S. has pulled away from it completely, do you find that Europe, the rest of the world, is moving forward with creating standards, with creating unified standards for ESG so that everyone's on the same page?
Actually not. I don't think that the rest of the world are defining, one global standard. I think we have to deal with that. You have standards in Europe. You have now CSRD and other standards are, pulled back a little bit. And then we have other standards in other parts of the world. And that's just, adding complexity and more work for me. But
so just as messy as it's always been?
Just as messy as it's always been.
So what is this? I mean, Bloomberg is a data company. And on the Bloomberg terminal, we have lots of ESG data. It's a component of the FA tab, which is the financial analysis tab. So in addition to getting income statement data, balance sheet data, cash flow statement data, there's a tab for ESG data. Bloomberg's certainly working to, I guess, improve the quality and consistency of the data. What else has to happen, do you think?
I think that's very important that we have the, like Bloomberg, that you continue doing that because we use those data when we do our investments and when we evaluate what we invest in. We are largely, on listed equities, we are a passive investor, but still we want to exclude, companies that are really not in line with what you could call sensible ESG standards.
What do you see overall when you look at the investment landscape as we, wind down 2025? The tariffs were a big deal in April. Things have calmed down, and people just seem to have gotten used to the uncertainty and the moving goalposts. But beyond that, do you see that there's more of a willingness to put money to work because everyone has just kind of come to grips with the fact that there's just going to be uncertainty?
I think uncertainty is risk, and risk is cost, and so it really does mean something. And if you look to PKA and how we balance our investments, we believe that Europe is changing, and the German debt break is off, and now a lot of spending is going to come, and also the building defense in Europe. So we have actually turned, the wheel just a little bit from the U.S. to the Europe because we think that Europe is potentially the new growth.
Can you put some numbers on that?
It's just a few percentage, but
How about technology in Europe? We haven't, obviously that has not been an area for investment opportunities. There's a handful of companies, SAP, semiconductors and so on. But what has to change for technology to really grow and flourish in Europe, do you think?
I was in Silicon Valley in February, and it's fantastic. I mean, from an investor perspective, and the capital market there is just fantastic. It's so hard to beat for Europe.
Yep.
What we need is some sort of one capital market in Europe, and that's a big job for 27 nations to agree on that. I think that's something that has to change if we should build it. If you look to many of the tech companies in the U.S., many of the ideas were founded by Europeans. I mean, so we just need to keep those companies...
That talent at home.
At home, somehow.
We need a regulatory regime that supports technology.
Exactly. I agree. Can you help me?
Yeah, I don't know. It's
That's a big ask. I mean, how do you do that, at a grassroots level? You mentioned about keeping talent at home, but what can governments and institutions do to really encourage that, especially now that you've got the U.S. government imposing $100,000 fees on H-1B visas? There's an opportunity here.
There's definitely an opportunity, and we are the largest private equity and venture investor in Denmark. And what we see is that we are trying to focus more on European venture and European private equity. So we need the managers that can pick the right companies, and then we can supply the capital. And I'm sure this is a long process. This is going to be maybe 5-10 years before it works. And then eventually, and we do have some European tech companies like Mistral, AI company in France and so on. So let's see. I hope that Europe can keep up.
John, thank you so much. Really appreciate it. Spending some time with us. John Johnson, he's the Chief Executive Officer of PKA, one of the largest pension funds in Denmark. So $66 billion in assets under management. But again, one of the great, I think, hallmarks of the U.S. economy over the last 50, 60 years has been the technology sector. And the light touch that the U.S. government has taken to the tech space from a regulatory perspective. And, now you can call into question whether that's created some companies that are too big, whether it's a monopoly or Amazon or something like that. But that is one of the pillars of the growth of technology in the United States.
Yeah, the tech sector as an investment group in the European stock market almost doesn't exist.
Yep.
You can invest in financials, you can invest in energy companies, but not really tech.
No, and that's reflected in their valuation, much lower than the U.S., and in their performance, generally, historically, over time, less than that of the U.S. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, after the rally that drove stocks to all-time highs, the major averagers struggling for direction today. Micron Technology, which has almost doubled this year, lower despite an upbeat forecast. Micron shares right now down 2.6%. Investors were looking for more. And Oracle seeking to borrow as much as $15 billion from the bond market today. Alibaba unveiling plans to ramp up AI spending past an original $50 billion plus target. So joining some of the other tech leaders pledging ever greater sums for AI. Alibaba, these are the ADRs, up right now 9%. Meantime, Barbara Reinhardt of Voya Investment says, you know, the backdrop for investors does look positive going forward.
Once you get to the beginning of next year, you got the fiscal stimulus boost from the big, beautiful bill. You'll have the depreciation write down for companies. So you're going to have a much bigger fiscal stimulus push once you start to get to the first quarter of 2026.
And new home sales in the U.S. surging in August. Sales of single-family homes increasing to 20.5%. That's an 800,000 annualized rate. A lot of builders reported cutting prices to try to beef up demand. Meantime, the Associated Press says hundreds of federal employees who lost their jobs in Elon Musk's Doge cost-cutting blitz are now being asked to return to work by the General Services Administration. Those who accept have to report by October 6th after essentially getting a 7-month paid vacation. The S&P 500 down 9. Dow Jones Industrial Average down 54. The NASDAQ Composite Index is down right now 39 points. So we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, John Tucker. We are live here at the Bloomberg Global Forum. Paul Sweeney and Scarlett Fu. This event takes place alongside the United Nations General Assembly here in New York. We're bringing together heads of state and business leaders to address the challenges and opportunities in 2025. And our next guest is the chair of IOSCO. It's a preeminent global standard-setting body for securities regulation. Jean-Paul Servais is the chair. And Jean-Paul, I don't know if I did your organization justice by describing it that way. You kind of compared it to a United Nations of securities regulator, which I really like, given that it's United Nations Week.
That's exactly, I would say, the case, except I think that we decide faster, if I may say. Okay. But that's right to say that it's a consensus-based organization, so we need everyone. And that's my job, I would say, to be agile and to find what we're used to call in the nice language Belgium compromise, because I came from Belgium. And the objective is to see how we can reach convergence, because I have the pleasure to work with 130 jurisdictions. 130 jurisdictions, which means, for instance, for the US, of course, the well-known famous US SEC and the famous US CFTC. And it means that altogether we are in charge in various capacity of the supervision of 95% of all the financial market. So what does it mean to have a discussion at IOSCO? It means to have the capacity to deal with global risk, challenges, opportunities for financial markets, for investors. And that's really, I would say, the place to be for that. And I have to say, especially the last year, because we have been able to reach a lot of, I would say, consensus for many important decisions. And that's my job to do that, I would say.
What are some of the key issues that you guys are facing on a global scale as it relates to regulation of markets?
I would say two things. First, cooperation, and also to see, I would say, if we need standards to define, to have good and poor practices, and to see also if there are new risk opportunities, which could be a real problem at global level in order to avoid to have problem about level playing field. Cooperation. I am sure, Paul, that you know Interpol. Okay, Interpol, famous
Yes.
organization. The best, I would say, a channel for information about blockchain. Do you know who is ranked number 2?
Who?
IOSCO.
Ah.
Because when we start, I would say, with our well-known MMOU, multi-MMOU, it means capacity to issue information about possible aspects related to cross-border market abuse, insider dating, and other problems related to an infringement, a possible infringement to legislation. At the time, it was 20 years ago, I was already there, but not as chair, as member, I would say. We exchange 56 times a year information. No? This year, 6,000.
Wow.
So if you are not too bad in mathematics, which you can expect from a financial cup, it means more than 160 times more information.
Incredible.
So it means that global markets are positive, I would say, from, I would say, the capacity to attract capital from different jurisdictions, and of course US markets are very attractive for sure, but also the capacity to exchange information for possible infringement. It's about the trust that people must have in our capacity to enforce as supervised. The second one is to exchange information about the trends, I would say. And there are indeed, as you asked me the question a few minutes ago, Paul, there are some new trends, I would say. Some people and more people are expecting a tokenized world, which could mean, I would say, 24 hours in a day trading, 7 days. What does it mean for us? Okay. Do you know, for instance, as well, that in the EU, I would say, we see a shift, I would say, in how and when trading happens on stock market. It means, for instance, that for the time being, this year in the EU, 29% of all, I would say, the trading happens some minutes before the close of the market every day.
The final minutes.
The final minutes, which is, I would say, not a surprise for people specialized like you, but it's more and more the case. So what does it mean about liquidity? That's what we have to deal. It's not only about standards, good practice, to say, okay, how do we supervise? What do we have to do, I would say. Second aspect, which is a good news for me, coming from the EU, I would say, John and Mary in the street are more and more investing on the stock exchange. For you in the US, with your famous retirement plan 401k, it's normal. I can tell you in other in other states, of course, it's not so much, but it's increasing. So it means that people have more trust in the capacity of stock market to attract capital, to invest in real economy. That's a good news, and that's we have to deal with that.
Jean-Paul, that trust in equities, we're starting to see that trust build in crypto. In fact, more trust in crypto and digital assets.
Yeah.
What does the speed of the U.S.'s regulatory agencies on crypto mean for IOSCO?
Yeah, very fast, which is a good news, because by definition, I would say crypto asset, it's a dynamic market. And when you have a dynamic market, regulators must be dynamic. And that's what we are doing with the support of Paul Atkins. I had the pleasure to welcome Paul for a very useful meeting 2 weeks ago in Brussels. He traveled a lot in Brussels, and he decided to go to Brussels. It was very useful because we know that the SEC and, of course, the CFTC are involved. There are many new developments in the US, a new executive order, a push for new legislation, new initiative taken by the DCT in order to define, I would say, what they mean about crypto products. We already had some initiative at IOSCO level. We endorsed 3 years ago a kind of toolkit for the sake of supervision of cross-border, I would say, crypto asset provider, which is something rather unique. You have, I would say, on the one hand, non-specialized investor, John and Mary Industry, and you have a very specialized, I would say, manager. So how to avoid, I would say, some market development problems is to ensure, because by definition it's a cross-border business opportunity, therefore we decide to launch a toolkit which is used by many jurisdictions, and not only jurisdiction, but also the IMF is now working with our toolkit in order to be used for cross-border inspection. So it means a win-win approach, I would say.
Jean-Paul, thank you so much for joining us. Really appreciate it. Jean-Paul Servet, he is the IOSCO chair, joining us live here in the Bloomberg Global Forum at the very nice Plaza Hotel in Midtown.
The historic Plaza Hotel.
Historic, absolutely. So we enjoy being here. We had having some great guests here this morning. Continue broadcasting later on as well. Looking at the markets, just not much happening out there. We'll call it a quiet. Tom Keene likes to call it quiescent. I'll go with that. A little bit of quiescent. We got the S&P down 16, the Dow down 88, and the NASDAQ down 79 points. We're going to have more coming up. This is Bloomberg.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we are live at the Bloomberg Global Forum taking place in Midtown Manhattan at the Plaza Hotel alongside the United Nations General Assembly in New York. Now, last night, Jimmy Kimmel returned to television a week after the show was suspended by ABC. The late night host said, quote, "It was never my intention to make light of the death of a young man." He did receive a warm reception from the audience. Kimmel made an impassioned case for free speech. He poked fun at President Donald Trump and the FCC chairman, Brendan Carr. He also said that pressuring affiliates to take his show off the air, quote, is not legal and, quote, is not American.
This show is not important. What is important is that we get to live in a country that allows us to have a show like this.
All right, that was Jimmy Kimmel last night on his return to TV. What does this mean for the ABC television network? What does it mean for the Walt Disney Company that owns ABC? Let's check in with Geetha Ranganathan. She's the media analyst at Bloomberg Intelligence. She's based down there in Princeton. Hey, Geetha, this late night, does it mean anything for the networks anymore? Do they make any money there?
They don't make a whole lot of money, Paul, not anymore. It used to be that, late night television would bring in a lot of ratings, would bring in a lot of ad dollars. That has really changed. We've seen linear TV kind of hemorrhage viewers now over so many years, and late night is no exception. So if you just kind of look at Jimmy Kimmel's show, for instance, it generates roughly about $50 million in ad revenue. Compare that to a few years ago when it used to generate close to about $150 million. So definitely ad revenue going down. Wow. And most of these late night shows are losing money, just given the programming budget for these shows. So not really a needle mover in a financial sense for Disney.
Okay, but in a cultural sense, it is, because these are shows that define the networks. And so thank you for putting numbers to that, because I think there's a lot of concern or skepticism from certain corners of American communities that question whether Stephen Colbert's show should have been canceled for financial reasons, as CBS asserts it was. Geetha, is ABC going to pay some kind of price for allowing Kimmel to go back on air? Because the president, for instance, alluded to making more money off the company for doing so.
Yeah, it's certainly possible. I mean, we've seen President Trump kind of go after, the broadcast networks, threaten to kind of revoke licenses. So he goes after anybody. He uses his power, the courts, to attack anybody who says anything unflattering about him. So that's, definitely possible. From a Disney perspective, though, you have to remember this is a very, very diversified company. So yes, ABC is definitely a very important asset. But again, if we put some numbers around this, Scarlett, it makes up only about, Disney itself generates about $90 to $100 billion in revenue every year. ABC is about $5 to $6 billion in revenue, so it's just about 5% for the company. So again, small potatoes in the context of the company's financials. But yes, you bring up a very important point about culture wars. Unfortunately, I think Disney is in a losing position whichever way, because they're either going to anger, the conservatives or the other end of the spectrum. So it's just tough.
Yeah.
Hey, Geetha, I noted that two of the big TV station groups out there, Sinclair Broadcast Group and Nexstar, they are still not airing Jimmy Kimmel. What's the latest there? Can they do that, or is there an affiliation agreement with the ABC network that says, no, you got to cover it, you got to carry it?
So the FCC does allow broadcast affiliate groups like Nexstar and Sinclair to preempt certain programming if it deems fit. So from a legal standpoint, yes, they are allowed to do that. Again, we're not sure of the exact contractual language between Disney or Nexstar or Sinclair. So again, not sure how long that's going to drag out. Disney is a very important partner for both Nexstar and Sinclair. But remember, there's much more here at stake than just Disney's affiliation agreement. Nexstar is in the midst of a $6.2 billion deal to acquire Tegna, which is another broadcaster. Oh, yeah. They do need the FCC's blessing, and so they're kind of trying to really please the FCC here, if you will, to kind of get a green light on that deal. Sinclair, again, a similar situation. There's a whole wave of broadcast consolidation that's supposed to happen, and they all want to be on the FCC's right side.
Very quickly, Geeta, in the days following Kimmel's suspension, a number of people canceled or threatened to cancel their Disney Plus streaming services. Do we have a sense that this might get kind of noisy when it comes to the earnings reports and the streaming numbers and subscriptions?
I mean, we've seen this kind of backlash before happen, in the case of certain programming and with Netflix, with other streaming services. Typically, we haven't really seen it reflected in the numbers, even though there's a lot of noise around it. So yes, maybe a little bit of up and down, but I don't think it'll have, again, any big needle-moving effect on the Disney Plus subscriber numbers.
All right, Geeta, while we got you here, I have to ask, do we have any news on succession to Bob Iger?
Not yet. Not yet, Paul. I mean, that's the biggest question always for Disney. He is supposed to retire by the end of 2026. There is a lot of rumblings that it might be somebody internal. We keep hearing about Dana Walden. Of course, nothing certain just yet.
All right. I just thought I'd ask. You never know.
It's like asking when Jamie Dimon's going to retire.
Yes, exactly. Exactly. That's
There's
exactly
no
right.
answer.
All right, Geeta, thank you so much. We appreciate that. Geeta Ranganathan, she covers all the media stocks for Bloomberg Intelligence. So that wraps it up for us here today.
I think we're done here today.
I think we're done here. We're at the Plaza Hotel, Bloomberg Global Forum. Lots of people here.
Yeah. As I mentioned, Hank Paulson on stage when I walked in.
Nice.
I can't wait to see who's on the stage when I walk out.
I just took a little walk. I saw Mike Bloomberg was there. So
well, there you go.
There you go. So it's
royalty all around.
All around. All right. So that wraps it up for Scarlett and myself. Balance of Power, that's coming up in just moments. And then Carol Massler will be here. Tim Stenovic, Bloomberg Business Week. That's coming up.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. At least 2 detainees were shot and killed, another wounded in an attack this morning at an ICE facility in Dallas. Authorities say the shooter, who fired from a nearby roof, died of a self-inflicted wound. The FBI's Joseph Rothrock.
Early evidence that we've seen from rounds that were found near the suspected shooter contain messages that are anti-ICE in nature.
Texas Senator Ted Cruz.
This needs to stop. Violence is wrong. Politically motivated violence is wrong.
CBS News Justice correspondent Scott McFarland.
There is significant concern that there are vulnerabilities at federal buildings that simply can't be patched over right now with the current manpower and with the amount of money that's given to federal security.
Ukraine's President Zelensky told the UN General Assembly this morning that action has to be taken to stop Russia now because Vladimir Putin wants to expand war in Europe.
The facts are simple. Stopping this war now, and with it, the global arms race is cheaper than building underground kindergartens or massive bunkers for critical infrastructure later.
In his UN speech, Iran's president blasted Israeli and U.S. attacks in June, saying they inflicted a grievous blow on international trust and prospects for peace in the region. Correspondent Jonathan Vigliotti has more on Jimmy Kimmel's first night back on TV after a suspension.
Greeted by chants and a lengthy standing ovation, it was a triumphant return for late-night host Jimmy Kimmel.
I'm happy to be here tonight with you.
An emotional Kimmel took the stage for the first time since his nearly week-long suspension following comments he made about the assassination of conservative activist Charlie Kirk.
That it was never my intention to make light of the murder of a young man.
On the Health Watch today, doctors are hailing a new gene therapy that's the first successful treatment for Huntington's disease.
Jack May Davis watched his father die from Huntington's disease and carries the gene himself, but a new gene therapy gives him hope.
It does make the future seem a little bit brighter.
Huntington's disease kills brain cells, and it's normally fatal within 2 decades. But researchers say a new gene therapy treatment slowed the illness in 75% of patients, infusing a new piece of DNA which turns neurons into a factory that permanently reduces a toxic protein in the brain. Allison Keyes, CBS News.
And checking Wall Street, right now the Dow Jones Industrial Average down 161 points. The S&P and NASDAQ are trading lower. This is CBS News. art sleuths have uncovered something that dates way back.
Researchers at Amsterdam's Rijksmuseum say they've solved a centuries-old mystery. They now believe a dog in the shadows of Rembrandt's 1642 masterpiece, The Night Watch, was inspired by a drawing by another artist or copied from an engraving by yet another, or the title page of a book. A quick look at all three proves they're almost identical. The museum's director says the celebrated painter had a huge print collection, studied his predecessors, and borrowed from them as well. The remaining mystery, exactly what kind of dog it is. Pedigrees didn't exist in the 17th century. Deborah Rodriguez, CBS News.
The bipartisan group planning the nation's 250th birthday celebrations has fired its Trump-appointed executive director for what's been called breaches of authority and trust. Ari Abergel called the allegations of misconduct malicious lies. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It must have been a good meeting. Welcome to the Wednesday edition as President Trump pulls an about-face on the war in Ukraine, saying that Kyiv is now in a position to win all of the territory back that it had lost to Russia following his meeting yesterday with President Zelensky. We're going to get the latest on this from Bloomberg's Michelle Jamrisco. She's with us here in the nation's capital. 1 week now to a possible government shutdown. It would be a week from today, and we're going to get a reality check from Terry Haynes coming up at Pangea Policy. As Jimmy Kimmel makes his big return to late-night TV, we'll play that to the panel. With us today, Bloomberg Politics contributor, our Democratic analyst, Jeannie Shanzano, alongside Republican strategist Maura Gillespie at Blue Stack Strategies. Mario Parker's along for the ride, and we'll have a lot more after we check Wall Street. Let's start with the markets right now. Charlie Pellet has the latest at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew, and happy Wednesday. We have got the Dow, the S&P, NASDAQ all very much in the red right now. Stocks keep showing signs of fatigue after that massive rally that had us at records. Right now, a retreat from those levels, down 0.4% on the S&P. We're down 29 now at 66.27. Right now, the Dow down 153, decline there of 0.3%. The NASDAQ Composite Index down 0.6%, and our Mag 7 Index lower by 0.4%. The 10-year 4.13%, with the 2-year 3.59%. Gold down $19 the ounce, down 0.5%, and West Texas Intermediate crude up 1.9%, 64.62 for a barrel of WTI. Keeping an eye on Alibaba shares, they are surging now by 8.7%. The ADRs, they're up after the company said it's going to spend more than a previous 3-year investment budget of AI on AI infrastructure, just as investors turn more positive on its push into the technology. Company also announcing a software partnership with NVIDIA. NVIDIA shares down today by 1.4%, but Alibaba up by just about 8.7%. Jimmy Kimmel back on Disney's ABC. Disney shares right now, they are trading higher, up now by just about 1.1%. We'll have a whole lot more on Jimmy Kimmel and Disney coming up in just a moment right here on Balance of Power. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, big day in New York, and we'll have a lot more from World Headquarters coming up here. Charlie Pellet watching Wall Street, and he'll have more in about 15 minutes as we track the Wednesday trade. Yes, you're halfway through the week. Thank you for being with us on the Wednesday edition of Balance of Power. You're on Bloomberg Radio, on the satellite radio, channel 121 at Sirius XM. And, of course, you can always watch the radio on TV. Find us on YouTube. Search Bloomberg Business News Live. And it's a good day to be on the stream today, also on Bloomberg Originals, because we've got a lot of programming coming from the Plaza and the Global Business Forum that Bloomberg is conducting in New York City. You can see all of our shows, pause them, back them up, including this one, live from Washington. It's good to have you along here. With me is Mario Parker, with us here, of course, at Bloomberg's Washington Bureau, spending the week with us here on hour one of Balance of Power. And Mario, we heard from Volodymyr Zelensky following the post on Truth Social last night. I'm not sure he could believe what he read any more than the rest of us.
One of the things that I appreciate about Zelensky is the candor that he has, right? One of the things, he as we say in Chicago, he keeps it real.
Yes, indeed.
And so when he was asked last night whether or not he was surprised, there was no way getting around it. He was quite surprised about President Trump's turnabout on his chances for winning this war against Russia.
Yeah, well, so Mario uses the term turnabout. I said about face. I think they're both pretty accurate here, right? I mean, based on the language that we've heard from Donald Trump on this front. He writes on Truth Social, I think Ukraine, with the support of the European Union, as opposed to the United States, is in a position to fight and win all of Ukraine back in its original form. With time, patience, the financial support of Europe, and in particular NATO, the original borders, he says, from where this war started is very much an option. He calls Russia a paper tiger, and then says Ukraine would be able to take back their country in its original form, and who knows, maybe even go further than that, exclamation point. Unclear what he meant by that. But indeed, President Zelensky asked on Fox last evening about this post. Here's what he said.
So we understand now that we are ready to finish this war as quick as possible. And he wants, and I want, and our people want. But he understands that Putin doesn't want, and he understands that he is not winning, but he says to everybody that he will win. And I see very... It was a little surprise for me. You're right. I was very positive signals from the side that Trump and America will be with us to the end of the war.
We get to spend some time with Michelle Jamrisco, who's reporting on this as Bloomberg White House and national security editor, and with us at the desk today in Washington. Michelle, it's great to see you. I'm not sure what to ask here other than who did President Trump speak to last? It was Volodymyr Zelensky.
Well, you're right, Joe, and that is one lesson that we've learned over the years from President Trump is just that. You know, who do you speak to last kind of dictates what his actions might be. But even more core to his sort of art of the deal and classic deal making is this idea that he wants to be unpredictable. He's obsessed with being unpredictable to gain leverage in these sorts of negotiations across the board. So in this particular case, I think we have to acknowledge that, even while forgiving the shock and irony of the situation and the reactions of people like President Zelensky, but everyone who's been watching this issue so closely, it was a 180, a turnabout, about face, completely from where he has been, where he was saying Ukraine is in a position to lose this war, you have to give in his attempts to bring the two together as the self-proclaimed president of peace. But now he's doing the opposite, and I think one of the key takeaways from that post is that he needs to, he feels he needs to kind of diminish Russia at this point. This is a leader, in Vladimir Putin has embarrassed Trump in some ways, has disappointed him, as he has said publicly. So now he's turning around and saying, look, your economy is in shambles, you're in no position to win this war. And shockingly, you know, Ukraine would have all the leverage here to gain territory even on the 2022 level. So it is very jarring. And at the same time, it is kind of classic Trump in what he's trying to do to kind of regain possession of this sort of negotiation between the two countries.
And Michelle, you make a great point. I mean, 6 weeks ago, the president was hosting Vladimir Putin in Alaska, American soil, right? I mean, how do the Europeans kind of view this as do they feel as though that Trump is trying to save face at this point? Are they seeing it as frustration, or are they seeing it as just some gamesmanship?
Yeah, and that was some other shocking news at the time, right? That Trump was kind of cozying up to Putin, as his critics would have said, while the White House was defending that he wants to listen to both sides and, you know, kind of try to bring these two countries back together, or at least resolve the war. Yeah, to your point, I mean, you saw what President Zelensky said. I think Europeans of all countries are kind of perplexed by the post yesterday and Trump's latest reaction to it. I think they've acknowledged that he is someone who's unpredictable and that they need to keep pushing their line to get the support they need. I think the two big questions coming out of yesterday, and especially Trump's meeting with Zelensky, are on the security guarantees and on the sanctions. So you have U.S. Pledging under Trump to continue forward with secondary sanctions as long as Europe takes the lead. And so this is so key to both that post and to what Trump has been saying over the 24 hours, the last 24 hours is, he is willing to continue providing support to NATO, continue backing them in what they want to do in the war on Ukraine. But he's not getting U.S. involved anymore. He doesn't want to directly supply, our own personnel, and he's not going to have the U.S. lead any effort in terms of military operations or anything
Well, that's very
else.
much worth pointing out. I mean, we've come a long way from you don't have the cards. We've come a long way from the Putin ride in the beast.
Right.
But it's not like we're talking about a new weapons package here in Washington, even if it could be passed. The president writes on Truth Social here, Putin and Russia are in big economic trouble, and this is the time for Ukraine to act. Does he mean militarily or something more broadly?
I think he's intentionally vague there, just as he's intentionally vague throughout these explanations. I think the other thing that, I was going to say, secondary to the secondary sanctions, the second thing that is still an open question is on the security guarantees. Europe has so badly, and Ukraine especially, has so badly wanted the U.S. assurance that they will provide, that U.S. will provide security guarantees once the war is over. And that has been a very sticky question and of course, a non-starter for Putin in those talks. So as to your specific, point about the economic implications and it's talking down the Russian economy, right. I mean, we'll have to see where that goes from there. But, certainly on the military side, Trump also de facto gave his blessing for NATO members to shoot down Russian aircraft in their airspace. So while also saying we're not going to do it ourselves, or at least, under certain circumstances we would provide support, but leaving that very vague to your point as well.
And Michelle, you make a good point. I mean, how much is Putin kind of testing the resilience of NATO or the U.S. commitment to NATO, right?
For sure. That's such a big risk, Mark. I mean, and we heard from other European leaders over the past 24 hours, talking about, the Russian airspace question or the Russian aircraft in their airspace question and what to do about it. You have, a very divisive NATO on this issue right now, and that's exactly what Russia has wanted, right? So I think the Germans have been, warning. This is, German Defense Minister Pistorius called it an escalation trap that Russia has set in terms of getting all these NATO countries fired up about being ready to go on the offensive if Russian aircraft invade their airspace. But then you have others on the other side. You have Poland, Latvia, Lithuania, Finland kind of in the middle on this, but all talking about, we have the right to do so. If this happens again, like it did in Poland and in Estonia, then we're going to shoot down these planes, and we should shoot down these planes. And then you have Trump saying, go for it. Good luck to you.
We ran that past the president of Latvia on the program yesterday. He was with us as that headline broke from the UN and didn't endorse the idea of shooting down Russian jets, but said we must give a show of force.
Yes.
And that could take on a lot of different forms, I suspect, in the weeks ahead. We've got about a minute left, Michelle. Do posts like these and this new mindset from President Trump encourage Putin to keep pushing that line? Should Poland be on guard?
I think we can expect from the Kremlin what we've heard in reaction to the post, more of the same, which is they're denying, of course, that these airspace incidents ever happened, or at least under the terms that the Europeans have said. So part of what the Germans are warning is that if this happens again, if NATO shoots down some Russian aircraft, then the Russians will have some leverage in saying, what happened here? Like, this didn't happen. You shot us down. This was innocent. Or, they'll tell a different reality. And in some ways, they might feel like they have the moral high ground to then point the finger at NATO and say, you're being on the offensive. What's going on? So it could play out in a very sticky way if we go forward in the way that some of the European leaders are talking about.
It's really remarkable stuff. Russia has a long history of playing with borders and international airspace. Our territory, as our pilots know, up and around Alaska. We've been doing this for a lot of years. Michelle Jamrisco, thank you so much as ever for your insights. As UNGA Week continues, the United Nations General Assembly with some important speeches today. The government shutdown next on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day right now on the S&P at 6630. We do have the S&P down 26, decline there of 0.4%. Stocks are resuming their decline as gains driven by renewed pledges of spending and artificial intelligence are fading. Right now, we've got the Dow down 126, down 0.3%. NASDAQ down 0.5%. The NASDAQ 100 index down 0.6%. And the Russell 2000 index of small cap shares down by 0.7%. 10-year at 4.14%, with a 2-year 3.59%. Gold retreating $21 the ounce, pulling back from yesterday's record, $37.42, now down 0.6%. And West Texas Intermediate crude oil up 2%, $64.70 for a barrel of WTI. Home builder shares are higher. New home sales in the U.S. unexpectedly surged over 20% in August to the fastest pace since early 2022, likely lifted by builders' rampant price cuts and sales incentives to motivate buyers in a jittery economy. Among home building names right now, D.R. Horton up 0.4%, Toll, the luxury home builder, up 1.1%, Lennar up 1.8%, Pulte Home up by 1.2%. Again, recapping, stocks lower, very close to session lows right now, with the S&P down 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Balance of Power continues. Once again, your hosts, Mario Parker and Joe Matthew.
I do appreciate it. Charlie Pellet, as ever. Charlie will have more in about 20 minutes here as we watch Wall Street covering politics all at once here in Washington. Thanks for joining us on Balance of Power on Bloomberg Radio and on YouTube. Search Bloomberg Business News Live, because you're going to want to see and listen to Terry Haynes when he joins us in a moment. Yes, with me in Washington is Mario Parker. And Mario, the Democratic leader in the House, is calling out another taco. Hakeem Jeffries on X, Trump always chickens out. He says Donald Trump just canceled a high-stakes meeting in the Oval Office with myself and Leader Schumer. Remembering, of course, as we told you yesterday, they were supposed to meet on Thursday. This was supposedly on the books.
Yes, absolutely. You're seeing the frustration here from Schumer and Jeffries now as well, invoking the taco jive that Trump hates.
Not sure that applies in this case, does it?
Not sure it applies in this case, but they want a meeting, right?
Yeah,
and then they know on the other side that Mike Johnson and John Thune are both working the president to not have a meeting with them, as to not undercut some of the leverage that they think that they have with against Democrats right now.
Yeah, well, he took it to Morning Joe. An open-collared Minority Leader Schumer. Here's what he said on MSNBC.
We know how bad it is. And we're asking something very simple, Joe, for the president to sit down and talk with us. You know, he's not the king. He can't just dictate what happened. He said he doesn't need Democrats. Well, then he doesn't know how to count, because there are 60 votes in this Senate that you need to pass this, and he's got 53.
Little background, remembering that Republicans in the House did pass the clean CR. It went to the Senate. It failed. There was another Democratic version that failed too. Now, senators are going to be back with 2 days to go. The trouble here is the House will not be back until after the government would be shut down. And by the way, that's a week from today. We could be talking to Terry Haynes 1 week from today as Russ Vought starts to decide what is essential and what is not. And he's with us right now. The founder of Pangea Policy. It takes an act of Congress to get him on this broadcast, because he's on every other broadcast on Bloomberg. But we got our hooks in Terry today. It's great to have you back, Terry Haynes, and good to see you. Are you in the camp that this is unavoidable at this point? You've seen this movie a lot of times before. Could somebody pull something out of the fire?
Joe, it's always a pleasure. And really, particularly, and Mario, good afternoon. Somebody might be able to pull something out of the fire, but let me say two things about where this is going. One is that it's in both parties' interest to have a performative shutdown. I think probably short. Schumer got a lot of grief the last time out for not taking Trump on more, and the base is demanding some sort of demonstration against bad orange man. So I think they probably get one. On Trump's side, not only is it kind of Republicans want what they want, number one. But number two, for markets, it's in Trump's and Republicans' interest to remind everybody just whose fault the debt and deficit are, or, pin that particular tail on the Democratic donkey. And so they'll try to do that. But the Schumer's rhetoric, I think, masks just how modest their ask is. The ask is pretty modest, and it has to do with the premium levels under Obamacare and putting them in this particular bill. Republicans have indicated they might be willing to compromise on that issue, but they don't want it in a temporary spending bill. So now all we're talking about really is, who's going to nod at who and say they won something. And, Democrats are kind of desperate to say they won anything. They pitched the whole Kimmel reinstatement as a win for them, even though they really didn't have anything to do with it. So, any kind of nod, they're going to say to people, well, you know what, we looked Bad Orange Man in the eye and, got him to do something on this. In reality, they're going to fight about, Republicans and Democrats are going to fight about spending for months to come. And it is not at all uncommon to have spending bills go on and on until, January, February, even March. The final thing I will say before I stop this filibuster is that the concerns about debt and deficit in the markets are real. They'll get stoked a little bit, but markets have now discovered tariffs are their friend, and tariff revenues specifically are their friend. So, even that gets mitigated a little bit. So I think we're in for a shutdown, but not a long one.
Thanks so much for joining us, Harry. Really appreciate it. And just to piggyback off of what you said, how much economic pain would there be if there's, say, a 4 or 5 day shutdown? Maybe if it extends even to this game of chicken, it extends for a couple of weeks. Is there a risk there for Republicans and the president that voters will be pretty angry about this at all from an economic aspect?
I think, Mario, from the economic aspect, two things. One is on the actual economics. What ends up happening is, it's well known that shutdowns are economically inefficient, just meaning it costs the government more to shut down in some cases than it does to keep it open. So there's that. Beyond that, though, I think this looks largely to markets and I think to the broader public, the usual kabuki theater that goes on around spending this time of year. Both parties are playing to their purist bases, so both sides will end up thinking and get, those purist bases will get fed the information that, they got particular wins one way or the other, and life will go on. And in this case, it'll totter on for, I think, probably weeks and months to come. What I would look at is the kind of the year-end traditional defense authorization and defense spending bills is kind of a trigger for a broader deal, but I don't think a final deal happens much before then.
Interesting. Well, we could have a couple of different outcomes here, it seems. Republicans, the line that we've been getting on this program, Terry, and you're very kind to watch and listen sometimes, is that, hey, number one, this is a Biden budget. We're only asking you to continue what was passed under the previous president. And also, a policy matter to be debated in December should have nothing to do with a funding emergency that we're dealing with in September. Do you have an ear on Republicans' messaging here? Does that matter to voters?
You're absolutely right about what they've said on the program, and those are the talking points. And does that matter to voters? I think not a lot. Voters tend to look at this kind of stuff in primary colors more than anything else. And it is, is the government spending more, or the government spending less? Are my priorities being dealt with? And what ends up happening in, shutdown or no, every single year is that what you end up with is a status quo on government spending. It adjusts upwards by inflation or even less than inflation, 1.5%, something like that. And you've got, this year you'll have more than the usual upticks in defense spending, but you're also going to have a situation where domestic spending remains largely intact and largely, the same number. So, both sides will fight to a draw as they always do.
It's interesting, Mario. We've talked so much about Russ Vought and whether this is in his playbook. There is at least a theory that the White House is hoping for this shutdown.
That was exactly the point I was looking to speak with Terry about in that point, Joe. Just the fact that what makes this shutdown a bit different than the ones we've seen before is this fight for impoundment that we've seen taking place with Congress, DOGE earlier this year, and we know that the calculation that Schumer made earlier this year, part of the reason that he didn't fight through was because he was worried about federal workers. Yes, right. He was worried about the president's ability to kind of impound funds, if you will, pick and choose what's essential for the government.
When the threat could actually be greater now. Do you buy into this theory, Terry?
In what sense? In the theory that Vought's interested in testing impoundment?
That Vought's, well, yes, but also has a playbook here. And if the government shuts down, the Trump administration is now in control of what is essential and what is not, and will use that power in a way that we've not seen before.
I think both of those are true. Frankly, they have things that they want to roll out and things that they want to test. And all I'll say is, I think the administration is absolutely wrong on the whole impoundment matter and the idea that the president can, essentially line item things out. I use that not in a strict legal sense, but kind of a general sense. The reason why is because the president's power under the Constitution is not just to negotiate with Congress about spending bills, but to actually veto the spending bills if he doesn't want them. I mean, that's the president's power. The president can say to Congress, look, I'm against the bill, and presidents do this all the time. I'm against the spending bill that you're putting in front of me or spending bills in front of me for these 5 or 10 reasons, and I'm going to veto it and send it back, and we're all going to negotiate and have a resolution or not. And, to come at this, to have the president sign something, I know this is not strictly the situation you asked me about, but to have the president sign spending bills of any kind and then pick and choose what it is that he's allowed to enforce or not is, I think, an untenable situation for them constitutionally.
And Terry, just looking ahead to next November, it's a little bit over a year out, of course, but does this factor into the midterms at all?
No. And, as far as the midterms go today, I think we don't know a damn thing, firstly. Secondly, on, and majorities, I always tell people majorities don't equal control. Those words, the word control tends to get slopped around a lot. But if you got a tiny majority in the House or the Senate, they're majorities, all right, as you can see today, but they're not control, as Leader Schumer points out. Republicans can't just do anything they want in the Senate with 53 seats. So, you got a situation here where even their tiny majorities flip over as they might. That doesn't equal control. Secondly, and lastly, this idea that Democrats have it all over Republicans these days is not true on the major issues, whether you look at the economy, immigration, or crime.
Yeah. Terry, it's great to have you back. We'll go back to Congress to see if Terry will return. From Pangea Policy, Terry Haynes, only here on Bloomberg.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. The U.S. is lowering tariffs on auto imports from the European Union to 15%, retroactive to August 1st, as part of the Framework Trade Agreement. The Dow, the S&P, NASDAQ are all declining right now. Stocks are resuming a decline as gains driven by renewed pledges of spending in AI are fading. Right now, the S&P down 21, 66.35 where we stand, down 0.3%. The Dow right now down 80. That is a drop of 0.2%, while NASDAQ is down 103. For NASDAQ, a decline of 0.5%. The 10-year at 4.13%, with the 2-year 3.59%. Spot gold down $25 the ounce, pulling back from a record 37.38, down 0.7%. West Texas Intermediate crude up 2.1%, 64.73 per barrel of WTI. You recall yesterday, Fed Chair Jay Powell would not commit to supporting another rate cut next month in his latest comments on central bank policy. He said both inflation and the labor market face risks. Now interviewed on Fox Business this morning, Treasury Secretary Scott Bessent said the Fed should not be waiting.
Clearly, the Federal Reserve has been too high for too long, and we're going into an easing cycle here. And I'm not sure why Chair Powell has backed up a bit here.
Treasury Secretary Scott Bessent, interviewed on Fox Business, also saying he has more interviews with Fed Chair candidates next week. He says one or two have surprised him, but he didn't name names. Copper prices are jumping the most in more than 5 months after Freeport-McMoRan declared a force majeure on contracted supplies from its Grasberg mine in Indonesia. There was a deadly accident there that killed 2 workers. Right now, we do have copper surging by 3.4%. Freeport-McMoRan plunging 13.4%, but other copper producers, other mining companies are rallying. ADRs of Glencore up now by 2.9%. Teck Resources up by 5.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. Once again, your hosts, Joe Matthew and Mario Parker.
All right, Charlie Pellet, we thank you as ever. With us live from World Headquarters in New York. Charlie will have more at the top of the hour, 1 p.m., when we begin the second hour of Balance of Power. Welcome our global television audience to the conversation with his eyes on Wall Street for us always. A lot of eyes were on late-night TV last evening, maybe more than usual, as Jimmy Kimmel made his return to the airwaves. Mario Parker, we didn't watch it live here in Washington because it wasn't on. There was no chance that President Trump was going to walk by a TV in the White House residence and see Jimmy Kimmel last evening. ABC's affiliate here, Channel 7, is owned by Sinclair, which is one of the 2 companies, the 2 station owners, that decided to not go the way of the network and keep Kimmel off the air. They've been putting up their own alternate news programming last week or so.
Yeah, absolutely. And I guess I would imagine I'm not the only American that wanted to tune in last night, but on the other side, was happy to get to bed at a decent
Well,
hour.
Luckily we can watch things back the next morning because I can't remember the last time I was up at 11:30 on a weeknight. Jimmy Kimmel Live, he was there, by the way. There were questions about whether Jimmy Kimmel would show up on Jimmy Kimmel Live. That wasn't a sleight of hand. He did show up. He did not apologize, but he said this.
And the truth is, I don't think what I have to say is going to make much of a difference. If you like me, you like me. If you don't, you don't. I have no illusions about changing anyone's mind. But I do want to make something clear because it's important to me as a human, and that is you understand that it was never my intention to make light of the murder of a young man. I don't.
Pretty remarkable to hear him get choked up at that point last evening. You can watch the monologue all over social media. It's pretty easy to find. And we wanted to spend some time with our panel on this. Jeannie Shanzano is with us, Bloomberg Politics contributor, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Of course, Jeannie is with us on most days and was with us surrounding the killing of Charlie Kirk and the suspension of Jimmy Kimmel. Also with us, as you can see on YouTube, is Republican strategist Maura Gillespie from Blue Stack Strategies. And Maura was with us the night that Charlie Kirk was shot dead. It was the late edition of Balance of Power, and I don't know, Maura, we were maybe an hour or 2 off the news, And we were all struck, and I heard from a lot of people in our audience about the way you spoke to that situation, that terrible tragedy that evening, Maura. And so I want to start with you here and just get a sense of where your head and your heart is now that Kimmel's back on the air. Did you see it last night? How did he do?
Yeah, thank you for bringing that up. You know, I heard from a lot of people as well from that interview and just how we talked about it and how we talk about one another and to one another. And I think what last night, I didn't watch it in real time like the two of you. I was already in bed. But I think that how it reminded us that he's also a human and we are human beings. And when we stop looking at each other as human beings, that's where things go awry. And I think that that's one of the biggest takeaways is that he had real emotion. And I'm sure he couldn't fathom that people thought he was really being that cavalier about something so gruesome and horrific. And I really appreciated that he brought up what Erica Kirk said during Sunday night's memorial service, where she forgave the person who shot and killed her husband and encouraged his viewers to be more like that and to take a little bit more of a step back from the vitriol and to remember humanity and human beings and just that grace that we have really, really lost in a lot of the conversations we have behind screens.
Thank you, Maura, for that. Just trying to get a sense, one of the issues, obviously, that has sprouted out of this is just the issue of free speech as well. Where do you kind of see that conversation going, especially now that Kimmel has returned to air, at least on ABC, notwithstanding some of the affiliates?
Right, and I think that what happened with the president's True Social post and talking about Jimmy Kimmel, one, I find that to be just terribly embarrassing for us as a country. But if it's true that he lost all of those viewers and that his ratings are terrible, then why does the president care so much? And I think that ABC and Sinclair, they're making a business decision. But is it being impacted by the bully pulpit that the president is using? And that becomes a constitutional line that's being crossed. And again, the focus of this obsession about having a vendetta against people who say mean things about him. Listen, we understand that most of the mainstream media is liberal. Okay, well, your viewers probably aren't watching it. And why does he care so much about that instead of housing costs and grocery costs and things that I would hope that he would be more focused on, as opposed to his personal use of the Oval Office to target people who he feels have been unkind to him. It's just, it's a sad moment to watch that play out in the face of the grace and the forgiveness that we watched from Erica Kirk, then to see the president go like this. It's just, to me, it's a sad state of affairs for us.
Well, Kimmel did get into the matter of free speech in his monologue. Let's get a taste of that part of what he said.
I've had the opportunity to meet and spend time with comedians and talk show hosts from countries like Russia, countries in the Middle East, who tell me they would get thrown in prison for making fun of those in power, and worse than being thrown in prison. They know how lucky we are here. Our freedom to speak is what they admire most about this country.
Jeannie, let's bring you in here. Of course, we heard from the FCC chair, Brendan Carr, recently, who made the statement, we can do this the hard way or the easy way, which precipitated Kimmel from coming off the air. I think it was Chris Christie on Sunday morning television who described that as something you might hear from a couple of guys on a wiretap in Hoboken. But also last evening with Kimmel showed up Robert De Niro, and he's doing the whole sort of gangster routine, and said, sticks and stones can break your bones. Kimmel prodded him to finish the statement, that words can never hurt you. He said, they can hurt you now. Is he right?
Well, just a half hour or an hour before Kimmel came on last night, President Trump was on Truth Social, and he once again said, let's see if I go after ABC again. I can't believe they brought him back. And so I don't think this was over. This is over. It was a good moment for the First Amendment last night, but with the president egging on the FCC chair and threatening more lawsuits, as he's wont to do, it doesn't seem like this thing is over. And I think that that is very concerning for everybody. And I do applaud Ted Cruz. I applaud Tulsi Gabbard, Mitch McConnell, and Rand Paul, some of the Republicans who stood up in defense of the First Amendment.
And Jenny, just through a purely political lens here, Adam Schiff and a number of senators this morning sent a letter to FCC's CAR demanding answers about his involvement in this whole incident. Is this something that galvanizes voters? Does this draw attention to constitutional norms and laws as well? Do you see this playing out? Do you see this galvanizing Democrats? Do you see this galvanizing even independents?
Yeah, I think it galvanizes Democrats, particularly in the base. But I also think this is a fight the president wants to have. He knows exactly what he's doing. He wants to distract attention from the real issues that we should be talking about. A government shutting down in 6 days, an economy that is not doing well, costs that are up, healthcare costs that threaten to go up even further. He doesn't want to talk about that. Instead, he wants to fight with the media because it is a boogeyman that he likes to take on, and it galvanizes his base. So as much as I think this can galvanize both of the bases, I don't think it's what Democrats or Republicans, quite frankly, should be focusing on. We should be talking about issues that people care about because it concerns their lives. And that is something the president is not wanting to do right now.
Curious your thoughts on the president's post here, Maura. On Truth Social, I think this is actually even before Kimmel got on the air. I can't believe ABC fake news gave Kimmel his job back, he says. The White House was told by ABC that his show was canceled. And I'll stop right there because we had never heard that. This was supposed to be an indefinite suspension. Something he says happened between then and now because his audience is gone and his talent was never there. But when you skip down here, he says, I think we're going to test ABC out on this. Jeannie was referring to it. Let's see how we do, he says. Last time I went after them, they gave me $16 million. This one sounds even more lucrative. What's the president talking about here? Is there another lawsuit coming? Do you see this as intimidation? What do we call it?
Well, and that's where I'm wondering, is this, crossing a constitutional line about using his platform, his megaphone, the power of the Oval Office for personal use, for personal vendettas? And again, to the point, talking about grocery costs and housing costs and just the cost of living here in this country, how is his attacks and his obsession really with people in the media, especially these late night hosts, his obsession with getting after them and going after them and making money off of his attacks, how is that helping any one of us? How is that helping his supporters? Because, again, as I mentioned before, I don't think that his supporters, his strongholds of MAGA, supporters are watching Jimmy Kimmel. So what does this impact our daily lives? It doesn't, and it's really just an ego trip. And unfortunately, we're watching that watching the President of the United States use his time, his capital, and the power of the presidency to go after people. And I find that to be, a problem, not only for just politically speaking, but for constitutionally speaking, it's a problem.
Maura, how surprised? There have been a handful of Republicans who have spoken out about this. Again, we mentioned Ted Cruz, for example. But how surprising is the 180 turn on this subject in particular with free speech, just given the president's speech at his inauguration earlier this year, just a conservative stance on free speech. How surprising is it that there hasn't been just this groundswell of voices to speak out from that side as well?
I think anytime that the president does something that is, pretty, I'd say, objectively egregious, you do have a handful of people who say, that's problematic, but not enough that it makes, because again, we're in election cycle almost every other year. House members especially, they are constantly looking towards their reelection with a 2-year term. And so how much they want to push against Trump. And I remember from even during his first term, if we responded and reacted to every single thing that the president said, did, tweeted, posted, whatever it may be, that was a full-time job that no one could achieve and could keep up with. It was just really hard to keep up with it. So they have to choose when they're going to stick their head out and say, that's a problem. I see that being, not constitutional, or I see it being a problem long-term, big picture. When the tides have turned, and we may not appreciate what you're saying now because it may come back to bite us in the, bite us. So I think that that's part of the problem here is that members are cautious because they have to think about re-election, but also it's just too much to combat any given day.
And Jeannie, just going back to you, I mean, how does Chuck Schumer, is he running a risk here? He and Schiff and other Democrats, are they running a risk here of just staying on this issue?
From Washington, D.C., this is Balance of Power with Joe Matthew.
It was the about face heard around the world. Welcome to the Wednesday edition as President Trump changes his tune on the war in Ukraine, saying that Kyiv is now in position to retake the territories it has lost to Russia. And maybe more. Following President Trump's meeting with Volodymyr Zelensky, we're going to get the latest on this from Bloomberg national security expert Nick Wadhams, with insights today from Anya Manuel at Aspen Strategy Group, an important conversation you won't want to miss. with analysis from our political panel. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us, alongside Republican strategist Maura Gillespie from Blue Stack Strategies. And we'll have it all after a look at Wall Street. Let's set the baseline right now with Charlie Pellet at World Headquarters in New York. His view on the markets. Charlie,
thank you very much, Joe Matthew. That baseline lower right now with the Dow, the S&P, NASDAQ, all in the red. We're very close to session lows on the S&P 500 index. However, the stock market is holding near its record, underpinned by the belief that the economy is not falling off a cliff and growth will be bolstered by improving corporate profits, the AI boom, and rate reduction. So here's where we stand. S&P today down 24, 66.32, down by about 0.4%. We've got the Dow Industrials down 135 on the Dow, a decline right now of just about 0.3%, while NASDAQ is down 108, but the composite index a drop of 0.5%. Our Mag 7 index lower, little change, down 0.1%. 10-year currently yielding 4.13%, with the 2-year 3.59%. Gold now down $28 the ounce, down 0.7%. West Texas Intermediate crude rallying 2.3%, 64.83 a barrel, and Bitcoin up 1.5%, 113,716 on Bitcoin. Alibaba ADRs are soaring after the company said it will spend more than a previous 3-year investment budget on AI infrastructure, just as investors turn more positive on its push in the technology. Companies also announced a partnership with NVIDIA. Alibaba ADRs are up 8.5%. NVIDIA shares, though, part of a tech decline today. Right now, we've got NVIDIA down by 1.1%. Again, recapping here, stocks are moving lower. S&P down by about 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Appreciate that, Charlie. We'll have more from Charlie Pellet on Wall Street in about 20 minutes' time here on Balance of Power. Thank you for being with us on the Wednesday edition here on Bloomberg TV and radio. You can also find us on YouTube. Search Bloomberg Business News Live. As Washington reels and many world capitals reel from the most recent post from President Trump regarding the war in Ukraine. He's back in Washington now, of course, was at UNGA yesterday, the United Nations General Assembly. We brought you his address live here on Bloomberg. That was followed by a series of bilateral meetings, including one with Volodymyr Zelensky, talking, of course, about the war in Ukraine, just weeks after President Trump hosted Vladimir Putin at a summit in Alaska with hopes of finding some path to peace. That, of course, has not emerged. Vladimir Putin has continued to attack civilian neighborhoods and increase the level of bombardment and drone attacks across the entire country of Ukraine. Following that meeting with Zelensky, President Trump posted again. It was before he headed home last evening to write, "I think Ukraine, with the support of the European Union, is in a position to fight and win all of Ukraine back in its original form." Going on to say, the original borders from where this war started, very much an option. He called Russia a paper tiger. Said later Ukraine will be able to take back their country in its original form, and who knows, maybe even go further than that. It is unclear exactly what he meant by certain elements of this post, but clearly a different tune, a different emotion from the president who also just a few months ago excoriated President Zelensky in the Oval Office, saying he didn't have the cards, no leverage. We've heard lines like "it takes two to tango." Zelensky was asked about all of this in an interview on Fox News, clearly surprised himself by what President Trump said. Let's listen.
So we understand now that we are ready to finish this war as quick as possible. And he wants, and I want, and our people want. But he understands that Putin doesn't want, and he understands that he is not winning, but he says to everybody that he will win. And I see very, it was a little surprise for me. You're right. I was very positive signals from the side that Trump and America will be with us to the end of the war.
Clearly surprised, as I'm guessing Nick Wadhams was as well. Bloomberg's national security team leader is in New York to cover the United Nations meetings and with us now on Bloomberg. Nick, it's great to have you from New York. You know the line out there. It all has to do with whomever President Trump talked to last. Is it as simple as that in this case, or did he have other conversations around the UN, maybe other phone calls recently that changed his mind, or maybe Vladimir Putin has simply worn out his welcome?
Well, I think it's probably a mixture of all of those. Certainly, he has been a lot more impatient with Putin. He came in thinking, Putin wanted to do a deal, and he thought he could have this thing wrapped up pretty quickly. Obviously, it has not turned out that way. I think the subtext, though, of that tweet in particular, or that social media post, is maybe a little more unsettling than folks may think. I mean, if you read to the end, he says, "I wish both countries well. Will continue to supply weapons. Good luck to all." I mean, so there is a theory of the case out there that essentially what he's doing is stepping away from this whole thing. So the U.S. is gonna send weapons to European countries to sell weapons to European countries, and they could then send them on to Ukraine. But he's not otherwise getting involved. And, so in some ways, when you look at this, you think, okay, maybe it's a change of heart, but at the same time, it also looks a little bit like a stepping back, which is definitely not what European countries and Ukraine would want.
Yeah, well, you're changing the way I think we're all looking at this as we speak, Nick. In any event, he writes, yeah, I wish both countries well. We'll continue to supply weapons to NATO for NATO to do what they want with them.
Right.
Good luck to all. And he signs it. Donald J. Trump, President of the United States of America. Was that his mic drop then?
Well, I mean, that's a great question because, it feels like we've had so many mic drops from the president. He's got a lot of mics to drop, I guess. I mean, the interesting thing here, and it's always a dangerous game to try to parse the president's words and social media posts because one suspects that these do not go through any sort of vetting process and maybe just reflect where his head is at that moment. But, for a long time, we were hearing essentially this administration from the president on down all say that Ukraine was going to have to make concessions on land. And it was coming out of that meeting with Vladimir Putin. The expectation at the time was that we were going to be on a path to some sort of concrete plan that would involve land swaps. Russia took land after the invasion, and it was likely that they were never going to give it up. Now, President Trump is essentially saying, yes, we think Ukraine can get back all of its land. So whether or not the U.S. is involved, clearly he heard something that makes him think Ukraine can be successful there. That's what we're really trying to figure out. What was said in that meeting with Zelensky, or what piece of information did the president get to think that that it's possible Ukraine could retake all its land? Of course, the big question for us is, does the president even remember that he said earlier that concessions might be necessary? And does he sort of acknowledge that seemed to be a policy that he was holding, or is he now just sort of shifting on to something else? It's just so confusing. Wow. It's really hard to make sense of what the president actually believes.
Yeah, well, I mean, that's why we're talking this out, because we're not going to figure that out definitively in this conversation. There's a whole other theory out there right now, Nick, that Vladimir Putin is steps ahead and is in fact trying to divide NATO by flying these incursions, fighter jets or drones, into NATO countries like Poland and Estonia, causing them to scramble jets. And the president yesterday said NATO should shoot down Russian jets that breach their airspace, which, by the way, would be a very new and escalatory policy here. The idea, though, that, for instance, Hungary may not agree with this, or some other NATO members, what will Turkey think of this? And Putin is well aware that he could add a whole new stress point to the NATO alliance with the help of Donald Trump saying things like this. Does that hit home for you?
Well, I think, it's wouldn't necessarily be four-dimensional chess to suggest that, Vladimir Putin is testing the boundaries of the NATO alliance and also testing its will to push back. So, yes, there is the idea that, Putin is sort of a master strategic thinker, but in a lot of ways, this feels pretty obvious. We've known for a long time that he's wanted to drive a wedge between the U.S. and other members of NATO and within Europe, members of the European community like Hungary, for example, that are a little more in his camp versus others. And this would be a good way to do it. I mean, Russian aircraft testing the boundaries both at NATO and in the U.S. I'm thinking up, where the U.S. and Russia border each other, Alaska and the Russian Far East, you've seen many times in the last many years where U.S. fighter jets have been deployed to keep an eye on Russian aircraft that drift a little close to the U.S. border. So I think it's safe to assume that any time you see this happen, it is not a mistake, especially when manned Russian aircraft are involved. Of course, should be said that Russia denies that that's what happens here. They say they were flying on a well-established corridor. But yes, I think there is that desire to cause that, to create that wedge between the U.S. and Europe. And then, you know, it also does just create confusion because you have Trump saying that, but, you know, he said that about shooting down jets hours after Marco Rubio, his Secretary of State, said, listen, no, we should not be shooting down these jets unless Russia actually attacks. So, again, you're seeing a lot of the confusion about what exactly U.S. policy is right now.
Always a fascinating conversation, if not a definitive one, with Nick Wadhams. Good luck with your coverage at the UN, Nick, and thank you, as always, for being with us. Just want to mention very quickly a red headline just crossed the terminal. It's not having to do with this, but in fact, Oracle launching an $18 billion investment-grade bond sale. Oracle shares, which have been on a tear lately, are down about 3.5% now, still holding above $300. As we consider the options moving forward here, and whether, in fact, President Trump is leaning into Ukraine or dropping the mic, I think the options we just established with Nick Wadhams. We wanted to spend some time with Anya Manuel, Aspen Strategy Group Executive Director, former U.S. diplomat. I remember having a really fascinating conversation last time you were on, Anya, and things have changed a bit with regard to the president's tune here, and I'm wondering if you take him at his word.
Good to be with you, Joe. Yes, I think this is a big turn in policy, and it's very welcome. And I think Vladimir Putin has finally worn out the patience of this president, which is a good thing and a long time coming. So I hope that now the U.S. backs this welcome statement by President Trump with action. If you look at what the Biden administration did, they gave over $66 billion in military and other assistance to Ukraine. The President Trump and his administration have not said no to that. Now NATO will pay for those arms. They're just starting to flow. I think $1 billion has been released, but that's obviously too little, too late. We need to do more faster to actually give the Ukrainians what they need to win back, maybe not all the territory, but even some of the territory to put themselves in a better negotiating position. Because as we've learned with Vladimir Putin, you don't get anywhere unless you get there from strength.
Well, that's right. And so I'm curious what type of strength the president is referring to here. Donald Trump writes, Putin and Russia are in big economic trouble, and this is the time for Ukraine to act. Is he talking about a military offensive or some sort of economic maneuver that we're not talking about?
Yeah, I can't speculate on what the president meant, but Russia is in big economic trouble. They have put their entire economy on a war footing, so that's artificially propping up GDP growth. I do think, even though it was a little ham-handed to just punish India, the idea of really trying to do our best to crack down on some of these Russian oil exports, to put on maybe some limited secondary sanctions. It's hard to get those to work perfectly, but the idea of putting more pressure on Putin is very welcome. And I also would say I really welcome the president's remarks about NATO airspace sovereignty. As you know, Putin sent a bunch of drones over into Poland. That was not an error, as you and Nick discussed. I think the Poles reacted right in exactly the right way. Denmark, it's a little less clear, and Putin does this perfectly. He always tests and tests and tests until somebody pushes back hard. So I'm glad we're pushing back.
Well, how far should we push back? President says you ought to shoot him down. You get MiG-31s in your airspace, you shoot them down. That's also a pretty good way to start a war, correct? The Russians are pretty good about implying different motives when they're caught in the act. Our fighter pilots for decades have been intercepting Russian Bear bombers and fighter jets in airspace over Alaska, for instance. Should we be shooting down Russian jets if they incur an Article 4 as opposed to 5 offensive here?
Look, I think you leave this to the NATO planners and strategists. Obviously, we stick to NATO Article 5, which means an attack on one is an attack on all. So far, what you've seen from the Russians is incursions via drones, not so much manned jets. So I think the idea that NATO is standing together, I thought the Europeans did really well this summer when you had Mark Rutte from NATO and a bunch of European leaders show up at the Oval Office to say, basically, we stand with you, America, we stand with you, Ukraine. And that's kind of the strong symbolism that Vladimir Putin needs to see.
We heard from Volodymyr Zelensky today at the UN. It was his chance to speak from the same speaker's rostrum that we saw Donald Trump in yesterday. He spoke to the veracity of institutions, and there's been a big conversation about that this week. Certainly, President Trump tried to engage in one yesterday as he chastised the UN for doing little more than writing strongly worded letters. So I want you to hear what President Zelensky had to say earlier today, and we'll have you respond. Let's listen.
Even during bloodshed, there isn't a single international institution that can truly stop it. That's how weak these institutions have become. What can Sudan or Somalia or Palestine or any other people living through war really expect from the UN or the global system?
If you're having a hard time hearing that on the radio, he was referring to Sudan, Somalia, or Palestine, any other people, he said, living through war, what they should really expect from the UN and the global system. Do we expect too much from this institution holding its General Assembly this week?
Yeah, I think international institutions are only as powerful and effective as its members allow them to be. And the United Nations is a collection of member states. And so if the most senior leaders of that on the Security Council disagree, obviously the UN is hampered in its effectiveness. But I would say, look, the US attacking the UN as being ineffective is not new. We also still foot a large part of the bill. And to echo what President Zelensky said, the UN does an enormous amount of good. They deploy 70,000 peacekeepers around the world. The World Food Program feeds 150 million people a year. The World Health Organization coordinates responses to big public health outbreaks. So there are a lot of things that the UN is doing, even if it may not be possible for that institution to solve the biggest wars unless its members permit it to do that.
Really something. I'm not sure where we're going here, Anya, but we'd love to stay in touch with you on this because this does feel like a bit of an inflection point, and I'm glad you could spend some time with us today on Bloomberg. From the Aspen Strategy Group, the executive director, former U.S. diplomat Anya Manuel, with us here on Bloomberg TV and radio. I'm Joe Matthew in Washington. Glad you're along today on the Wednesday edition. We're going to assemble our panel next with much more to talk about here in Washington. It's not just geopolitics, but domestic politics we pay attention to, with truly 1 week to the day before a possible government shutdown. If they can't figure out a deal, it will be, in fact, next Wednesday that you and I are here talking about what agencies are going to stay open and which might have to wait, who will be essential and who will not. This is another inflection point we'll get into with our panel next, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ, all in the red. Stocks have resumed a decline as gains driven by renewed pledges of spending on artificial intelligence are fading. We've got the S&P right now down 20, retreating from a record, down 0.3%. The Dow down 108 now, lower by 0.2%. The NASDAQ Composite Index down 95. For NASDAQ, a drop of 0.4%. The 10-year at 4.13%, with the 2-year 3.59%. Spot gold is down $28 the ounce, down by about 0.7%, 37.35 on the precious metal. And West Texas Intermediate crude up 2.5%. WTI just under $65 a barrel. Bitcoin up 1.6%, 113,851 now on Bitcoin. Copper prices are jumping the most in more than 5 months after Freeport-McMoRan declared a force majeure on contracted supplies from its Grasberg mine in Indonesia. An accident at Grasberg killed 2 workers. Right now, we have got shares of Freeport-McMoRan, FCX on the ticker, plunging 14.8%, but other miners are higher. Case in point, ADRs of Glencore, they're up by 2.9%, and Teck Resources up by 5.7%. Lithium America shares are surging by 98%, the highest price since April of 2024, after reports that the Trump administration is pursuing a stake in the company. Again, shares of Lithium Americas up now by just about 98%. Recapping stocks lower, S&P down 0.3%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. And once again, your host, here he is, Joe Matthew.
Okay, Charlie, many thanks to Charlie Pellet. He'll have more on Wall Street just after the bottom of the hour, about 15 minutes from now, as we keep tabs on the markets. The Wednesday trade here on the Wednesday edition of Balance of Power. Great to have you with us here. I'm Joe Matthew in Washington. Kaylee Lyons is off as we keep our eyes not only on the House of Representatives, but the state of Arizona. This is something that may not have been on your radar, but it's going to bring the whole Jeffrey Epstein story back to the fore here. And yes, everyone in Washington does know this, even if they're not talking about it. Adelita Grijalva, the daughter of the longtime Arizona congressman who died of cancer earlier this year in March, Raul Grijalva, won the race to succeed her dad last night. This was a special election, one of 2 that we were following, right? The other was in Virginia a couple of weeks ago. That was a slam dunk for the Democrat, Jerry Connolly's old seat. This apparently was a slam dunk for the Democrat as well, the daughter of the now late incumbent. When she is sworn in, you thought Republicans had a narrow margin. The Republican majority in the House will go to 219, 214, 2 remaining vacancies. Now, that's one problem for Mike Johnson. Here's the other. The future Congresswoman from Arizona has pledged to sign the discharge petition to release the Epstein files. And guess what? Only 1 more vote is needed. So this is apparently about to happen. Remembering you need 218 on there. Grijalva made it very clear that she will join the effort as soon as she is sworn in, which is expected to happen next week when everybody comes back to town. It's where we start with our political panel. Jeannie Shanzano, Bloomberg Politics contributor and Democratic analyst, is with us. She is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Republican strategist Maura Gillespie with BlueStack Strategies, and a veteran of John Boehner's Speaker's Office. Great to have you both here. Jeannie, Democrats, as it turns out, we had been asking about this weeks ago, will in fact be the party to put the discharge petition on the floor. Will it go any further?
It may not go to the Senate, but it's certainly coming to the floor of the House. And it's not just Democrats. We have Tom Massey. We have the 3 women who are Republicans who have signed on and said, despite pressure from the White House, their signatures will remain. And then, of course, you have Virginia Foxx, the chair of the Rules Committee, who says she's not going to try to stop it. So this thing is going to barrel ahead to the floor. I don't think it's going to go far in the Senate, but they are going to force Republicans to take a stand on releasing these documents. So, Joe, you thought Epstein was something of the past? He keeps rearing up again.
Yeah, it's like that hand that comes out of the water at the end of the horror movie Maura, what's the conversation happening right now inside the Speaker's office as Mike Johnson loses control of this matter?
It's a matter of how do we deal with President Trump and his reaction to this, really, because it's happening. As you mentioned, this is going to force Republicans to be on record. They can tout to their constituents that they stand for transparency and they want answers. They want to do it through proper order. And that's the messaging that they'll probably come up with. But I think that what we're going to see is a real pressure campaign by the White House. And then it'll be up to Speaker Johnson how he communicates this with the president, reminding him that this has put his members in a position where they have to be on record for it. But I agree that it won't go to the Senate. It'll just be a messaging tool.
Well, okay, a messaging tool is really what it has been so far, Jeannie, which is a problem for President Trump. Does it also threaten to sideline any potential deal around government funding? Because we are a week away now. This would be the first day of a shutdown next week if it happens.
Yeah, I don't see the Epstein issue as having that much of an impact on the shutdown. I think we are unfortunately barreling towards a shutdown regardless of what happens. I don't even think that Donald Trump canceling tomorrow's meeting with the Democratic leadership is having that much impact. You know, unfortunately, I think Democrats have their back against the wall. I don't think they should do what they are doing, as you know, Joe, but they're doing it. And I think they don't have a choice, because if they decided to capitulate, their base would just rebel. And so I think we are going to barrel towards a shutdown. And I think that is most unfortunate, because getting out of it is going to be terribly difficult.
Well, you know, Jeannie, you referred to Mike Johnson's preference. They wanted the Epstein matter to come through the Oversight Committee and not have to deal with what they call a partisan discharge petition. You remember Mike Lawler wanted to have a big shouting match about this when I was asking about his potential vote on the discharge. And he was yelling so much, we really didn't get a lot done in that conversation, but it really underscored how sensitive this is for those who are allied with Mike Johnson to not see it go this way, not with Tom Massey and the rest. They want to have some control over this in the Oversight Committee. Will that parallel effort continue if the discharge petition hits the floor?
You know, I think Mike Johnson has been basically trying to make the case this is redundant. We don't need it. We're already addressing this through proper channels. As Maura said, I think he'll continue to make that case. But it is, to your point, a very sensitive issue for Republicans, and they are going to feel the heat from the White House. I mean, there have been talk of threats from the White House already for the last several weeks. And so I think this is just going to continue to be a mess. Quite frankly, I don't see why the president doesn't just call for everything to be released, because this is worse for him, this back and forth on it.
Well, of course he did on the campaign trail, which is why we keep talking about this, Jeannie. It's not something we'd be pursuing, I think, otherwise. But I want to get into the shutdown stuff with you here, Maura. We heard from Chuck Schumer. He showed up on TV this morning. I realize everybody's on recess right now, but no tie for the Democratic leader as he sat down on MSNBC and made clear that we have a problem. Let's listen.
We know how bad it is. And we're asking something very simple, Joe, for the president to sit down and talk with us. You know, he's not the king. He can't just dictate what happened. He said he doesn't need Democrats. Well, then he doesn't know how to count, because there are 60 votes in this Senate that you need to pass this, and he's got 53.
And of course, he's referring to the fact that President Trump yesterday decided that he would not be meeting with the Democratic leadership. Schumer and Hakeem Jeffries have both been pressing for this meeting, and President Trump is not going to be playing along. Many folks see that as kind of the final straw, Maura, that there's just no way we're going to get around this, even if it's a brief shutdown. We are shutting down. And as somebody who's been in the Speaker's office, I wonder if you agree.
I don't think that a shutdown is ever a good decision. I've been through a couple, but I think what happened in March with Schumer not following through on it and Jeffries wanting to, they have to be lockstep. And even though I think the biggest problem is that they don't know how to get out of this, they're heading towards it. One of the problems too, and Jeannie mentioned, you know, some of their backs are against the wall. Well, that's true. Republicans have control. They have the messaging control as well, because there is no way out for Democrats necessarily. They came to the table with these 3 major provisions that they wanted to talk to the president about tomorrow, which in reality they probably should have just gone in with 1 or 2. I don't think that these are 3 pretty lofty ones: the Obamacare subsidies, rolling back some things from the One Big Beautiful Bill, and then talking about the rescissions issues. I think if they'd focus on one, maybe they'd have better success. But doing so, you've got 7 days until shutdown is happening. That's the reality they're playing in right now. And Republicans will say that this is, they gave a bill, they put a bill forward. The House is already in recess, and Johnson's not bringing them back. And so it really does come down to what Thune can get accomplished here.
Hakeem Jeffries on Twitter, on X, Jeannie, Trump always chickens out. The Democratic leader goes for the taco. Donald Trump just canceled a high-stakes meeting in the Oval. He says the extremists want to shut down the government because they are unwilling to address the Republican health care crisis that is devastating America. We've talked about the Fabrizio polling numbers over the potential expiration of these Obamacare subsidies that would increase premiums for a lot of people, Jeannie. That could mean the midterms for Republicans. Is Hakeem Jeffries on the right talking points?
I think he's on the right talking point with regard to the cancellation of the meeting. A big problem for Democrats is, and which is why I believe they should have taken the clean CR and negotiated during the approach process on this, because they are right. The subsidies the expiration is going to hit very hard. But the problem for Democrats is if they are seen as shutting down the government, and then these notices on the subsidy increases go out in October, and they will be devastating. I think it's going to be very, very hard to message this over Donald Trump. And so that's the problem. And I also think they should look at the reality that Donald Trump, in my estimation, not Republicans, but Donald Trump, he wants a shutdown of this government. That's why he is not meeting. That's why they are moving in the way they are. I think he sees that as beneficial to him and, of course, to Russ Vogt. And so I think this is a problem for Democrats. But again, I am in the total minority. I also think that Schumer and Hakeem Jeffries have no choice. The base would rebel, the rank and file would rebel if they turned around again like Schumer did last time. So they are going to move right towards it. They have no choice at this point.
You're hearing from a Washington insider when they refer to appropriations as appropes, which is partly why I love you both. Maura, we've only got a minute left here. Does President Trump march up to Capitol Hill, or is the story true that Russ Vogt has a plan and they can't wait for it to close?
Well, I think if you remember, the president will have extra powers about the budget and how spending is, how we do spending in this country. And so, yes, he does want to shut down, I think, in a little bit of ways, because, again, it shows the powers he has. I think that's probably what Thune and Johnson reminded him, that the shutdown may be beneficial for him because he has discretionary spending at his disposal. He gets to do some things that maybe he wouldn't get to do otherwise, and any legal challenges won't hold up in court because he has presidential immunity.
Remember this conversation a week from today. Our great panel, Maura Gillespie, BlueStack Strategies, and of course, Bloomberg Politics contributor Jeannie Shanzano. Thank you both for the insights. We'll have a lot more ahead here on Balance of Power as we count down, yes, to a possible shutdown. The countdown clocks won't be out till next week. This is Bloomberg.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all in the red right now. Stocks resuming a decline as gains driven by renewed pledges of spending in artificial intelligence faded. S&P right now down 20. We're off session lows, but still in the red, down 0.3%. Dow Industrials down 116, now down 0.2%. The NASDAQ Composite Index down 81. For NASDAQ, that is a drop now of 0.4%. The NASDAQ 100 Index also down 0.4%. Our MAG 7 Index just turning higher, up briefly, up by 0.01%. Your 10-year 4.13%. The 2-year 3.59%. Spot gold down $29 the ounce, retreating from a record $37.34 the ounce, down 0.8%. West Texas Intermediate crude up 2.5%, $64.99 a barrel, and Bitcoin now up 1.7%, $113,977 on Bitcoin. Amazon upgraded on to overweight at Wells Fargo on greater conviction in the company's Amazon Web Services division. Amazon shares today, they are gaining a little change right now, unchanged on the day for Amazon. Adobe down 2.5%. Adobe cut to equal weight at Morgan Stanley on decelerating digital media annual recurring revenue. Micron Technologies lower after earnings, down 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie, many thanks. President Trump is back here in Washington, but frankly, the center of the political universe is right where Charlie Pellet is. The meetings at the United Nations, the General Assembly underway. We spent most of yesterday's program bringing you conversations with a lot of the world leaders who have assembled at the UN this week in New York. In fact, it was right at this time we were talking with the president of Latvia yesterday. But one of the stories hanging over this collection of world leaders is one you did hear about on Bloomberg that we want to spend a bit of time on now. The Secret Service thwarting a plot to take out cell service near the UN. Imagine a room full of SIM cards and servers. The FBI or Secret Service uncovered this, not actually in Manhattan, but just outside of the city. And we wanted to talk with Miles Miller about this, Bloomberg senior Homeland Security reporter who has the byline on this story on the terminal and is, in fact, with me here in Washington. I'm glad someone else is around here. Miles, it's good to see you. Give us a sense, just first of all, people hear about all these SIM cards. How would this be used to shut down phone service?
So basically, the way that this was set up was these were basically what they call a SIM card farm.
Yeah.
Stacks and stacks of SIM cards into basically servers in places strategically placed around the city. So up north in some Wall Street suburbs, Armonk and Greenwich, which is really strange.
Yeah.
And then out to northern New Jersey, Queens. And so to encircle New York's cellular grid and then have the ability to do mass fraud. So send a text message to a bunch of people saying, you know, your car's warranty is expired, your Amazon package is not getting there, or also to call 911 all at the same time and jam up the system. That is what Secret Service believes happened here. The way they got here is because there were phone calls made to people close to the president, to people close to the West Wing, one person, a senior official in the Secret Service, and they said, wait, this is not a teenager doing a swatting. This could be something bigger. And so they started to investigate and found these SIM card farms in places really close to the city right before the UN General Assembly.
So the president got some prank phone calls? That's what tipped them off here?
No. So it's actually very interesting the way that the Secret Service source put this. It was people close to the president who got these calls, and you know the goal with these bad actors is that they can try to influence someone close to the president. They can't get to him. They don't have his number, but you could find the numbers of people close to him and try to, infiltrate, try to influence. And luckily, the Secret Service was on it and did an investigation into it.
Remembering that Susie Wiles and Marco Rubio have both been targeted in this way recently, do we have any sense, based on your reporting, how they track the source of an effort like this? How do they find the SIM cards?
Yeah, so they basically, going through cell tower data, were able to pinpoint where these calls are coming from. And then they're like, wait, these are all from sort of the same area.
Interesting.
And then based off of that, did more investigative digging. They created a new team of sleuths in the Secret Service who did the digging.
Wow.
And as part of that, were able to find these cell networks. And they were, interestingly enough, networks that have been used by foreign governments and have been used by cartels in the past as well. And so they're trying to figure out who's behind all of this.
Well, of course, that's the next question, right? We hear Russia's suspected, but will they ever actually know?
Well, they've not yet said what country is behind it, and they made great pains to not say that during UN week, because if the president happens to be meeting with some of these countries, perhaps in a couple of weeks, they don't want anything sticky coming up before the president's been able to make the case to whoever the world leader is.
Learn more after everyone goes home,
yeah,
presumably?
Well, let's see.
So I've got to ask you, it takes our senior Homeland Security reporter to get to the bottom of Escalator Gate. The fact that this even took place yesterday is a riot. We heard from the president when he was in the speaker's rostrum at the UN. I've only got two things from the United Nations: a broken escalator and a bad teleprompter. There was an insinuation last evening. We're showing this, by the way, to our viewers on Bloomberg TV and on YouTube. The president and First Lady.
Pay good attention to the photographer who went up the escalator first.
That's right. A photographer heading ahead of them. Now the escalator stops. The president's looking at somebody to fix it. The First Lady marches up on her own, and he follows reluctantly.
You know, the one thing about like New York and also here in DC, when the escalator breaks, people stop and don't keep going, and you see, how human they are here.
Correct.
The UN has told us that a videographer from the U.S. delegation who was traveling with the president, reading here, I don't want to get anything wrong, was traveling backward up the escalator and stopped onto the bottom of it and may have inadvertently triggered the safety function described above.
Yes.
I'm leaving it at that.
Step.
The Secret Service is going to investigate. I got a call from a very pained Secret Service source yesterday who said, we are investigating this. Turn on Fox News. Caroline Leavitt is talking about it right now.
You said, what? You're calling me with this? Caroline Leavitt on X. If someone at the UN intentionally stopped the escalator as the president and First Lady were stepping on, they need to be fired and investigated immediately. She says the Times reported this on Sunday. This is the funny part. The Times of London.
Right.
In fact, suggested this might happen. That UN staff members have joked they may turn off the escalators, have them walk up the stairs, and tell them that they ran out of money. We don't believe that was the case.
We don't, and I think the UN took great pains to make it clear that they had done their own research and made sure that they actually brought in their mechanic to see what was happening. They have a log of all these things. Listen, we did a story the other day about UN security and how tight that place is during UN week, and I went into the security room and saw all the cameras and everything. If something untoward had happened there, that room with those agents inside would have seen it and would have stopped it. It appears as though this escalator just wasn't working. But Secret Service, listen, to their credit, is going to do this investigation just to make sure everything was above board.
As I mentioned, it takes Miles Miller to put Escalator Gate to bed in just 24 hours' time. It's great to have you in Washington. Thank you for being with us, as always. Great to spend time with Miles here on Bloomberg on this day after Jimmy Kimmel returned to air. If you were here in Washington, D.C., you might not have known, because the television station, it's an ABC affiliate, Channel 7 here in Washington, D.C., is owned by the company Sinclair, which decided not to follow along with the network and bring Jimmy Kimmel Live back on. In fact, Sinclair and a separate station group have decided to continue running alternative programming. They've put some sort of news package together that's running at 11:30 at night. The rest of the nation, with the exception of a few cities, I think it was about 70 stations in total, did not take part. Rest of the nation watched Jimmy Kimmel return to air following his indefinite suspension and the remarks that he made about the killing of Charlie Kirk. He did not apologize in his extended monologue, but he did say this.
And the truth is, I don't think what I have to say is going to make much of a difference. If you like me, you like me. If you don't, you don't. I have no illusions about changing anyone's mind. But I do want to make something clear because it's important to me as a human, and that is, you understand that it was never my intention to make light of the murder of a young man. I don't...
You heard him get choked up there in what was clearly an emotional moment for Jimmy Kimmel. Unclear if the other stations will take part in his return to the airwaves. The president does not want to see that happen. In fact, as soon as President Trump found out about this yesterday, he got on Truth Social with another missive aimed at ABC, suggesting that there will be some sort of legal action in this particular case. He said, I can't believe ABC Fake News gave Jimmy Kimmel his job back. The White House was told by ABC his show was canceled. Something happened between then and now because his audience is gone and his talent was never there. He did suggest, though, last time I went after them, he says, they gave me $16 million. This one sounds even more lucrative. Chris Palmieri covers the media and entertainment business for us in our Los Angeles bureau, and joining us from L.A. On behalf of Bloomberg News. Chris Palmieri, welcome back to Balance of Power. Look, this is a big deal for Disney. Will it be able to get all of its affiliates on board?
We'll see. I wouldn't, there are two big ones, Nexstar and Sinclair. Nexstar was sort of the more even-keeled of it in his messages, although I don't anticipate them bringing Kimmel back tonight. Sinclair was much more strident in its initial comments last week, saying they wanted Kimmel to formally apologize and donate to Charlie Kirk's causes. While he maybe stopped short of using the word apologize last night, Kimmel was definitely very conciliatory and most people would say extended quite a lot in that direction.
Mm-hmm. What do you make of the president's post? Does Disney have any response to it? Will there be a separate lawsuit that comes from this?
Disney has declined to comment on the post. I would think it's fair to say they're bracing for just about everything in the Trump era. A number of things could happen. He could sue as he suggests he would. Of course, he did that regarding ABC News last year, and ABC settled, as he mentioned. Now, that was a very specific incident. His complaint with Kimmel seems much more broad, sort of similar to his lawsuit against the New York Times, that they're just against me and an agent of the Democrats. And, there is also other levers that the administration could take. A company like Disney has to get approval for mergers and acquisitions and sales and things, and all of that could come into play.
Well, a lot's been made of this pending merger with Tegna, and I wonder what your thought is on that, Chris, if you have one, to the extent to which this potential merger is driving decisions by these station owners.
Well, of course, they'll tell you no, that's not the reason they decided to take Kimmel off the air, but there is no doubt that Nexstar needs not just approval to transfer Tegna's licenses from the FCC. They need to get major rule changes, something that the broadcast industry has been pushing for years, to take away these limits on how many stations they can own per market and nationally. And so Sinclair is also in a similar position. They don't have a deal awaiting approval, but they've said that they're looking at all kind of options it offers for mergers. So both of them want to get those rules lifted and need to get approval for any deals from the FCC.
I had to notice yesterday, Chris, it was a big story, Disney hiking the cost of its Disney Plus subscriptions. That's going to be almost $20 a month. I don't know at what point it costs more than cable to have all these things, but we can do that conversation on another day. I bring it up because the story around Jimmy Kimmel is that it's a money loser, that the show is in fact losing money for ABC. That might be the case for all of these late night shows. How do we see it? Is it a lost leader? Does ABC need Jimmy Kimmel Live?
No, they don't need it, and it is to some degree a lost leader. I mean, that's changed because the whole business has changed so much. And, we've seen talk shows canceled, and people just aren't watching traditional TV like they used to. Kimmel's ratings are down about more than a third from where they were 10 years ago. There's a couple exceptions to that, but it's just a format that's not as invigorated as it was years ago, and so wouldn't be surprised to see it fade out. And Disney is just like other networks, are just sort of watching and waiting for the right moment to do so.
Well, I'll tell you, it takes 70 stations off the list here, and I can't imagine what that's going to do to his ratings in the meantime, but it's something I'm sure you'll be writing about, Chris. Come back and talk to us again about it. Chris Palmieri, Bloomberg News senior editor and entertainment team leader, with us live from the L.A. Bureau, live from Hollywood on Balance of Power. I'm Joe Matthew in Washington. We'll have a lot more to talk about when we meet again on the late edition of Balance of Power, and I hope that you will join. It starts at 5 p.m. Eastern, right here on Bloomberg TV and radio. We'll have a lot more to talk about following this decision by ABC to put Jimmy Kimmel back on the air, and we'll play it to our panel a bit later on. Also, big questions about a government shutdown that would begin a week from today if it happens. Sarah Chamberlain from the Republican Main Street Partnership will join us, along with Bloomberg Politics contributor Adam Hodge, to get a better sense of what exactly we're counting down to. I'll meet you back here then. Bloomberg Business Week Daily is up next, right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Yes, indeed, everybody. A very good afternoon on this busy Wednesday. Carol Masser, Tim Stenevec. Nope, we're not at Bloomberg headquarters. We're just a few blocks away. We're here at the plaza at the Bloomberg Global Business Forum. And what's great about this event, it always takes, or it always happens, I should say, alongside the UN General Assembly. So there's world leaders in town. They're talking about the top issues. They come here to have some really high-level discussions.
Yeah, the event brings together heads of state and business leaders to address the world's most urgent challenges and opportunities. And already, we've heard from some of these leaders. Bill Gates taking the stage a little earlier. Ruth Porat from Alphabet. Jane Goodall was here. NBA Commissioner Adam Silver. Brookfield's Bruce Flatt, and many, many more.
All right, so we're going to highlight some of those conversations and some of the folks that are here at the event. Coming up, Chris Nicholas, he's president and CEO of Sam's Club. We're going to talk about global consumers. We're going to talk about tariffs, supply chains. We're going to talk about their expansion plans. So looking forward to a conversation with him in just a moment.
Maybe we'll talk a little bit about AI with him, too.
Yeah, we definitely will.
We're also talking AI with the head of strategic partnerships, global affairs at OpenAI. Also talking about that big NVIDIA investment. That's up ahead in the next hour.
A partnership.
That is a partnership, yeah. To the tune of $100 billion.
Yeah, massive. Also with us is Ambroise Fayot, Vice President of the European Investment Bank, on funding climate change initiatives against what is, I think safe to say, a hostile backdrop. So we're going to get into all of that in just a moment. First up, though, feels like a day where we're taking a little bit of a breather on Wall Street. Let's toss it back to Bloomberg headquarters here in New York City and Detroit.
Hi, thank you very much. Holding down the fort, and indeed, absolutely right about that. Taking a breather, Carol Master. We've got the Dow, the S&P, NASDAQ. We're all in the red right now. S&P down 26, retreating from a record 66.31 where we stand. Down now by about 0.2%. Dow Industrials down 0.3%. S&P, by the way, off session lows, but still down. We've got NASDAQ down 0.5%. The NASDAQ 100 index down 0.5%. The Bloomberg Mag 7 index have been positive very, very briefly. Right now, it is down by under 0.1%. Your 10-year currently yielding 4.13% with a 2-year, 3.59%. Gold down $30 the ounce, 37.33, down 0.8%. And West Texas Intermediate crude oil now rallying by 2.4%, 64.93 a barrel. Alibaba ADRs soaring after the company said it will spend more than a previous 3-year investment budget on AI infrastructure, just as investors turn more positive on its push into the technology. The company also announced a new software partnership with NVIDIA. Alibaba shares, they're up by 8.3%. NVIDIA down now by 0.8%. Again, recapping here, S&P down 26, drop there of 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at the Bloomberg Global Business Forum at the Plaza in New York City. Well, if you want to know what global consumers are up to or what massive global companies are really thinking about when it comes to the macro environment, what are their priorities, then keeping an eye on Walmart is definitely a must-do. It is the world's largest retailer. It was among the retailers that recently raised their forecast. That happened over the summer. And a member of the company's C-suite is joining us, Tim, right here at the forum.
Yeah, here at the Bloomberg Global Business Forum, pleased to have Chris Nicholas with us, president and CEO of Sam's Club. It is Walmart's membership-only retail warehouse club, mostly with clubs here in the U.S., but also overseas, clubs in Mexico, China, and Brazil. Former COO of Walmart U.S., previously CFO across Walmart U.S. and Walmart International. Welcome.
Which means you've seen everything.
I've tried.
How are you?
I'm doing great. Really excited to be here.
How are we doing? And by we, I mean the American consumer. You've got such a great view on what happens across the country. How are we doing?
Yeah, I mean, what we're seeing at Sam's Club is consumers that are consistent and rational. You know, I've been in retail for more than 30 years now, and I've never known a time when people don't love great items at great prices. And as long as you're giving people that, we're finding consumers really, you know, rational and consistent.
What is their behavior, though, right now? Because that's something Carol and I were talking a lot about today. And, you know, the whole idea of, are they buying what they typically buy? Are they buying what they buy at a certain point in an economic cycle? Are they trading up? Are they trading down? What are they doing in your stores?
Yeah, it's interesting. I mean, consistent would be the word I'd use. People are still buying general merchandise from us. I mean, we talked in our last quarter the results about general merchandise sales having another quarter of positive comp. But what's really interesting within that is that the units are moving faster than the items, which means that, you know, we're still giving them great value. And I think people are really moving to appreciate when they're getting good value. You know, the club warehouse model is made for times like these, I would say. It's a good time to be in the club model. In our clubs, we've only got 4,000 items. And the way that the club model works, just to level set us, is our job is to make almost nothing on what we sell. We're just about break even, and we make all our money from membership. So the lower you can operate in terms of costs, the lower you can keep prices. And when that happens, people are more loyal. They renew more often, and you get more members. So we're in this like really special moment right now where people love the great value that we've got, and they love the great items that we've got too.
You know, I want to cross that with what we just heard from Fed Chairman Jay Powell, Chris, last week in terms of the decision, and kind of basically saying the Fed's not in a great place. Like either way, there's some risks to the employment picture. They're concerned still about inflation. So there's kind of risks to both sides of the equation, and concerned about monetary policy that it's hard to do right now in this environment. So that to me sounds uncertain, unsure, but it doesn't sound like you're saying any of that.
Look, the club, here's the thing. We have this position where there's only, I mean, between us and our main competitors in the club model in particular, we're only like 6.5% of the total retail market. And we would definitely, from a club point of view, our consumers definitely skew sort of more wealthy, you know, bigger basket sizes. And but we do serve everybody. And we don't see a great delta between different income cohorts.
You don't?
No.
All right.
Nor generations.
Well, what about, I mean, when you think about kind of the environment, especially when it comes into tariffs, in terms of pricing, how do you kind of figure out where you can maybe raise prices, where you can't?
It's such a great question. And again, not to sort of pivot, but one of the powers of the club model is because you've only got 4,000 items in the club. Those items are curated.
Yeah.
And our merchants, they are true professionals. That, like, many of them have been in their jobs decades, and they understand the value chain from end to end better than anybody. And so they get the ability to choose what's in the club, but they also get the ability to work through where the inefficiencies are in the supply chain. They've got deep relationships with the suppliers, so you work through where the opportunities are between the suppliers too. So I'll give you an example. Our roses that we buy from Ecuador, the costs went up because, you know, the tariff environment changed. And so our merchants worked through with the supplier, like, what could we do? So we moved them in different ways, so we have less packaging. We wrap them in the US now instead of where we used to wrap them. And so you do things like that help you to manage the input costs. That means you don't have to pass it on to the consumer. And our job is to work through how little you pass through, and you work through how late you do it. So we'd always like to be last up, but we have the ultimate opportunity in the club channel, and that is that we have choice because we don't have to sell everything. So the curation actually is a superpower for us.
Does that mean you haven't raised prices on anything?
No, we see, I mean, look, here's the thing. There are certain things where prices move all of the time anyway.
Right,
so
I get that.
produce would be a good example of that.
But
and there are some
strictly
things,
tariff related.
Yeah, what I would say to you is that if I think about general merchandise, which is like all of the electronics and apparel and all of those things.
The stuff that I have way too much in my home.
There's never enough.
Yes, there is.
You're talking to guys who sell stuff, Carol.
Never enough.
I know. But anyway.
Please buy more.
But in terms of tariffs, particularly
so,
putting pressure on pricing.
Yeah, so what we see is, in terms of what people are buying, I think I mentioned this, but the growth in the units that we've had is outpacing our comps in general merchandise. So if you think about, like, over the last few years, you had, like, packaged goods through COVID became more expensive, and they never really came down. Whereas general merchandise, we had the supply chain disruption. You remember that, and the general merchandise inflated, and then it deflated rapidly after all of the supply chain disruptions disappeared. And at the end of last quarter, we were still in a period of slight deflation in general merchandise. So prices move all of the time. Our job and our merchants' job is to make sure that we give people access to the price points they want and the value that they want. I think maybe it's worth mentioning, but in Sam's Club, like, we're 25% cheaper than retail in general. So as we resist putting prices up, because that's in our DNA, we're always going to be more price competitive than everybody else.
So then you haven't raised any prices related to tariffs?
We will be the last people to put prices up, and some prices have gone up, But in the mix, I'm telling you, so for sure, I mean, we have input price changes in some items, and some's come through already, and some is still to come through. But I would tell you that, like, our job is not to lead with putting prices up, and all of our sales growth in Sam's Club is through unit growth, not inflation.
Okay, cool.
I'm wondering what you're hearing from your team who's out there talking to the producers, the American producers of things we grow, produce, beef as well. We had a Bloomberg News story last week about farmers, and a toll that the Trump administration policies are taking on farmers right now. And immigration, just one of them. Tariffs on soybeans are another one as a result of less interest from China and Chinese buyers. What are you hearing, though, on the immigration front? Because in some cases, 40% of migrant workers are from outside. 40% of farm workers, rather, are migrant workers. So they're coming from outside the U.S., and that's a challenge for farmers to actually find those employees right now. What are you hearing from them?
Yeah, I don't have anything to add or to offer on that topic. I would tell you that we have brilliant farmer partners. We understand the value chain really well. And we have no in-stock issues or cost price issues.
So have they raised prices at all on American produce?
You'd have to ask somebody else about the through line on like employment and price increases. I think you probably speak to lots of people that are better informed than I am.
What about from produce that comes outside of the United States? I mean, we can't do everything here. We can't grow bananas. We can't grow avocados.
Yeah.
The tomatoes, when they're out of season, come from outside of the U.S. Yeah. What does that look like?
Yeah, I mean, what does
what like the increase in costs associated with tariffs? Because those will be, or those are tariffed already. I mean, beef that comes from Brazil, 40% tariffs, for example.
Yeah, I mean, we definitely over-index on U.S. beef. The vast majority of what we buy is U.S. The vast majority, and so, you know, but we have choices about where we buy from. This is the benefit of being this curated, limited assortment retailer, is that we get the choices to buy from the places where give the consumers great value and great quality, which we're never going to relent on. But, you know, we buy items, you know, we buy avocados, as you said, from abroad, and many other items, tomatoes when it's out of season. And you know, the quality and the value, we'll never relent on the quality. But if the input costs increase, then the input costs will increase. But in produce, there are so many variables, produce and beef. Right. I mean, there are so many variables that pushes the costs down as well as up. So I think it's a super complex situation, and I think that our farmers are some of the best in the world. And I think that our merchants know how to work with the farmers. The best thing you can do for those farmers is to give them great forecasts, allow them to grow to those forecasts, and give them good prices that allow them to run sustainable business models. And we do a really good job of that.
Chris, you guys in retail, I'm sure we're, you know, even late to talk about the holiday season and the upcoming holiday season. When you think about assortment and what you want to have in inventory for consumers, how's it looking for this year? Is it going to be a lot different from last year? Are the supply chains all there to get what you need and what you want for your consumers? Yeah,
that's not an issue. We don't see any issues with supply chain management in that way. Sam's Club in particular, we get really early. So you go to a Sam's Club now, which hopefully, you know, please do. You'll see it's full of Christmas.
I know. It drives me a little crazy.
Yeah, I mean, I understand.
Why is it so early? I mean, Halloween hasn't even happened.
Yeah, well, in the club channel, people like to be prepared.
I know. Yeah.
So we get into a season early, and then we exit early, and that's kind of scarcity is part of the value that we create. And so we're not worried about it from a Sam's Club point of view. But the thing I would say is that, like, people just love to celebrate. They love to buy. They love the seasons, and so I think you'll find that certainly at Sam's Club, people, whether it's the general merchandise they buy pre-Thanksgiving and Christmas, or the food that they buy for the season, as long as you're giving them great value, they're going to come to you, and people will find a way to celebrate.
One of the things we love about the Global Business Forum is we tackle everything: climate change, you know, workforce, employment, economics, politics. As a leader who's been at a company for a long time, and I'm sure looking at everything that's going on, what's top of mind for you? And an environment where there's pushback against certain initiatives, there's a lot of political things going on, geopolitics. I'm just curious. You know, in running what you guys do, and I know you're kind of a well-oiled machine in many ways, but I'm just curious.
Yeah, I think, you know, in an environment of change, And by the way, change is a constant, and you've got to love it. Then I've always found that the best thing to do is to focus on what you can control. And what you can control is the culture you create as a business, how you work with and treat your customers and your members, the experiences that you create. A great example is the e-commerce business. We've just launched express delivery from our clubs, and people love it, and they're opting in.
Does the price change with delivery?
No, we have price parity. We have price parity. So others don't. We do. So we have price parity between clubs and online. We think that's really important from a trust point of view. And people are thanking us for it. Our delivery from club, food and non-food, is growing at triple digits right now. So I think focus on what you can control. Start with being great people. Start with being a great business. Look after your associates so they can look after our members. And then that generally will lead to the right outcomes.
So on that, we'll hear from one of your big competitors tomorrow. Costco reports earnings tomorrow. How do you make sure that people join Sam's Club and not Costco?
Yeah, look, Costco's a great competitor. We think that we're great too, and we're doing a lot of good things. What I would tell you is this.
Because you have an aggressive plan in terms of expansion.
Yeah,
and
we're
lining up
excited
members.
about it.
I know.
Yeah, we're really excited about that plan. Actually, the club channel in general is a relatively small channel. There's huge upside for the whole of the club channel. And I would tell you this: good competition makes you better. And I've never been afraid of good competition.
What about AI? And how you guys are working?
Are you afraid of AI?
AI.
It's kind of we're trying to.
AI is a big topic everywhere now, isn't it? Here's the thing: we're excited about AI as a company, and I am personally too. I think this idea of
Are you guys using it a lot?
A lot. We've been using it for a long time, honestly, but the generative AI and then the agentic AI that's coming through too is really exciting. It's exciting for our members and for our associates. What we do, we pivot to growth. How does this help us move faster, do more for our associates and our members? How do we find different routes to market? So that's exciting. Of course, we also look at how do you find opportunities to take time out of product launches and all of those kind of things so that you're a better business. The one thing that you may have seen is we also believe that the opportunity to empower people with the use of AI, but with an enterprise, but with enterprise data is really exciting. So whether it's in the office or recently we made an announcement a couple of weeks ago at our holiday meeting where we gave our frontline management access to OpenAI, to ChatGPT, and which they can use to just go faster and do more. And that's really exciting.
Yeah, it's kind of amazing. We're all kind of finding our way through it. Chris, thank you so much.
Thank you for having me. I appreciate it. And good luck.
Good luck. Thank you as well. Chris Nicholas, he's the president and CEO of Sam's Club. We just talked a little bit about AI with Chris. We're going to continue that when we check with the head of strategic partnerships, global affairs at OpenAI. Yeah, we'll talk a little AI. That's coming up next. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down Wednesday here with the Dow, the S&P, NASDAQ. They're all declining right now. Wall Street's rebound failing to gain traction today with the S&P now at 66.28, down 28, drop there of 0.4%. The Dow down 168, drop there of 0.4%, while NASDAQ is down 114. For the NASDAQ Composite Index, a drop of 0.5%. 10-year at 4.14% with the 2-year 3.59%. Gold is down $36 the ounce at $37.27. For the precious metal, a drop of 1%. West Texas Intermediate crude up 2.4%. WTI 64.93 a barrel. Bitcoin up 1.4%. 113,637 on Bitcoin. As for valuations, the S&P 500 is trading at statistically expensive levels, according to Bank of America's Savita Subramanian, who notes that on 19 of 20 metrics, the U.S. equity benchmark is expensive. Copper prices jumping the most in more than 5 months after Freeport-McMoRan declared a force majeure on contracted supplies from its Grasberg mine in Indonesia. There was an accident there that killed 2 workers. Right now we have got copper surging 3.6%. Freeport-McMoRan down 15.2%. Other miners, though, higher. ADRs of Glencore up 2.6%. Tech Resources up by 5.5%. Recapping, S&P down 26, down 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenovec live here at the Plaza, the Bloomberg Global Business Forum. Leaders, and one of the big topics this week that we've seen as world leaders are in town and also as it's Climate NYC is everything and anything to do with artificial intelligence.
I mean, we can't kind of stay away from headlines here every single day. Just today, Microsoft partnering with OpenAI rival Anthropic to help power its workplace AI assistant. Anthropic, founded by former OpenAI employees, Carol, it's one of the largest competitors to OpenAI, a key player in the industry.
Yeah, just coming on the heels of one of the big stories that we covered this week, NVIDIA announcing it will invest as much as $100 billion in OpenAI to help with that build out of data centers. So there's a lot going on. When it comes to AI, it's all about partnerships, and we have a great guest to talk about that. Lane Dilg is former head of strategic partnerships, global affairs at OpenAI. She's had a career in law, politics. She served as senior counsel to then Senator Kamala Harris, and she's also worked at the Department of Justice. I'm rushing, but you have like this incredible public-private background. So when you think about AI, I don't know, how do you make sense of it just feels frenetic, the amount of money, the amount of activity, the amount of headlines that come every day?
Yes, there obviously is so much happening, so many big deals in the news, and those big deals in the news do have real-life implications for all of us. So incredible, as you mentioned, to see the NVIDIA and OpenAI deal showing that NVIDIA will provide chips to OpenAI up to 10 gigawatts and also make an investment, $100 billion, obviously shoring up OpenAI's credit and providing a real runway for OpenAI. Those kinds of deals we are seeing almost weekly right now. You mentioned Microsoft and Anthropic as well. So a very competitive landscape and a landscape that is moving extremely quickly.
It's kind of funny to hear about Microsoft partnering with Anthropic, given that Microsoft is a huge investor in OpenAI. What do you make of that? Like, what's the world that we're living in when you have these strange bedfellows?
Yes, I think everyone is watching sort of all of these different pieces. From an adoption perspective, people are looking at how many different companies will individual companies work with. So do you want to work with one AI model? Do you want to, or one AI model provider? Do you want to work with many? Microsoft also has in-house AI. Yeah. They have the partnership with OpenAI, and now you see them with Anthropic.
Well, can you... We've had some folks come on our program and say, okay, there's been so much funding, there's been so much money chasing these companies. There are also those people who say, we're kind of just going to wait until the dust settles because we think there could be this commodity issue when it comes to LLMs. What separates one LLM from another? What separates Claude from ChatGPT? And I fully we're asking somebody who was at OpenAI. So
Yes.
that's where this question is coming from.
A great question, though, because obviously now I use all of them to try to stay up to date on where everyone is, and I also speak with the different companies about sort of what their trajectory will be going forward. I do think the models are somewhat different just for users. They provide responses a little bit differently. They're friendly in different ways. They're useful in different ways, and so there's some personal preference. I do think that we will start to see differentiation in areas like materials science, chemistry, biology, as people really move into these more specific domains where different model providers lean in, who they work with and how, will become important in terms of what you can do to solve problems with the technology. I think the other piece, as you see with the NVIDIA OpenAI deal, we often say infrastructure is destiny. It is true that there is also this massive race for compute, and that is because to continue the research and development, to continue to make the progress, you need compute, and compute requires a lot of energy. So we don't know yet whether there will be differentiation there or not, but everyone racing to make sure they have the compute they need to continue development.
Lane, you run your own advisory firm, and you're dealing with kind of innovation and partnerships, right, and working with other companies. But I want to go back to what Tim said. I mean, I think there was, when the NVIDIA deal came out, that there was concerns that it was a sign of a bubble, that it's NVIDIA partnering with OpenAI. Obviously, it's the company ChatGPT so identified when it comes to AI at this point, but this idea that NVIDIA needs a marketplace to keep buying its chips. So I'm just curious. I mean, at some point, I don't know. What are you hearing from companies as you talk to them? Are they a little cautious at all? Is there any nervousness about this incredible spend and this incredible build out?
Yes, a great question. Obviously, financial experts around the world asking many of these questions. I think, we previously thought that NVIDIA may not be able to supply enough. So interesting to now hear people say, well, they are, trying to find a consumer.
A home for their chips, it
yes.
feels like, right? Yeah.
So I think that conversation happening on both sides. My own personal view is that we are not yet anywhere close to maxing out the demand for compute and chips. And when we are, then you may actually see that model development is stalling or something else. But I just don't think we're there right now.
I am curious, when you were at OpenAI, and we know you left a few months ago, and now you have your own advisory firm, is the phone ringing off the hook of people saying, help me, I need to find this, and what are they looking for?
Yes, so it is true that people are looking for lots of answers. They're looking for answers to the macroeconomic questions. They're looking for answers to help them guide investments. But then teachers and healthcare providers are looking at, what is the potential? How do I take care of my workforce and also take care of those I serve at the same time? What is the pace of adoption? I'm excited to be here today with Bloomberg Philanthropies working on the Mayor's Challenge, which is a competition they run around the world for mayoral innovation for city services. And so many people in that space saying, where are the opportunities for innovation? And we're seeing such interesting proposals there as well.
I just want to say, I actually had a meeting with a giant company. I'm not going to say who it was. And
we've heard of them.
Everybody's heard of them. But it was like we were talking about, they were asking me about how I'm using AI. I was asking them, and it's like we're all kind of fumbling our way through. And we have courses that have come up at Bloomberg to kind of help us figure our way through. This company, they're just kind of like somebody figures something out and they do a kind of a show and tell. But it's interesting how we're trying to find our way through this.
Yes, I've heard two CEOs at the Frontier Labs really say the pace of scientific progress on the AI side is much faster than the pace of implementation and adoption. It's hard. These are large institutions with lots of people. You have to actually figure out what is the right way for your company, for your school, for your business, and that takes some time.
I use ChatGPT all the time personally. I use it at work too. We have the paid version at work, but I have the free version on my phone. And when it tells me I can't use it anymore, I just go over and use Claude. How do you prevent that? How do you get me to pay for it? How do you monetize all the free users when so much compute is being used?
Yeah, I think, same with any product in a certain way. You want yours to be the go-to. You want yours to be the most useful, the one that you turn to solve the problems that are most important to you. And I think that companies are competing in that, and we'll see fits and starts. But you get accustomed to one product or another.
So, will we be paying for it?
Well, I mean, Or is there going to be advertising?
Yeah.
So I think, right now you can pay for different different levels of access. I think that is meaningful, both for individuals and for businesses. I use the paid accounts across all of the different companies, which may seem crazy, but I want to see where the capability really is. So I do think that is the monetization that you're seeing primarily.
And I'm not a tax professional, but that's a business expense, I would imagine. So but talk to your accountant about that.
Yes.
Okay.
Taking notes.
Yeah, just,
I am curious about, we mentioned that you were senior counsel to Kamala Harris when she was senator.
I have been senior counsel to a senator, but most recently I was senior advisor in the Department of Energy.
Oh, I'm so sorry.
Yes.
That was the notes I had. So
Yes.
I'm so sorry. I do think, though, about the intersection of technology and politics. Yeah. And I feel like every decision is made with a careful glance at the White House. Yeah. So talk to me about that and how that might, I don't know, kind of impact the deals that are done and how they're done.
Yes, absolutely. I think you see a lot of that in the infrastructure space. So if you look at the models, they, as we talked about, require compute, but compute also requires energy. And as we look at competition between the United States and China, I think people feel really good about our talent. They feel really good about our workforce. They feel really good about our innovation. But we do need to get more energy on the grid, and we need to do that fast. And so I think you see this all of the above approach, but also disagreement over what is that all of the above approach. How does it work? Do things need to be grid connected or not? And most importantly, how do we make sure that consumers have the electricity they need at the prices they need while we power all of this AI?
Well, is it ultimately going to be everybody, especially the hyperscalers, probably doing their own energy development on site, that kind of thing? Or
I think you'll see a mix. Just like you see a mix in the financial deals, I think you'll see a mix both to hedge risk, but also because it'll be opportunistic. We need the energy as fast as we can get it.
Hey, just want to end with what this does to the American workforce, the global workforce. Dario Amodei over at Anthropic has been really outspoken about how this could just decimate white-collar jobs. You agree?
So I think there was a conference in San Francisco that people are watching just last week about what the different scenarios are. I think we don't know the answers yet. And so from a policy perspective, we need to be planning for multiple scenarios. It's critically important that we understand both the data of how are jobs moving, where are the transitions happening, and also look at the social safety nets and other things to make sure that if there is dislocation, we're doing the reskilling, we're doing the training to get people into a place that is productive.
You've seen the tech up close. You know what it can do. What keeps you up at night?
What keeps me up at night is, as always, it's the humans. It's our human potential. It's our ability to step into this technology, and it's also what we can do with it for good or for ill. And I think that's the space where I'd like to see the policy focused.
Are you worried about the bad side of AI?
I'm worried about humans using AI for bad purposes is what I worry about more than the doomers who are more concerned about what we would call alignment issues. I think the science on alignment is pretty strong and will continue to be strong, and people will be alarmed if it's not. But the question of what can you do with the technology is a hard one. We are about to all get more powerful.
Yeah, that's kind of interesting. Need to leave there. I feel like we could talk a lot more about this, and we will probably in the future. I hope you can come back.
Yes.
Lane, thank you so much. Lane Dilg, she's former head of strategic partnerships and global affairs over at OpenAI. We're going to continue from the Bloomberg Global Business Forum.
Yeah, coming up next, the European build-out that investors are eyeing. What's really going on with the lending arm of the European Union when it comes to climate change and more. It's Bloomberg Business Week Daily, live from the Plaza Hotel, the Bloomberg Global Business Forum.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day here with the Dow, the S&P, NASDAQ. They are all in the red right now. 22-point drop on the S&P 500 index, retreating from a record now at 66.34, down by 0.3%. Dow Industrials right now down 0.3%, with the Dow lower by 132 points. The NASDAQ Composite Index down 91. For NASDAQ, a drop now of 0.4%. The MAX 7 Index, by the way, back in the green right now. Little change. Perhaps that is the real story, the key takeaway, up under 0.1%. Your 10-year at 4.14%. The 2-year, 3.59%. Spot gold down $32 the ounce, 37.30. Drop there of 0.9%. And West Texas Intermediate crude now advancing 2.5%, 64.99 for a barrel of WTI. Bitcoin up 1.5%. Bitcoin now at 113,736. New home sales unexpectedly surged over 20% in August, to the fastest pace since early 2022, likely lifted by builders' rampant price cuts and sales incentives to motivate buyers in a jittery economy. Among some of those home building names are all up, by the way. D.R. Horton up 0.7%. Toll, the luxury home builder, up 0.8%. Lennar up 2.2%. Pulte up by 1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are here at Bloomberg Philanthropies Global Forum at the Plaza in New York City. And this happens, the UN General Assembly, of course, as you know, is going on. But alongside it is Climate Week NYC. And it's something that has been talked about a lot today at the event. It was also something President Trump talked a lot about in yesterday's address to the United Nations, where he referenced the green scam.
Another UN official stated in 1989 that within a decade, entire nations could be wiped off the map by global warming. Not happening. You know, it used to be global cooling. Now they could just call it climate change because that way they can't miss. It's the greatest con job ever perpetrated on the world, in my opinion. If you don't get away from this green scam, your country is going to fail.
All right, that, of course, was President Trump yesterday in his address to the United Nations. Curious what our next guest has to say about climate, because he is certainly involved in it over in Europe. Ambroise Fayot is Vice President of the European Investment Bank. It's the lending arm of the European Union, joining us here at the Bloomberg Business Forum. I am curious about when you hear something like President Trump and what he had to say about climate, and then the initiatives that you are working on over in Europe. How do you kind of crisscross those two things? Is Europe moving ahead when it comes to climate change and spending on that and climate change initiatives?
Well, let me tell you first, thanks for the invitation.
You're welcome. Thank you for coming here.
And let me tell you what EIB is. EIB is the Bank of the European Union.
Mm-hmm.
So we have been, we are a public bank. Our shareholders are member states of the European Union. And we lend for long-term projects that are European projects. And as you know, one of the big projects of the European Union is climate neutrality by 2050.
Right.
And we have put in place, to support this objective, a policy that is our climate strategy that has a few targets, including having more than 50% of what we do in climate and environment. And this is a target that we have reached. We are actually closer to 60%.
Mm-hmm.
We are lending around 100 billion euros per year. So it's a big thing for us in terms of financing for renewable energy projects, energy efficiency, clean transportation, innovation in climate. And our goal is to continue and stay the course, because we think this is also something that is good for maintaining competitiveness in Europe. And we are going to present to our board next week our climate strategy for the next 5 years that will basically continue the pace that we have chosen since 5 years and link that to the competitiveness of the European Union.
So even with a narrative in some parts of the world that are maybe pushing back against climate change and green initiatives, sustainable initiatives, nothing's changed for you guys.
No, for us, nothing changes in terms of the path and the objective. And what we try also to do is to listen to what our stakeholders tell us.
Right.
And for example, some of the SMEs tell us that the reporting obligations are very, very complicated. So these kind of things that we are going to try also to address in our strategy. But the key objectives, we are going to keep them.
Can you expand on the idea of competitive advantage a little more? Because here in the United States, as the president, you just heard him say yesterday, he said, if you don't get away from this green scam, your country is going to fail. He essentially thinks that it's a waste of money to actually invest in green initiatives or do sustainable development. That's my takeaway. What's the competitive advantage that you believe the European Union has if it invests in this way?
I would say there are two things. And when you look at energy, we have invested 31 billion euros in 24 in energy projects. 31 billion euros is a lot of money. In offshore wind farms, in grids, in a lot of also solar and nuclear, and then the number of projects that are related to energy. The things that we see is, one, that actually the competitiveness of the cost of energy is going down for many of these renewable energies. And it's becoming competitive. And the second thing is, when you look at energy, you also need to look at your independence. And what we have learned since 22, and that's why we have sped up actually the implementation of our energy projects, is that if you want to be independent from Russia, you need to have more and more energy independence. Energy independence for a continent that has little energy itself means renewable energy and other kind of energies.
How are you thinking about it? And I know the war, of course, between Russia and Ukraine is not over still, but thinking about what might need to be done in terms of helping Ukraine going forward, the financing demands and needs that will be to build back all that's been destroyed.
Yeah, well, actually, it is absolutely clear that the needs are huge in Ukraine. And from the beginning of the war, we have been supporting Ukraine. Actually, even the week after the war, we have redone some of our loans to be able to send some financing to the Ukrainian government. Since the beginning of the war, we have financed 4 billion euros of projects in Ukraine, and that is mostly in projects that have, reconstruction of hospital, working with municipalities, train capabilities, etc. And actually, we have just opened a new line in Ukraine that where the tracks of the trains will be the same as in Europe. It wasn't the case before. You had between Ukraine and Slovakia, in this case, you had to change trains at the border. Now you don't.
So as you rebuild, you do it.
Yeah, exactly. And
more smartly.
And this is also on the way for accession of Ukraine to the European Union. And we have done something that is not necessarily consistent with our climate strategy, but that we have done for Ukraine. We have just approved a loan that is going to allow Ukraine to finance its gas storage for the winter, because that's an emergency.
We only have about 30 seconds left, but you're here meeting with leaders from all over the world. If there's a message that you have for American leaders and what you want from American leaders right now, what is it?
The thing that I like here is to be able to meet with a lot of people from very various backgrounds and origins and cultures, and that's what makes these meetings so interesting. I mean, the transatlantic relationship is so important that we need to do everything to make us as good partners as possible.
Do you feel like that? Do you feel that?
Yes.
Okay. Good. Thank you so much for finding time for us. We really appreciate it. Ambos Fayo, Vice President of the European Investment Bank, joining us right here at the Plaza. Of course, the Bloomberg Philanthropies Global Forum, and we've got more to come. When we get back, though, we're going to do a little check on trading for you guys and some stocks on the move, so do not go anywhere. This is Bloomberg Business Week Daily.